magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you.
Thank you,
been
Maud.
fascinating. Yeah. Thank you for taking the time.
Yeah.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source, in the academic literature, and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. Without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
Are we talking about superpowers, Clash of the Titans sort of stuff? It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, it's talent that drives, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, it's still really important to be physically proximate to other people who, are working with you in the office. I mean, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? China restricted gallium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. We're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, can you tell, because we're all friends here.
Sure, go for it.
Do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years time, those kinds of AIs are set loose on the open web in a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner. Thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them, and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain. And they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors. But what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, I mean, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
How does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's not the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Strikes continue. The U.S. attacks Iran for a second straight day. The latest violence casts further doubt on prospects for negotiations between Washington and Tehran. Supply fears return. Oil advances after strikes on Iran fuel market jitters. President Trump says the U.S. may reimpose a Hormuz blockade that only applies to Iran. And Asian stocks wobble. Chip makers are higher as optimism over AI-driven demand rekindles appetite for semiconductor stocks. It's just gone 8 a.m. across the Emirates. I'm Abir Abamar in Dubai. A fluctuation in equities across the world this morning. We're seeing S&P futures fluctuate between gains and losses this morning. But for now, they're 0.1% higher, leading to an open that is possibly in the green for the S&P 500. We're keeping an eye on the return to the AI trade. Investors seem to be returning, albeit with a little bit more caution than previously. Asian equities already trading this morning 0.2% higher. Now, they were declining earlier in the session. We're keeping an eye out on the Kospi in South Korea. It had entered a bear market yesterday. It was losing earlier in the session, but is now also fluctuating between small gains and losses. SK Hynix, with its listing, those ADRs in the United States tomorrow, was 7 times oversubscribed. So we're keeping an eye out on those individual names in South Korea particularly. But the story for us over the past 3 days in the Middle East has been with oil. Brent crude, 3 straight sessions of gains, 1% higher for Brent this morning, $79 on the barrel. We're edging very close to that $80 mark. Iran strikes again this morning. The U.S. had struck Iran for a second straight day into the overnight. Iran retaliating by attacking countries in the GCC, namely Bahrain and Kuwait. We're keeping an eye out on this developing geopolitical story that seems to have not rattled equity markets as much as one would have thought. And the yield on the 10-year notes in the United States this morning not doing very much, but the Fed minutes yesterday for the June meeting, despite the Fed holding rates, it showed that policymakers seem to have thought that we might be returning to this hawkish tilt in the United States. So we're seeing bonds in Australia and the part of the world that is open this morning rallying. We're keeping an eye out on what Kevin Warsh decides to do for the remainder of the year. We're seeing the return again to the hawkish tilt by the Federal Reserve, and that is a story that we have been keeping an eye on since his chairmanship was announced and into the second half of the year. Now, for the stories that we're seeing in Asian markets this morning, we've got Winnie Su in our Hong Kong studio for us. Winnie, what do you have for us?
Good morning, Abir. As you just mentioned, a very jittery session in Asia today with investors juggling a couple different pieces of information. On one hand, you just mentioned higher oil prices due to the escalating tensions between U.S. and Iran. But on the other hand, still some optimism coming through when it comes to the AI trade. Now, we have MSCI Asia here up just 0.1% after 2 days of declines. And we do see Kospi here pretty much flat. But as you just mentioned, we entered that bear territory just yesterday with stocks down about 20% since its peak just last month. Now, when it comes to Hong Kong shares, in fact, we are seeing a bit more weakness after the gauge having jumped about 3% yesterday. Now, flip the board, we take a look at the fresh data coming out of China. When it comes to a consumer trend, we are looking at the CPI numbers here up 1%, showing a bit of a deceleration compared to 1.2% in May. Now, the estimation is actually at 1.1%, so it is really coming below estimate, mainly driven by how oil prices have really come down over the past few weeks. Now, when it comes to PPI, meeting expectation up about 4.1% here, but the overall trend really hasn't changed much. It is the story about how consumer demand remains weak and factories continue to struggle to pass down these costs to consumers. Back to you, Abir.
Bloomberg's Winnie Su in Hong Kong. Thank you as always. Now, returning to the geopolitical story, the U.S. military has struck Iran for the second straight day, marking a sharp escalation in violence that casts further doubt on the prospects for negotiations between Washington and Tehran. U.S. Central Command announced the attacks in a social media post, saying that the additional strikes were aimed at preventing Iran from targeting ships in the Strait of Hormuz. It also said the U.S. is holding Iran to account for attacks on commercial shipping in the international waterway. Brent crude prices have rallied for a third day as the latest strike stoked fears the conflict could disrupt supplies. And meanwhile, on the flight back to Washington from the NATO summit in Turkey, President Trump told reporters that Iran wants to reach an agreement. However, he doesn't know if Tehran will honor the deal.
We have many ways we can win, but we've already won militarily. They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal.
Joining me now to discuss the story is Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, we've seen those skirmishes even when the MOU was signed about 3 weeks ago. But is it fair to call these skirmishes, and how serious are those latest escalations?
Yeah, I mean, I think they're still at a I don't know how you describe it, medium level. Maybe that underplays what's going on. What it does appear, at least numerically, is we had 80 strikes from the US on Tuesday night. We had 90 last night. I don't think you can necessarily call that an escalation, so they're sort of trying to keep it steady. And what they're targeting largely is any assets that potentially threaten shipping in Hormuz. On the other side, you've got Iran seemingly mostly targeting Kuwait and Bahrain. Again, that signals that they're not necessarily trying to escalate, which I think would be much wider spread attacks. So read into it what you will, and you've got to be cautious about these things. What can be said, though, is that what has happened in the last couple of days has been very effective from the Iranian point of view of dissuading shipping going through Hormuz. And it is all about Hormuz now. To some extent, the nuclear file has been put to one side. You know, it is the so-called golden weapon, Hormuz. And what we could observe yesterday is that the number of ships going through on that Omani route has basically slowed to a trickle, if not stopped altogether.
And so you mentioned the Strait of Hormuz, and it does look like Iran, over the past couple of weeks at least, has been trying to really show that it's asserting dominance over the Strait of Hormuz, and that this is how it's going to play out going forward. This is the new reality. Just how much would the U.S. let up when it comes to Iran asserting dominance over the waterway?
I mean, look, it's an extremely good question. I'm not sure I have a definitive answer. Clearly, the US is very resistant to it. We've had reporting showing that at least some of the Europeans are maybe gently edging towards saying, OK, maybe there's some fees of some sort, even if it's not a toll. And maybe there's some appetite for that elsewhere as well. And I think it's largely, you know, reality has kicked in that if you want these supply chains to keep going, you're going to have to pay something. Whether it works out that way is a different matter altogether. But Iran is absolutely adamant that it's not going to give up control over Hormuz, right? It's discovered this incredible new point of leverage, which no one expected, right? It was unprecedented, and it's going to hold on to it. I don't know about no matter what, but certainly it's prepared to really escalate things to make sure that it retains control.
Yeah, and meanwhile, we're also keeping an eye out on those attacks in neighboring GCC countries, Kuwait and Bahrain, so a fast-developing situation. Stuart, thank you, as always, for your time. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, the other part of the story is in oil, and oil extended gains as the United States continued to strike targets in Iran for a second day. The escalation of fighting threatens energy supplies through the crucial Strait of Hormuz waterway. For more on this specific story, we're now joined by Stephen Stupczynski, who leads our energy coverage out of Asia. Stephen, what do the markets make of the latest escalation over the past 3 days so far?
You know, clearly there's a bit of worry that this could spiral into something bigger. I think there are fears that you will see a prolonged slowdown in traffic in the Strait of Hormuz. And I think there are real worries as well that you could see now the peace negotiations between the U.S. and Iran really take a step back and potentially be derailed for an extended period of time. This will throttle the amount of oil as well as gas that will come out of the region, tightening supply in the market to a degree and lead to higher prices. But clearly, I mean, you look at where we are right now, around high $70, $80 for Brent. That is not the worst we've seen since the war began, when it's at $120 levels. So while there is this fear and this risk that Hormuz traffic will be disrupted for longer, perhaps a short period, there isn't quite a fear in the market that we're spiraling to the worst that we saw in March, where you would see assets across the region being attacked, and there was a risk of a real, somewhat prolonged period where production could be disabled for months on end.
So, Stephen, you already mentioned that this might disrupt the shipping in the Strait of Hormuz going forward. But only a week ago or so, we were talking about all these big banks coming out with their prospects for an oversupply glut in the market by the end of this year. Where do the latest escalations leave things when it comes to that overabundance of energy supplies?
I think an interesting thing that has happened over the last 3 months is they've really tested how resilient the oil market is without oil and crude from the Strait of Hormuz. I mean, last year, the Strait made up about 20% of global seaborne supply would go through that waterway. But now there are a lot of alternatives that are being worked out. I mean, Saudi Arabia has really ramped up output from the East-West pipeline, able to get more of its oil out of the Persian Gulf into the Red Sea and through the Bab el-Mandeb Strait to customers in Asia. At the same time, ADNOC from the UAE has been able to create a shuttle service to get its oil out of the Persian Gulf to Fujairah and reload shipments and get that to its customers. And even now, Iranian shipments are able to continue to get out despite the strikes and the rising tension. So I think there is a view that the market is able to deal with a closure to an extent. You've seen an interesting rebalancing where Chinese imports dropped pretty significantly in the May-June period, which helped balance the market and allowed for the crude shipments to go to other customers. That has resulted clearly in this sort of glut or oversupply, at least in the near term. And that does provide some cushion, which takes away some of the risk of us rising to the $100 handle for Brent, at least.
All right, Stephen, thank you as always for your time. Stephen Stipczynski, who leads our Asia energy coverage. Now, still ahead, we'll continue the conversation on the energy impact from the latest strikes on Iran and oil flows through Hormuz with Karen Young from Columbia University's Center on Global Energy Policy. But up next, the outlook for the second half of 2026 with Max Kettner from HSBC. This is Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The AI rotation trade is gathering pace in Asia as traders hunt for cheaper ways to play the tech boom. This comes as markets appear largely unfazed by the latest escalations involving the United States and Iran. Joining us now to discuss the latest market moves is Max Kettner, Chief Multi-Asset Strategist at HSBC. Max, good to have you on this morning. You've remained overweight on equities through all these macro or persisting macro themes. Can you walk us through just why exactly that is?
Yeah, good morning, and thanks for having me, Abir. Look, I think one thing that is quite clear is that sentiment and positioning is still actually surprisingly pretty neutral, despite us being still at or close to an all-time high in equities, despite us being so close to cycle tights and credit spreads, whether that's in developed markets or in emerging markets. So actually, sentiment and positioning is not really flashing any kind of warning signal. It's still quite neutral. That is one of the things for us that really makes us question why you would waver from any kind of risk on view. That's number one. Number two is, I think, with the upcoming Q2 reporting season, you guys were just talking about oil. When you strip out the oil effect, when you strip out that increase in some of the commodity prices that we had in the second quarter, and you strip it out from energy and material companies, then actually consensus is looking for a sequential earnings decline now in the second quarter reporting season. So once again, we might look at the headline numbers, but actually consensus expectations for the Q2 reporting season are still, again, just like in Q1, pretty subdued. So I do think that Q2 reporting season can be really the next upside catalyst once again.
And Max, we're in the Middle East, so I have to bring up the geopolitical situation. Now, markets have overlooked the geopolitics over the past, over the past 2 quarters, over the first half of the year. What do you think it would take for a geopolitical escalation to have investors just reassess the market?
I think we've got to have a much bigger escalation, sort of what we've seen around mid-March for risk assets to really show a much stronger reaction. Up until then, it's really the AI story. It's the story of both the high and low frequency data, whether it's on the activity side, on the manufacturing side, new orders from manufacturing picking up, things like consumption data picking up. Look at like retail sales. They've risen from about 6% year-over-year growth to over 10% growth now in the US. The tax refunds in the US, all of these things, they really to trump the geopolitical situation, at least for risk assets. I would say when we look at the fixed income side of things, that's clearly not where the fixed income side of things have really looked through geopolitics. Look at, let's say, the last 4 months. Yeah. You look at things like gilts, like UK gilts, like Eurozone government bonds against treasuries, and you compare that against oil, it's virtually the same line. And we've seen that in the last 3 days again. So I would say, particularly for fixed income, for rates, that is still really the centerpiece, what happens to oil, what happens around the geopolitical side. And there I would say, actually, what does it take for fixed income, for rates not to focus on the geopolitical situation anymore, but actually to start switching back into the underlying growth, the underlying inflation story in H2. Obviously, what's happened now in the last 3 days does not help that at all.
And just returning back to equities, Max, I was taking a look at your notes this morning. You've shifted your position on Eurozone equities to overweight, possibly the first person I've heard say that over the past few months, particularly banks, you mentioned. But why is that?
Yeah, look, I think it is one of the things when we look at Europe, particularly the banks, is one of the things where really what we have seen over the last couple of months was banks. The worst that happened was that earnings estimates were basically coming in flat against the market. They never really underperformed. They were literally just coming in flat against the market. So that was the worst that happened really to earnings estimates for the banks. Now, with that tiny bit of steepening that we had until 2 days ago, that was enough to bring earnings estimates not only up, but up against the market again. So for earnings estimates to outperform once again. That really tells us, if the worst that is happening is that banks earnings estimates will market perform, but with a tiny bit of steepening, you already get that upside. I think that really makes the banks look quite attractive. But even overall, Eurozone equities, I think the base where we start from is very different from the start of this year. Earnings expectations are lower compared to the US. Actually, the weaker euro that we've seen, the stronger dollar, that should really help relative earnings expectations for the Eurozone, very different from what we've seen 12 months ago, where the stronger euro was one of the headwinds for Eurozone equities. But also one of the things is that growth expectations, overall growth expectations for the Eurozone are now much lower compared to the US. So it's really a question of the lower base of expectations where we're starting from now.
All right, Max, we're going to have to leave it there. Max Kettner, Chief Multi-Asset Strategist at HSBC. Now, still ahead, President Donald Trump indicated he could let Turkey have advanced F-35 fighter jets. This is despite Israel opposing the move. That is coming up later. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Singapore's state-owned investor Temasek is ramping up its exposure to artificial intelligence and the Americas. CIO Rohit Sipahemalani told us while segments of the AI trade look frothy, they expect earnings-driven growth to continue near term. Take a listen.
Typically, capex-driven growth cycles are very good for earnings because the people who are recipients of that spend, they take 100% of that spend as revenue. The people who are spending, they account only for the depreciation cost right now. So as a whole, it's actually very good for the earnings thing. Now, at some point, this acceleration capex cannot continue indefinitely, and that's why you will have cycles. But at least in the near future, we don't see that changing materially. So it's right now, I would say, a very earnings-driven market. There's segments of the market that are frothy, but the segment I mentioned, the hyperscaler, they're trading at about the lowest multiples that you've seen in the last few years.
What's looking frothy?
When you're playing in the frothy areas, you got to be confident that that's an area of hyper growth. But secondly, you got to be sufficiently diversified in some of these, and that's why we're doing that for the VCs. You know, in the public markets, like I said, I mean, it changes day by day. I mean, the question is, are the, is semiconductors frothy? Now, if you look at NVIDIA, it's trading at 13 times 27 earnings. You know, is that frothy? I mean, I don't think so. But there may be other companies who are. So I think you got to look at it company by company. And a lot of it actually depends on your assumption.
But traditional benchmarks are no longer relevant right now, right? Because AI is an area that few people really understand.
Yeah, but you know, as I said, if you look at the ecosystem as a whole, it is generating $500 billion of free cash flow. So yes, you can play in areas which are uncertain, but there's enough of the ecosystem that you can invest in, which is still strong cash flow generating, and you can look at it from a traditional metrics.
And when you take a look at the U.S. market, valuations are at record highs, very stretched, driven pretty much by tech and AI. How do you justify mobilizing your capital without, putting yourself at risk if that AI capex bubble were to pop?
So, Cylinder, what's interesting is that the entire rise in the market this year, and let's take the U.S. for example, has been all earnings driven. In fact, multiples today are lower than what they were at the beginning of the year. Beginning of the year, they're closer to 22 times. They're probably 20.5 times right now. So actually, multiples have come down. But the US is looking at earnings growth of over 20% this year. It's not just the AI. The S&P Equal Weight Index is expecting earnings to grow at 17% this year. And it's not just the US. Across the world, whether it's the US, Europe, Japan, or EM as a whole, every market is expecting double-digit earnings growth this year and in 27 and in 28.
That was Temasek International CEO Rohit Sepehamilani speaking to Bloomberg's Insight anchor Haslinda Amin. President Trump says he plans to take Syria off the U.S. list of state sponsors of terrorism. He announced the move after meeting Syrian President Ahmad al-Sharia at NATO summit. Syria welcomed the plan, saying it could help revive trade investments and reconstruction. And coming up, as President Trump threatens to reimpose a blockade on Iran, we'll find out what that means for the region with Karen Young of Columbia University. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Strikes continue. The U.S. attacks Iran for a second straight day. The latest violence casts further doubt on prospects for negotiations between Washington and Tehran. Supply fears return. Oil advances after strikes on Iran fuel market jitters. President Trump says the U.S. may reimpose a Hormuz blockade that only applies to Iran. And Asian stocks wobble wobble, chip makers higher as optimism over AI-driven demand rekindles appetite for semiconductor stocks. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take another quick look at where markets are this morning. Asian equities, that fluctuation, you can see it in real time on the screen. It is moving between, they are moving between losses and gains this morning. But first, with U.S. futures 0.1% higher, pointing to perhaps a positive session in the S&P 500 later today. Generally speaking, equity markets seem to not look through the geopolitical risks that are stemming out of the Middle East. They're not factoring them in. We're seeing green across the screen for the time being. We are returning to see confidence coming back to the AI game. Chip makers across continents are also gaining this morning, or perhaps in the United States will gain later on in the day. In Asia, we're keeping an eye out on the Kospi. It had entered a bear market territory yesterday at the close. 4 sessions of drops, perhaps set for a 4th session of losses later today. But for now, the MSCI Asia Pacific completely flat. We're keeping an eye out on SK Hynix. In particular, its ADR listings in the United States. Tomorrow, the orders did good. What we know is that the orders did good, but we have some other individual stories in Asia that Winnie will talk to us about in just a minute. Our story in the region, Brent crude prices 1% higher, edging very close to the $80 on the barrel mark. But for now, it's at $79 on the barrel. We're keeping an eye out on those tit-for-tat attacks between Iran and the United States. The U.S. this morning continued its 2nd straight day of attacks against Iran and targets in Iran. Over 90 targets is what the U.S. Central Command had said. Iran threatening to strike back and already striking countries in the GCC, namely Kuwait and Bahrain, a fast-developing story that we're keeping an eye out on in the Middle East. And then the yield on the 10-year notes in the United States, 4.577, not doing much today, a slight drop. Yesterday's Fed minutes came out shorter than how they used to come out previously, perhaps leading us to think that the paradigm will shift under the chairmanship of Kevin Warsh. But we're keeping an eye on that hawkish tilt returning to the Federal Reserve. But for what markets in Asia have been doing over the past 30 minutes or so, we're getting a check from Winnie Su in Hong Kong for us. Winnie, what do you have for us?
Yeah, morning, Abir. Very volatile session in Asia today, and we can see that MSCI Asia really swinging between these narrow gains and losses, and in fact now up just 0.1%. And as you mentioned, today's big kind of volatile element here is Kospi, now slightly up, but it was also down earlier today. Well, it did enter that bear territory just yesterday, but today what's playing out interestingly is that we are seeing foreign investors buying while retail investors sell. Now, this is also ahead of that widely watched U.S. listing by SK Hynix, now about 7 times overly subscribed, so lots of attention there. And in terms of the Hang Seng Index, you are seeing a bit more weakness after the gauge having jumped about 3% yesterday. But really, it is all about that oil story as well. As you flip the board and take a look at how that's impacting our sectors here, specifically, while everything else looks a bit more uncertain, we do see the energy sector here in Asia leading gains. In fact, is the top performing sector, and Australia's Woodside Energy as well as Japan's Impex also rising further. Now, that really is the higher risk of potential supply disruption in the Middle East, and that's driving the sector further up.
All right, Winnie Su in Hong Kong keeping an eye out on all those market moves. Now, Turkey is looking to secure the delivery of 6 F-35 jets from the United States in an initial transaction. It comes after President Donald Trump indicated he's ready to reverse a ban on Ankara buying the advanced planes. Bloomberg's Dan Williams joins us now from Jerusalem for a perspective on Israel in all of this. Dan, the possibility of Turkey getting those F-35 really troubles Israel. What is Prime Minister Netanyahu's government doing about that?
For now, it's trying to make itself heard above the hubbub, above the pageantry of the NATO summit in Turkey. The Prime Minister of Israel, Netanyahu, is not there. Israel is not a member of NATO, and even if it were, he would probably think twice about sending a delegation at this point in time, given the parlous state of relations between Turkey and Israel. So what we've been hearing from the Israeli Prime Minister is a slew of interviews on American media, apparently aimed at not just American audiences, but American lawmakers, arguing that supplying this advanced aircraft to Turkey would risk the balance of power in the Middle East. That's code for QME, Qualitative Military Edge, which is a term that's been anchored in US law for almost 2 decades now, and practically in US policy for several decades before that, under which any administration undertakes to ensure that Israel has regional superiority in terms of US military technologies it receives. Israel argues that giving this plane to Turkey would potentially disrupt that.
And Dan, Netanyahu also said that he hopes to meet with President Trump at the White House soon. We don't have a date for that yet, that visit. Could this be because of the dispute over the F-35s, or are there other reasons that you're looking out for?
I wouldn't discount that possibility. We've had several days now in which the Israelis have said they expect the Prime Minister to go to Washington, but they've also said they don't know when. There was expectation it would happen next week. It's hard to plan these things at a few days' notice. There's no question that Netanyahu needs a good photo op with the US president for his electoral prospects. There's an election here in October, but there's also no question that that relationship, while close, while strong, has been tested because of the war in Iran, because of the way it went ultimately, and those two countries were in partnership there. I think they expected a tidy victory within weeks. That didn't happen. It's also possible that practically, now that shooting war has resumed to some degree between the US and Iran in the Gulf, the president is simply too busy to think about arranging such a visit at this time. So we don't know yet, but it would appear that expectations of a visit to Washington by Netanyahu next week are not to happen.
All right, Bloomberg's Dan Williams, thank you, as always. Now, President Trump says the U.S. may reimpose a Strait of Hormuz blockade that only applies to Iran. Trump made the remarks during a bilateral meeting with Ukrainian President Volodymyr Zelensky on the sidelines of the NATO summit in Ankara.
We may put down the blockade. We may put it back, the blockade. And it'll only be a blockade for Iran. Anybody else can have whatever they want. Now, of course, they'll drop some mines if they can, if they can do it.
For more analysis on this story, we're now joined by Karen Young, Senior Research Scholar at Columbia University Center on Global Energy Policy. Karen, a pleasure to have you on this morning. Just starting with the presser that we saw out of NATO yesterday with President Trump and Rutte. From what you heard there, just how likely are we to get back to a state of kinetic warfare, similar to what we've seen in March? So I think we've lost Karen for the time being while we try to maintain that connection. Just a reminder of what President Trump had said yesterday in the presser in Ankara. He was alluding to how the Iranians, the ceasefire between the U.S. and Iran, as far as he's concerned, is over, and that they're scum and that they are liars. These are quotes from the president yesterday in Ankara. We'll talk more about what is happening in NATO, not just when it comes to Iran, but to wider European ties as well. So coming up, President Trump tells NATO allies that troop levels in Europe will depend on how his concerns on Greenland and Iran are addressed. We'll have more on that next. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are now back with Karen Young, Senior Research Scholar at Columbia University Center on Global Energy Policy. Karen, actually good to have you back on with us. The connection was playing out a little bit earlier. And I was asking a question about the presser between President Trump and Rutte yesterday when he was asked about Iran and the ceasefire. And the question was essentially about the return to kinetic warfare, just like what we saw in March. Do you think there's a likelihood of that?
Well, we certainly have seen a return to attacks. Now, is it return to full-scale war? No, I don't think so. There's a limit to President Trump's interest and ability to bring this to a full-scale war. But as we've seen, what the retaliations that CENTCOM is doing over the last 2 days, they're ratcheting up higher and higher, right? So each time the pressure is increasing on Iran, and it's unclear if that will bring Iran back to the negotiating table, which is clearly what President Trump wants to see. But the Iranians have their own ambitions. And one of those ambitions is control over the strait, and they don't seem to want to give it up.
Yeah, exactly. I mean, that was going to be the next question, right? Energy flows, the Strait of Hormuz. It does feel like Iran has woken up to this leverage over the Strait of Hormuz. Maybe they knew about it before, but now they can really just use the Strait of Hormuz as leverage. Do you think that this is going to be the new reality in this part of the world, that Iran will, for now, or for the time being, just take a hold over the waterway, and this is how things are going to be done going forward?
It's definitely what is happening. It is our current reality. And that is a problem. We do have the diversions of the pipelines, but it leaves certain Gulf states at a clear disadvantage in Iraq, in Kuwait, Bahrain, and especially in Qatar. There are no alternatives for export. And Iran knows this and has this leverage. And it's not clear if Iran wants this as a revenue generation scheme, as in a toll booth, or if they want this just simply as political and military power and, frankly, an ability to intimidate its neighbors. But it also puts pressure on the United States. And what President Trump is worried about is certainly energy prices, but also the impact on global markets. We've narrowly escaped a calamity, in the president's own words. So will Iran continue to use that leverage? Will we be victim to that every couple of months? It's a possibility.
And speaking of the United States, I mean, you use the word calamity, but do you think that the United States will eventually have to succumb to the fact that Iran has control over the Strait of Hormuz, and also the allies in the region? Do you think that ultimately they're going to have to come to terms with the fact that this is the new reality, this is the new norm?
I think for the Gulf states, we're already in a period of accommodation of Iran. And there are different ways to do that, whether it's commitments of investment or simply, reopening diplomatic channels, or allowing Iran to certainly profit from its energy trade, its legitimate energy trade. But the United States is going to be less comfortable with that, and certainly less comfortable with Iran with the control over all kinds of trade, not just energy. So, this is setting a precedent for other choke points, which certainly undermine the U.S. position of advocating and securing liberal and open trade systems around the world.
And Karen, just finally on the alternative shipping routes that GCC countries have been using for Saudi Arabia, the Red Sea, for the UAE, doubling down on northern ports like Fujairah, how successful will they be at rerouting completely from the Strait of Hormuz?
All of the volumes that previously went through the Strait of Hormuz. So it will take 18 months to 2 years to construct new pipelines in the UAE and perhaps in Saudi Arabia. But again, that leaves other producers in the region without really any export diversions, particularly at Kuwait and Qatar. Bahrain doesn't really export crude, but it puts them at a disadvantage on trade as well.
All right, Karen, we're going to have to leave it there. Thank you, as always, for your time. Karen Young, Senior Research Scholar at Columbia University's Center on Global Energy Policy. Now, President Trump suggested that future U.S. troop levels in Europe may depend on how allies support his positions regarding Greenland and the conflict with Iran. The comments are likely to intensify NATO's concerns about his security commitments to the alliance. For more, we're now going to Ankara, where our chief Europe correspondent, Oliver Crook, is covering the NATO summit. Ollie, we heard yesterday from President Trump on Iran and the remarks he had made. But on Europe specifically, what more did he and Defense Secretary Pete Hegseth have to say on troop levels?
Yeah, Beer, there was a huge amount of information from President Trump when he came here to Ankara, Turkey, over the last 2 days to kind of unpack all of the sort of significances of the things that he said for American policy across the world. And this sort of issue of American troop placement within Europe has been absolutely fundamental since the beginning of the Trump administration. Obviously, the broader context of whether or not Trump himself and the U.S. under Trump would honor Article 5, that joint mutual defense clause of NATO, the real cornerstone, the holy grail of NATO, has been the sort of quiet thing that has hung over all of these proceedings. But of course, the sort of deterrent factor of American troops, or about 80,000 troops stationed across the European continent, has been one of these major questions about whether or not that number is going to decrease, and in what ways, and in a sort of what time period. We have had presidents of the United States talk about rethinking the American troop posture for a number of years. This is not just something that Trump has done, but Trump has really been the one who has been effectuating that and talking about it more aggressively. We had that already announcement from the Trump administration that they would withdraw some troops from Germany after the Chancellor of Germany made some disparaging comments about Trump and his activity within Iran. And now Pete Hegseth, the Secretary of War, has launched another review of troop placement within Europe over the last 6 months. But everybody I've spoken to over the NATO summit over the last couple of days, NATO officials who are really in charge of dealing with these sort of troops and replacing them, say that this will all be done in a sort of very coherent way. This will be communicated very well to allies, and that they're prepared to do it. What is interesting, of course, is the fact that Trump is now linking the troop movements out of Europe to whether or not he gets his way on Greenland, to the fact that NATO allies have not been terribly supportive of him on Iran. But it's something we'll be watching very closely over the next couple of weeks and months.
And Ollie, just in that same presser, President Trump had some strong remarks on the NATO alliance in general as well. So do you think that the NATO allies were able to convince him that they're reliable partners despite those differences that he had laid out?
Yeah, I mean, Abir, given the sort of potential for things to go terribly wrong over the last 2 days, I think everybody, especially Secretary General of NATO, Mark Rutte, really breathed a great sigh of relief by the end of this summit. I think it was quite a big success for NATO allies. It came in, President Trump came in pretty hot, pretty upset about Greenland, pretty upset about Iran, pretty upset about a number of different things. But by the end of the meeting, the word that he used to describe the entire proceedings was unification. He felt that there was a great deal of unity among NATO allies. He said there was a huge amount of love in the room for that meeting, and that he had wished that the media, the cameras had been in there to sort of demonstrate that. So I think for everybody, this was a very sort of successful summit, particularly since Donald Trump came in talking about Greenland, something that, of course, the Europeans wanted to avoid entirely, talking about Iran, something, again, that they didn't want to make the sort of prominent theme here. But, of course, the sort of big news for the Ukrainians in that meeting with Volodymyr Zelensky, the president of Ukraine, and the president of the United States, absolutely massive news for Ukraine. that the United States would allow them to begin producing domestically Patriots, those air defense systems they've been so desperate for, to stop preventing some of these cruise missiles that have been striking Kyiv increasingly because they're completely out of that supply.
All right, Bloomberg's Oliver Crook still covering the NATO summit in Ankara for us. Now, coming up, MTN Group and Telecel Group are preparing to bid for 5G licenses in Ghana, which still lags behind other African countries in terms of coverage. That story is coming up next. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
MTN and Telecel are preparing to bid for 5G licenses in Ghana. This comes as the government ends the exclusive rights of a state-backed wholesale provider that partnered with Indian billionaire Mukesh Ambani's firm. Our Chief Africa correspondent Jennifer Zapasaja joins us now from Cape Town. Jen, good to have you from Cape Town this morning. What more do we know about this deal?
Yeah, Abir, this is significant for Ghana, which has a pretty ambitious plan to roll out 5G to its 35 million population. So really, as you were just saying there, MTN and Telecel are bidding for this auction after what we did hear from the government earlier this year, which planned to end the exclusive rights of the previous provider. And part of the reason behind this is because some investors had hoped the success that the provider, which you were just mentioning there, is NextGen Infraco and also Radisys, which is a unit of an Ambani-controlled company. They were hoping that some of the success that we had seen in India would be able to be replicated in Ghana. Unfortunately, that didn't necessarily pan out. We did see NGIC agreeing to pay $124 million in 2024 for this exclusive 10-year license. But at this point, Bloomberg reporting suggests that we've only seen about 49 sites that are actually operational. And so really what we're hearing from the government is that they want to see more bidders come in and just expedite the process.
And Jen, how does this all fit into the broader 5G rollout on the continent?
Well, I mentioned Ghana has an ambitious plan. They're looking to have 70% of their population by 2030 with 5G. Right now, it's still under 10%. And when you compare that to some of the other countries that we are seeing, Ghana still has quite a bit of catch up to do. We've actually seen GSMA, who's noted that Kenya, Nigeria, and South Africa have been able to expand 5G services over the past couple of years. Kenya has about 38% of their population covered by 5G compared to 22% in Nigeria and 60% in South Africa. So for Ghana, if they want to reach 7% by the end of this year, that pales in comparison to what we're seeing in other countries. But GSMA, which is this intelligence provider, or it's an intelligence company that provides some insights into what this could look like for expansion in the African region, we could see over $20 billion added to the African economy if, in fact, we do see 5G rolled out in more and more countries. So still quite a bit of ways to go for Ghana and for the region more broadly to get caught up with the rest of the world.
All right. Jennifer Zapasadra, our chief Africa correspondent in Cape Town. That is it for Horizons Middle East and Africa today. I'm Abir Abamar in Dubai. Stay around for Daybreak Europe. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil extends gains while bonds sell off as the US carries out a second straight day of strikes on Iran. Bloomberg, meanwhile, learns that the US listing from SK Hynix is more than 7 times oversubscribed. We'll get pricing from the Korean chip giant later on today.
And minutes from the Fed's June meeting reveal that some officials made the case for a hike as fresh escalation in the Middle East once again threatens the inflation outlook. Well, a very good morning. This is the picture in markets this Thursday. Asian shares are raising some of their earlier gains as the rally in chip stocks loses momentum. The MSCI Asia Pacific Index only up 0.1% as things stand. European futures outperforming, though, at more than 1% for Euro Stoxx 50 futures. But, of course, we did see a sharp sell-off yesterday. Wall Street, meanwhile, looking less enthusiastic towards the open. We had a choppy session on the S&P yesterday. Shares knocked by President Trump saying that the Iran ceasefire may be over, and then pairing losses when he said that he doesn't think the conflict will start again. But of course, the US has struck Iran for the second day, so flip cross asset, and we can take a look at the impact on oil, climbing for a third day with Brent up more than 1%, flirting with $79 the barrel that feeding into Fed expectations of a hike. Yesterday, we saw the 2-year Treasury yield climbing to its near 2026 high, and it's steady in the Asian session at 420 as things stand. The Bloomberg Dollar Spot Index also pretty steady at the moment. Now, let's take a look at the risk events today. At 7 a.m. London time, we get the latest German trade data. Then, at 12:30 p.m., we'll have the ECB minutes of the June meeting, looking for any appetite for a follow-up rate hike, especially now, given the flare-up in the Middle East. And then early this afternoon in New York, it's SK Hynix's ADR offering ahead of the Nasdaq debut tomorrow. Bloomberg, as I say, reporting that the US listing is already multiple times oversubscribed. So plenty on the docket. Let's set you up for the day ahead.
We just hit them very hard, and I say we hit them 20-1. Every time they hit us, we're going to hit them 20. And we did it last night. They did a little something today, but it was really retribution for last night. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
President Trump confirming a second straight day of strikes against Iran, threatening further escalation in the Middle East. In the past few hours, we've heard from US Central Command saying that forces hit around 90 Iranian targets. We're tracking the latest developments across the globe this morning and digesting the latest, of course, from the NATO summit in Ankara, Turkey. And let's start with our global coverage with our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar, who joins us from Dubai. So, Abir, just walk us through how significant this US action is overnight and really how Iran is responding.
Good morning, Lizzie. It could be quite significant, but then what we're seeing is this back and forth in the U.S. or from the U.S. President Trump. Yesterday, during his press conference in NATO, he did say that, according to him, or as far as he's concerned, the ceasefire between the U.S. and Iran is over. But then he did go on to say that the negotiators, Steve Witkoff and Jared Kushner, could go on to have their talks with the Iranians. Now, that obviously sent jitters across the market almost instantly. What we're seeing happening overnight is, as you have mentioned, 90 targets were hit by the United States for a second straight day in Iran. Some of those, we understand, could be targets in northern Iran as well. Iran, in its retaliation, has hit in the early hours of the morning countries in the GCC, namely Kuwait and Bahrain. Now, Lizzie, we've seen those skirmishes happening over the past 3 weeks or so. We've seen Iran hitting ships in the Strait of Hormuz, but the latest event happened at the beginning of this week when Iran hit a Qatar-flagged LNG-laden ship for not sticking to the routes that Iran had laid out. And this all goes back to this notion of Iran really wanting to assert dominance over the Strait of Hormuz and wanting ships to first stick to the routes that it had laid out. But then once the negotiation period ends for the MOU, for ships to start paying tolls and fees to Iran alongside Oman as as well. So this is all an assertion of power. The U.S. not happy with that, striking Iran. Iran saying through some of its top officials and top negotiators that this situation is not going to work out by bullying. But overall, it's a quite serious escalation that we've seen, the most serious in weeks' time. But it's too early to tell whether this will lead to this whole thing unraveling. And it's just important to nuance that President Trump had made similar remarks over the past 3-4 months, really, Lizzie. And so it's important to note that this doesn't necessarily mean that the whole thing has unraveled. We could see negotiators coming back to the table. For the time being, what we're seeing is that traffic in the Strait of Hormuz has come to a near halt. Ships and ship owners are treading with a little bit more caution than they were over the past couple of weeks even. And so that's why we're seeing Brent crude prices edging very close to that $80 on the barrel mark. Nowhere near still the $120 that we've seen when the kinetic warfare in the region was at its height during the peak of the war. But we are edging closer to the $80 on the barrel, third straight session of gain this morning, Lizzie.
Abir, thank you for now. That's Abir Abu Omar in Dubai. Well, let's get the military angle on this. We can bring in Becca Wasser, who is defence lead for Bloomberg Economics. Becca, great to get your expertise on this. I wonder what the options look like for further military escalation for the US.
Well, I think, as Abir mentioned, we've seen an expansion of the target set, both in geography, but also in target types. So last night, in addition to going after some of the assets that the Iranians have used to go after the commercial ships, the U.S. also struck 2 railway bridges in Iran. So that's, to me, a signal of further escalation could go after infrastructure that is used for military means, but also civilian means as well. So that's one option on the table. The other one that President Trump has mentioned previously, including yesterday, is trying to take Karg Island. And that's an incredibly risky operation for U.S. ground forces that essentially has them as sitting ducks on Karg Island in the Strait of Hormuz, and would be a very high bar for the U.S. to do. So at the end of the day, I think what we are more likely to see is some of that continued escalation, these tit-for-tat, back and forth the straits, as the U.S. tries to deter Iran from exerting its control over the waterway and attacking more ships, as opposed to a much higher, riskier escalation option.
So let's say that Trump does cross those lines, touching infrastructure, taking Karg Island. Does that wipe further negotiation off the table?
I think those mean that the war is on. The war would be back on. But from my vantage point, I don't think either Iran or the U.S. want to find themselves back into all-out war. It doesn't benefit either of them. And more importantly, what could they achieve from war that they couldn't have already achieved from 39 days of brutal fighting? They're not likely to get that, and they're more likely to get that at the negotiating table, if anything.
OK, well, Becca, thank you so much. That's Becca Wasser, defence lead for Bloomberg Economics. Of course, the events in Iran have overshadowed the NATO summit in Turkey, the meeting ending with President Trump saying the decision on US troop levels in Europe would hinge on how allies addressed his concerns over Greenland and the Iran war. Let's go now to our Bloomberg Chief Europe correspondent, Oliver Crook, who is in Ankara for us. He's covered this whole summit for us, indeed. Ollie, to what extent has this summit managed to heal the divisions between NATO and the US?
I think that you could probably hear the sigh of relief from Secretary General Mark Rutte that this is now over and that it ended in the way that it did. We came into this meeting, obviously Rutte had sort of laid the groundwork for it, wanted to choreograph everything to the very last detail, was in the D.C. the weeks ahead of the summit to try to lay the groundwork for President Trump, for him to basically have a good experience here in Ankara, Turkey, to support NATO. And when the president arrived, this was not really the indication that he was giving. He was being very, very critical of allies. He was very unhappy about Greenland yet again. This is a topic the Europeans obviously hoped had been was dead, that they didn't want to bring up again. He was very critical on the support of Iran. But by the end of the meeting, you had a real shift in tone from the President of the United States, particularly as in regard to the NATO allies. He said there was a huge amount of love in the room. The word that he would use to describe the meetings and the proceedings was unification. So a very positive message from the President of the United States. So I think everybody left this summit, at least on the NATO front, very relieved. They were less relieved about what that they heard about the ceasefire ending in Iran. They were less relieved about the comments on Greenland. They were less relieved about what he had said about the Spanish economy and saying that basically he wanted to cut off all trade because the Spanish had not committed to reach that 5% spending target. But again, so you still see some of the divisions that are laid bare. But at the end of the day, I think for NATO, for the Secretary General, this will be seen as a very successful meeting for NATO and the President of the United States.
And Ollie, lest we forget the other war that the Europeans wanted to focus on during this NATO summit, Ukraine. What did President Zelensky get out of his meeting with President Trump?
If this was a good meeting for the alliance and a good meeting for the Secretary General, Mark Rutte, this was an exceptional meeting for President Zelensky. I mean, the distance that we have traveled in the 18 months since Trump has become President of the United States, from that Oval Office meeting back in the early months of last year, where they kept telling Zelensky he didn't have any cards, that catastrophic meeting, we've really gone maybe, close to 180 degrees. We have very supportive tone from the President of the United States, really a lot of admiration for the Ukrainians, for President Zelensky, and something also very concrete. The President of the United States said in that meeting, he had not told the companies yet, that he will grant licenses for the Ukrainians to produce domestically those Patriot batteries, the air defense systems that the Ukrainians have been so desperate for. He is now saying that the Ukrainians, under licenses from the United States, can produce those domestically. That is the thing that Zelensky has been asking for from everybody across the world stage over the last couple of years, and you've seen on full display the last couple of days the consequence of not having any more of those air defense systems. That means that those ballistic missiles from Russia travel very freely across Ukrainian skies. Of course, it will take a little bit of time to ramp those up to get those into his arsenal, but again, a massive win for President Zelensky.
Ollie, we really appreciate all of your coverage from Ankara. That is Bloomberg's Oliver Crook live from Turkey. Well, let's turn to the market reaction to all of this geopolitical news now. Stocks in Asia fluctuating today, as also that rally in chip stocks loses momentum. We can go straight to Winnie Xu now in Hong Kong. Winnie, what's catching your eye?
Yeah, good morning, Lizzie. It's been a very jittery session in Asia today, especially with investors trying to grapple a couple different things. On one hand, you do have higher oil prices driven by the escalating tensions between U.S. and Iran, but also, as you just mentioned, some questions around how durable this AI rally really is. When it comes to the overall benchmark, we are seeing MSCI Asia here up just slightly after 2 days of declines. And the volatility really is still in the Kospi index. Right now, trading quite flat, but remember, it's actually being trading in very narrow band today. Up as much as 4% at one point and down as much as 2% at one point as well. When it comes to shares in Hong Kong, we are seeing a bit more weakness after the gauge having surged about 3% yesterday. Now, flip the board, we take a look at the tech stocks in our region because all eyes are on SK Hynix here, up about 4%. As you just mentioned, we are already seeing this U.S. listing oversubscribed by more than 7 times. And that is due tomorrow, with lots of appetite really coming through from the long-only investors and also some tech-focused funds. Now, interestingly, also wanted to point out that Kioxia Holdings, so another memory chip maker in Japan, is in fact up about 8%. And that comes after Bain Capital sold all of its stake in the company. This company is one of Japan's most valuable companies. And Bain Capital used to have about 40% of stakes in the company, but shares have really risen about 4,800% since its debut. So lots of gains driven by the rally in the AI boom. Now you flip the board and take a look at the energy sector, because while everything else looks a bit uncertain right now in Asia, one sector that has been really extending gains is the energy sector. Obviously, it is on that rise in oil prices, potentially raising further risk when it comes to the supply chain disruption in the Middle East. And hence, we are seeing Australia's Woodside Energy and Japan's Impex Corp here both rising further. Back to you, Lizzie.
Winnie, thank you. That's Winnie Xu in Hong Kong. We're still ahead amidst all of this geopolitical uncertainty. Where do traders turn for safe havens? Well, we're going to dig into the outlook for the dollar later with Trevor Charlesley. But first, the case for hiking rates. More on what the latest Fed minutes tell us about policymakers' attitudes going into their next meeting later this month. and what the geopolitics could mean further out. That's next. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe, 6:17 a.m. here in London. Now, turning to last night's Fed minutes from the June meeting, they showed that a few officials said there was a case for raising rates, though they ultimately supported the decision to stay on hold. There was also growing concern over inflation, just as the worries over the labour market receded. Let's go now to Bloomberg MLive strategist Mark Cranfield for some analysis. So, Mark, you had a hawkish flavour to these minutes, I think it's fair to say. How much more likely is a hike now that the US-Iran ceasefire seemingly has fallen apart and we've got oil higher and we're looking ahead to CPI on July the 14th?
You know, traders seem pretty convinced that we will get at least 125 basis points hike, probably in October. That's the way the pricing is going at the moment. It shifts around a little bit depending on how the next piece of data that we see. So if the CPI number is a bit hotter than expected, particularly the core CPI number, that's the one that people will be most interested in. If that comes in slightly above forecast next week, you'll probably see those odds shift somewhere towards the September meeting, but it's fluctuating between the two. Anyway, traders are pretty happy with that position, not just because of what the Federal Reserve are doing, but if you look across, they're now looking at all the major central banks to do pretty much the same. So this week we had New Zealand raise interest rates. More is expected there. We expect the Bank of England, the European Central Bank, Bank of Japan. Everybody is going in the same direction, and investors seem pretty comfortable with that view. There was nothing in the FOMC minutes to push back against the idea that the market is going in the right direction. It's really now just a question of fine-tuning when exactly that will happen. And obviously, the inflation data is the next big one for the markets to absorb in that respect.
And how notable was it that they shortened the minutes as part of Kevin Warsh's shake-up of comms at the Fed as the new chairman?
Well, this is going to be a tricky one for him. So he's pretty keen on the idea that he doesn't want to give much guidance away. He wants to be a bit of an Alan Greenspan and keep people guessing as to what happens for the next meeting. He has a little bit of a near-term problem, though. He has to go in front of the Senate Banking Committee next week. And the Senate is not known for looking at answers. They want complete answers to their questions, and they're most likely to push him very hard if they don't think that he's giving them what they want. So he may want to not give investors too much information, but the Senate are almost going to force him to say something next week. It's shaping up to be a very big deal for markets. There's a chance where Kevin Walsh, as much as he's reluctant to let investors know what he's thinking, the Senate is probably going to force him to tell them. So it could be a pretty lively discussion. And where they're going to really come on him is in relation to AI, most likely, because one of the most interesting things about the FOMC minutes was the suggestion that the spending on AI in the near term is going to be a bit inflationary. Now, in the past, Kevin Walsh has said he thinks AI productivity is going to be deflationary. But the FOMC is saying in the near term, because the revenue flows are not going to be quick enough, the spending is going to help to push up inflation. He's going to have a bit of a job trying to explain that one to the Senate.
Great piece about this on the terminal from James Crombie in our macro view of the day. For now, Mark Cranfield, our Bloomberg M Live strategist, thank you very much. Well, NATO summit is over and we can see live pictures now of Air Force One at Joint Base Andrews in Maryland returning from Ankara. We're expecting to see the president descending from the plane any moment now. But we'll have plenty more coming up on the programme for you, so don't go anywhere. This is Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe, 6:23 a.m. here in London. Well, Kioxia shares jumped in Tokyo after Bain Capital told Bloomberg that it had sold its stake in the flash memory chip maker. The US private equity firm logged record-setting returns on its 8-year-long bet on the memory operations spun out of Toshiba. Managing partner David Gross spoke exclusively to Bloomberg's Sherry Arn.
It was originally, roughly $18 billion transaction back in 2018 when we did the deal, and the market capitalization now is, close to $400 billion. So it is enormous, the largest market cap company in Japan. And as you may remember, that was a very important part of Toshiba when Toshiba was facing some struggles. And so carving that business out, sustaining its R&D capability was critical for Toshiba, it was critical for Kioxia, it was critical for Japan's participation in this new technology opportunity. And then when AI came along, we had spent a lot of time focusing the product pipeline on the hyperscalers. And that, at the time, there was not AI, but that was really the strategic area. We did a lot to shift resources into that, develop the right products, such that when the AI wave came along, we were in the right place at the right time, and then it was a huge source of growth.
Do you still have around 20% stake? I heard you guys were winding down.
we were winding down, yes.
I mean, given
We've wound down. Yes.
Okay.
Yes.
So around how much are we talking about, and how much do you plan to keep?
We don't have a stake anymore in Kioxia.
When it comes to future investments, are you looking at similar areas right now when it comes to Kioxia, equipment, memory in Japan?
Yeah, well, there's only really one big memory company in Japan, but there are a number of businesses that sit around that ecosystem, whether it's the semiconductor equipment that serves that industry, whether it's the energy systems that serve data centers, software and applications is an area where we're quite active. So Kioxia was a really important success story of building a great technology company, but also got us very embedded into the broader, new technology infrastructure. And the relationships we gained there, the knowledge we gained there is allowing us to generate some pretty interesting deal opportunities.
I'm surprised that you don't have a stake in Kioxia anymore. I thought you had just wound down.
We have one, we wound down that stake.
How much has that helped in opening doors across Japan?
Yeah, I mean, I think it's been really important for the industry and for us because, again, this was a crown jewel of one of the top, kind of technology-driven companies and conglomerates with an amazing history, Toshiba. A lot of parties and stakeholders were involved, so there were a lot of eyes on whether this was going to work, and it's worked spectacularly for really, I'd say, all the stakeholders involved. And so clearly it's lended additional credibility to private equity, to the pitch and the promise that we're saying that we can actually we take businesses that may have had some struggles and get them on a growth footing and really position them to be not just leaders in Japan, but global leaders in very critical industries for Japan. And so I think it gives a really big boost.
Bain Capital's David Gross speaking exclusively to Bloomberg there. Bain, by the way, has clarified that a special purpose investment vehicle that it set up for SK Hynix still holds a 14% stake in Kioxia. Now to some other top stories we're following for you this morning. Global diesel prices have hit multi-year highs after Russia said that it was banning diesel exports for about 3 weeks. It follows Ukrainian drone attacks on energy infrastructure in Russia, which have led to domestic shortages. Elsewhere, Meta is planning to invest around $10 billion to build its first data center in Canada as it expands infrastructure to support its AI ambitions. The facility in Alberta will have the capacity to power the equivalent of 750,000 homes and will largely run on natural gas-fired power. And The Information reports that China is planning to allow some of its top AI companies to buy a limited amount of NVIDIA's H200 chips. Chinese officials are said to have told Alibaba, ByteDance and DeepSeek that they need to say how many chips they need and why in order to get approval. Well, coming up, we'll talk about safe havens with tensions in the Middle East flaring up. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil extends gains while bonds sell off as the US carries out a second day of strikes on Iran. Bloomberg, meanwhile, learns that the US listing from SK Hynix is more than 7 times oversubscribed. We'll get pricing from the Korean chip giant later on today. Plus, meetings from the Fed's June meeting reveal some officials making the case for a hike as fresh escalation in the Middle East once again threatens the inflation outlook. Well, let's check in on these markets. 6:30 a.m. if you're just joining us in London, and the MSCI Pacific Index is now negative, down 0.3%. This after the earlier gains that we had seen for chip stocks, so losing momentum in the Asian session. European futures outperforming this morning. They're pairing some of their gains before. Of course, we did see a sharp sell-off yesterday here in Europe, and Wall Street not so enthusiastic towards the open. We had a choppy session yesterday on the S&P as well. Shares really knocked by President Trump saying that the Iran ceasefire may be over, but then pairing those losses when he said that he doesn't think that the conflict will start again. But as I say, we are on the second day of US strikes on Iran, so let's look at the cross-asset picture. Brent is now flirting with $79 a barrel, up 0.9%, so we're up for a third straight day on oil. This feeding into expectations that the Fed is going to hike rates. Yesterday, we saw the 2-year Treasury yield climbing to near its 2026 high, steady now in the Asian session at 4.20 on the 2-year. And the Bloomberg Dollar Spot Index still in a narrow range here, not doing much at the moment. But we'll get back to the dollar in a little while. We'll be talking about safe havens through the geopolitical uncertainty. But first, let me take you to our front pages this morning. I want to kick off with the Financial Times. It leads, of course, with the latest US strikes on Iran and President Trump casting doubt on the prospect of a deal with the country. The Wall Street Journal, meanwhile, focusing more domestically on US politics and Democratic nominee Graham Plattner ending his campaign for the Senate in Maine after an allegation of sexual assault, which, important to point out, he denies. Then, here in Europe, we can look at Spain's El País. It leads on comments from President Trump, who says that the country redeemed itself through committing to a major payment just hours after threatening a trade embargo. You can hear the relief. Well, now you can get a roundup of all the stories that you need to know to get your day going in today's edition of the Daybreak newsletter, which, as ever, terminal subscribers can find by going to DAYB Go. Well, coming back to the markets, and that flare-up in tensions between Iran and the US has reignited inflation concerns. You've got oil rising, bonds falling, and safe havens very much back in focus. With me now, I'm pleased to say, is Trevor Charlesley, Senior Technical Strategist over at Corpay. Trevor, thanks for coming back in.
Thank you very much indeed for inviting me.
So you are quite dovish in your outlook, I think it's fair to say. And I want to dig into this, given all that we've seen in the past few weeks, particularly this re-escalation in the Middle East. What would it take to change your outlook on the dollar from Trump? I mean, we were talking to our defence analyst earlier about potentially him trying to take Carg Island. Would that make you change your dollar view?
It's an interesting point. I think as far as Carg Island is concerned, if it was a situation whereby President Trump turned around and said, actually, I'd like to escalate, to de-escalate, I think that's a plausible course of action. I think as well what stood out to me yesterday from listening to President Trump was that he said he thinks the flare-up will be short-lived. And I think with all of this, what we've seen is the intention for the president to actually, he needs to extricate himself from this, especially before the midterms. Now, Iran, I think, wants to continue and try and bring others in because it's their economic weapon, should we say. But I think that what we've seen so far with possible, unfreezing of previously frozen assets. We've also seen sanction relief. There's possibility of a $300 billion infrastructure fund. So, you know, with the flare-up, those have all gone away, and you may well find, I think, that if you could get this escalate to de-escalate, but after that, there's still the idea that really maybe you can just get this uneasy peace or truce, should we say. And in that case, I'm thinking that actually oil may not continue to go higher, it may come lower. Citigroup over the weekend, I think it was Friday, they turned around and said actually their forecast was $60 for Brent. I mean, that's pretty dovish.
But that was the weekend.
That was the week. No, I agree with you. But at the end of the day, I think the bigger picture is the president really doesn't want to keep this going. The more it goes, the more it's bad for him, and he sees that.
So you're banking on logic to prevail when it comes to the geopolitics, but it doesn't stop your analysis of the Fed, right? So you think that Kevin Walsh is a dove, despite the Fed minutes, despite what we heard in Sintra. Why?
I do. Well, I actually think that Sintra, the market took his comments as slightly dovish, because he turned around and he said, oh, we've seen some good productivity gains through AI, and also we've seen inflation risks decreasing. Okay, so
less hawkish than before.
Less hawkish than before. Okay. So, and I'm reading back on previous statements and comments from from Fed Chair Walsh before he was Fed Chair. He was saying you had to take a risk or take a chance on data and AI and how it would produce great productivity without inflation. Now I do note, you know, that 9 Fed members turned around and said, yes, we think that AI inflation can be there, but it may well not be so so long-lived, shall we say. And in that case, I think when you look at the tariffs, which will start to come out, the tariff effect and inflation will start to come out of the figures relatively soon, so looking at UBS data, then you look at the AI, how long is that going to last for that inflation effect? And then you look at the movement in oil, and I'm thinking actually he's given us his forward guidance. He's turned around and said he's determined to give us price stability. That, I think, is all we're going to get. And so, therefore, if we don't get... I looked at Bloomberg yesterday, and WIRP said, actually, the markets expect 100% chance of a rate hike in October. If we don't get that, and we had a weak non-farm payrolls, and the updates and the revisions were negative, I'm thinking the more you don't get a rate hike, you actually don't get anything for the end of the year. And then you get the 5 committees coming back, and then the task forces coming back. And Fed Chair Walsh says, actually, you know what? It's all great. Inflation is not so bad. Maybe oil is at 60. Wow. And then you can see, actually, the impetus for dollar strength has gone, and that's where the psychoanalysis comes in.
How much could it fall if the hikes don't materialise?
Right, so this is the thing. So from the analysis, from the technical analysis, we can see that actually the first target would be around about a 4% fall. As long as we stay below 102.70 in the dollar index, we could see down to 98. You get down below 98, then you could see 92, but over 12 months. And that's where the technicals come in, and that's what they're sort of implying, should we say. But obviously, look, fundamentals push cycles all over the shop, so...
Well, let's look at the other side of that then, euro-dollar. When and where does it peak? We've got the ECB minutes coming later. We're looking for any appetite for a follow-up rate hike, and then we've got to factor in the latest from the Middle East as well.
I know, it's difficult. It is very difficult. And I think as far as the ECB is concerned, and as far as the technicals, again, the psychoanalysis, which is the timing, they're suggesting, yes, we can get another push lower for euro-dollar, but maybe only to 13.05, something like this, and then actually it's finished. And then you start to go... I know. Then you start to go higher. Now, sometimes the technicals can forerun the narrative, and actually the narrative quite often does change to fit the actual price action. So I think, yes, we can still get another push down in euro-dollar, but after that, then I think we may well start to push higher, at least into the range. Similar to sort of sterling. You get Andy Burnham coming in on July the 20th.
Yeah.
Right? You get an idea who's going to be his chancellor.
Yeah.
You have a reaction to whoever it is, and then we're done.
Do we, though? So it's not priced in that we have Ed Miliband as chancellor?
No, I don't think it is priced in, and I think Andy Burnham is taking his time. You know what? I actually think... the way that he's spoken to Jim O'Neill, the way that he's spoken to Andy Haldane, he doesn't want to upset the boat, basically, or, frighten the horses, as they say. So in that case, actually, I give him, so far so good. Let's see what the policies are. Let's see how much it's going to cost for him to build lots and lots of council homes, for him to actually nationalise energy and water. And then we can, and I think investors are basically, OK, let's wait and see what does happen. If it is Miliband and he decides to take quite a turn to the left, shall we say, then in actual fact, yes, I can see sterling dollar coming down, maybe having another look at 130, 150. But actually, we've seen that 3 or 4 times before, and it's held. And 130 is psychologically important. And if the psychoanalysis is there or thereabouts, you can go back into the range, and then we'll see what happens with the dollar again.
I don't think she'll mind me telling you, Trevor, I got a text from the Chancellor yesterday saying, don't write me off, I'm fighting to stay.
Well, listen, I think the markets would appreciate it. If she stays, then in actual fact, it's a safe pair of hands. If she manages to pitch herself into the job, congratulations. And then we may be going higher for sterling.
All right, let's see if the current occupant of number 9 Downing Street is still there on July 20th. Trevor, always great to see you. Trevor Charlesley, Senior Technical Strategist at Corpay. Well, President Trump's announcement that the ceasefire with Iran is over, launching a second straight day of strikes, is of course going to be top of mind in Brussels as well today, where finance ministers are going to be gathering for a Eurogroup meeting. Let's go to Brussels now. We can speak to our Bureau Chief, Suzanne Lynch. Morning, Suzanne. So how's the EU reacting to Trump's comments this morning?
Well, look, it's just yet another twist and turn in Trump's rhetoric and actions when it comes to the Middle East. Now, I think there was a sigh of relief that the NATO summit went relatively well in terms of Trump underlining his support for Ukraine. But of course, the escalation of tensions in the Middle East has now caused a lot of concerns here in Brussels. European countries, European governments are trying to keep a lid on these energy costs that have been soaring since the start of hostilities earlier this year. You've got the European Commission here, who is very concerned about countries, spending too much, breaking those fiscal rules in order to shore up their own economies as their individual households and businesses face energy costs. So one of the discussions that's going to happen here today is whether there is more flexibility for countries within the fiscal rules to spend on energy. Now, already the Commission has said, yes, there is. They're giving a small amount of leeway. And countries like Italy and Spain, who'd really been calling for this, were very happy about that. Last night, we reported that, in particular, nuclear energy and spending on nuclear power will also be included on that. So we expect a lot of discussion about those issues around costs and energy today.
And Suzanne, there are some big guests at the meeting today. You've got the Chancellor of the UK herself, Rachel Reeves, also Mistral CEO Arthur Mensch. What are they there to discuss?
Yes, interesting. You were just speaking there about Rachel Reeves. She will be attending this meeting this evening. We're told that a lot of this is going to be about the energy discussion, about how Europe can work with like-minded partners like the UK, like Norway, for example, and some of the challenges they're facing, also to do with semiconductors and imports and that kind of thing that they're powering the next generation of AI. Now, we've been reporting separately that those Brexit reset discussions had been hitting a few walls here. Obviously, we're going to have a new occupant of number 10, maybe number 9. So that conversation may be moot for the moment, but is significant that Rachel Reeves will be here this evening. And as you said there, the head of Mistral as well, we expect, he to brief and discuss with ministers the AI challenge, where Europe is standing in this race. I think there's a lot of demand across Europe for governments, for policymakers to ensure that the European side are at the table with this next wave of AI investment. So that's going to be a key topic of discussion tonight over dinner here in Brussels.
All right, Suzanne, thank you for your coverage. That's Suzanne Lynch, Bloomberg's Brussels Bureau Chief. And don't forget, Suzanne's newsletter, Brussels Edition, is published every weekday, and you can sign up at bloomberg.com/newsletters. Of course, we meant number 11 Downing Street, but with all this movement, it's hard to keep up. But look, coming up on Daybreak Europe, why competition from China could see VW axing up to 100,000 jobs. So more on that story next. This is Bloomberg.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, the board of Volkswagen is today expected to consider plans for a sweeping restructure of the global car maker. Bloomberg understands that the proposals could ultimately eliminate as many as 100,000 jobs and close 4 German factories. We're joined now by our automotive reporter, Stefan Nicola, for more. Stefan, this is historic. What do we know about these plans that have been drawn up by the VW CEO, Oliver Blume?
Yeah, good morning. Absolutely. This is the most comprehensive reform package that Volkswagen has attempted in years. CEO Oliver Blume wants to cut as many as 100,000 jobs and close 4 German plants. He wants to get rid of duplication in the model portfolio. He wants to make VW leaner, faster, more competitive and more profitable in the end. He'll go up against powerful labor unions that hold sway in the supervisory board. So today is the first meeting of those 2 sides, the supervisory board and the CEO, and there'll be a tough discussion, I expect, about those job cut plans.
But what should we read into the problems at VW about the state of the broader European car industry right now?
Yeah, VW is sort of a microcosm for the whole European auto industry. Competition from China has increased significantly. Energy costs are still high in Europe. Labor costs are high in Europe. So all of that is coming together. The special case for VW is that it's used to be very, very strong in China, and the market there is slowing. Local competitors like BYD are getting better, are getting bigger, and they're coming to Europe. So all of this is coming to a head now. On top of that, the market hasn't really returned to the levels before the pandemic. So all of this is happening in a shrinking market, which is really, really tough for all of the players, and not just Volkswagen, but also Stellantis, Renault, Audi, BMW, Mercedes. They are all in cost-cutting mode, and they're all trying to adapt to this new world.
Stefan, thank you for the reporting. That's Bloomberg's Stefan Nicola. Well, on this subject, ahead of that VW board meeting, we've been talking to the president of Auto Lobby, the German Association of the Automotive Industry, and Hildegard Müller told us that she admits the country's car industry really needs to go through significant change.
The situation in the whole automotive industry is like the discussion in VW. I mentioned the transformation from combustion engine to electromobility that costs us in Germany between 2019 and 2035 around about 235,000 jobs we are talking about. So that also means that not every plant, not every production location can be there also in the future. So there must be programs for restructuring. And that showcase also that we have huge discussions discussion about the question of employment. That's not easy because the German automotive industry is located in a lot of region in Germany. It's stabilized a lot. And whereas in automotive industry, there's a school, a doctor, a bakery, and so on. So it's an ecosystem that is infected from this discussion. But when we want to do this transformation, we have to have two things in our mind: to be as competitive as possible, to have as many jobs here also in the future, and on the other side, to be open to the question, how will the transition be? What does it mean for the people? Where can we find alternatives for the future? And that means at the end that we also have to be open about closing of plants and so on.
How concerned are you about the supply chain, and are there suppliers who simply aren't going to survive this transformation?
First of all, it's a great ecosystem we have here in Germany. We have the intelligence over the whole supply chain, from the supplier to the OEMs. We have closely a great experience in working together, finding solutions and innovations to speed up production and so on, because we have this special structure of working together. So we want to have also in the future this, but we will have it in a different kind, in different ways. And we have a lot of suppliers who also follow OEMs going to other countries and regions, but that's not for every supplier, especially for the small. It's a great challenge we live in. So we do all what we can also as within my association to support our companies on this way of transformation.
Hildegard Müller, president of the German Association of the Automotive Industry, speaking there exclusively to Bloomberg's Chad Thomas. Now to some of the top stories we're following for you around the world this morning. Rahm Emanuel is warning that Israel is becoming a pariah under Prime Minister Benjamin Netanyahu. The former Obama chief of staff, who's a longtime Democratic supporter of Israel, said that Washington should end unconditional support for its ally. In a speech at Tel Aviv University, Emanuel said that Israel cannot fight indefinitely against a world that has stopped believing it has the right to fight. Elsewhere, Graham Plattner has suspended his US Senate campaign in Maine after a sexual assault allegation led support from fellow Democrats to collapse. His exit throws a crucial Senate race into turmoil, with Democrats now facing a July 27th deadline to choose a replacement. Speaking in a social media video, Plattner repeated his denial of the claims against him.
I have faced some very serious allegations, and I just want to make it clear. This is all false. We did it the way that we were told we are supposed to make change, and we won. And now they are not going to let us have it. Not if it's me. And so we're suspending campaign operations.
Plenty more coming up. We'll frame your day ahead with some terminal charts. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:55 a.m. here in London, and a few terminal charts to set you up for the day ahead on where markets begin this Thursday morning. Because, of course, we start off with the Fed minutes that got through last night. Traders trimming their Fed cut bets, given that there is such a hawkish flavour to these minutes. But flip the board over, and, of course, we have had an escalation in geopolitics as well in the Middle East. The tensions flaring up again, and as that has happened, we are also seeing less of a chance of cuts when it comes to the Federal Reserve. So the more hawkish Fed markets have seen, the weaker gold has been. Flip the board one more time. And the lesson that we are learning really is when geopolitics is unstable, you want to be in the place that continues to grow regardless. Tech. Now, we have seen the Dow and semis recently moving in opposite directions again, but the escalation bringing back a rotation into chips. So when the world gets unstable, grow the thing that is your insurance policy. Tech seems to be the moral of the story for now. But you can get all these charts on the terminal at CHRT TV Go, all the charts that we've used today and across Bloomberg TV's different hours. Let's take a look at the risk events for today. We've got trade data coming out of Germany at 7 a.m. London time in just a couple of minutes. Then at 12:30 p.m. London time, it's the ECB's minutes. Are we going to get a follow-up hike from Frankfurt? And then, of course, it's SK Hynix ADR's pricing. That's happening just ahead of the NASDAQ debut tomorrow. It's early this afternoon in New York when we'll get that pricing. We'll also be hearing from the SK Hynix chairman as the chipmaker debuts its US debut at 3:30 p.m. London time. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca? Maybe somewhere in the middle.
What is going
going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. It's Thursday the 9th. This is what's going on. The US hits Iran again. Iran hits back. The Fed minutes were definitely hawkish. And the Cosby has another wild session. But SK Hynix's US ADR offering is apparently massively oversubscribed ahead of today's pricing, Anna.
Let's have a look at where we are on European futures then, Guy. And actually, we turn our attention to the US session of yesterday because the European session closed out at the lows of the session in the US yesterday. And so everything from there was upside over in the States. And so we need to factor some of that in here in Europe. So we are expected to see a pretty strong bounce in European stocks at the start of our trading day. Yesterday, the Brent price went over $80 a barrel. We paired some of that later in the session, and we're continuing to pair a little bit of it, certainly the intraday move this morning. So we're down by 0.5%. But we continue to watch what impact the latest attacks are having on the Strait of Hormuz. And gold, we've seen a bit of pressure on gold as things have turned more hawkish in the last few weeks. We're still above 4,000, but we'll keep an eye on the precious metal. We are currently up, actually, by 0.5%. The countdown to the opening trade starts right now.
Good morning. So we've got an hour to go until the equity markets open here in Europe. Let's talk through kind of what's going on and what we know at this point. So overnight, we've seen further strikes. We've seen the US hitting 90-plus targets in Iran. We've seen Iran hitting back into the northern Gulf, into places like Bahrain and Kuwait. That's the kind of the situation on the ground. The surprising bit this morning is that oil prices are actually lower. So what you've got is a Brent crude price that is down by 0.4%. We're trading at 77.69. The market feels, it looks like, that it is comfortable with the idea that we are going to see this kind of tit-for-tat action, but we're not going to see escalation from there.
Yeah, and that's the assessment the market is making, because President Trump, yes, yesterday he was, saying that the ceasefire was over, but then later he did walk back the comments a little bit, suggesting that this was not a full return to war, and the market will have to make its own judgment about where it thinks it goes, I suppose, with the current level of violence. But yes, maybe the market is prepared to fade some of the move that we saw yesterday, and that's what we've been doing. So we went above $80 a barrel, now back below 78 at 77.66. In terms of the Strait of Hormuz, we did see this having quite a big impact, or at least we think so, because with transponders, being off increasingly, it's difficult to say, and signs that electronic interference is back. So ships moving at strange speeds and being in strange locations isn't helping anybody get a sense of what's happening here. But it does seem that the things that are going through with transponders on are on the Iran side, and things that it's quieter on the Omani side.
So it does seem that there's been an evolution here, which is not about tankers coming out, it's about tankers going back in, and whether or not insurers, owners and captains will be prepared to let tankers go back in a situation that looks increasingly hostile. Do you want to have your tanker trapped again? Are you prepared to take that risk? And if the answer is no, then this initial glut as the oil has come out fades quite quickly. Yes, and the risk assessment around going back in versus coming out must look pretty different, really, mustn't it? Knowing what we know now, would you send tankers in is a different calculation. In terms of what traders have been doing with all this information, we've talked about the oil price then, Guy. It has dropped down from that high above $80 earlier on in the week, so yesterday, and traders broadly dusting off then this kind of Iran playbook and going into tech stocks, and that seems to be where some of the strength has come from. We've seen the oil dynamic play through global markets. We're also seeing the inflation dynamic play through global markets, and sometimes they're impacting the same asset. So it's difficult to always say where things are being driven from. But the Fed minutes, they were 22% shorter than the month of April, which I think is worth noting, given we were expecting something a bit shorter. We did get the many and the few. All of those references still live on. But the focus really was on some of the more hawkish language. And so there were a few at the Fed who saw a case for a June hike
hike. We didn't get one,
Yeah.
of course, but that is certainly one of the more hawkish lines.
So everybody's been running their large language models over this, and yes, it's shorter, but also significantly more hawkish than maybe the models would have suggested. That appears to be the tone and the takeaway from this. And I think that's caught the market a little bit by surprise. And I'm surprised that the market's surprised by this, because the tone out of Walsh has been quite hawkish thus far. So what do you do with this? The market's got 1 to 2 priced in. Is that about right? Walsh is clearly pushing this idea about price stability. He is clearly concerned about that. And I thought that the kind of the key takeaway for me was, this isn't about energy. This is about a whole range of factors that are driving inflation, and including AI and the data center build out, and what that is doing in terms of the inflation story in the US.
And that's really interesting in the context of Walsh, who we know many months ago, before this became quite so current, has talked about AI being a deflationary force. More recently, and just at Sintra, he was acknowledging that in the short term it does seem to be inflationary, but that does, you're right, come through in the minutes. Many seeing AI infrastructure as leading to an increase in prices for technology and electricity products in the United States, and so that seems to be a line worth thinking about. In the context of oil prices going higher, we've also seen a reassessment of where rates should be from a European perspective as well. So the Bank of England and the ECB, we've seen that pricing moving around. We're now back to factoring in almost 2 hikes from both of those this year. So that spike up in oil prices did that.
So we're going to get the accounts from the ECB a little bit later on, so we'll get further information to kind of bolster the case around that. Let's talk about tech. There's a number of different factors we need to kind of throw in, one of which is we've had another wild session in Korea. We've had a better session in Japan, and China looks quite interesting from a tech point of view. So maybe you're getting some kind of rotation around what is happening here. The real standout story, though, this morning is what is happening with the SK Hynix ADR. And it appears to be massively oversubscribed, 7 times oversubscribed. So clearly people want a piece of this in the United States. And that's interesting in the light of the fact that we've seen huge selling by foreigners out of Korea.
Yes.
So this...
Are they linked?
The two don't... Well, they're either kind of massively linked or just make you scratch your head and go...
Yes.
So if you don't want to buy it in Korea, why are you buying SK Hynix at kind of similar valuations in the United States? Does that make you feel more comfortable? I don't know.
Yes, and that's one very plausible question to ask. And another possible link, are you selling Korea to get involved in the US listing? I mean, that's another idea that's been, doing the rounds. This is big, isn't it? It would rank as one of the largest ever debuts in the US by a non-US company. So it's pretty sizable, the offer here. And interesting that this has an FX effect as well, because another fascinating disconnect has been the fact that the Kospi did so well up until now. It's in a bear market, but it did so well, and at the same time that did not push the won higher, because everyone was having to reevaluate their won positioning on the back of the size and scale of their Kospi positioning. So that was quite an interesting dynamic. And now we've got the president's policy chief in Korea talking about how the weak won is temporary, because it's going to take time for dollars to come back into won, and they're even drawing a link with the ADR, saying that they are ready for some volatility, saying this is going to drive more of that currency flow. So we'll watch that. In amongst it, we've actually got a policy rate decision from the Bank of Korea next week, and so that's going to be something we'll watch very closely.
Interesting to see overnight the Kiwis down in New Zealand pushing a hawkish line again, another central bank driving that narrative. Peter Kinsella's going to be here very, very shortly from UBP. We'll get a take on the FX story. Helen Jewell, looking forward to seeing Helen. BlackRock International CIO for Fundamental Equities, and Simon Hussain, Alpha Value Aerospace and Defence Equity Analyst. So much to talk about in the European defence space right now. Really looking forward to that conversation later in the show. Yeah, absolutely. We have a number of things on the agenda to look ahead to, so let's tell you about those. Today we have an EU finance ministers meeting. We also have a VW supervisory board meeting, so a bit of macro and a bit of corporate news perhaps. Plenty of news headlines around the shape of the jobs market and the auto sector in Germany. 12:30 p.m. ECB publishes its account of its June meeting, as Guy was saying, so that's interesting in the context of that oil-related repricing of ECB bets. And 12:30 p.m. the UK Labour leader nominations open. We wonder who will stand. 1:30 p.m. US initial jobless claims. We've been talking about Andy Burnham for a long time as probably likely the next Prime Minister, so it takes a bit longer than today, but at some point we get some clarity. Are there other names in the hats, or is he just the PPM, the probable Prime Minister? Is that very good shorthand? We'll introduce that. PPM. OK. What else do we need to talk about? We need to definitely get back to what has been going on around the Iran story, the defence story, the NATO story. President Trump again questioning troop levels in Europe following what can only be described as a contentious NATO summit that took place in Turkey. I think he's back home now. We'll discuss the details next. Plus, we'll get back to that issue that Anna was just mentioning surrounding Volkswagen. Oliver Blume facing a defining test as he pushes for deep cost cuts so the German automaker. We'll preview the meeting of the VW Supervisory Board meeting a little later today. Up next, we're going to be joined by Trevor Greetham, Head of Multi-Asset at Royal London Asset Management. You got any questions for Trevor? You got any questions for us? Any of our other guests? You know how to get in touch with us. IB plus BB TV Go is the function on your Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
We have many ways we can win, but we've already won militarily. They have very little. They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal.
President Trump speaking on board Air Force One after a second straight day of U.S. strikes against Iran, threatening to further escalate an already fragile ceasefire. In the past few hours, we've heard from the U.S. Central Command saying forces hit around 90 Iranian targets. Bloomberg's Abir Abu Omar joins us now from Dubai. And Abir, how significant is this action overnight? We heard from President Trump yesterday that this would probably happen. So in that sense, the market saw it coming. And what state is the ceasefire then really realistically in, do we think?
Well, Anna, fragile, as you have mentioned in your intro, and it does look like this is the most serious escalation in the war since the ceasefire, or the temporary ceasefire, the signing of that MOU was reached about 3 weeks ago in June. Now, it's still too early to tell whether we're going to go back to a state of kinetic warfare similar to the one we've seen in March. No indicators of that happening again, but this is definitely an escalation in the rhetoric between Iran and the United States. And as you have mentioned, the United States did strike Iran for a second straight day overnight, President Trump alluding to the fact that that would happen. When he was asked about whether we'll go back to a state of full-on, full-scale war, he said he doesn't know, but that would be one very quickly. And then on the Iranian side, the response came in the shape of attacking countries in the region, in the GCC, that is Bahrain and Kuwait. We heard Bahrain saying that sirens were sounding in the early hours of the morning, Kuwait reporting some infrastructure damage as well. So similar to moves we have seen by Iran in previous months, in previous weeks. Now, this all started when Iran attacked a ship in the Strait of Hormuz at the beginning of this week, an LNG-laden ship flagged to Qatar, and that caused the United States to come out and retaliate against Iran. President Trump yesterday in NATO in Ankara saying that as far as he's concerned, the ceasefire talks are over. Now, the important nuance here is that he said that the negotiators that have been carrying on these talks with Iran can feel free to go on and continue these talks. So we're seeing again this back and forth in the president's own narrative. So quite early to tell if we're going to go back to a state of full-scale war. For the time being, oil markets are now trading flat. They were edging higher earlier this morning. The movement in the Strait of Hormuz, our colleagues on energy teams are reporting, is coming to a standstill. So we're seeing ship owners coming back to the state of caution, treading with caution in the Strait of Hormuz, and definitely trying to stick to the routes that Iran has laid out for them to avoid such a situation from happening again. But, Anna, it's just important to know that Iran is not backing down from this. Through the parliamentary speaker, one of the top negotiators, Ghalibaf, he said earlier this morning, and I quote him, that the U.S. still hasn't learned that bullying and breaking commitments no longer can come without a cost, and that if the U.S. strikes, Iran will strike back. So this is the state we're in, a fast-developing situation in the Middle East.
Thanks for updating us, Abir. We'll be back throughout the show with updates on what is happening in the Gulf. Let's get a take from a market point of view. Trevor Greetham, Head of Multi-Asset at Royal London Asset Management, joining us around the table. Good morning.
Good morning.
What do you do with this? We thought it was over. It's not over. Clearly, we're going to see significant volatility. This conflict isn't over, but it's just in a different iteration than it was a few weeks ago. How do you invest around that?
Yeah, well, the first defence against geopolitical risk is diversification. So if you've got assets like commodities in your portfolio, commodities obviously are reacting positively to the news of renewed fighting in the Middle East. And we've had a series of different inflation shocks in the last few years with the pandemic, with Russia, Ukraine. Yeah. It gives you much more stability to have something like that that can smooth out some of the bumps.
It feels like the trade, though, this morning is by tech. That's the safe haven from this.
Yeah, the interesting thing is, I mean, history never quite repeats itself, but often it rhymes. And we've got a 1970s-style Middle East crisis we're trying to navigate at the same time as what feels like a 1990s-style technology boom/bubble. And they keep alternating. And sometimes, I mean, most of this year, you've actually been making money in oil and in silicon chips, which is a bit weird. And they do seem to kind of keep coming back.
And I mean, at some point, those two worlds should come together, shouldn't they? Because this very modern world of silicon chips is still very energy hungry.
Absolutely. And all the data centers are very energy and water intensive. And people were saying at the time of the massive sort of .com and telecom investment in the 1990s, there will be the kind of revenge of the old economy, because you needed so much copper to basically do the electrification that was part of that wave of innovation. And it's the same this time. And they may also find themselves sort of colliding via the Fed, because if you've got energy prices generally rising because of geopolitical risk and the Fed's raising interest rates, then at some point tighter money is almost always involved in the bursting of bubbles.
OK, and let me ask you about tighter money in the context of all of the bond issuance we're seeing from those that are building out those data centres. We were talking about that Amazon story earlier on this week, just testing the limits of appetite, actually, for this kind of credit within the investment community. And but there's no sign of it slowing down. We're seeing a stellar amount of issuance from a sector that hasn't issued a lot in the past.
Right. And it's very US focused, this. So you know, as part of the way we sort of try to diversify diversify our pension portfolios. We've got less in US equities than you might otherwise have if you just follow the market weight because of valuation. And we're doing something similar on the credit side, where we're diversifying away from high-yield credit towards asset-backed issues in Europe, for example, or emerging market corporates. So I think there's a very US-specific issue here. And we were chatting before we went live about how common bubbles actually are in individual, different countries. So the US's last big bubble, of course, was .com, which is like 25 years ago. But if you start in 1990, you had Japan, you had the Asian tigers, then you had .com, then you had the China bubble, and then now we've got this bubble. Bubbles.
So this is a bubble?
I think it's a bubble. It's a boom and a bubble, right?
Okay.
So when you get an innovation wave like this, it will get overpriced. I mean, SpaceX issuing at 90 times revenues for a loss-making company. It's going to make you ask questions, but the question is, at what stage will it end? And these booms or bubbles, they go very vertical towards the end.
Does the Fed need to tighten for that to happen?
I think so, but you can imagine there's also this private sector part of credit which could tighten. You can get one of these Minsky moments where credit just suddenly goes, oh, I've had enough of this, and switches off. And it could be that rather than the Fed.
And spreads have stayed pretty tight, though, haven't they, into this, up to this point? So what triggers that rethink as you described, Trevor?
Yeah, well, it could just be the sort of the weight of overinvestment, and then people saying, well, hang on, what can we sell these AI tokens for? So it could be a kind of, collapse in the pricing expectations that's behind all of this capital spending. Or it may need higher interest rates from central banks.
Because some people look at those token prices and say, yes, that's the indicator to watch. And others say, well, hang on, no, the lower the prices, the more demand there'll be and more people will just come in. We're at that phase of this technology rollout.
My suspicion is that you'll need Fed tightening to end this. And it's, there's a kind of old saying, it's not the first rate hike you need to worry about, it's the last one, which is one of those sort of double-edged, because you don't know which one was the last one until it's too late, right? But in 1999, 2000, they were raising interest rates for 9 months. What finally turned the market, I think, was when the Fed did a 50. In 87, what turned the market was when the Fed and the Bundesbank were suddenly raising rates together. It's one of those moments when people go, well, this is not just fine-tuning. We really need to tighten. And that's often what is the final straw. I don't think we're there yet, actually.
Yeah.
So we're still moderately positive on equities as a broadening out story. And on and off, we're long tech or long commodities. It seems like alternating between the two.
What did you make of the minutes last night? Have you seen them? They looked hawkish, but not, to your point, kind of massively hawkish.
No, I'm a bit sceptical about Kevin Walsh. I've met him a few times over the years, but I think that Kevin Walsh is coming out sounding hawkish. Well, he would do, wouldn't he? But I think once you see lower energy prices, if they do come back down again ahead of the midterms, feeding into less inflation, I think he's going to flip back to saying how deflationary AI is. So I don't think he's the guy waving the pin at the moment.
I wondered also what the sort of group dynamic was, having somebody who'd been brought in with the backstory that Kevin Walsh has, clearly the more traditional background, but then also the blessing of President Trump and the fact that there was expectation he'd be dovish. And what did that do to the level of hawkishness that we got from others around the table? I mean, maybe that doesn't matter now. It's all in the past. Yeah,
well, I do think that's part of the wobble that we saw, because when the so-called peace deal was struck and oil prices came down from $100 to $70, everyone sort of thought this is going to be a second leg up for technology and for stock markets. And it wasn't primarily because the logic was lower oil price, dovish Fed, more liquidity, and we didn't get the dovish Fed. So I think that has been part of the market dynamic. And we might yet get the dovish Fed, but I'm not sure we've finished pushing the oil price up yet either.
But if you don't think Walsh is hawkish, instinctively is hawkish, he's going to want to bring rates down as soon as the energy crisis has passed. To your point, do equities just keep pushing higher? Or do we continue vertical? In that scenario, what happens?
In the end, I think it's an overheating US economy that will get the Fed to tighten policy rather than an exogenous oil shock. Right. I mean, the ECB hiked rates because of an exogenous oil shock, and that's kind of their style, to be more headline inflation focused.
How hot is the economy now?
Well, it's okay, but it's not actually red hot, because it's a small sector, actually, economically speaking, that's booming. And there's a lot of, K-shaped economy stuff going on with things actually not looking that great everywhere. So this could last a while. And what I always say to people is there's a kind of tactical time horizon, which is the old Chuck Prince thing that, when the music's playing, you've got to dance. And there's a strategic time horizon, which is don't put all of your money in this area. Diversify away, think about valuation for the longer run.
Okay, Trevor, thank you so much. Really good to speak to you. Trevor Greetham, Head of Multi-Asset at Royal London Asset Management.
Thursday morning, what else do you need to know? The UK grid operator has issued a rare summer warning, citing tight electricity supplies as the blistering heatwave strains energy systems across Europe, and my ability to speak, it seems. The National Energy System Operator says extreme temperatures are reducing the availability of some generation. France already has curbed output at several nuclear reactors due to high river temperatures. Global diesel prices have hit multi-year highs. This after Russia said it was banning diesel exports for about 3 weeks. It follows Ukrainian drone attacks on energy infrastructure in Russia, which have led to domestic shortages. The ban threatens to further squeeze global fuel markets, which are already strained, of course, by the Iran war. And President Trump says a decision on US troop levels in Europe will hinge on how allies address his concerns over Greenland and the Iran war. Trump made the comments aboard Air Force One as he flew home following a contentious NATO summit in which he criticised allies over defence spending and their reluctance to help with the war in Iran. What you can also see him doing there is getting off one Air Force One and getting on another Air Force One. He had to fly the old one out of Ankara, and there's all kinds of speculation as to why. And then he, in the UK, switched planes and got on the new one.
Well, there you go. And he's been very critical of a lack of support from European leaders. So, maybe this counts at the margin. One thing that has been really interesting to develop is is his thinking around Spain. Because when he was sitting with Mark Rutte, the NATO boss, yesterday in Ankara, he was very critical of a number of European leaders. Some he named, some he didn't. But Spain often gets name-checked as one he's really not happy with. We had, talking about all the issues he had there. But then he changed his tune by later on when he was on board one of those Air Force Ones, saying, I will say, I did have issues, and I still do, but Spain came back all the way today. So we're still not quite sure what that means in terms of what Spain has offered, or he says they were trying to get away from some trade threats he'd made.
He definitely made some, sort of 9 o'clock yesterday morning here in London time, he was making some fairly aggressive threats towards Spain, and certainly it seems as if there's been a sort of de-escalation around that. I thought the most interesting thing to come out of all of this, though, was what he said around Zelensky and Ukraine and how positive that meeting was.
Yeah.
And the fact that he's going to allow the Ukrainians to build Patriot missiles domestically, which is actually in some ways could be a blueprint for Europe's defence crisis as well.
Yeah, very positive from a Ukrainian perspective policy decision, but also you're right, just the mood music and the warmth of some of the language around Zelensky was a real change. 7:26 here in London. Coming up, we'll get back to some of these market conversations, markets pricing in a new outlook for a Fed rate hike as inflation fears reignite. We will discuss with with UBP's Peter Kinsella. He'll be with us to talk.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission. we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Half an hour to go until the equity markets open here in Europe. Yesterday was a terrible day for European stocks. We were down and down hard, as a result of which we are now bouncing back this morning. The US session, back half of which was quite good, needs to be priced in, and that is what you're seeing on the screen in front of you. Euro Stoxx 50 futures up by 1.24%.
Let's talk about the bond markets, and the context here is important. Of course, yesterday we saw, with the oil price going higher, a quick re-evaluation of where rates would go here in Europe, and we saw bond yields rising in Europe. So that's the backstory. And then we're pulling back a little bit from some of that this morning. So as the oil price has dropped a touch, we're bringing those yields down a little bit by 2, 3, 4 basis points. So unwinding some of yesterday's move, but certainly not all of it. Now, minutes from the Fed's June meeting show that a few officials said there was a case for raising interest rates, though they ultimately supported the decision to stay on hold, of course. The minutes come amid concerns over inflation, now exacerbated by the flare-up in the Middle East, with markets bringing forward bets on the next Fed rate hike to October from December. Let's bring in Peter Kinsella, Investment Services Head of Union Banque Privée. Very good to have you with us, Peter. And there was a nice little summary of what we heard from the Fed yesterday. So bringing forward our hike expectations as a result. What stood out to you then from the minutes?
I think really the big shift really I think that we've seen in the I would say basically in the FOMC voting, 9 members vote, not voting but bringing their red expectation on the dot plot for a 25 bip rate hike this year. It basically suggests that I would say the overall momentum on the FOMC is veering towards a rate hike this year, which was a big shift in January, I think, and clearly you've seen the market interpretation. I think that also reflects what we've seen overnight and in previous days with the oil price and the latest attack on Iran. And really, I suppose the market is now saying, okay, it's really veering towards really meaningfully pricing in a rate hike this year. Okay,
and we were talking with Trevor Greetham in the last part of the programme about whether that is the thing that will be needed to burst any bubble, if you identify bubbles as being present in these markets at the moment, Peter. I mean, is that the way we're thinking about Fed rate hikes right now? Not that will be the driver, but that would be the thing that would stop.
I would say no, if I'm frank. Depends whether you believe we're in a bubble or not, which is a different discussion. But I think given that the market has only priced in one rate hike, if you look further out the curve, we've not really priced in an awful lot. So the market's kind of saying, right, one and done. I think in order to cause real pain for the equity market, you would have to price in a series of further rate hikes, which at present doesn't seem to be the case.
How high? What would it take to slow the US economy down? At the moment, the US economy feels like it's absolutely fine, maybe accelerating. One and done doesn't feel like it's going to do anything. Why even bother?
Yeah, look, I think the question is, well, do you have to raise rates beyond where we're at? Is there a real problem? So if we look at sort of underlying inflation, you're kind of in between 2.5% and 3% on core, depending on the measure you're looking at, right? So that's clearly above target, but it doesn't seem to be causing a huge amount of discomfort. And I think from the Fed's perspective, in reality, de facto, kind of 3% is the new 2%, right? I think that's the way I think about it.
You think they've accepted that? Because that's not what I'm hearing from Walsh. Walsh is saying price stability matters, we're above target, we need to get it back to target.
Which he does, but they've all been saying that for the last 5 or 6 years, and it hasn't really manifested itself, right?
Yeah.
So I think, broadly speaking, they'll not be wholly unhappy with that. Can they live with it? Yes. Does it cause huge problems? At the moment, I would say no.
Okay. So we don't get much. Do other central banks do much? Like, where do you think the ECB goes next? The market, Anna was pointing this out earlier, beginning to price back in some rate hikes out of European central banks. Again, why?
I think the difficulty the ECB faces is that they're potentially raising rates into a slowing economy, or even a potentially contracting economy, right? If we look at PMI data from the Eurozone, it's really been contracting for 3 or 4 consecutive months now. And that's bad news clearly in Europe. If we look at the inflation picture, sure, we've got a lift in headline CPI. Wage growth is actually pretty muted, right? So we're not seeing a pass-through to secondary inflation effects in the Eurozone yet. And we need to see evidence of that. But we're not going to see evidence of that until later in the summer, at the very earliest. So from the ECB's perspective, they've already done 1 rate hike. Could they do a second one? Potentially. Could that also be a mistake? Yes, it could.
So you think the last one was a mistake?
I would say, yeah, for me it was. And I'm very reluctant to use the word transitory. I think we all learned the lesson in 2022 about that particular phrase. But if you do believe that this is simply a supply side oil shock, right, in the absence of any increase in underlying European demand, then it's a policy.
And
mistake.
The crucial thing is it's not feeding into wages for you. That's
not yet
the crucial thing.
Yeah.
I think the ECB's accepted 3% inflation.
I would say absolutely not. Well, it's a different growth dynamic as well, right? They've struggled to get there and sustain it. I mean,
they had more success in bringing it down anyway, didn't they? They managed to get to 2 and stayed there for a little while.
Even slightly below for a very, very brief period. And I just think the underlying dynamic in Europe is just less.
What do you think rate the Bank of England's accepted?
Look, I would say from the BOE, if we look at it, the BOE lacks credibility, and you can really see that by simply looking at the 5-year forward, or the 5-year break even, right? It's consistently been above 3% since 2016.
So we've accepted 3% here?
De facto, yes, we have, in reality.
And, I mean, so if we're starting to see the market pricing in rate hikes in the UK because of the oil price spike that we saw yesterday, in part, I mean, would that be a mistake if we...
I mean, look, if we're 375 now in the BOE. We're pricing in 1.5 rate hikes. I think that's not it's not unreasonable, because we do see a pass through in the UK towards headline inflation much quicker than elsewhere. And I think the underlying dynamic here is tricky, because you've also got the debt sustainability question. And the BOE has a really tricky task to run. On the one hand, trying to basically keep inflation at bay, but the other, trying not to cause a problem in the gilt market, right? And we've seen that. We obviously saw that with Liz Truss. We've seen it in the past 2 or 3 years, following every single budget. So it's a tricky job they've got to do. Sorry?
Is Burnham going to be a problem? Hey, is Burnham going to help the Bank of England or hurt the Bank of England?
We'll have to see what he actually does on policy. If you look at what he said before and what he said recently, he's been quite nebulous. He's not given a hell of a lot of detail about what he's going to do.
I don't think he knows.
I don't think he knows, and I don't think the Treasury knows either. So we'll have to see in what he actually does on the fiscal side, right? But it's going to be tricky.
So that's the UK story and the gilt story. What is in the driving seat for the dollar right now, then, Peter? Because we've talked a bit about what's going on in the Middle East, and the first time around that was hugely a driver for the dollar, wasn't it? I mean, the dollar is actually down a little, oil down a little this morning. Are we back to that dollar as a haven? Is that is the knee-jerk reaction at times when we see an uptick in violence in the Middle East? Is that still the right one?
Yeah, I think broadly speaking, yes. I mean, we had a short dollar position on one of our discretionary funds, which we reduced and basically cleared several months ago. I think there are 2 or 3 things that are speaking in favour of the dollar at the moment. So the first is clearly the rise in front-end interest rate expectations. Right, we've gone from pricing in 3 rate cuts 2 months ago to pricing in a rate hike this year. So it's a 100 bip sort of round trip in front-end rate expectations. The second point is that if we look at US data, it's been pretty robust for the most part, as distinct from European data, which has obviously been poor, and elsewhere where you've seen some, I would say, rather mixed picture. So you've got momentum, economic momentum. You've got decent, very decent front-end yields, and that's really supported the dollar thus far. I find what's interesting about the dollar is that if we look at positioning, you've had a massive increase in net dollar longs. And the last time we had the current positioning in net dollars, the dollar index was about 5 or 6% higher than where we are today.
if we get a crisis, does the dollar go up or down?
Depending on the
causality.
Where
do I hide in the currency markets?
I would say Swiss franc is always the good one, without question. But the dollar at the moment has got front-end carry. All right, so I think in the current context, the dollar is where you've got to be.
Peter, thank you very much. Thank you so much for coming in. Peter Kinsella, Investment Services Head at Union Bancaire Privée. And warnings the war in Iran risks spoiling the global economic outlook.
There's, of course, still a lot of uncertainty remaining, and risks are very high, which is why what we also emphasize is that overall we do see risks on the downside, with the escalation of the conflict being a primary driver of those downside risks.
That was Petya Cueva-Brooks, the IMF's Deputy Director of Research, speaking to Bloomberg. We will discuss more on the fallout from the Iran war later in the programme. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Okay, welcome back. We've got 17 minutes to go until the equity markets open here in Europe. The FTSE's quite flat, which is interesting. Oil's down this morning, and I wonder whether that's a factor, but there's also other kind of threads you need to throw into that market too. But elsewhere, more broadly, European equity markets are higher. We went out at the lows yesterday in the US session. The US session then bounced, and we've had oil rolling over, which you could argue is a positive for European equities as well. So you're looking at a fairly decent session. coming. Question is, can it be sustained?
Yes, absolutely. And we'll keep one eye on what's happening in Spain and Spanish stocks, because US President Donald Trump says that NATO ally Spain has agreed to pay more after he threatened them with a trade embargo during the alliance's summit. Prior to the announcement, he criticised Spain over payments and support.
Spain is a wasted cause. We don't want to do any trade business with Spain anymore, by the way. I'd like you to cut it off. Spain is a terrible partner in NATO. They don't participate. They don't pay. I don't want anything to do with Spain. Cut off all trade with Spain, please.
Well, that was the morning. By the afternoon or evening, the tone seemed to have shifted. Let's bring in Bloomberg chief European correspondent Oliver Crook, who is still in Ankara and looking through all the things we've learnt and heard during this NATO summit. So could this spat then between the US or between President Trump and Spain, could it lead to further division between the US and Europe, Ollie? Is that how this should be thought, or is this much more of a small issue?
I mean, as you know, Anna, it's always hard to tell. I mean, we went into this summit, and Trump arrived sort of very bombastically, sort of angry about a lot of things, angry about Greenland, angry about the NATO support on Iran, and angry still about Spain, which is, of course, the only NATO nation that has not agreed to pay 5% of GDP on defense spending, which, by the way, is an issue not just for Trump. There are a lot of Europeans who are also dissatisfied with that fact. And so as the sort of press conferences unfurled and we discovered kind of the different parts of this sort of European complex that Trump has issues with, Spain really was highlighted as one of the main ones. And basically he said that he wanted to cut off all trade with Spain. And also reportedly in the room, we heard anecdotally that basically Scott Bessent was there, the Treasury Secretary, and that Trump basically told him to look into it, get it ready. And the Treasury Secretary said, yes, sir. And then obviously after that, there seems to have been another conversation to bring the escalation down on the question of Spain. I think with the question of Spain individually maybe is not a big deal for the Americans in terms of the trading relationship. But of course, the reason if this does indeed sort of move forward and there is any sort of trade argument with Spain, that will bring in the entire European Union, because of trade is no longer a sort of national thing that nations themselves deal with. It's decided at the EU level. So it could, of course, blow up the trade agreement. But it seems things have sort of come down. But this is a summit that really did put on display some of the tension, some of the things the president is still upset about. That being said, everything we heard from the president before the meeting was very different, reportedly, to what the meeting itself was like. What Trump was saying after the meeting is the word for him that he thought that sort of defined the meeting was unification, that there was a lot of love in the room, and that there was a lot of respect, yes, for the NATO alliance, and indeed for the Secretary General Mark Rutte, who really went through painstaking efforts to try to make this as smooth as possible.
Does that mean the US troops that are stationed in Europe will not be going home?
Well, not necessarily. That's something that we've heard from Pete Hegseth, the Secretary of War, that basically they're launching now yet another review of the American troop position across Europe. There are about 80,000 troops. You'll remember that the President of the United States said he would withdraw about 5,000 of those from Germany after those disparaging comments by the Chancellor of Germany, Friedrich Merz, saying that Trump was being humiliated in Iran. But this is part of a much larger story for the United States, thinking about its military footprint across the earth. This is, by the way, not just something for Donald Trump. This is something that Obama had been thinking about. There was the Biden surge after the invasion of Ukraine. They sent a number of troops back to the United States. But what we're going to get over the next 6 months from the Department of War, from Pete Hegseth, is a reevaluation of the U.S. troop posture. And I think we can expect the United States to use that continuously as a sort of stick and carrot for the Europeans, for individual nations. And apparently, according to Trump, the sort of troop movements within Europe will be governed by two things: in part the support for Iran, but also that question, the G word, Greenland.
Yeah, absolutely. Ollie, thanks very much. Bloomberg's Oliver Crook in the Turkish capital, Ankara. Let's turn now to today's markets in 3 minutes on the opening trade with our Asia Markets Executive Editor, Paul Dobson. Paul, should we start with Korea? It's so topical because we're still working our way through the ADR for SK Hynix. That's going to come to market tomorrow, of course. But the Kospi is only, I would say this with recent history in mind, only moving by 0.6%. That seems like a small move for the Kospi. What's been going on?
A small move, Anna, but I do think that it's a market that is worth starting with in this conversation. Remember, it entered a technical bear market in yesterday's trading, so the fact that it's finding some stability today should be reassuring for investors. I think there's a couple of things to keep in mind when you're looking at it. Number one, the biggest contributor to the upside there was SK Hynix, which, as you're saying, after that huge ADR sale in the US, which may be around $25 billion worth, 7 times oversubscribed as well. It shows that there's still some enthusiasm surely out there for the 2 large memory chip makers in South Korea. I think the other thing to pay attention to is foreign buying. We've seen foreign buying for 2 straight days in a row now. What I thought was really interesting was some analysis that was done in our Macro Man column by Cameron Crees yesterday, where he sort of dug into it and he was saying, are foreign investors a good judge of which way the market's going? And he found emphatically yes, in the 4 weeks after foreign investors are adding to their holdings of Kospi, the market tends to rise an awful lot more than if they're selling.
Paul, give me the broader context as to what is happening with the Asian tech story. We're definitely getting some rotation.
Definitely getting some rotation, but actually there seems to be a little bit more enthusiasm returning across the board today. So we definitely saw the Nikkei back to outperforming the topics in Japan, which is a positive AI sign. But I think the China stack is something that's really worth paying attention to here. So we have Zhepu rising as much as 22% today. That's a maker of large language models and software. It did a $4 billion capital raise and still managed to push higher. So that shows you that people are really interested and excited about that company, which has been able to raise its token prices repeatedly as it rolls out new models. So some enthusiasm there. Next week, we get a very large IPO, CXMT, I beg your pardon, which is a chip maker. So we'll see how that goes. But overall, in the Chinese stack at the moment, there seems to be some energy and enthusiasm buoying the market.
Yeah, just briefly, Paul, what's the latest on China? We've had some inflation clues, and we're working our way towards some growth numbers.
Yeah, that's right. So I thought it was really interesting in the PBOC's most recent sort of readout of its policy meeting. It was talking about with a new phrase about structural divergence. It's basically recognizing the K-shaped recovery, the K-shaped economy in China right now. And I think that that's starting to come through again in that inflation data, which was a miss on the downside. China desperately trying to, kind of get inflation going through the economy again, get growth going through the economy. What it does have is strong exports, and that's holding it up. That's the upside of the K, but the downside of the K, of course, is the depressed consumer. So next week we have a lot of data, including retail sales. It'll be worth paying attention to see what that tells us about the economy.
Paul, great stuff. Thank you very much indeed. Paul Dobson, Bloomberg Executive Editor for Asia Markets. Let's talk about house builders. Chloe, over to you.
Good morning, Guy. Indeed, UK house builders are going to be in focus today after some data coming out that shows that political uncertainty in the UK is really putting a strain on that housing market. People are not quite sure what to expect from potential economic plans from Andy Burnham that is making buyers and sellers quite cautious, and is happening at a time when the market had just started to emerge from this oil price shock. So we'll be watching out for all of those companies up here on the board, which, as we can see, have already been having a very tough year. It is also worth noting, as the head of market research behind this data said, that we are not out of the woods just yet, and that until there is greater clarity on this political backdrop, on the path of interest rates, we could see this housing market activity still being subdued. So that's definitely going to be a big sector in focus today. Moving on to some IPO news, with the French hotel operator Accor is said to be working towards an IPO of one of its units. The unit in question is called Ennismore Lifestyle. It has a very wide-ranging portfolio of restaurants, resorts, hotels, and the plan is to list it over in the US. Accor has been apparently looking and exploring this potential listing for a while. It now seems that it is in motion, and we'll be watching out for any market reaction there. And finally, let's end with some M&A with the engine maker in Germany. Deutz is buying the privately held defense firm FFG for 1.6 billion euros. There seems to be some more deal-making activity in the defense sector lately. We had Thales earlier this week buying the submarine drone company Excel Technologies. So there seems to be a lot more deal making there, and we'll be watching out for any market reaction on this particular deal and what that might mean for Deutz as well.
Okay, Chloe, thank you very much. So we'll continue to watch M&A within the defence space. That certainly seems to be a theme that we're talking about quite often these days. Let's get to the auto sector, and it's not entirely disconnected, actually, from defence, German autos these days. We're getting some lines out of Der Spiegel talking about how the VW management are seeking plant closures from 2031, and they're putting some dates on the Hanover plant and other plants over in the VW camp, which is interesting. And this isn't new, the fact that they're going to close plants. We knew this, and there's going to be a presentation of this plan by the CEO, Oliver Blume. He's doing a restructuring. He's presenting it to the supervisory board. And this plan could eliminate as many as 100,000 jobs and close 4 German factories. So we kind of knew this was coming, but now we're getting some dates.
Who sits on the supervisory board? Unions? Local politicians? People who want to protect jobs? This is a tough battle.
This is a hard
for
sell.
him to win. This isn't just kind of one stakeholder that is represented here, shareholders.
And there's some really interesting different views about where Germany goes with this, because Germany sells a lot of cars to China. And so in that context, you get too angry about Chinese car companies coming to Europe because then maybe you risk your own sales within China. That's one part of the dynamic. But within the wider European autos landscape, there are those who think that the Chinese approach on Europe is too much, it's too dangerous, it's sort of eating the auto industry from the inside, was the quote I heard when I was over in Frankfurt recently. And others say, no, this is just pragmatic. You know, we've got spare capacity in factories, so we need to use it. And if the Chinese car companies can use it, let's let them.
Or you can use these factories maybe to build other things.
Yes, exactly. Back to the defence link.
Back to the defence space. OK, 5 minutes to go until the market open here in Europe. Looks like it's going to be a fairly positive one. We had a terrible session yesterday. Usually means that maybe you get a bounce the next day. That certainly is what the futures are signalling outside of the UK, which is only up a little bit this morning, up by 0.1%. But keep an eye on oil prices. They certainly are oscillating around what we're seeing in terms of the Gulf picture. We'll also watch what happens with the gilt open this morning and the broader bonds picture post that what felt like a hawkish set of Fed minutes. We get ECB accounts coming through a little bit later on. As
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Okay, here we go. We are counting you down to the market open here in Europe. Couple of minutes to go. The picture looks positive, and let me explain why. Europe went out there. This is the US session from yesterday. This is the S&P. And then, as you can see, we rallied a little bit. And as a result of which, we have to price that back into what we're seeing here in Europe. So we get a positive futures picture emerging. It's not consistent across the board. There are some markets that look like they're going to benefit more than others. The FTSE in particular doesn't look like it's going to be up this morning. Oil prices could be a factor there, but they helped out the UK earlier on in the week. The Brent price is actually kind of oscillating around the negative positive line at the moment. Euro Stoxx 50 futures, though, up by 1.1%. DAX futures up by 0.8%. So it looks like we're going to have a positive index level day here in Europe, Anna.
Yeah, absolutely. And let's have a look at some of the individual companies it is this morning that could be on the move. We're continuing to watch the defence sector because, of course, we're just hot on the heels of all the announcements that came through from that NATO summit in Ankara. Well, Deutz is a fairly small business over in Germany, operates in the defence space, but it's agreed to acquire 100% of FFG from its private owner families for cash and newly issued shares. So we'll watch that just thematically within the defence space. Interesting. We'll also keep an eye on Accor in the hotels sector. They've lined up a number of investment banks with the potential for an IPO of one part of their business, that is Ennismore Lifestyle Group, which seems to own Hoxton. They've lined up some banks to do that. A listing could take place as soon as this year, we understand, and Bloomberg Intelligence says this business could actually be valued at 3.2 billion euros, so not tiny. And Volkswagen is also in focus. We said that they've got that presentation to the supervisory board today, and plant closures very much in focus.
Okay, here we go. Time for the equity market session this Thursday morning here in Europe. We're expecting a positive start. Let's show you some numbers, give you an idea of what is going on. We think the FTSE could lag, and that's kind of largely related to what's happening in the commodity space. Commodities, actually, the basic resources sector got hammered yesterday, so it'll be interesting to see how that one trades today. Let's talk a little bit about where we're going to see other markets moving, though. FTSE is going to be kind of flat. Other markets are expected to be significantly more positive. So the Stoxx 600 starting to see a little bit of life in that direction, up by 0.4%. But we're expecting the DAX to be up 0.8%. We're expecting other markets to be up around 1%. US futures currently point to a positive picture as well, so the momentum should continue as we work our way through. The IBEX is up by 0.9. The AEX is up by 0.6. The CAC is up by 0.7. The FTSE is actually performing a little bit better than anticipated, maybe. But nevertheless, a positive session, I guess, at an index level is what we are seeing here in Europe this morning, Anna.
Yeah, I mean, yesterday was pretty dreadful for all sectors in Europe, apart from energy. So energy was the only gaining sector yesterday. And so we see a bit of a reversal of that, frankly, this morning. Energy plus a few others are to the downside. Not a huge amount, but down by 0.8% on energy stocks broadly. Food, beverage and tobacco, consumer discretionary, grocery stores. So a number of other sectors moving lower. But to the upside then, it's basic resources, it's more cyclical stocks. So basic resources, banks, technology, all of those are having a slightly better day. Industrial goods and services also trading higher, with the focus perhaps of late on the defence sector, but that's interesting that we are seeing that particular move. But it doesn't seem to be it's not the defence sector that's leading us higher this morning.
Tech is up. SNL's kind of, it got hit hard earlier this week, but it's now continuing to bounce back. Industrials look fairly good this morning. Banks are back up. I think BAT's ex-dividends, so just be aware of that. But it is the kind of the defensive end that is weakening up. Nestle's a little softer. Shell, Novartis, BP, Unilever. We're basically just getting a flip from what we've seen earlier on in the week. And that seems to be the overall narrative. Buy tech, sell oil.
Yep.
Seems to be the story.
Yep. Let's get a wider perspective on these markets then. Helen Jewell is with us, International CIO for Fundamental Equities at BlackRock. Helen, very nice to speak to you this morning.
Morning, Anna.
So yesterday we saw, with all the activity in the Middle East over the last couple of days, we saw a sort of knee-jerk reaction to let's go back to the things we did in March, which was around a higher oil price, that moved bond markets, moved energy stocks, and it led to a lot of selling of everything else in terms of European equity markets because we're pricing in more rate hikes. Was that overdone? I mean, how much should we be responding to higher oil prices, do you think, in this current context?
It's a weird market at the moment because you've got three things that are really going on. The first is exactly the part you talk about, and that's the macro side. So that is oil prices, which of course is driven by nervousness about the Middle East. Interest rates are in that bucket as well, and what might happen with rate hikes, when you've got inflation on one side and softening of jobs on the other. Then on the second, you've got the fundamentals, which is the earnings and the earnings power and what that might look like. And then on the third, you've got the crowdedness of positions. So on any given day, it all depends which of those is actually the stronger factor. And I think at the moment, it all depends on what the day before looked like. So I think at the moment for today, then what it's looking like is, because of all the moves that we saw yesterday in terms of energy, it's almost a reset of that. But for me, out those three buckets, the one that is always going to be the most important is, of course, the earnings and the fundamentals. And we're going to have earnings coming through again, ASML next week. So these are the kind of things that really going to be driving. And it all goes back to AI. So everything else feels a bit... You've got to pay attention. You've got to be aware. That's reasons that you have diversification within portfolios. But those are the two things. It's very, very difficult at the moment, really, to make a very, very clear investment and long-term portfolio positioning call based on those.
Yeah. So is it all about AI, or is it about finding ways, finding diversity at this point as well, away from AI? I suppose, are we looking to sort of diversify into things that are AI related or AI adjacent, or are we diversifying into things that are, as far as possible, disconnected from what's going on in AI?
It's a little bit of both. So the AI connected is, of course, mainly the infrastructure and the sustainable energy names. We've talked about that a lot. The correlations there with the AI trend and the AI theme is still about 0.5. But then you've got other areas of the market which have got very low correlation. For example, healthcare. So healthcare actually has been trading with a zero correlation to AI. Almost like
which
the
is
ultimate
kind of weird,
diversifier.
because it's
so weird,
it could
isn't
be
it?
such a beneficiary of AI.
Absolutely, absolutely. So on that basis of that it has a very low correlation, yet it could be a beneficiary, it is also naturally a more defensive name. It plays into demographics. And valuation-wise, this is a sector that historically trades at a bit of a premium to the market. It's actually trading at a bit of a discount. So it feels that the risk-reward in the healthcare looks compelling, but there's no catalyst. And we're in a market at the moment that feels like it wants the catalyst, so that's the downside.
And is there bandwidth? I mean, we just seem to spend so much time talking about AI that we get any time to talk about anything else.
You guys talking about healthcare.
We'll talk more about healthcare. You say it's hard to invest in this kind of... to have a longer-term perspective on what is going on. So how... you guys run huge amounts of money. How are you... What does medium-term look like to you at the moment? Kind of what timelines are you thinking about?
So the next few years are actually more straightforward from the AI theme perspective. So we really do believe that the next few years are very clear from an AI theme perspective because of the amount of capital that you'll see being invested in that space. Now, longer term, of course, there are questions. Firstly, in terms of how long you can see the beneficiaries of that spend really continue to do well. And there's going to be questions in terms of, for those hyperscalers, will that capex spend look more like we saw, for example, in the telcos in the kind of late 90s, early thousands, or will it be more like the cloud? They are the kind of big questions that the market will be grappling with. There'd be no doubt that at some point, I'd say 2 to 3 years from now, that those questions will start to be impacted.
Why do you think it's that long?
Because of the committed spend that we're seeing at the moment in the market.
The committed spend can change. Commitments are... there are commitments and there are commitments. And if the market turns around and goes, actually, we don't think that this is going to generate the ROI that you're telling us it is, and we don't think that the beneficiaries, that the people are ultimately going to use the AI are getting the benefits they need from it, doesn't that timeline get shorter a lot quicker?
Possibly, but the level of the numbers is so significant that there's quite a lot of headroom around it.
But the market may value that. The market may value that as being a negative. You're spending too much money, folks. That's not a good thing. That's a bad thing.
Yeah, I mean, it will be. There is every capex cycle has the point that the capex overspend starts to happen. We don't believe that we're there now.
Okay.
So the 10 trillion that has been committed, or we see that's been committed over to 2030, that is kind of 10% of the current global GDP. That's our forecasts of the commitment of the spend. There's quite a lot of headroom that could come down just a little bit, and there would still be a huge amount of capital being invested in the system. The other thing is that historically these hyperscalers, they had been being able to spend, of course, out of their free cash flow. That has changed. They are now having to raise debt. There is some nervousness around that. But from my perspective, that's entirely normal. When you have these big capex spends, there is always a point that they go from being free cash flow positive to negative. It's almost what wasn't normal is that period of time when they didn't need to raise capital and they didn't need to be free cash flow negative to do that. So I think we're at the kind of still relatively early in this kind of big change in terms of human spend. There is no doubt that this will come, but we think for the next 2-3 years is there. That means from an investment perspective, you lean into the AI theme, you do the kind of secondary beneficiaries of that, but you do, Guy, need to diversify those portfolios, A, because the risks are not kind of, there is a risk around it, and secondly because of the day-to-day of what we're seeing in the market. So that's where it comes in, healthcare, LATAM, even the UK, really interesting diversification trades.
Yes, I want to come to one of those, some of those in a moment, but so does that picture that you paint there then, Helen, that withstands higher interest rates, does it? Because with this phenomenon of the changing role that these big tech companies are playing, they're now not these fortress balance sheets. They've still got strong balance sheets, but they're now going out and raising debt as well, and they weren't doing that so heavily before. Does that change the way we think about them and interest rate rises?
Not if it's only a small interest rate rise. I think if it's 25 bips, 50 bips, which is kind of maybe what's been factored in, whether that actually comes given some of the softer job data that we saw last week, the week before, that is a question mark. But there's actually, I don't think it actually does make that much of a difference. It will make a big difference if inflation is really persistent and really sticky, and we're talking about 50 bips or 1% rates. That is a different ballgame. But 25 to 50, I think the market is already pretty much factoring that in. The other area that the market is also factoring in is consumer weakness. So notice in those diversifier trades, consumer was not part of that bucket. And so consumer weakness, which maybe will be more hit as a result of interest rate hikes, that is already, if you like, not being factored into what we're seeing from the diversification. So I don't think it matters as long as we don't get much more than, say, 50.
Yeah.
I'm just seeing AstraZeneca on the scrane.
Yes.
I'm just trying to work out why.
It's nothing we did. Nothing we said.
I think they've had some phase 2 results.
Exactly.
So that is idiosyncratic, not healthcare. Yeah. I believe. But you guys are the ones with the Bloombergs in front of you, not me.
Why knew it? Why knew it? I don't know how to pronounce it. I'll say
idiosyncratic.
Failing to prevent heart problems. So this is a failing to meet primary endpoint in a test, and so as a result, this is weaker. So tell me more about the place. You mentioned LATAM as a place that's really uncorrelated, which sounds like an interesting place to go because we don't talk about it very much then, Helen. So what's the story?
Well, I'm a mathematician by background, so my favourite stat around this is the proportion of the MSCI Acqui it is, about 0.7, 0.8% versus the proportion of GDP, 7 to 8% global GDP. That feels incorrect to me. So the opportunity set from where the actual growth is from a global perspective to where the valuations are is really interesting. And that's what we're looking at, really, where we're trying to focus on the diversifiers, is where are the valuations kind of compelling enough to feel that the downside risk is pretty limited. Without that, it's not going to give you the diversification trade that you need, which is why I mentioned healthcare, which is why I mentioned LATAM. And given this weekend and what we've got going on in the football, let's kind of finish off talking about the UK as well. Some interesting diversification.
And the tennis.
And the tennis, of course. Yesterday, a great day at the tennis, Guy.
There we go.
We could win Wimbledon. I'm getting way ahead of myself. And the World Cup. Who knows?
Amazing.
And the markets. And UK could win the markets. I mean, the returns that we've seen year to date, given what we've seen in the markets, is tremendous. If multiples hadn't changed, the returns year to date would be 19. They're at 9.
Somebody said the gilts have outperformed the hyperscalers as well, I think, over the last few months.
Yeah, the Mag 7 have become the Lag 7. So...
Heard it here first. Helen, nice to see you. Thank you very much.
Great to see you. Thanks, Guy. Thanks, Anna.
International CIO for Fundamental Equities at BlackRock. The core 6 looks like this. We'll come back to AstraZeneca. I think I finally figured out why the FTSE's underperforming today. And you're looking at a picture of tech up, defence isn't having a bad day. Pharma is a little lower this morning. Novo's under pressure as well. Chloe is here, though, with details of what is happening in the German industrial space.
Good morning, Guy, indeed. And this is an M&A story with this German engine maker buying the privately owned defense firm FFG for 1.6 billion euros. As we have been talking about with Thales and Excel Technologies earlier this week, there seems to be quite a lot of deal-making activity in this European defense sector at the same time as this NATO summit is happening as well. So definitely a sector in focus. And we have Deutsche this morning very much benefiting from this new deal. Moving on to AstraZeneca, which is taking quite the hit this morning after some disappointing clinical trial results. This is of a drug which is a so-called gene silencer drug, and it was supposed to help prevent heart diseases, and it did not meet that primary endpoint in a clinical trial. So this is a big disappointment there for AstraZeneca, and we can see that really dragging down those shares, down almost 10% this morning. Moving on to Computer Center, an IT firm here in the UK, up very strongly, almost 13%, after saying that it expects results this year to be comfortably ahead of expectations, with the first half profit expected to be double from that of last year. So doing very, very well and seeing that reward there in those shares. Staying within IT, and we've got Wolters Kluwer as well, that is up about 5% this morning after being upgraded by JP Morgan, with analysts saying that the valuation was very compelling and that this is a company that could also attract some private equity interest. So we've got this there. And finally, another upgrade, but that this time is for Glencore. The mining company has been upgraded to a buy rating by Goldman Sachs analysts, and we are seeing that drive up the shares this morning, up about 3% for this mining company.
Chloe, thank you very much. Chloe Melly with those stocks on the move. Coming up, we'll be back to one of them we've talked about already this morning. Volkswagen's CEO is set to unveil a sweeping restructuring plan for the struggling car maker. We will preview the key meeting next. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. You're watching the opening trade. We're 17 minutes into the session. The FTSE feels very idiosyncratic this morning. It is the outlier, as you can see at the bottom of the screen. The reason for that is that AstraZeneca, which is one of the, I think it probably is the biggest market cap weight in the FTSE 100, it's definitely near the top 1 or 2 or 3, is knocking 71 points off the FTSE today. The FTSE is in points terms down by 26 points. But 72 is what the AstraZeneca story is taking off. So the rest of the market's got to work really hard to continue to push higher. Shell's down, BP's down. So the oil story is not exactly helping very much either.
Yeah, absolutely. And with that in mind, the oil story, where we are a little weaker on the oil price after a big jump yesterday. Oil is fluctuating amid renewed hostilities in the Middle East, with the US striking Iran for a second straight day. We've heard plenty of reporting about Iran responding. Now, market participants are looking at the Strait of Hormuz, of course, very carefully, where traffic has ground to a near standstill once again, threatening an already fragile energy supply chain. Let's bring in Bloomberg Energy reporter Stephen Stachynski. And Stephen, what confidence can we have about what is really happening, certainly on the Omani side of the Strait of Hormuz then? Because it seems that as soon as we get these flare-ups, the transponders go off, there's all kinds of interference takes place, ships are in strange places, travelling at strange speeds. What visibility do we have about what's really happening through that strait?
You know, in terms of the ships that do have their transponders on, it's much more active on the Iranian route. Still, activity has dropped to the lowest level since the middle of June, when the U.S. and Iran signed their interim peace deal. There could be some dark transits happening, but according to our reporting, there are a lot of ships that are just being cautious. You know, there was a ship that was hit on Tuesday. It was dark, and it was still hit by Iran, and Qatar was trying to. It was a Qatari-owned ship, and the vessel was trying to hide their location. So even if you have the transponders off, there are still some risks. So I think clearly there is a reduction in traffic going through Hormuz. That's one of the things that the market is closely monitoring. The second is the tit-for-tat attacks that are happening between the U.S. and Iran, because right now, you know, you're seeing oil prices down. That's likely due to a relief that, you know, Iran just targeted U.S. military bases, it seems, in other, you know, Gulf countries. If this were to expand to energy infrastructure, which it hasn't yet, the attacks between the U.S. and Iran, then you could really start to see fears that oil prices rise, because if infrastructure gets damaged, it's more than just opening up Hormuz again, it's also repairing that infrastructure.
Stephen, are ships going back into the Gulf?
We are seeing also a bit of a slowdown in that level as well. There are a lot of ships that have been stuck, and they're using this as an opportunity to get out. But there's been a slowdown in empty ships coming in. And of course, that's a key part of expanding exports through the Persian Gulf, is getting more and more empty ships in. Because if you don't have the empty ships to load the fuel, you can't get more out. And one thing that I've noticed, at least for liquefied natural gas, there are 2 empty ships that are nearing the strait. But outside of those 2 ships, a lot of other vessels have really kind of pushed away from the Gulf of Oman on the outside. So it seems to be a bit of a checkered picture. But overall, just the amount of traffic has been falling.
Stephen Stachynski, thanks for the update. Always appreciate it. Let's turn our attention to the auto sector. Volkswagen CEO Oliver Blume is set to present a plan today for sweeping restructuring at the company's supervisory board meeting, which is going to take place this afternoon. Blume understands the cost-cutting drive could eliminate as many as 100,000 jobs and close 4 German factories. Stefan Nicholas covering this for us. Why is this necessary? This is massive. Do we think the supervisory board is going to sign off?
Yeah, good morning. This is certainly the biggest restructuring any VW CEO has attempted in many years. Bloomberg thinks it's necessary because competition in Europe is rising. New entrants like BYD from China are really putting up competitive pressures with affordable EVs and hybrids. Energy and labor costs in Europe remain pretty high for VW. And all of this is happening in a shrinking market that has not come back to the levels we've seen before the pandemic. So this is a major attempt by Bloomberg to make VW leaner, faster and more profitable. It's going to meet heavy and difficult discussions in the supervisory board. And yeah, there's going to be tough negotiations coming in the next few weeks. And the final result is still out.
Yeah, and Stefan, what kind of omen is this then for the European auto industry more widely? Are we going to see more car manufacturers responding in the same way to this rising competitive pressure and the low sales you reference?
Yeah, for sure, that's to be expected. VW is sort of a microcosm for the entire industry with these competitive pressures rising. So we're gonna be seeing cost cuts as well from the other big manufacturers: Stellantis, Renault, Mercedes, BMW. They're all in cost-cutting mode to sort of adapt to this new world and to better compete with the Chinese and also clean up their balance sheets and defend profits.
Stefan, are we getting to the point where the argument that the German car makers have pushed forward, i.e. we should allow the Chinese in here because we're allowed in there and their market is key for us, how much longer is that going to hold water? Because the Chinese car market is really, really tough, highly competitive, and the Europeans are struggling in it.
Yeah, it's really a difficult situation for these car makers. They're still selling quite a few cars in China, especially the Germans. So they don't want extreme protectionist measures happening in Europe because they don't want to damage their businesses in China. At the same time, these same Chinese companies are now increasing pricing pressures also in Europe. So this is a really delicate balancing act for all of these companies. And yeah, for sure we will see tweaks and changes going forward. But yeah, ideally, both still need each other. The Chinese need the European market to grow, and the Europeans still need business in China.
Yeah, so Stefan, tell us about the evolving relationship between the European and Chinese car manufacturers in terms of manufacturing for each other. There are a number of situations we've covered where Chinese manufacturers have come to Europe and actually they've involved European plants in a sort of contract manufacturing style. Is that growing?
Yeah, for sure. I mean, there are two things happening. One, the Chinese, the big ones, are building their own plants. BYD is setting one up in Hungary. But at the same time, all of these European car makers have underused plants. And instead of shutting them down, closing them, and letting a lot of people go, which would lead to sort of political pressure, they are now making these deals with the Chinese car makers that come in and fill some of these underused plants. So that could technically be a win-win situation in terms of jobs. But on the other hand, a lot of analysts are saying this is kind of a Trojan horse where we're inviting in the competition and making them stronger. So another difficult situation and not an easy one for CEOs.
Stefan, thanks for the update. Appreciate it. We'll watch the news from this meeting a little bit later on with a great deal of care. Stefan Nicola on the car sector. Quick update on AstraZeneca. The stock is down and is dragging the FTSE down with it. This as we see an update on a key genetic cardiology therapy that the company has been in partnership on that we understand has failed to prevent the heart problems that it was meant to target.
Yes, indeed. Now, just looking through some research from Bloomberg Intelligence on the subject, they say that these results, around this specific trial result, this makes the company's ambition of more than $5 billion in sales in Wainua, and I'm sorry if I'm mispronouncing that, it makes it unlikely that the company is going to be able to reach that because it makes expansion rather difficult. So that's why the stock is selling down, I suppose, if others share that view. And we do see the stock down by 9% in this morning's session.
Yeah, this is one of the biggest capped stocks on
Yep,
the FTSE 100.
absolutely.
Huge points.
As you were
impact.
saying earlier, top three, certainly for this one. And oil and banking make up the others. Coming up on the programme, we will talk about the defence sector. Saima Hussain, aerospace and defence equity analyst at Alpha Value, will be with us. We're just coming off the back of that NATO event in Turkey, the NATO gathering, where they've outlined billions of extra spending. Where's it all going? How is this reshaping, certainly, the European defence landscape? This is Bloomberg.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade, 30 minutes into today's session. It's Thursday, and everything at the index level seems to be moving about 0.4%. Not necessarily all in the same direction, though. Let's have a look at these markets. In terms of the overall market, we are up by 0.4%, and a similar kind of move applies to the DAX and to the CAC 40. So we're seeing both of those moves, those markets moving a little bit higher. And most sectors are actually in positive territory. But the FTSE 100, because of its exposure to the drug sector and also to the energy sector, is in retreat today, down by around 0.5%. So it's AstraZeneca. It's also the energy space. We saw big gains for energy stocks, Guy, yesterday, and today we see the reverse of that. So as a result, we're under pressure on the London market.
2 to 1. Yeah, we'll come back to that in a moment. 2 to 1 is kind of the ratio we're seeing internally. 382 up, 204 down. The market's a little light on volume, though, this morning. When we were going down, the market was actually seeing some quite high volume, which is interesting in terms of the overall market positioning story. Let's talk about the leaders and the laggards. CompuCenter is up on guidance. It is doing relatively well this morning. That stock is up. It's not big, but it's up by nearly 10%. Wolters Kluwer's got an upgrade. I think it's a JPM upgrade. And Deutz, we talked about this in the defence space, auto space. industrial space. M&A story there, driving that stock up by 4.5%. So that's kind of the upside story. The downside this morning is actually, as Anna says, probably where the more interesting narrative lies. Astra's getting hammered. This is an idiosyncratic story, but it has an index impact, and you're certainly seeing that in the FTSE 100. We'll get you some more details in just a moment. Shell is down. That's the oil story, just reversing. And Capita Group down by 16%. Not a massive stock, but again, just a big percentage move is what we're seeing with it, Anna.
Let's get to some of the other stories we're covering this morning then, Guy. The US military struck Iran for the second straight day to further degrade Tehran's ability to attack commercial shipping in the Strait of Hormuz. US Central Command said about 90 targets were hit, including air defense systems and missile storage sites. According to Iran's press TV, the Islamic Revolutionary Guard Corps struck US bases in Kuwait and Bahrain and threatened to expand the attacks. And Bloomberg has learned that the SK Hynix US listing is more than 7 times oversubscribed as the South Korean memory chipmaker prepares to price its offering later today. The US offering would raise about $24.5 billion, according to Bloomberg calculations, and would rank among the largest ever debuts in the US by a foreign company. Shall we update you on AstraZeneca as well? AstraZeneca shares sinking this morning on news that its gene silencer drug, that's Wainua, failed to help prevent heart problems in patients with a rare and potentially fatal disease of the organ. A successful trial could have led to billions of dollars more of sales. Jefferies estimated ahead of Thursday's update. Now, Astra is looking to establish itself in the disease area, where the market for therapies is expected to be worth $18 billion by 2030. Guy. In fact, I'll read on. Let's get more on this story with our Bloomberg Health reporter, Ashley Furlong. Ashley, help me out with the basics. Probably I've mispronounced the drug in question, but what more can you tell us about the trial?
So this trial obviously failed, and this is actually just in one additional indication. The drug is actually already approved for a much broader indication. But what we're seeing in the market this morning is not necessarily about Wainua and the specific drug, but it's more about the confidence that investors have in AstraZeneca's ability to conduct really good trials. And that's always been a strength of AstraZeneca, is to have sort of really watertight trials. When the management puts out really strong statements around trials, people expect the trials to be successful. And so that's, I think, more what we're seeing this morning, rather than, there's sort of a several billion at risk here. But that's quite a small amount in the bigger picture for AstraZeneca.
OK, so this is a credibility issue. That is what is being priced here.
Exactly. There's several billion that are, is at risk with this negative trial readout. But it's more about the credibility issue and about whether AstraZeneca, whether there's problems potentially with other trials. And as one, analyst said this morning, it's just a market at the moment where you can't really have bad news.
And actually, how does this fit into AstraZeneca's wider plans, wider strategy? Where does this leave them?
So AstraZeneca's CVRM portfolio, which is like the cardiovascular disease, is growing, and this is also part of the weight management area where they also want to get into. But this is quite a rare condition, and it's quite a specific market where AstraZeneca isn't really playing at the moment. So it doesn't really have sort of wider knock-on implications potentially for other medicines. But it's still several billion that are at risk. This drug, I think, is estimated to have around $5 billion in sales annually over the next couple of years. They hope to reach, and that's at risk, really.
Ashley, we'll continue to watch the coverage as it develops. Thank you very much indeed for kind of giving us the nuance around it. Ashley Furlong, Bloomberg's Ashley Furlong, updating on AstraZeneca. Let's turn to some of the other moves we're watching this morning. Shares in the German engine manufacturer Deutz have jumped after it agreed to buy a closely held military vehicle maker FFG for €1.6 billion. More consolidation in the European defence space. It adds to a busy period for M&A in Europe that we've seen over the last few weeks. Let's get some analysis on what is happening here. Simon Hussein, aerospace and defence analyst at Alpha Value, joining us on this area. Simon, I just actually want to kind of pick up on this M&A theme that we are seeing maybe developing this morning. How much capacity, how much need is there within the European defence space to consolidate at the moment?
So I think that's one of the biggest challenges in European defence sphere is really about capabilities. And so we are seeing a lot of M&A recently. So for instance, we are seeing Thales that is buying Exhale. Even Safran actually wanted to buy Exhale. So I think there is a lot of M&A. The thing is we have moved from a demand era towards a capabilities era. And so now we really need to produce more and be more efficient and ramp up production and scale up very fast to meet this defense spending.
If it's about delivering capability, is it about bigger companies securing their supply chains, or is it about acquiring a broader horizontal array of assets?
I do think that we are seeing both, actually. I think that, for instance, with Safran that wanted to buy Excel, it's really about horizontal acquisition, even though they had some common capabilities. But we also have this vertical integration that is becoming more and more important as we have a lot of supply chain bottlenecks. And so in order to scale up and ramp up very fast, companies need to secure their supply chain. And it is actually becoming as important as having technological advancement.
Simon, good morning. So there's vertical and there's horizontal M&A taking place, and there's a real pivot towards buying more European product and Europe taking care of its own defence. But that's a long-term narrative. So help us understand how close to the beginning of that narrative we still are, Simon, and how far there still is to travel.
I think that it's a very challenging question, actually. I think that European procurement is becoming much more pragmatic than ideological. The thing is, as I mentioned, we need to scale up very fast. And so we are seeing some partnership outside Europe. So Leonardo, that has a partnership with Baykar, or even Dassault Aviation that might consider UAE or India for partnership. And a lot of countries are still buying from the United States when urgency matters more. We also have Poland that is sourcing equipment from South Korea. So I think that we are really emerging towards a capability-first model versus a Europe-first model. And we have seen also a lot of multinational partnerships that have failed recently. We can mention the Future Combat Air System, the Eurodrone, even the postponement of KNDS IPO shows that multinational cooperation across Europe is becoming more and more challenging. So we are still far away from this European consortium and consolidation, even though we do have some strong partnership already in place.
So those are the challenges, even within Europe, then, to do further consolidation, perhaps, and cooperation. You mentioned in your notes, Simon, that modern warfare, obviously, we know this operates in innovation cycles, software cycles. So very quickly, we see new innovation and new product coming to market, and yet the purchasing has not maybe caught up with that. Is that changing?
I don't think that it is changing, at least not fast enough. So basically, Eurodrone is a perfect example for that. The thing is that for multinational European programs, they are designed over a period of 10 to 15 years, so we're speaking about a decade, while the modern warfare really evolves in software or software cycle, which means in months. So we have this gap between the programs that are designed over decades versus the modern warfare that needs fast innovation.
Yeah. So we've seen overnight confirmation that the Ukrainians will be able to build under license Patriot missiles. there is this push in Europe for domestic capability. And I'm just wondering how you think the US primes are going to react to this. Do you think we are going to see more US weapons being built in Europe under license? And do you think that will satisfy governments in Europe?
So I really think that it is a possibility. The thing is that the US production capabilities are becoming more stretched with everything that is happening in the Middle East with Iran. So the United States has to help Ukraine, it has to help Israel. So overall, the production capacity of the US are really constrained, especially as the United States will have to rebuild at some point its own inventory. So I do think that there is a tendency towards building locally, even in Europe. And I think that this will happen more and more. And the fact that we have still this technological gap will reinforce the idea that the US might provide more licenses, and that Europe, even though it wants to reduce its dependency on the United States, will have at some point to accept those licenses. So I do think that this is just the beginning of a bigger trend, a much bigger trend on new licenses.
Simon, thank you very much. Thanks for your analysis. Simon Hussain, aerospace and defence equity analyst at Alpha Value, helping to take stock of some of the developments at NATO and beyond. Coming up, we'll get back to the tech sector. SK Hynix prepares for its imminent US listing, expected to rank among the largest debuts in the US by a foreign company. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back. This is the opening trade. 46 minutes into a session that shows some real divergence between what the FTSE 100 is doing and what the rest of the market is doing. The rest of the market is probably giving you the bigger picture. The FTSE story is pretty idiosyncratic. Yes, there's oil and weakness in oil majors, but there's also the AstraZeneca story, which is taking a chunk out there, and that is related to some of their trials around one particular drug.
It's a pretty big chunk. We'll continue to monitor that story throughout the morning and the wider effects on the healthcare sector. OK, let's talk about tech. Bloomberg has learned that SK Hynix's US listing, which is coming very shortly, is more than 7 times oversubscribed. This is the South Korean memory chip maker prepares to price its offering later today. Now, according to Bloomberg calculations, the offering would raise over $24 billion and rank amongst the largest ever debuts in the United States by a foreign company. Let's bring in Bloomberg senior strategist Neil Campling. Neil, I'm confused. I thought foreigners have been selling the Korean market aggressively recently, and now apparently they want to buy the SK Hynix listing, the ADR, and it's 7 times oversubscribed.
Yeah, there's obviously one of the most volatile parts of the market globally has been Korea, dominated by the 2 tech giants, Samsung and Hynix. Part of the effects of that volatility is around these levered ETFs in Asia around the memory trades. So perhaps the appetite for the US listing is seen perhaps as a means of getting away from some of the volatility, even though the listing will be linked obviously to the underlying stock. So there are mixed messages for sure. There is appetite clearly for the offering. Has that come from retail? Is it institutions? Difficult to know. It is easier for foreign investors, especially US investors, to own stock listed in the US than it is to necessarily invest directly in South Korean stocks, because you would need a local ID or otherwise use international brokerages, etc. So it's an easier path for them if that's the exposure that they want. But clearly there is appetite from somewhere within the market for this listing.
Yeah, it's interesting, Neil. Our story does talk about how this 7 times oversubscribed does include institutional investors, some long-only funds, and sovereign wealth funds. To your point, we don't know what percentage to all of those and what kind of retail demand there is in there. Is retail participation going to tell us something useful if we're trying to establish whether this is a sign of a peaking market and bubble conditions?
I think, to be fair, I think it would be a healthier sign if there's low retail participation, who are very much kind of, if you like, based around more short-term momentum parameters. And we look at the shareholder register for the likes of Hynix's most direct competitor, Micron, and it's a very good list of institutional shareholders on that register. So it would be a good sign if it is mainly institutional for sure. Retail are more speculative in nature. I think we'll get more colour from perhaps what the option markets tells us a few days after the listing with regards to where options are trading around longer term contracts, or whether they are more retail focused in the 0 or 1 day short term options kind of markets. So look for key indicators around those kind of measures, I think, to get a sign whether retail is involved or not. In terms of the colour we get. We saw this with SpaceX as well, didn't we? In terms of we got some better clues, I think, from the options market about a week after the initial euphoria around the opening trading prints.
Is tech back to being a place to hide from geopolitical tension?
Tech is seen as kind of insulated from those risks for sure. Doesn't really have the direct, obviously, oil exposure or Hormuz exposures, etc. So that is certainly seen as a positive. The key catalysts clearly are going to be what happens in terms of the guidance coming up from the upcoming earnings season. So far, with tech, especially on the hardware and the semi side of things, we've had earnings momentum in terms of acceleration, expectations. Tech has been the heavy lifter of growth and earnings expectations going forward. That's likely to continue. But the question is, how big will guidance, or more importantly, how will investors react to guidance in late July? And particularly look out, I think, for Microsoft's first official guidance for their fiscal year CapEx guide. That's going to be a key catalyst for the entire chip sector and tech momentum for sure.
Neil, great to catch up. Thank you very much indeed for the update. Neil Campling on what is happening in the tech landscape this morning. Talking of which, SK Hynix's chair will be speaking to Bloomberg. That interview, we think, at 3:30 London time.
Let's look ahead to other things we're watching out for today. We have an EU finance ministers meeting. We have a VW supervisory board meeting, which is going to be fascinating because of the conversations around closing factories at VW. We've talked about that this hour. 12:30 p.m. London time. ECB publishing the account of its meeting. They're not supposed to be called minutes. No, but they serve a purpose of helping us understand a little bit what was discussed. And 12:30 p.m. we have the UK Labour leader nominations. They are opening up. We'll see if anybody else puts their hat in the ring. We're pretty sure Andy Burnham's going to be in the mix. 1:30 p.m. UK time. US initial jobless claims will be the data point of the day, I suppose, stateside.
Yeah. What are we watching this morning in the markets? What's the big theme that stands out to Skylar? Let's find out. Anything like oil's interesting, but not that interesting in as much as it feels actually fairly stable this morning. There's an idiosyncratic story out of the UK, but what is the broader picture you're picking up on?
I think it's just this bearishness within bonds, as in we had the oil move earlier this week, and the thing that was most punished was bonds, and just over and over again, it seems like a beaten up market. And a stat that kind of astonished me was the last 9 consecutive days, German 10-year yields have risen. So yes, more recently that has to do with the oil price rising. That feeds into inflation expectations. We know the ECB react hawkishly, but the move is actually steepening. So that's 10-year driven in that what you've seen is term premium was looking like it reached a 1-year low and bounced. And so a lot of that move is because of that. And I think that's a structural force within the market in that we're getting more supply shocks. That means your bond equity correlation is slipping. It's not providing the same insulation. You have this huge wave of issuance, not just from governments, but AI is feeding into credit, it's feeding into equities, and you have high economic uncertainty. And so we're at levels in yields that are very low historically relative to where the policy rate is. And I think that just means there's a higher floor, and you get these shifts where when nothing's really happening in terms of in terms of markets or, catalysts, the trend should really still be upwards.
That's interesting. So we've got the BOJ gently hiking rates. We've got lots of issuance coming through, so there's the supply side. So lots of things just on top of each other, adding up to maybe more term premium then for to use the example of Germany that you referenced there. Are we also going to see corporate spreads widening then, Skylar? Because they seem quite resilient to some of these higher for longer dynamics.
Yeah, I mean, I think the corporate market's quite hard because you don't really get widening unless something goes quite wrong. So I think it's a hard thing to say because typically that's actually your forewarning of something more concerning underneath the hood. And I think particularly right now, yes, spreads are tight, but investors are still very happy with the AI trade. Exposure to credit markets that way seems quite popular still, and you are getting a pickup over government bonds, which increasingly don't look that safe actually relative to some of the credit that's out there. So, I mean, it's very hard to make a call for significant widening is what I'd say.
Yeah.
What did you make of Walsh? What did you make of the minutes? The sense, the take seems to be hawkish. Is that enough?
Enough to get a hike, enough to get higher yields?
No, but is it just... He's hawkish.
Yeah.
Is that enough to kind of keep the market moving forward with the idea that we're going to get rate hikes? Because I read the kind of the headlines and it didn't seem that hawkish.
Did not? I don't know.
Skylar.
Yeah, but I kind of had this expectation that he was hawkish already. That he'd pushed pretty hard on the idea that price stability is the key metric for him. I didn't feel like there was a massive update to that. It's just a continuation of a theme.
I mean, 2 things that stood out for me was AI is inflationary.
Yeah,
that's a change.
Yeah, that's true.
And then the second, that they did consider a hike at the last meeting, which wasn't confirmed from what you would have seen from the dots. And so that's the kind of shift that they're going to. But I mean, it's hard, right? The market already prices a hike. Yes, it's been brought forward, but to get multiple hikes, you need to see how the data evolves. And I think that's really what the Fed is telling you as well. We need to watch inflation next week. Do you have inflation rising? Is core in particular worrying? But I think we're definitely at least have enough to know that the bar is quite high to price out those hikes.
Yeah, I did think it was interesting, that reflection on what were the possibilities in June, because I definitely didn't come away from the press conference thinking, oh, well, they talked about whether to do a hike.
Yeah.
But I didn't get that impression at all. Okay, Skylar, thank you very much. Skylar Montgomery-Koning from our Markets Live team. Let us return to FTSE underperformance today.
FTSE underperformance, Astra underperformance. We are seeing certainly a big hit to AstraZeneca this morning. It is down on the back of a trial result relating to a heart therapy that was expected to do well. It's only one potential operational use for this therapy, but there are concerns around now how Astra is treating its clinical trials. Sam Fazeli is the guy you want to talk to about all of this kind of stuff, and I have great news for you. He's going to be joining us in 15 minutes on The Pulse. I will be at the helm of that show. It is coming next. Hope you enjoyed this show. From Anna and from me, this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Newsmakers and market movers. This is The Pulse.
Good morning, 9 o'clock in London. Welcome, you're watching The Pulse. I'm Guy Johnson. What do you need to know? Let's figure it out. Oil now a little lower, actually. This, despite the fact that we've seen fresh US strikes on Iran. Traffic through the Strait of Hormuz returning to a near standstill. We had a hawkish set of Fed minutes last night, with some officials making the case for a hike in June. That was certainly a surprise. Plus, AstraZeneca shares tumbling after its late-stage trial fails to prevent heart problems in patients with a rare disease. We'll come back to that with Sam Fazeli in just a moment. Astra's down 10%, and that is having a meaningful impact here in Europe. Broadly, though, what you're seeing, and maybe this is a surprise, Brent crude is down a little this morning. We're down by 1%. I think the reason for this appears to be that we are not seeing oil infrastructure being targeted. We're seeing the Iranians in particular targeting US military sites, and that is being taken as a positive for now. So Brent down 1%. S&P futures are up. They had a decent rally towards the back end of the session yesterday over in the United States, but Europe is taking a big hit today. I think AstraZeneca's in the top 6 in terms of the market cap weight stocks that we have here in Europe. I think it's the second biggest one on the FTSE 100 as a result. And let me spin the board forward. I will show you what is happening to the FTSE 100. It is underperforming this morning, and the reason for that is fairly straightforward. You get a big heavy cap weight stock like Astra down, and it drags the rest of the market lower. So the FTSE underperforms by some significant margin. But it's also down because Shell is down and the oil stocks are down across Europe. And the reason for that is that we are seeing oil lower. This despite actually President Trump launching a second straight day of US strikes against Iran, threatening further to escalate an already fragile ceasefire. He said yesterday the ceasefire was over. In the past few hours, we've heard from US Central Command saying forces hit around 90 Iranian targets overnight. On board Air Force One, Trump said Iran was desperate for a deal.
We have many ways we can win, but we've already won militarily. They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal.
OK, let's get an update. Let's go to Dubai. Abir standing by. Abir Abu Omar joining us on the latest. So what is the latest? We've had further attacks. The Iranians have hit back. Talk to us about how the situation has escalated.
Good morning, Guy. Yeah, the situation is escalating by the second. Now, it does seem a little bit of a muted retaliation by Iran so far. True, they have hit countries in the GCC, namely Bahrain and Kuwait. We're hearing some infrastructure damage in Kuwait. Bahrain also reporting that sirens were sounding earlier in the morning, saying that there were attacks. They intercepted missiles by Iran earlier. And this is similar to attacks that we've seen over the past couple of months or so, Guy. Similar actions by the United States have led Iran to retaliate in a similar fashion. And so this is the latest in the region when it comes to the these tit-for-tat strikes by the United States and Iran. You're seeing oil, which you mentioned earlier, actually reversing gains, down 1% at this point. So the market doesn't seem to factor in that this will go to a full-scale war, similar to what we've seen in March. Now, President Trump at the NATO summit yesterday did say that as far as he's concerned, ceasefire talks are over. But then he did say that negotiators Jared Kushner and Steve Witkoff can go back to negotiating with the Iranians and that they'll have to come back to him. So what we're seeing from the market now is probably us not going back to a full war front, including countries in the GCC. But it's definitely a fast developing situation here in the Middle East. Iran saying that since July 8th, over a dozen people have been killed, some 78 people injured. And so Iran threatened that if the U.S. continues these strikes, it will strike back. And one other main important thing in all of this relevant to oil is Iran's assertion of power on the Strait of Hormuz. We're seeing movement in the Strait of Hormuz in the early hours of the morning near a standstill, according to our colleagues on energy team. So that's another thing that we have to follow over the next few days to see if those shipments through the waterway will continue to make their movement.
Thank you for the update, Abir. Abir Abu Omar joining us out of Dubai on the latest in the Gulf. Emmanuel Coe, head of European equity strategy at Barclays, joining me around the table. Good morning.
Morning, Guy.
Do you need to reposition for re-escalation? Is that what you're doing right now?
We don't, and I think we are trying not to overreact too much to headlines. I think some reality check, I think, for those markets is not a bad thing. There was a lot of excitement in many parts of the market, tech, and then look, oil went down a lot, maybe too much, too fast. Yep. And our view was we should be in a $70 to $80 range. That's where we are back now, which I think is fair. you have to expect some degree of uncertainty and volatility during summer. We are skeptical that this Iran thing is going to stop and for good anytime.
Yeah.
But I don't think there is a strong intention from Iran or the US to really cross the red line.
So what do you, if you're just going to get constant flashes of fighting, what is the right positioning around that?
Look, firstly, I think, diversification. I know it's a bit cliche, but, when you go to school and learn finance, the first thing you are being talked about in terms of portfolio management is diversification. I think tech pullback was a reminder that not putting all your money in the same basket makes sense, and having some diversification into non-tech heavy part of the market makes sense. But also with regard to the war, you need to find a way to have optionality, i.e., we still believe that there's a path towards the escalation that should put a cap on the oil price. That's our view, but we don't want to get carried away in really positioning for oil price back to $50, if you see what I mean, right? So I think our core positioning is still very much driven by earnings. And I do believe that this positioning reset is a good thing ahead of the reporting season, which is very much starting next week. I think earnings will be key to unlock further upside for the equity market and to reaffirm leadership. The leadership for the second half of the year is still going to be driven by earnings. If you grow your earnings, if you can prove the market that you can grow, you can deliver organic performance, you should be rewarded. So we want to be invested where we see earnings growing the most. And that's why we are still long the investment tilt sectors. We think investment is driving growth. War is driving more investment. Technology is driving more investment. So I think the investment impulse, whether you have oil at 75, 80 or 65, won't go away. And this is what is driving our positioning within some of these investment winners.
Okay, there's two questions that arise out of that investment story. The first one is, do you not feel that, if you look at valuations in aggregate, particularly around that kind of space as well, they look by historical standards very extreme to the right-hand side? Are they sustainable at these kinds of levels?
Well, firstly, we had a bit of reset in positioning in the last couple of weeks, and some of these investment winners, like look at miners. Miners are down almost 20% from the highs, which is how much they fell during the first round of the war back in March. So some of these things have come down quite a bit already. Semiconductor stocks are down 15-20%. They're still up a lot, but they're down from the peak. And for tech in particular, I don't think the valuation are that expensive because the market doesn't believe in the sustainability of this earnings super cycle. So earnings are still being revised up. And by the way, the equity performance this year in most part of the world is lagging. So the strength in earnings. So we've seen valuation coming down. So the market is not overly euphoric, I would say, about the earnings power or sustainability of these stocks. So I think Q2 numbers will be very important. If you can prove the market that you still have some firepower and you can still grow your earnings and deliver some clarity on the earnings guidance, I think the market should recognize that and get back into a trend to some extent.
Does the investment story work with higher rates?
Look, I think there's a limit to how much the market can absorb here. And obviously, as part of this more volatile period, you had this hawkish repricing from Fed expectation driving volatility. Look, I'm not in the camp of seeing the Fed hiking this year. I think they're going to be in the hold. Look, they need to have optionality, and I think Walsh managed to regain optionality, by talking hawkishly. And I think he had to be sounding credible and somewhat independent to the market. There is an inflation risk. There is an inflation issue in the US. Inflation is above the Fed target, so they have to be credible and firm about inflation. But on the other hand, I think there is also maybe the feeling that down the road, inflation should still be trending lower. I think the administration and Walsh in particular are still very much on the view that long-term inflation should be coming down as a consequence of this productivity boom in the US. But look, I think one of the sources of volatility in the summer is this end of this 3 or 4 year long easing cycle, where most of the central banks cutting rate over the past 3 or 4 years. And then in the last 2 weeks, we had ECB hiking rate, Bank of Japan hiking rate, the Fed sounding more hawkish. There's a risk that, obviously, if real rates keep going higher, that's going to start to hit the equity market. But I think a lot of this repricing has happened already.
Can I just talk about the symmetry of risk as well within the market? Is the risk at the moment that the upside is bigger than the downside, or that the downside is bigger than the upside? Because that kind of makes a difference in terms of the way I position, particularly around the optionality kind of trade that I need to be putting on. How are you thinking about kind of how I want to stagger my risk? Is it worth missing out on some upside for some downside protection, or is it just upside? The danger is I lag at this point, and I miss out on the upside that could, at this stage in late cycle, be quite vertical.
Look, I think you still have to be invested. Again, we think there is enough reason to stay invested, i.e. we don't see central banks rocking the boat, and we expect earnings to drive more upside. But look, I think there is a positioning risk, definitely. You have a lot of money which is invested in the equity market. If you look at allocation by household in the US, by mutual fund, it's pretty much record high. So you can say at the index level, the asymmetry is probably negative. There is more downside if something goes wrong than upside if everything goes well. Now, we just flag that you have massive dispersion and polarization within the equity market. So even though indices look very high, one part of the market has gone up significantly and the other has been lagging quite a lot. And our call is to still mostly stick to the winners, but we also want to have a little bit of broadening into some of the laggards, which can either give us a little bit of a catch-up potential if some of the risks that were driving the market in H1 fade somewhat, but also give us some hedge, again, market coming down and some of these momentum winners pulling back more. So I think diversification and some rotation into the laggards is a way to hedge some of these, pretty high level of markets.
There's been the bunch of markets have quietly been doing things that have surprised me. The FTSE's actually been doing relatively well. Some of the continental markets here in Europe have been doing relatively well, despite the fact they've actually got very sort of low AI exposure. Where am I looking for that kind of uncorrelated equity position at the moment?
Look, I think a lot of things which have gone up are still a function on AI, i.e. the broader ecosystem around investment has driven market quite a bit. And I think banks is very much the reason why IBEX or FTSE MIB, so Spanish or Italian market, are doing so well. And banks are somewhat benefiting from this, reflationary boom and investment boom, right? So they're not purely playing on AI, but I think they're part of this ecosystem of sector which are really growing earnings a lot and are seen as, winning in this backdrop of strong nominal growth. To me, the big question is what we do with the consumer, because consumer has been a clear underperformer. Whether we look at consumer staples, consumer discretionaries, autos and luxury, there's a clear bear case on the consumer right now. So it's your two-speed economy or K-shaped economy where investment is driving the show. Consumer is somewhat suffering from the lack of support and this kind of high inflation. Our view is that consumer is still a no-go in most cases, but we've been adding back to luxury as a way to diversify and start to get a bit more into the top-end consumer, which in our view could somewhat benefit from this investment boom. We are seeing wealth effect booming in the US, part of Asia, and look, if ultimately the war shock is receding or being contained, that could help part of the consumer to shine, but we still very much, believe in the top-end consumer as opposed to the low-end.
The bottom-end consumer, the K is still there. Manuel,
Indeed.
nice to see you. Very nice to see you stopping by to see us. Manuel Coe, Head of European Equity Strategy, joining us from Barclays. What we're going to do next, we'll look ahead to the SK Hynix, highly anticipated ADR listing in the United States. Global chip stocks continue their roller coaster ride. Another wild session. That was SK Hynix at the close a little earlier on today. We'll do all that next. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg. Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
When news breaks,
a red head across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome back. 16 minutes past the hour. AstraZeneca shares under significant pressure today, slumping on news that its gene silencer drug, Wainua, failed to help prevent heart problems in patients with a rare and potentially fatal heart condition. The man you want to talk to about this stuff is Sam Fazeli from Bloomberg Intelligence, and we found him. He's here. Good morning.
He made it in.
He made it in. And it's great to see you. Tell me, what do I need to know?
Yeah, I mean, to be honest, Guy, this looks a bit of an overreaction. The drug in consensus estimates is at about $1.5 billion. The company had targeted $5 billion, so okay, that's a big chunk. It doesn't change the $80 billion really 2030 target. So I'm a little bit surprised at the extent of the reaction. Obviously, it's a drug that is for a form of cardiomyopathy. So as your, the heart problems, right? Let's put it, just keep it there. It's a very specific type of issue. It's never nice to have a negative data set, but they've had so many data sets read out positively that it's not a surprise. It's drug development at the end of the day. So I'm a little surprised by the reaction.
Okay. One of the reasons I've heard for the scale of reaction is that it's a credibility issue, that people are extrapolating this and saying Astra's promised big things with this and it didn't deliver. Can I extrapolate that in some of the other trials that it's got ongoing? Is that a legitimate line of argument?
I mean, it's an argument. All right. I mean, people have to find a reason to explain the share price drop, I guess.
Yep.
The reality is that drug development is difficult. So if the management, and they had been out there sounding very positive about this data coming out, or positive about the data coming out, and it fails, it does raise a question as to why were you leading us to think that this was going to be a slam dunk. But it's biology. Things happen. And I think it's, Astra's been through these days. I remember 10 years ago or 15 years ago, they had a trial fail, and everybody went, this is over.
Yeah.
And, but we're at the 40-pound levels those days before the Pfizer approach. So, again, I would say that this is drug development. It happens. Is it going to read out to read across to a cancer drug or another trial for obesity? I don't think so.
So it's not there isn't a credibility problem here with the way it runs its trials.
No. Now, there is a risk there are other failures coming.
Right.
And no, I mean, this company has had, look at how much success they've had. So, I don't think you can really make that claim on one trial failing.
Is there a point, are we at the point, though, in the market where the market is just punishing any kind of failure? It's not as if the pharma sector is particularly highly valued at the moment. It's been through this huge downdraft, and therefore I'm surprised that you're getting such a big reaction at what feels like the sort of the bottom of the pricing cycle in terms of drug stocks.
I wanted to turn around and say, okay, this has got anything to do with the issues resurfacing in the Middle East. The market's not feeling good about things, so if you get a bad news, you go for the jugular, right?
Yep.
But I think the story here is Astra has been one of the better stories in the healthcare, in the pharma sector, at least on the European side. In the US, it's been Lilly and AbbVie doing really well. So maybe this is a reason for people to think, okay, I've had a good run, I'm going to take some profit.
Okay. taking a little bit of profit, maybe in the mix as well. Sam, it's great to catch up. Always a pleasure to see you. Thank you very much indeed for stopping by to see us. Sam Fazeli of Bloomberg Intelligence. Let's turn to another big single stock story that we're watching carefully here in Europe this morning. The board of Volkswagen is expected today to consider plans for a massive restructuring of this global car giant. Bloomberg understands the proposals could ultimately eliminate as many as 100,000 jobs. We could see 4 German factories closing. We're joined now by our automotive reporter, Stefan Nicola. Just talk me through these plans. Oliver Blumer is the CEO. He's pushing this through, but he's got to put them and get them through the supervisory board. Just talk me through what we're expecting from this meeting.
Yeah, good morning, Guy. This is certainly the biggest restructuring any CEO has attempted in many, many years. Blume is meeting the supervisory today to sort of table his plans. As many as 100,000 job cuts, 4 German plants closing. His push is meant to make VW leaner, smaller, more profitable, faster. And, you know, he wants to ready VW for mounting competition in China, in Europe. The likes of BYD and Xiaomi, they're already dominating on EVs in China. They're now coming to Europe and intensifying the competitive pressures there. Blume will face tough opposition in the supervisory board. Labour obviously won't like job cuts, won't like plant closures. So expect to see tough negotiations today, but also in the coming weeks and months. Today is the starting shot for these tough talks.
If Volkswagen's doing this, will others have to follow?
Yeah, most likely they will. The story of VW is one that's reflected across the sector in Europe. All of the main European automakers, Stellantis, Renault, BMW, Mercedes, are all in cost-cutting mode. They're all responding to the same pressures of rising competition from China, and they're doing so in a smaller market. Europe has not come back to levels we've seen before the pandemic, so that's only increased the pressures on CEOs, and they're all struggling to either fill plants or become more efficient.
Stefan, thanks for the updates throughout the morning. We'll look forward to the coverage as we monitor this important meeting taking place of the Volkswagen Supervisory Group. Stefan Nicola on that story. Let's turn to tech and talk about what is happening there. Bloomberg is learning that SK Hynix's US ADR listing is more than 7 times oversubscribed. The South Korean memory chip maker is set to price its offering today, with the ADRs to begin trading on the Nasdaq tomorrow. Let's bring in our Seoul bureau editor, Denny Thomas. Denny, let's talk a little bit about this. I'm fascinated. Foreigners have been selling Korean tech aggressively over the last few sessions, but now we've got this ADR being 7 times oversubscribed. What's going on? Just explain what is happening here and how important this is.
Yeah, so this is a big moment for tech. This is a big moment for Korea and the two tech the chip makers that have been really in the spotlight. This takes Hynix to a new kind of orbit, and what we've seen is because of the uncertainty around whether the investments are going to be AI investments are going to be coming through fully with returns. There's a lot of nervousness around how these stocks will behave going forward, and that has caused a lot of volatility. Since the ADR news came out late June, the local stocks are down about 17%, and it's been very volatile, which makes pricing of any of these pretty hard. But despite all that, we've seen a pretty strong book develop when the book closed yesterday, and we have a good bunch of long-going funds. There are hedge funds in it. There are sovereign wealth funds in it. So by the look of it, the book has been pretty strong. It's not a kind of a quick hit kind of people coming in, and that's a good sign for what ADR is, what SK is trying to achieve here. Now the big question is, where the book is going to settle and where the price is going to be. There's some expectation that there could be a premium to what the market is trading now, but that will come to know in the New York session today.
In terms of what's happening domestically, we've obviously seen huge volatility, as you just highlighted. The market in a bear market yesterday. What is the sense here? Is this just a short-term blip? Is there serious concern around what is happening with valuations? Just talk us through what you're hearing about the domestic sense of what is going on with the stock market.
Yeah, I think the huge run-up that these two stocks have had and the dominance they have in the Korean market and the ETFs that have been issued around these stocks, that is creating a lot of volatility, and that's not a good sign. But fundamentally, the business is going good. I mean, if you look at Samsung, they came out with their blowout results. Their profits are up, their operating profit guidance is up about 19-fold. And about 50% up from the previous quarter. So fundamentally, it doesn't look like anything is slowing down. But yes, because of the big run-up, people still don't have the confidence that it can be sustained. But I think, to me, the ADR momentum and the book build that has happened, that's a clear sign that global investors are willing to back a stock like this. It still trades at a discount, and that's where SK has a bit of an edge in terms of convincing global investors that, look, we run up 200% this year, but compared to our competitors, we are still discounted, and that's where we have our chip.
Denny, thanks for the update. Really appreciate it. Denny Thomas joining us out of Seoul ahead of the SK Hynix pricing that we're going to see a little bit later on today. Talking of which, we're going to hear from the SK Hynix chairman as the chipmaker makes that US debut. That conversation 3:30 p.m. London time. Make sure you tune in for that. Coming up, we are certainly seeing some significant fluctuations in the price of crude. We've seen tit-for-tat strikes overnight between the Iranians and the United States. What does this mean for the price of crude, which is actually surprisingly a little lower today? Why is that happening? What is the signal we should take from it? Francisco Blanche is going to be here to answer that question. He'll be here next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Thursday the 9th, half past the hour. Welcome back. You're watching The Pulse. I'm Guy Johnson in London. Quick update on what you need to know this morning. Oil now lower. We're down by, let's call it 1.5%. This despite the fact we've seen a fresh wave of US strikes on Iran. We've got Iran hitting back. The Strait of Hormuz is at a near standstill. We'll talk about this in just a moment. We've got a hawkish set of Fed minutes out of the Fed. Some officials actually making the case for a hike in June. Plus AstraZeneca shares under significant pressure. It's a late-stage trial surrounding a heart therapy failing to prevent problems with a rare condition. The market is taking this one badly. The stock's down by 9.5%. So we've got some single stock stories. We've definitely got some macro events that we need to price in. Let's talk a little bit about what is happening with the crude price, which I think is fascinating this morning. So crude is down. Crude is down by, I can give you the Brent price, 1.5%. We're down, almost exactly 1.5%, 76.86 on Brent. TI is down by a similar amount. This, as traders basically look at the situation in the Middle East, look at the situation in terms of supplies, and look at what is happening in terms of the conflict between Iran and the United States. So yesterday we had a massive session. Some of that's now being unwound, despite the fact we've got an upping of hostilities. What's going on? Why are we seeing this, what appears to be a relatively calm reaction this morning? Well, let's try and get an answer to that question. Bank of America's head of global commodities and derivatives research is Francisco Blanch. He joins us now. Francisco, I got an oil price that is up on a two-day basis but down in session. Can you explain what's going on?
Well, it's a little difficult to fully understand what's going on, Guy. But I would say that you have to remember the market has been pretty chilled about the return of barrels since the memorandum of understanding was signed about a month ago or about 2 weeks ago. And I think since then we saw a resumption of flows, and the general assumption is that despite the ceasefire being breached a few times, eventually there won't be a full return to combat, and there won't be, I think, a complete curtailment of flows over the second half of the year. So that's, I think, what's been priced in. Having said all that, it's also very important to remember that we are starting at a much lower point in terms of inventories. So should we see a return to active conflict over the course of the next few weeks and therefore, let's say, a more permanent shutdown of the Strait of Hormuz and crude oil flows, the price of oil could quickly shift up and break into the $100+ a barrel range. Now, of course, I don't think that's the expectation that anyone's building in right now, but that's kind of a clear risk. Plus, also, there's a risk to energy infrastructure in the region, because until now, we've seen, of course, tankers and LNG carriers being struck by drones and missiles, but what we've not seen is energy facilities like we saw during the war, for example, in South Pars or in Ras Laffan being struck. That, I think, would be also changing potentially the game for energy markets.
So as long as the Iranians only hit military infrastructure, the market will stay relatively relaxed.
I think so. I think the oil market is basically viewing this as another episode of negotiation between the U.S. and Iran. Of course, both sides they have different perspectives, as we've learned over the course of the past few weeks. They both seem to think they've moved forward their interests, but at the same time, I think the Iranians have a history, have a habit of really pushing very hard on negotiations, and maybe part of the friction we are seeing today is kind of potentially the result of that of a set of misunderstandings on both sides as to what the memorandum of understanding is really supposed to mean, and it is definitely a risk to the market. And obviously we are getting closer to the U.S. midterm elections. We've seen also the Fed potentially changing to a more hawkish stance, but the equity markets have taken the upside risks in oil market remarkably well. So I think that's also given comfort to the U.S. side to press their case in the negotiation of this memorandum of understanding and turning it into a deal. So I think both sides seem to think they have an edge.
Francisco, if you're an insurer, if you are a ship owner, if you're a ship captain, how do you feel about putting boats back into the Gulf? You've got them out. Do you want to put them back in again?
I think it's a very, very tough call to make right now to get boats back into the Strait, given what we've seen. And that's kind of the point, I think, that the Iranian side is trying to portray. Remember, one of the big asks during the days that led to the negotiation of the MOU was the ability of Iran to charge for passage across the Strait, and which has been a very contentious point in negotiations. And of course, if you are an insurer, you're going to look at these actions here and think that maybe this is a much riskier environment than what you may have thought in the past. So it definitely pushes up the premium. But as I said, I think the market works under the assumption that both the U.S. and Iran have a strong interest in allowing energy flows to continue through the Strait of Hormuz, because they both stand to gain. The U.S., of course, by lower energy prices and lower inflation and lower interest rate expectations potentially. And Iran equally stands to gain by monetizing their oil and potentially monetizing through the charging of fees in the Strait. So both, and I think that's the reason why the market's not gone crazy at the end of the day for oil prices, is that's what traders see. They see an interest. But of course, there's a big risk of miscalculation on both sides. And as I mentioned earlier, if we hit infrastructure that has a more permanent element to it than a ship, that could really change the dynamics here very, very quickly.
Francisco, I do slightly wonder this morning whether I'm looking the wrong way when it comes to understanding what is happening with the global energy story. Because you talk about hitting infrastructure. The Ukrainians are hitting Russian infrastructure aggressively at the moment. We've just seen the Russians talking about an export ban on diesel. Is that actually where the problems may lie, and we're being misdirected by looking to what is happening in the Gulf right now?
Look, Guy, there's two elements here which I think are very risky coming into the winter. And of course, we're in the summer right now, so we are just enduring the sweltering heat. But as we go into the end of the summer season and to the end of the injection season for natural gas, I'm particularly worried about TTF prices because we've seen an LNG tanker from Qatar being struck this week. And I'm also worried about, to your point, diesel, because this is the tightest portion. The middle distillates is the tightest portion of the energy markets. We know refineries are a huge bottleneck. We know there's a lot of refining capacity in the Middle East, and also there is a lot of refining capacity in Asia that's been starved for crude oil. So yes, I'm concerned about that, and I think the market will become quickly concerned if the level of hostilities increases over the course of the next few weeks.
How bad could the winter be? How tough? Are we heading for another energy shock, gas shock in Europe this winter?
Well, so right now, as I'm sure you're aware, we are looking at a big increase in natural gas demand in Europe, even in the U.S. Temperatures are pushing up gas demand, although that's a bit of a separate story. But we are seeing the higher temperatures leading to more gas demand. We are looking at potentially less nuclear power generation because the heat makes it more difficult to cool the reactors because it warms up the river, the water in the rivers, particularly in France. So all of these factors, I think, can set us up for a more challenging winter. Now, it's early days. But one thing is clear to us is that we will not be, particularly when it comes to TTF, we will not be at the 80 or even 90%, much less 90% level of inventory fills that typically is what gives us the comfort that we will go through winter. Now, there's a strong El Nino, so maybe it's a warm winter, and maybe that saves the day for us once again. But whether it's a chaotic systems is really difficult to know how the winter will shape up. But yes, coming into winter, things could look quite different than they do today, and some of these problems could reappear very fast.
Francisco, definitely got to watch this space very carefully. Thank you very much indeed for the update and the analysis. Francisco Blanche, Head of Global Commodities and Derivatives Research, joining us from Bank of America. We'll come back to the commodity story and the El Nino story a little later. Let's talk about how the events that we've seen in Iran over the last couple of days have overshadowed the NATO summit that has taken place in Turkey. The meeting obviously ended with President Trump saying a decision on US troop levels in Europe would hinge on how allies addressed his concerns over Greenland and their support for the Iran war. We're joined now by Bloomberg's chief Europe correspondent, Oliver Crook, who's in Ankara for us. Just talk us through kind of how this summit evolved and how we left it. There was this time yesterday, it felt like divisions were really kind of elevated. But as we maybe left the summit, some of those had been narrowed.
Absolutely, Guy. I mean, this really felt like a marathon of a summit. You know, Trump came in quite sort of angrily on a number of issues. He was sort of reiterating the Greenland issue. This is obviously an issue that the Europeans would like to bury and never hear ever about again. But again, he kept reiterating the United States should have Greenland. So this was a sort of big red flag going into the meeting. There was, of course, the continued criticism that none of the NATO allies had adequately supported the United States in their military action in Iran. There was, of course, the spat with Spain, basically saying that he would cut trade ties with Spain if they didn't contribute 5% of GDP for NATO. But the tone really shifted, apparently, in the room when he was surrounded by that ring of 31 other leaders of the NATO countries, all sitting together, all discussing, and really having a sort of unifying message. Trump left that meeting, I think, much more serene, much more positive, saying that there was a lot of love in the room, that he wished that the media had actually captured how much unity and how much they were on the same page. And I think as far as NATO is concerned, I mean, listen, you're only going to get so much from Donald Trump on the question of NATO. You're probably not going to get a sort of full-throated support of Article 5. He's going to want to use that sort of stick and carrot to try to get what he wants from NATO allies. But this is probably one of the best outcomes you could have hoped for the Secretary General Mark Rutte, who had organized this entire meeting and really laid all the groundwork in the weeks in advance for this to go very well. There are a few questions still remaining as we leave the summit looking into the future. There is, of course, this question about troop movements within Europe, American troops, whether or not they're going to be drawn down. There is a review on that the Department of War is doing over the next 6 months, so we'll get the outcome over the next 6 months. That being said, all the NATO officials that I spoke to over the last couple of days said that this is going to be a very orderly transition. Whatever the United States is going to do, they're going to telegraph it very widely. There's also a question about whether or not there will be another NATO summit next year, if it will be held in Albania. Apparently, there are deliberations about whether to do these summits every 2 years. Some within the NATO community think that maybe having another summit while Trump is still sort of relatively early in his presidency, maybe not having that will sort of not give the opportunity for him to sort of blow up the summit again. But again, I think that everybody can leave this summit feeling pretty good, most of all President Zelensky.
Yeah, let's talk about that. That was a surprise to me. If you talk about kind of a narrowing of gaps, it was that meeting between Trump and Zelensky that really stood out.
Absolutely. I mean, you have to look at this relationship, how it's sort of evolved over the last 18 months from the Oval Office to Ankara. It's a completely different relationship. And I think as far as solidarity with the Ukrainians, this is as much solidarity as we've ever got for President Trump. In addition to the fact we had this sort of very practical addition with the Trump administration saying that effectively they're going to allow the Ukrainians to produce those American Patriot missiles domestically within Ukraine, an absolutely huge win for President Zelensky.
Oliver, thanks for the update. Continuing coverage from Oliver Crook at the NATO summit, which is now wrapped up in Ankara. we'll continue to update you on the fallout from that. Some really interesting sort of strands developing. What are we going to do next? As traffic in the Strait of Hormuz grinds to a near halt once again, we're going to look at the outlook for fertilizer prices. We'll also look at coffee. Important things if you work on an early morning show, I can tell you, and cocoa, and the impact that we've seen. Climate change, we were talking about earlier with Francisca, a huge factor here as well. Going to fold that all together. That's what's coming up next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Welcome back. Watching the Pulse. I'm Guy Johnson in London. Let's get back to the topic of what is happening in the Strait of Hormuz. Traffic in the Straits seems to have come to a standstill once again. This after the US struck Iran for a second straight day. Up until the latest escalation, fertilizer exports through Hormuz had been picking up considerably after a huge volume of urea, etc., was trapped inside the Persian Gulf. What happens next is now a key question for global inflation, what happens with food supplies, and what the next harvest is going to look like. Judy Gaines, president of J. Gaines Consulting, joins us now. Judy, great to catch up. The price of fertilizer coming out of the Gulf, urea, etc., had come down really quite sharply after hitting a peak earlier this year. Would you expect it to go back up again now?
So it'll go up, but the initial shock brought prices much higher. There was that overreach, and I don't think we're going to get to those levels. Whenever there's panic in the market, you have this initial panic, but the market's had time to adjust to it. Supply chains shift, people accommodate different suppliers, and therefore that initial surge of tightness, the fear, is gone.
OK, so we can manage through this process, but are we going to manage through it with a higher price than we've had over the last few years? And is that something we're just going to have to learn to live with?
Oh, absolutely. The base has been elevated, but we're not going to see that excessive volatility that started from the initial reaction when the Strait was first closed and the war broke out.
So to work it through the supply chain, how does this affect farmers? What does it mean for crop prices?
Well, crop prices, the costs go up, and they've got to manage that. So in some extreme cases, possibly they'll cut back on inputs, which ultimately shows up in the quality and the quantity of output. But recognize for commodities like coffee and cocoa, prices have been at historical highs, and therefore there's a little more cushion for farmers than if prices were severely depressed to manage the higher costs.
Okay. What I'm hearing from the farmers I talk to, and I don't talk to that many, but I talk to some, is that they're becoming much more creative in terms of the fertilizer that they are using and how they're working their way around this. How much substitution can there be for traditional fertilizers?
Well, there's a lot of regenerative farming practices that absolutely help to cut back on inputs. So the healthier the soil, the better off the farmer is. But that takes a lot of work to get to that point. But you can make substitutions. You could use chicken manure. You wind up with a lot more flies and smell on your farm, but it actually works. On some Brazilian coffee farms, they're using the chicken manure and obtaining very, very high yields.
So talk to me about coffee prices. This is something that's very close to my heart. Why are they up as much as they are? And does the yield at the moment tell us a story of scarcity? And if not, why are we seeing the prices we're seeing?
Okay, so we've gone through several years of tightening supply. And Brazil is the world's largest producer. And they've had an unprecedented run of poor weather. And for the crop that's being harvested right now, the expectation was that it was going to be the massive bumper crop of high quality and would help to refill the buffer of supplies and turn the balance from one of deficit for 4 straight years to one of substantial surplus. Plus, high prices are the best cure for high prices, and so other countries would also see an improvement. Let's not forget that there's also the threat of a super El Nino, and that would impact some key producers. But what happened in Brazil was that suddenly the skies darkened and you got this unusual rainfall in June and parts of May. So there was 3 cold fronts that came in, not bringing frost, which is the normal fear for this time of year, but brought very heavy rains to some communities. And as a result, the soil became drenched. A lot of the coffee fell to the ground. Now they're able to sweep that up, but it damages the cup quality. And there was also additional fears that there's going to be another successive series of storms coming in that could disrupt and delay the harvest further. So we went from having the potential of this big supply coming on and likely depressing the market to all of a sudden that Brazil crop isn't ready yet and it's delayed and the quality isn't what people were expecting.
Okay. You mentioned El Nino and the possibility of a super El Nino. How are you thinking about that? What is the story over the next 18 months? What is that going to mean in terms of ag prices?
So it's very different from one region to the next. And a lot of people all of a sudden hear super El Nino and they're fearing the worst in terms of drought for some key coffee and cocoa producers and sugar as well. The thing is, you have to pinpoint down other teleconnections to understand what the impact is going to be. There's no 2 El Ninos that are alike, and typically a strong El Nino will peak in December. So, for example, in cocoa, West Africa, where the 2 largest cocoa producers are, typically you could see drier weather during the dry season, the harsh Saharan winds blowing across and hurting the future crop and the crop that's on the trees. But there's also been a very warm southern Atlantic Ocean, and the temperatures are very high, and therefore that's drawing in moisture. If that pattern can hold, it can be a bit of an offset for the drier weather, and so you might not have the same damage. That warm ocean, the Atlantic, is also what has driven the rains into Brazil, coincidentally, and is creating fears in the cocoa market of too much rain right now, and has pushed prices up from $4,000 a ton to $6,000 a ton. So the culprit is in drought.
It's been a big
right now. It's too much rain.
We know about that here. Judy, thank you for joining us. Judy Gaines, president of J. Gaines Consulting, joining us from Panama up early. Let's quickly wrap things up and just talk a little bit about what is going on. We've had a couple of things that I just want to focus on with Skylar, who joins me around the table. Two things I want to ask you. Why is the oil market so relaxed this morning? And how hawkish were those Fed minutes?
On the oil market, let's start there. Yeah, it is quite relaxed, right? In terms of, if we think about current levels, it's 25% below the levels we had through April and May. I do take some kind of message from the fact that we have had a reaction and that you've had so much noise out of Trump around U.S.-Iran. So it was kind of, why would this trigger something? And that, yes, you did get an actual policy action in terms of the waiver for Iranian oil being removed. But there wasn't really a difference in terms of this noise and other noise. And I think the answer is you're getting kind of a theta decay in the ability of the ceasefire to constrain prices, as in you have this environment where not a lot's getting through the strait. At the same time, reserves are being drawn down. And so we have a lower bar now, the further that you could have these negotiations go on for prices to go higher. But I think until you get like complete stopping of transit through the strait or kind of involvement that is infrastructure being targeted, then the market's relatively relaxed because we haven't had the worst case outcome.
The Fed?
The Fed, yes. Relatively hawkish. I think what we've seen is two key points. The first is that they're seeing AI as being more inflationary. And I think that's the big shift we've had this year, right? It's boosting growth, it's boosting inflation, and then on top of that, you've had Iran. And then the other big shift is just that hikes could have happened last month. And so we're increasingly looking for hikes this year, and the question, I think, is just how many.
I see. Answering all the questions. Skylar Montgomery-Cunning from our M-Live team. OK, US futures are up. The Nasdaq's up by 0.6%. The S&P is up by 0.2%. That wraps things up for the Pulse, but the brief is coming up next. Fonnie Quinn will take you through the run-up to the market open. This is Bloomberg. Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys,
buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
In New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh strikes. The U.S. and Iran trade attacks for a second day, testing the fragile ceasefire. Stocks rebound, though. Oil erasing some gains despite renewed tensions. And IPO appetite. SK Hynix's U.S. offering sees strong investor demand. All right, looks like a little bit of stabilization around the world. Let's begin over in Hong Kong with Winnie Su for the latest from Asia. Winnie.
Yeah, good morning, Bonnie. It's been a very jittery session in Asia today as investors really grapple among the different factors, including the Middle East tensions and also some hopes around the AI trade. Now you have the MSCI Asia here fluctuating throughout the whole day after 2 days of declines. But the most volatility again seen in South Korea's Kospi index, trading in fact in the green at the end of the day. However, the gains mostly led by SK Hynix, which is up more than 5%, as you just mentioned, ahead of that U.S. listing tomorrow. Now, appetite is very strong. We are seeing it being oversubscribed by more than 7 times. Now, flip the board, we take a look at the Chinese assets because mainland Chinese shares, CSI 300, in fact, up more than 2%, leading gains in Asia, driven by the rally in chip makers. Also, some optimism ahead of the memory giant CXMT's IPO next week. And also, when it comes to currency, also leading gains in Asia, following that stronger fixing from the PBOC.
Yeah, we're getting an Asia IPO a week, it seems now, Winnie, in the U.S. That's Winnie Su in Hong Kong. Thank you. Now let's get to London for a look at Europe with Justina Lee. Justina.
Good morning, Vonnie. Now, today feels a little bit like yesterday in reverse, with oil containing some of those gains. So, of course, the Stocks Europe 600 is bouncing back a little bit. And now the exception here across Europe is the FTSE 100, which, of course, has a lot of those oil major names, but is also dragged down today by AstraZeneca, you know, the pharma company whose drug trial just failed to kind of contain a disease. And so if we look at currencies here, the euro is bouncing back a little bit. Of course, dollar strength is a bit contained today. We flip the board here. Same goes with pound sterling. It's also strengthening a little bit. And all across Europe, bond yields are falling, led by the short end, with those rate hike expectations changing. And actually today, UK gilts are outperforming the rest of Europe. And so I think everything, again, we're going back to just oil watching here in Europe, Bonnie.
Exactly, Justina, and as you say, contained. So we did rise, but we are seeing just a little bit of a fall off today, and that may be helping with stocks. Though we did see a bit of a flight to the safety of chip stocks. Who would have thought it yesterday? So we saw pretty aggressive buying into the close. We were still lower on the S&P 500 for the day, but only by about 0.3%. And the Philly Stocks Index was up 2.2%. It looks like that may continue today because we have the Nasdaq 100 futures pointing to an even stronger gain than the other indices, but they're also pointing to gains. It's a fascinating dynamic because up to yesterday and the bellicosity of President Trump, we had been seeing a lot of jitteriness, a lot of selling off in U.S. stocks, and now it seems like the tech trade might be a trade of safety. Let's take a look at yields because, of course, we got the FOMC minutes. Little milk toast, that was the word that Michael Feroli used. Paul Donovan put it even more succinctly, saying could go up, could go down. Essentially, we don't know what the next move is going to be from the Federal Reserve. 2-year yield coming off just ever so slightly from yesterday's position. It's still all the way up to nearly 420, though. And that 30-year yield is staying extended at 507. Not much movement at the back end of the curve, just at the front end of the curve, pricing out just ever so slightly those rate hikes. And this is your picture for oil then. So we did move higher. We're off those highs, but as you can see, just by a little bit, and we're still at 73 and change on WTI, and Brent crude still above $77 a barrel, a far cry from where we were just about 25 or 6 hours ago. All right, let's get to some individual pre-market movers now. We'll go back over to London and Chloe Melley. Chloe.
Good morning, Vonnie. U.S. tech is back in the green this morning in pre-market trading. After some weakness recently, it seems that this very strong demand for SK Hynix offering in the U.S. has really reassured investors about this AI trade. And so we are seeing the likes of Intel and Micron very much in the green this morning. Moving on to Ionis Pharmaceuticals, which has developed a drug with AstraZeneca over here in London. But this is a hot drug that has failed clinical trials. So this is a huge setback for both of those companies, given that it would have been something that would have led to billions of dollars more in sales of that particular drug. And so we are down almost 15% there. And finally, Levi's is also in focus. The company boosted its outlook, boosted its dividend, and the earnings came in ahead of expectations. But it seems that this outlook boost was just not quite enough to encourage investors, to reassure them. And so we are seeing actually quite a bit of weakness despite what seemed to be quite strong results from Levi's. We're down about 6% in pre-market trading.
All right, Chloe, thank you so much. Chloe Melee there. Coming up this hour, we're going to discuss efforts for a lasting peace deal between the US and Iran with Anna Rosenberg of Mundi Investment Institute. And later in the hour, Andrew Graham of Jackson Square Capital on why he remains bullish equities and particularly the AI trade. Traffic in the Strait of Hormuz grinding to a near halt after the U.S. struck Iran for a second straight day, hitting around 90 military targets. Bloomberg's Abir Abu Omar joins us now from Dubai. What is the situation today in the Middle East, Abir?
Good morning, Vonnie. Back and forth, it looks like, between the United States and Iran. As you have mentioned, the United States hit Iran for a second straight day. More than 90 targets were hit in Iran. Iran reporting earlier some bridges in the eastern side of Iran were hit. And then what Iran decided to retaliate with, essentially, is hitting countries in the GCC, namely Bahrain and Kuwait. Now, this is similar to actions that Iran has taken in the past when these skirmishes have happened, even after the MOU was signed in June, Vonnie. And so we're hearing that Bahrain is reporting sirens. They're reporting that their interceptors were intercepting missiles that were launched in the early hours of the morning. Kuwait as well, saying that interceptors had detected those missiles, some infrastructure damage there as well. And so that is essentially what we're seeing in terms of the retaliation. It seems for the time being, Vonnie, that it's muted, and this is why you're seeing Brent crude prices and NY crude, I'm seeing on the screen, reversing those gains that we saw earlier in the session. It does feel like the market is not expecting this to go back to a full force, full-blown March type of situation where we're seeing kinetic warfare in the wider region. But at the essence and at the heart of all of this remains the Strait of Hormuz, where what our energy colleagues are reporting is that the traffic or the movement there has come to a near standstill in the early hours of the morning. And this is really because Iran had hit a ship at the beginning of the week, and it said that, or it cited the fact that those ships that are not sticking to the routes that it lays out will be targeted. And so this remains at the heart of this. Iran asserting dominance over the waterway is at the heart of this. President Trump saying that he doesn't know whether we're going to go back to a full-blown war, but he says that if we go back to that situation, it would be a very quick win for the United States. Iran not backing down, saying that if the U.S. strikes, Iran will strike back.
All right, Abir, thank you so much, Abir Abu Omar in Dubai. For more on the exchange of attacks and where we stand exactly with Iran, Anna Rosenberg, head of geopolitics at Mundi Investment Institute, joins now. Anna, are we back to square one in any way here?
No, but we are also not back to how it was prior to the war, and this is something that we have been flagging for some time. This situation was never going to go back to prior to the war, simply because this war has unleashed forces that Trump alone cannot contain, and we are seeing this currently play out. In theory, the MOU should make the Iranians happy enough to stop striking. But this isn't happening, and the question is, why is this not happening? And I think what we're seeing playing out is, well, internal power dynamics within the Iranian regime that have different ambitions. Some want the MOU to continue, some want to reap the rewards of sanctions relief, etc., while others think it is more valuable to control the Strait of Hormuz. And this is why we're seeing those tensions play out. The ceasefire is not over yet. I think we're seeing a temporary tit for tat. The constraints that led to the ceasefire in the first place on Trump to pull back and offer Iran such attractive terms are still very much there. Therefore, it's more likely that the ceasefire holds after this tit for tat. But nevertheless, this is, of course, a high-risk environment that we're going to be in this tit-for-tat for quite a while.
How much are the funeral ceremonies for the Ayatollah impacting Iran's response at the moment? They're still ongoing. In fact, they moved to Iraq in the last couple of days.
Yes, it's a display of power, and it's not a good sign that the US decides to strike Iran at a time of a fragile ceasefire when they have an important celebration. So that overall shows you how fragile that relationship is and how fragile the ceasefire is, and why this situation is at best a temporary ceasefire, likely to last, I would say, until the midterms elections to some degree, because Trump wants a little bit of economic calm as a result of this. We have seen a change of power in the Middle East, and Iran is currently trying to reap the rewards of the MOU by cementing its geopolitical power and its power at home. And this is why we're seeing the funeral procession go into Iraq.
When it comes to the Strait of Hormuz, you know, I had thought that the Iranians were in talks in some way with the Omanis. How many routes are there now, and is there any that's acceptable to all?
Well, in theory, what has happened, and this is also why we have seen the attacks from Iran, is that it seems that ships are using more the Omani routes, which is basically outside Iranian territorial waters. And this is something that Iranians fear, because if this route becomes more established, it means that the Iranians are losing control over traffic in Hormuz. And for them, this is now a really once in a lifetime, if you will, opportunity to cement their hold on the strait. And this is why they want to introduce fees. So if the route gets established around Oman, then that's a problem for Iran further down the line. But the traditional route was centrally through the Strait of Hormuz, also into Iranian territorial waters, and they want it to go back there, because also the route around Oman is pretty thin and narrow and a lot riskier. But the US can't allow the Iranians to charge for traffic through Hormuz, because this would threaten freedom of navigation. And this has been a principle that has benefited the US since the end of the Second World War. But the Iranians are really pushing here. They want to introduce those fees. And I think that's what's going to likely come head to head between the US and Iran. Who is ultimately going to control Hormuz? Will the US budge and allow the Iranians to charge for it at one point? This could upend freedom of navigation as we have known it.
Yeah, absolutely. Anna, right as it was winding down and the ceasefire was really taking effect, we had, you know, the House of Representatives, the Senate, just basically chastising President Trump, saying that it was not backing him in this war anymore. Now that hostilities seem to be escalating again, he absolutely and very transparently doesn't have the support of Congress, right? Does that make a difference this time around?
I mean, again, we have to go back to how we got here in the first place. This deal was a surprise to the degree of what the US offered Iran. This is a very attractive deal for Iran. Iran got huge sanctions release, promises of assets being unfrozen without having to give in anything. And the fact that this deal was materialized in the first place shows you how of a weak negotiating hand Trump had in the first place. So this tells you that there are constraints on him that are very powerful, and the Iranians know that. What has happened since is that Trump has realized that the deal has not been well perceived in the US. It's been perceived as a weak deal. The oil price hasn't, gone up that much. So now he seems to be a little bit more willing to re-escalate. Obviously, the political support is important within the US, but he's been doing a lot of executive actions. And when push comes to shove, ultimately, he's going to act based on what he thinks is in the interest of the US, with or without the support of the political framework at home.
What's the base case for you and the Mundi Investment Institute and your clients going forward? How does this resolve in some way?
Well, our base case is that this MOU is broadly going to hold probably until the midterms, because, as I said, because of the constraints that we saw before. Nevertheless, this is not going to be calm. We're going to see ongoing disruptions in the Strait of Hormuz, pretty much like we are seeing right now, simply because, as I said, there are underlying power dynamics, power struggles within Iran with different interests. And therefore, you see ongoing attacks in the Strait of Hormuz. That's our base case. This sporadic disruptions will continue. At the same time, I think now it is more important to look at the kind of traffic that is going through and the rerouting that is taking place, because that is what ultimately will determine market reactions. And we have seen a lot of rerouting in oil, but also in other areas. And as long as there is not a big, narrowing down of things flooding into the world economy, the geopolitical fallout is not that relevant for markets. So we need to look really now at what goes around, what goes through Hormuz, and what can be circumvented.
All right, Anna, thank you so much for all the context this morning. That is Anna Rosenberg of Amundi Investment Institute. Now to other top stories trending on the terminal this morning. Volkswagen facing a make-or-break board meeting as CEO Oliver Blume pushes a sweeping restructuring that could eliminate up to 100,000 jobs and close 4 German factories. Management says deep cost cuts are needed to compete with Chinese EV makers, but labor unions and politicians are expected to fight the plan. Porsche's first half deliveries fell 16%, the weakest first half sales in 6 years. North America and China drove the decline. Porsche says the drop reflects the end of production for the combustion engine 718, strong demand last year for the all-electric Macan, and the end of U.S. tax incentives for electric and hybrid vehicles. AstraZeneca shares fell after one of its experimental drugs failed in a major study. The treatment didn't lower the risk of heart-related deaths or serious heart problems in patients with a rare disease. The setback is a blow to AstraZeneca's push into what analysts expect will become a multi-billion-dollar market. Coming up, one of the biggest ever U.S. debuts by a foreign company. We look ahead to SK Hynix's highly anticipated U.S. listing. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The SK Hynix U.S. IPO prices raised $24.5 billion. Huge, but is it a little less than we expected?
Yeah, it is, and I think that really just reflects the mechanics of what's happened to their share price over the last week or so, which has been a kind of wider tech sell-off in Korea following those Samsung results, which were really strong in absolute terms, but no more than the market was expecting. So yeah, I think actually it's a little bit contradictory that you see some selling pressure in Korea, but actually such a strong level of appetite in the US market. And I think maybe that reflects a couple of things. Firstly, there's going to be some US investors that can't directly invest in the Korean market, and so they're probably wanting some exposure to the memory trade. That's kind of a real core part of the AI story. Maybe some investors also just looking to kind of hedge their bets a little bit and take out some exposure to Micron and shift it into SK Hynix. And SK Hynix trades at a bit of valuation discount to its US rival Micron, and maybe some people are thinking that actually by having a bit of a US listing that might help to push the multiple up a bit.
Unbelievably, shares are up nearly 700% year over year in Korea. But of course, ADRs are slightly different, Matt. Once they list, is there any sort of impact one way or the other on shares in Korea, or does Korean trading have an impact on ADRs? How does that all work?
Yeah, so each ADR represents about it's a tenth of a Korean share. So these are new shares that are kind of sponsored by the company. So I think you do sometimes see a bit of an arbitrage opportunity between the ADRs and the kind of local listing of companies. So I think again that may be something that's attracting specialist investors into this particular thing to kind of take advantage of some of those opportunities.
We're also now seeing CMTX looking to list next week. Is it just that we're noticing these listings in the US more, Matt, because of what's been happening in Korea, or are these a fresh, spate of listings and will we expect to see more of them?
Yeah, it's interesting with ADR listings. You kind of see them come in cycles almost, and we're certainly seeing a bit of a positive swing back there. Historically, the US has been a great place to list. There's huge liquidity there. Investors typically apply bigger valuation multiples to the underlying assets. So I think there's a lot of attraction to invest there or to kind of list there, and it's a great place to kind of raise additional equity. It does come with additional administrative burdens, and that's sometimes put companies off or prompted them to kind of delist. But I think right now, if you're involved in the tech sector, you want to be having exposure to the US investor base as much as you can.
All right, Matt, thank you so much. Matt Bloxham there of Bloomberg Intelligence. Coming up, a look at what's making headlines in your front page news. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football. And you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up in the New York Times, Democratic Maine Senate nominee Graham Plattner has suspended his campaign after a woman accused him of rape, allegations he strongly denies. His exit throws a key Senate race into turmoil as Democrats race to pick a new nominee before the July 27th deadline to challenge Republican Senator Susan Collins. Next up in the Financial Times, President Trump surprised NATO allies by softening his stance on Ukraine at the alliance summit in Turkey, praising President Volodymyr Zelensky and backing a plan to let Ukraine manufacture U.S. Patriot missiles. European leaders hope the shift signals stronger U.S. support and pressure mounting on Russia. And in the Wall Street Journal, JP Morgan is launching a new investment banking team to target deals for companies worth $100 to $500 million. The bank says aging baby boomer business owners and growing private equity demand are fueling opportunities in smaller M&A, an area where it sees less competition from rivals. All right, this is your market outlook for the day. We have futures bouncing back after some aggressive buying towards the close yesterday. The S&P was down about 0.3%, but a little bit of a safe haven, it turns out, in terms of the war trade. Not much movement on the US dollar index, nor the 10-year. Next up, Andrew Graham.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh strikes, the US and Iran trading attacks for a second day, testing that fragile ceasefire. Stocks rebound, oil raising some of those gains despite renewed tensions. And IPO appetite, SK Hynix's US offering sees strong investor demand. So we are seeing futures looking to bounce this morning. Nasdaq 100 in particular, the stocks ended up the session up 2.2% yesterday. It was almost like semis were a safe haven as war seemed to loom again, or at least the fear of kinetic escalation. In terms of treasuries, not too much movement, a little bit of movement at the front end of the curve, down a couple of basis points on the yield there after the FOMC minutes basically showed a divided committee, as we knew, but could go any which way for a next move up or down. Michael Froley calling them milquetoast. And then in oil, we did see rising oil prices yesterday, but they came off a little bit at the end of the day and we're down just ever so slightly now, about 0.5%. But still, you know, Brent crude still close to $78 a barrel. Let's get to some individual movers now with Chloe Melly. Chloe.
Good morning, Bonnie. This U.S. chip-making sector is seeing that read across from the U.S. listing of SK Hynix, which has seen very, very strong investor demand, as you were saying. And so there's this boost to the AI trade that is coming back after the recent weakness that we had seen in that sector. And so we are seeing Intel, Marvell Technologies, Micron all up more than 3%, so quite strongly in pre-market trading this morning. Moving on to Ionis Pharmaceuticals, which is down very significantly, plunging about more than 21% actually after its heart drug that it developed in collaboration with AstraZeneca failed the clinical trial results. And so analysts are saying this is a huge setback for both companies and also a test of their credibility. So that explains that huge drop. And finally, we're also in the red for Levi's, which has actually boosted its outlook, raised its dividend and had earnings ahead of expectations. But it seems that this forecast boost was just not quite enough and underwhelmed investors. And so that explains this fall this morning. We're down about 6% for Levi's despite those quite strong results.
Chloe, thank you so much. Chloe Melly there in London. Stocks in general then bouncing back after a brief risk-off spell. For more on the markets, Andrew Graham, founder and portfolio manager at Jackson Square Capital, joins us now. What was yesterday? Was it a look for a safe haven trade, or was it something a little bit different? Was it just that we had sold off enough and it was time to buy the dip?
I think it's time to buy the dip. It looks to me has all the earmarks of a classic, position unwinding, exacerbated by single stock levered ETFs in Korea, and I think it's run its course roughly 20% drawdown in a lot of those names. And the Philadelphia Semiconductor Index is still well above levels that people would identify as technical support. It's probably about 7% below current levels. So a lift here doesn't surprise us, and I think it's an opportunity to add exposure.
But we had, risen so much. I mean, some of these names are up several 100% since the beginning of the year. Would you not be a little bit nervous getting in even at these lower levels?
So I think if you don't have to buy Micron and the new SK Hynix ADR, and if, it's just not even necessary. The entire AI theme sold off, and some of those names are our highest conviction names in networking equipment, specifically the optical transceivers like Coherent and Lumentum. So opportunity to reload there. I think they're just a casualty in this position unwind, and that's an opportunity. We also think that now is a decent time to expect the hyperscalers to show an improved return on invested capital. I think that's what this whole thing is about in the background, not just positioning unwind, but this concern or worry that during Q2 earnings season, these guys could lower their 2027 outlook for CapEx. I do not see that at all, don't see it anywhere, and I would expect, if anything, it has an upward bias.
At some point they have to, right? Does there come a point for the market where it's not a problem that they dial back that CapEx spending?
Yeah, I think maybe over time, particularly if you do it gradually, like if they are able to sort of widen that gap between operating cash flow minus CapEx, and that's really been the issue, right? That the semiconductors have underperformed. That the hyperscalers have underperformed the semiconductors. And that looks a little bit like, I don't think a lot of people are talking about it, but it does look a little bit like the 99-2000 period when you had the communication services stocks lagging well behind the communication equipment names, right? The Nokias and the Ciscos and so forth. So that's the similarity, and you can maybe point to that and say that's a little eerie, right? And that bothers me. But the time is coming. Like if it's not this quarter, it's next quarter. And I would expect it to happen sort of naturally. Token costs are falling. Token prices have stayed where they are, right? And that spread, that margin leads to incremental revenues. It leads to incremental margin improvement as well.
How do you know where to put your money or put your profits in the AI trade right now? Do you just, splatter it across the AI trade, or you picked out some areas? Why those areas? Is it a valuation thing? Is it that they're, going to be next up for scarcity?
There's a scarcity component to it. We're talking about the optical transceivers, and then there's a roadmap to co-package optics and so forth. The company that controls that tech horizon is NVIDIA. And if you look at it, if you look at the roadmap, you're going to have to go to light at some point. Copper's not going to cut it, in 2 or 3 more versions. And whether the AI trade collapses tomorrow or not, it may delay the inevitable, but the inevitable is that it's all going to go to light, and you're going to be needing co-packaged optics when you go to scale up architecture, which is probably going to start happening in a real way next year.
The escalation of hostilities again, if it continues, does tech continue to be a little bit of a haven for investors? And why is that? Has it ever been the case before?
Because it's a secular grower. It's not really dependent as much on consumer behavior and things of that nature. So it's just money rotates that way. And so, part of this uptick we're seeing maybe this morning and a little bit yesterday has something to do with that. But I wouldn't make that a big part of the theme. These things are off 20%. That's pretty natural and normal. I think it's probably maybe bigger than what we realized last time in the momentum unwind, but that's just because you have all that added leverage. And that was the pain trade. It was the obvious pain trade. That's what we have to try to do, is identify where people are, everybody's sitting on one side of the boat. Something bad's going to happen. And so all that leverage in those single stock ETFs, that had to unwind, and that's what's been happening.
Andrew, there was a question mark over whether it was the time to start getting into China AI plays, right? China 6, 12, 18 months behind the US maybe, but, catching up at some point. And it's cheaper. Would you buy into that argument, or are you purely looking at US stocks? Purely looking at US stocks. I have a hard enough time doing that. But what I thought was notable is that the open source Chinese models are closing the gap with the US frontier models. And the Brookings Institute estimate is 6 to 9 months behind the best frontier labs. Let's call it Claude Mythos. As you remember, we had to shut Claude Mythos down because we were worried about vulnerability discovery and things like that. So I don't see much likelihood that U.S. corporates are going to skimp when it comes to spending on cybersecurity. So names like Palo Alto and CrowdStrike probably even first. And then we recently added a small position in Tenable, which is really all about vulnerability discovery and management. What about Broadcom? I know it's something that you're very much looking at. It's only, and I put that in quotes, up 12% year to date. That would be fine in a normal year, right? But in a year where we're seeing several hundred percentage points on stocks, 12% is nothing. Yeah. I get that relative underperformer compared to the group, okay? So you can identify that. But it's the era or the age of compute ASIC silicon is here. The Frontier Labs decided to monetize at the end of the fourth quarter, right? We started the whole inferencing phase, and there's a whole trade that goes along with that. But inferencing, period, whether it's agentic or not, is just hungrier. It's 2 to 3 times more compute hungry. It's 3 to 4 times more memory hungry, and that's where some of these shortages are building into the channel. Broadcom is part of the solution. You could also say Marvell and custom ASICs. Custom ASICs can reduce costs, overall cost of ownership, probably 20 to 30% less than a GPU, and energy usage could be as much as 50% less. So that's where it's going. I would expect ASICs to outweigh in terms of market exposure, would outweigh GPUs probably sometime in the middle of next year. All right, it's been a pleasure to have you in this morning, and thank you so much, Andrew Graham, founder of Jackson Square Capital. Now to other top stories trending on the terminal this morning. Wall Street banks are missing out on Hong Kong's AI fundraising boom. 2 Chinese firms raised nearly $5.8 billion this week using mainly domestic banks as US and China tensions reshape deal-making and Chinese lenders gain ground in the city's red-hot AI capital markets. Cantor is accelerating its Middle East expansion, hiring 16 fixed-income professionals, with most based in Abu Dhabi and others in London and Singapore. The team will be led by a former Stifel executive as Wall Street continues investing in the Gulf despite renewed regional conflict. Aston Martin's creditors are banding together as the luxury car maker's financial pressure grows. A group holding more than half its secured bonds has formed a united negotiating bloc after mounting losses, rising debt and weak demand pushed its bonds into distressed territory. Fitch warns the company may need a lot more cash over the next 4 years. Coming up, we'll look at what the latest exchange of attacks between the US and Iran could mean for the ceasefire. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The U.S. renewed attacks on Iran overnight, hitting 90 targets, marking an escalation of violence that does threaten efforts to reach a permanent peace deal. Bloomberg Government's Mika Zollner joins us from Washington. Mika, we weren't getting that far into negotiations anyway, right? So what does this change? Does it make Iran more belligerent? What might change in the future because the U.S. has started striking targets again?
Yeah, the U.S. is on a very, very murky territory right now when it comes to what's
going on in Iran. President Trump, as we saw, essentially declared the ceasefire over. There's escalated attacks now happening, and more that the president has been unafraid to just publicly say. So, we don't really know yet what to expect from Tehran, but obviously they've escalated attacks on the Strait of Hormuz, which has prompted a lot of this. And I think that there's going to be more. This is also shaking up the markets and, of course, having a strong impact economically as well. So we're seeing some of that relief go away. And I think that there's still questions yet to be seen. The White House has yet to hold a briefing in the past 2 weeks. So I think that there's a lot of questions that need to be answered. And we're going to see that when the president returns or has returned now from NATO.
Yeah, exactly. What was the thinking in Washington, Mika? I mean, were people surprised that the president did this at this time? Particularly given that the funeral for the Ayatollah is still ongoing, and also, it wasn't really telegraphed that he was going to start doing this.
Yeah, I don't know if I would say that people were surprised. As we know, the president's really unpredictable. The peace deal in itself was shaky. I do think that there are some concerns that are being raised from people in the president's orbit and Republican lawmakers as well in terms of, what is going to be the direction here and how long is this now going to last, and exactly what is the path forward. So we all have these questions. I think that we're going to, potentially see answers soon. But yeah, the timing is, I think, a little bit concerning for many people.
Just want to bring it back to the domestic now, and Graham Plattner suspending his main Senate campaign after the new assault allegation. He said basically they were not going to let us have it. Who's going to take his place? What is the Democratic Party thinking, Mika?
Yeah, there's a series of candidates that have already launched exploratory committees to replace Graham Plattner, and I think that we're going to see this strong battle now within Democrats in Maine, who are now deciding whether it should be someone that is more progressive, someone that is more moderate. This is a huge challenge for the Democratic Party in a race that is very pivotal and critical to take on moderate Republican Senator Susan Collins, who has maintained strong electoral victories. This is a huge relief for her as well, that the party has this, but we are going to see, potentially there's a stronger candidate with all the baggage that Plattner had. But I do know that this is something that Democrats are obviously watching very closely, and we're going to see which ideology kind of battles it out here.
Yeah, exactly, Mika. Thank you so much. That's Bloomberg Government's Mika Solner in Washington. Another story we're following closely is SK Hynix's US IPO. Sources say the listing more than 7 times oversubscribed. Joining us now is Bloomberg's Neil Campling. Neil, give us the context. Is 7 times oversubscribed a lot for, new ADR issuance? And, do analysts like yourself expect that shares will pop tomorrow?
Yeah, it's a great question. Well, I mean, as far as for an international listing, this is a very large.
Neil Campling might rejoin us in a moment, but I think we get the gist of what he was going to say, that it is a very large oversubscription, and we are expecting those to trade tomorrow. And in fact, on Monday, the ticker changes from SKHYV just to SKHY, so be on the lookout for that as well. Now, we also have PepsiCo reporting second quarter results before the bell. Investors are focused on whether weakness in its North America foods business is easing. Analysts say turnaround efforts continue to face headwinds, raising concerns about quarterly sales and the company's full-year outlook. Let's get to Maddie Parker, Bloomberg consumer reporter. Maddie, the North American turnaround was just getting underway. What is the problem? Why are we not expecting to hear good things?
Yeah, morning, Bonnie. So yeah, PepsiCo are reporting second quarter results this morning. As you say, I think investors are going to be really, really focused on how the North American business in particular is doing. The first quarter was fairly robust, but the question really is whether this is going to be any sort of durable recovery. I feel like I often come on the show and talk about consumer companies, and it's difficult to avoid the elephant in the room, and it's something that PepsiCo's grappling with and its fellow consumer kind of packaged goods companies, which is that consumers in the US are facing weaker sentiment. They're facing years of inflation and a weaker labour market, and it's actually very difficult when you're trying to push those kind of snacks like PepsiCo are doing. That's Lay's and Doritos and Pepsi, of course, in a market where people just don't have the cash really to be spending like that, and particularly when they're leaning into more healthy food habits as well.
Yeah, I wonder, is activist Elliott pushing for bigger change? How is that relationship going these days?
Yeah, of course. So they've had to kind of engage with a sort of activist investor in Elliott, and it's interesting. They've kind of heard their concerns have been taken on board. They've kind of altered their strategy a little bit to try and lean into kind of some of those habits that we are seeing. We know the consumers are leaning away from the kind of sugary eating and really kind of going into more healthy products, but we also know consumers fundamentally, bottom line, are value driven at the moment. And PepsiCo are kind of leaning into that a little bit more. They've kind of expanded their sugar-free options. They've expanded their kind of larger affordable crisp packets or chip packet options. And they've even let into things like Doritos Protein, which is kind of like you can get a protein hit now from your crisps or your chips. So it'll be interesting to see kind of how those products are picking up, and particularly if investors are kind of pleased with the turnaround that they're seeing at the moment.
Yeah, and it will be a read across for other makers of these types of snacks and drinks, right? Because they even have a protein drink, which I hadn't fully realized. This protein, craze has literally become a craze. Do we know anything about how Pepsi's protein drink is doing, or as you said, protein snacks?
Yeah, well, I think it'll be interesting to see. I think there's going to be naturally a bit of consumer skepticism, I guess, around whether you're going to really get the protein hit that you need, maybe from the kind of sugary drinks and the snack options as opposed to your usual sources of protein like meat and kind of like the pulses and the options like that. So I think it will be interesting to see how they're doing. I'm not entirely sure how consumers have initially responded, but I think these results can be quite telling in terms of their push on that front.
Maddie, what else are you watching out for in terms of read on the consumer before we begin next quarter's earnings in earnest, which actually is not that far away, a week or two?
Yeah, totally. I mean, I think one of the big things that we're going to be watching from a lot of companies kind of across the board is how they've been able to kind of dampen a little bit of actually the price inflation that we were worried about kind of at the start of the year. Of course, the kind of conflict in the Middle East is something that, particularly in earnings calls, we were all joining. It was the number one question on the agenda every single time. Everybody was asking CEOs how much price is going to inflate by. And a lot of them were saying, oh, the kind of latter half of the year, maybe when we see some of these kind of inflationary pressures kind of creeping through. So I think that's definitely something that across consumer companies will be keeping an eye on, particularly when we know that sentiment is down and kind of spending is quite dampened. It's the last thing that consumers want to see. It's be interesting to see if they're able to grapple with that well.
And we know back around COVID, when inflation was really hurting companies, we saw them put things in smaller packaging, and that really didn't go down too well with the consumer either, Maddie. So how are companies, managing so far with cost inflation? Are they able to push it on to consumers? Are they suffering margin-wise?
Yeah, well, a lot of them are saying you have to actually the absorption of those costs is going to be quite significant, and they're going to have to kind of try and navigate that. It's kind of creeping through in some of the results, but as you say, looking forward to kind of the second half will be really quite telling in terms of that side. I think consumers at the moment are going to be, obviously, as I say, they're watching their pennies. They're not looking to be buying smaller products for kind of increased prices. So it'll be interesting to see. I think one of the other trends, and something that we talk about a lot actually, is the impact of kind of weight loss drugs and GLP-1s on the consumer base as well. It's something that a lot of companies are leaning into, is actually making smaller portion sizes and kind of pushing those forward. So that's kind of a nifty go around in terms of trying to get some of those smaller products out on the shelves. But yeah, it'll be interesting to see how consumers are actually responding and whether they've got the cash to be spending on discretionary products like this.
Yeah, exactly. A lot of innovation in the sector too. Bloomberg's Maddie Parker, our consumer reporter, thank you so much. Coming up, we're going to get you set up for your trading day. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today, your Thursday trading session. We were just talking about it. PepsiCo's second quarter results, they're out before the bell. We get some more Fed speak as well today from John Williams and also Laurie Logan speaking. And SK Hynix prices today starts trading in the US tomorrow. Let's take a look at your outlook then, macro-wise, because yesterday was a very interesting session. It started off with a lot of jitters, a lot of bellicosity from President Trump, but walked back a little bit later on in the day. But we did see a rise in oil prices, and we're very closely monitoring the Strait of Hormuz for action, or at least lack of action. We're going to see whether ships stop sailing through and what that means for commodity markets. Right now, we're off our highs, but we're still up at 78 for Brent, and we're still above 73 for WTI. Now, these are about 25% below the peaks, right? And we're not really at levels that we were when we were right in the heart of the war, but definitely escalation is on the cards. European gas futures just coming off their highs as well. There had been a pretty massive advance over the last couple of days for European gas. When it comes to everything else, it seems like the escalation trade helped the AI trade randomly. It's so strange to see that the AI trade, and particularly tech, was a safe haven actually for investors yesterday. We actually saw the Philly Stocks Index up 2.2%. This even as Korea had sold off and went into a bear market, and as jitters just were abounding when it came to the AI trade. Nevertheless, maybe dip buyers had come back out as well of the woodwork. We did see the two-year yield drop just a little bit, even as the rest of the curve continued to stay steep after the FOMC minutes. As Paul Donovan put it, could go up, could go down. Michael Froley of JP Morgan saying the minutes were pretty milquetoast, didn't really tell us anything new. And we've a pretty stable US dollar index today. That's it for Bloomberg Brief. Surveillance is next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The AI trade has gone from uber bullish to a bullish bearish combination.
View this sell-off more as an opportunity than a reason to panic.
The AI trade will continue to find support.
A lot of it then depends on the durability of AI.
If that falters, we've got a real problem on our hands.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, crude inching lower, tension simmering, the US wrapping up a second day of strikes on Iran. Just as a few Fed officials are getting the itch to hike interest rates, an equity offering from SK Hynix is more than 7 times oversubscribed. Big demand ahead of that listing.
Today is a perfect example of how deep and liquid the U.S. equity and bond markets truly are. Despite all of the worries that you're talking about, the increase in attacks in Iran, this question about inflation and the Federal Reserve possibly hiking rates, this question about persistently higher oil prices, and SK Hynix saying, even though we've had a semiconductor rout, it is a good time to go to the U.S. and raise almost $25 billion, one of the biggest outside of the U.S. Equity raisings in the United States ever. Raising a question how resilient this market is and just how wide the pool of capital is looking to invest in any part of the AI story.
To your point, it might be just short of a record for a foreign company, that equity listing, raising close to $25 billion. Look for that. On the equity side, maybe. That's where the debt still is right now. We've seen some pushback earlier this week on the debt side.
Yeah, the idea of Amazon coming to market, really seeing a bit of skepticism. A lot of people characterizing that as we weren't expecting this. This is coming with different types of protections. This is coming with a longer duration. At the same time, is it just a matter of skepticism around the overall concept, or is it just we want more money? Because ultimately what you've seen is plenty of demand just exacting a bit of higher premium to offset any potential risk. So this isn't a lack of money willing to invest. This is investors saying, you know what, we have leverage too, and we want more money. And essentially they're getting it.
Some money went back into the AI trade in the last 24 hours. Chips had a better day. I just wonder how much of that was the so-called war trade. The money going back into the things that worked the last time things really took off between Iran and the U.S.
We saw the equal weight underperform for the first time in a long time. Exactly to your point, during a period of time when the war calmed down, oil prices went down, and people were expecting disinflation to reassert itself, everyone was saying the market's going to broaden out. This is going to be a much more inclusive rally. Suddenly, the haven trade was exactly the trade that was exactly the most pain earlier, which is the semis and the hyperscalers. And that seemed to be the one performance yesterday, other than energy, was that tech trade.
Crude was inching lower. It's now inching higher, up by 0.2 on Brent crude this morning. Brent at 78, WTI at 73. I'm not sure how you would describe this current phase. this moment we're in between the US and Iran. The president gets to decide whether it's a ceasefire or not, I guess, and he says it's not a ceasefire. So you have a series of strikes. He's called them love taps in the past. I'm not sure what this is at the moment or where it's heading.
We were talking about language. Love taps, not my love language. Tiff, maybe that's also a quarrel between lovers. Let's not go there. Skirmish, the issue to me is the market is looking past this. They are saying ultimately, yes, it is raising the temperature, and yes, oil prices have to be priced higher, but it isn't in a wholesale freakout. We're not hearing people call for $120 a barrel. Maybe we're not getting the right people on to really talk about those prognostications, if you still are doing that.
We'll get them back.
Jeff Curry, please come back on. But there is a question here about how far this can go, given the sort of glut that people were predicting would reassert itself later this year if there was normalization.
Margins are so fine right now at the Federal Reserve. The difference between doing nothing and doing something is like that wide at the moment. A lot of people say this Fed is divided. Looking at those minutes, it's a difference in degree, not a difference in kind. And if you look at the inflation backdrop right now, any kind of hiccup in energy could tip things one way versus the other.
You're nailing exactly the point here, which is, was anyone on the Federal Reserve opening the door to rate cuts going forward? Or is this a hold or a hike? And that is a dramatic shift in terms of reaction function and, frankly, mentality at the FOMC, even though you potentially don't have a July rate hike on the table, and that's potentially because we don't really know. This did seem to signal that people were very concerned about a protracted inflationary push, not just coming from oil, but also from AI. So real question for next week when we get CPI, what is the threshold that really puts July into action?
And next week on Tuesday, what a morning we're going to have. Tons of bank earnings, lots of economic data. The Fed Chair Kevin Walsh speaking later that day, I believe, as well. Let's talk about the earnings. PepsiCo dropping just moments ago. Core EPS 220, the estimate 219. Lisa, just running through the detail. The detail gets your attention. The stock is up by about a third of 1%.
What's fascinating to me is that Pepsi last year came out and said that it was going to cut prices. People had argued that they had been increasing prices way too much and people had stopped buying. What they did was actually see a decline in North American revenues as a result of what they had done, which was cut prices. They said they are going to go persist with this because they want to increase the revenue. The revenue increased more than expected, the organic revenue, about 7%. They also had an FX tailwind. This, though, is interesting. This is the consumer. I don't know if it's discretionary. Is it discretionary to get Lay's potato chips and Pepsi Cola? Either way, it really highlights how people are still buying some of these goods, even though they had pulled back a little bit earlier this year.
Is there a World Cup commercial that David Beckham is not in right now? He's in the Lay's commercial too, isn't he?
I think so.
Right, Verizon, Home Depot.
They did hint that that might be helping to perhaps bolster their earnings.
Okay, stock is up by about 0.5% this morning. Less than 1%. Equity futures up by about 0.2% following 2 days of losses on the S&P. Coming up this hour, we'll catch up with Bob Elliott of Unlimited Funds as tech mounts a comeback. Norman Rule of CSIS as the US and Iran trade attacks for a second day. And Rolf Bulk of Food From Equities as SK Hynix attracts strong demand ahead of its US debut. We begin this hour with stocks pushing higher. Bob Elliott of Unlimited Funds writing, it's becoming increasingly clear that most AI investment will experience poor returns even if things go well. Future income growth is getting increasingly squeezed from all sides. Bob joins us now for more. Bob, good morning.
Good morning.
Is it becoming increasingly clear? And what are you looking at that's painting that picture for you?
Well, I think the basic picture of, if you look at a plan for $5 trillion of CapEx over the next 5 years or cumulatively through 2030, and you think about what sort of revenues have to come on that $5 trillion of CapEx in order to get anywhere close to a reasonable return, you're talking about, at a minimum, a few $1 trillion, right? $2, $3, $4 trillion of revenue in order to make a good return. And that is an extraordinary amount of revenue that has to happen. If you look at the hyperscalers today, what did they make in the last 12 months? $1.5 trillion. So you're talking about over the next 5 years, they're going to add on top of the $1.5 trillion, they're going to add, $3, $4 trillion of additional revenue. That is an incredible amount of revenue that they have to get. Now, each one of those different hyperscalers is seeing the opportunity to be the lead, and so each one may be making a rational decision, but in aggregate, it is largely impossible that we're going to see this sort of revenue growth.
Let's build on that. The biggest source of comfort for this equity market right now is earnings. Are you saying that could be the source of risk in the years to come?
Well, I think anytime you're looking at a market, what's going to end up happening is how things come in relative to expectations. And so it's really important to look at what the expectations are right now. And right now, over the next 3 quarters, markets are expecting, or analysts are expecting, 31% annualized earnings growth on top of the extraordinary quarter in the first quarter. We're not talking about 5 years forward type earnings, although even those are at the highest level they've ever been in 50 years, the highest level they've ever been in terms of expected earnings growth. And so you have very, very high expectations. And mostly what people are doing is penciling out what was a great quarter in the first quarter to exist not just through the end of the year, but through 2027 and out into the future. And that is a recipe for disappointment. You're already starting to see lots of cracks in the view of how productive the AI trade is going to be, how much investment is going to occur. We actually see data center growth slowing considerably. It was doubling a year ago. Today, it's growing at about 15% from the latest data. Those are the sorts of numbers that are not going to achieve 31% annualized growth rates in earnings across the entirety of the equity market.
That said, slowing is not exactly a terrible proposition considering how fast some of these have been growing. I was looking at SK Hynix and the revenue increase year over year for the first quarter. It was about 200% year over year when you take a look at just the overall revenues. I mean, if they just come in at 150% growth year over year, are people going to start crying? I mean, what is the pace of deceleration that you're expecting that really could cause some concern?
Well, in order to get trillions of dollars of revenue on all this hyperscaler investment, you need revenue growth in the AI sector to run at more than 100% a year, compounded over 5 years. What are the odds that that's going to happen? Well, it's never happened in any sector at any scale in history. We're talking about cloud computing. You're talking about, back in the web days, smartphones. None of those have seen that sort of compounded type revenue growth in a sector. Not to mention the fact we're talking about $4 trillion of revenue growth. That's more than 10% of GDP of the U.S. economy going to hyperscaler revenues. That is a largely implausible outcome.
So a lot of people are probably listening to this, nodding along, saying, yeah, he'll be right, but maybe in a year. And in the meantime, the music's still playing, so we're going to keep dancing. What do you do with this? Even if eventually you're right, do you act on it now?
Well, trading bubbles is a tricky proposition for anyone who's been in markets for a little bit of time has gone down the road of the early short and feeling the pain from it. And so there's sort of, I'd say, two different ways to approach this. First of all, if you're a largely long-only investor, right, the trade-off here is do you lean into this mania, or do you say, are you thankful for the gains, rebalance back, and prepare for a little tougher environment ahead? And so really it's about rebalancing. That's the most conservative way to deal with this, is to not lean in. There's all this pressure to lean in. Don't lean in, rebalance back. And wait for, there's going to be a time, and the question is, what is the spark? And sparks that pop bubbles are very, very hard to recognize on a forward-looking basis, but there will be something. Maybe it's this tiff or skirmish that happens in Iran that starts to create expectations of Fed tightening, something like that. Maybe that's what drives it. But you have to be prepared that this could shift, and it could shift very, very quickly.
Well, last time, in some ways, it pushed people back into the tech trade. Did these renewed tensions create any different kind of results?
Well, I think it then comes down to what's going on, as Lisa mentioned at the outset, in the financing markets. If we get a world where the Fed is forced to engage in more tightening because this Iran trade, or because the Iran conflict starts to heat up again, we start to get inflationary pressures, the Fed really does have to be a little more restrictive. That's the sort of thing that could easily start to funnel back, right? If you can't get the debt issuance that's expected, if the equity markets aren't quite as open as people are expecting, that sort of tightening of liquidity is the thing in the financing markets that would then start to lead back in terms of what's going on in how much capex they can do, and from the capex, the earnings, and back.
A few Fed officials got the itch at the June meeting. Do you believe July is live?
Certainly. I mean, I think if you look at what's going on with oil prices, the only reason why July wasn't live was because oil prices were down basically at where they started the war. That's changed. Now, it's hard to know exactly how far this is going to go, but I think it's important to recognize from a macro fundamental perspective, the conflict in Iran and the Hormuz problem has not really been resolved. I mean, we only got ship flow through that was maybe a third at peak of what it was pre-conflict. And so what that means is we are barreling towards a a loss of inventories. That's still happening. You see what's going on with the SPR, it's going down. You saw what was going on with Chinese oil imports. That was at 5 million barrels a day in June, even after the MOU was largely signed. And so this inventory drawdown is basically creating the illusion that everything's fine, and people sort of look past the political element. But if that ramps up, we're still on a knife's edge in terms of creating a loss of inventories that would create a price spike ahead in oil.
Bob, it's good to see you. Appreciate the framing. Thank you. The bear case there from Bob Elliott of Unlimited Funds on the AI trade. Twos. The yield curve looks like this morning. The very front end, twos at about 420. A few weeks out, Bramo, from that Fed meeting.
Yeah, and people trying to figure out whether it's live, whether there's enough willingness to do this. I'm still thinking about what Bob said, which is you rebalance. What do you rebalance into? What isn't related to the AI trade right now? Is it European stocks? I mean, ultimately, is it vacation shares? I mean, at what point can you rebalance away from this trade?
I'll take a vacation right now. You want to take a vacation
I think
right
that,
now?
yes, sir.
Totally on board with
It'll
vacation.
just be bars on the screen. Sorry, guys.
We'll hear from Delta Airlines tomorrow. They'll talk lots about vacations. I'm sure there's tons of demand. Tons of demand over at Delta. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, good morning. The U.S. military striking Iran for a second straight day. U.S. Central Command saying about 90 targets were hit. The Islamic Revolutionary Guard says it struck U.S. bases in Kuwait and Bahrain and threatened to expand attacks. The Federal Reserve releasing the minutes of its June meeting, the first under Chair Kevin Warsh. A few officials saying there was a case for raising interest rates, though they ultimately supported the decision to leave them on hold. SK Hynix's U.S. listing is more than 7 times oversubscribed. Sources telling us here at Bloomberg it has attracted demand from institutional investors. According to our calculations, it's likely to be among the largest ever U.S. debuts for a foreign company. Tune into Bloomberg tomorrow at 10:30 a.m. for an interview with the SK Group chairman. And that is your Bloomberg brief, John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes. Up next on the programme, taking game at Iran.
We just hit them very hard. They did a little something today, but it was really retribution for last night. And when they hit, we hit back much harder.
Up next, we'll catch up with Anne-Marie on the ground in Ankara, Turkey, following the NATO summit. Plus, Norman Rule of CSIS, live from New York City this morning. Good morning.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
We are coming off a 2-day losing streak on the S&P 500. Pretty muted, mild stuff. Haven't had a 2-day stretch so far this month. put that together just yesterday. This morning, a small bounce up by 0.2. A bounce back on tech as well, up by 0.6. It's interesting to see the tech trade. A lot of people talking about the rotation away from checks and then the war away from chips, and then the war kicks off again and people go back to chips and semis, and the tech trade picks up again.
Yeah, a real question here. Can the broadening out trade work if you have inflationary pressures persisting and potentially a live Fed? And that is ultimately the angst that you're seeing play into this market at the same time that they're saying, but tech's going to be just fine.
How live is this Fed story? Twos right now, 420. Yields coming in, 2 basis points or so. There are some people getting the itch of the Federal Reserve to hike interest rates. You could see that in a minute just yesterday. Will they act on that itch later on this month?
Yeah, some participants, according to the minutes, which were about a fifth smaller, about 1,000 words smaller in terms of this statement, fewer words.
You counted?
Yes, well, I had AI do it, so I could be wrong, but it went from some like more than 5,000 to a little more than 4,000 words. Nonetheless, people are taking a look at the potential to need to raise rates. Ultimately, it doesn't just depend on energy prices, also AI. So again, the Fed is also an AI trade.
Why would they ever 5,000 words? But anyway.
It's a great question.
Right.
But that's without footnotes. A couple other things stripped out.
Okay.
And it could be wrong because it's AI.
Okay, you double check.
I will.
Brent crude right now, 78, just about unchanged, going nowhere after a 2-day rally on WTI 73.56. Under surveillance this morning, taking gain at Iran.
We just hit them very hard, and I say we hit them 20 to 1. Every time they hit us, we're going to hit them 20. They did a little something today, but it was really retribution for last night. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
So here's the latest this morning. The US striking Iran for a second straight day. Tehran responding by targeting American sites in several Gulf nations. Anne-Marie joins us now from Ankara, Turkey, the site of the NATO summit that wrapped up in the last 24 hours. Anne-Marie, good morning.
Good morning, Jonathan. Just as the president left, mere hours after he left the NATO summit, he did what he said he, quote, was probably going to do, and that was strikes once again for a second day on Iran. CENTCOM was out with a statement saying under the commander-of-chief's direction, they wanted to degrade the capabilities of Iran to go after commercial vessels in the Strait of Hormuz. And what we've learned so far is that 90 targets were hit, and you're looking at places where there's drone and missile storage, coastal surveillance systems, air defense systems in Iran. And as you mentioned, Iran has struck back on countries like Kuwait and Bahrain that have U.S. forces and installations in the arena. It's quite difficult to understand what moment we are in right now. The president said the ceasefire is off, but then when pressed by reporters at that press conference, he said he doesn't think it's going to start again. So he didn't want to commit to all-out war, which makes it feel like we are just in the middle of a stalemate. How long can this continue where we just have skirmishes here and there with attacks on both sides? I think this stalemate potentially is the status quo the market's going to have to get used to.
Anne-Marie, stay close. We'll catch up with you again in the next hour. Norman Rule of CSIS writing the following. Iran appears willing to risk a renewed large-scale conflict with the United States if that is the price of forcing others to treat Hormuz as a waterway, subject to Iranian permission. Norm joins us now for more. Norm, welcome back to the programme, sir. How would you define this current phase now the president has said the ceasefire is over?
Good morning. Well, the president has basically undertaken a much broader series of attacks against Iran than our retaliation to previous Iranian strikes against shipping. It's not only meant to degrade Iran's capabilities, but it's meant to send a message that the United States is willing to expand this conflict. It's unclear and uncertain and even unlikely that this will change Iranian decision-making regarding its intent to have administrative control over the Strait of Hormuz. But it could buy us a period of an interregnum where you could have an opening for diplomacy for the Qataris and the Pakistanis to engage Iran to come up with a more stable situation.
Norm, do you get any sense that maybe the attacks that the U.S. Has done on Iran were sanctioned by the UAE and Qatar after they were attacked personally by Iran?
That is very unlikely. The United States does not seek the concurrence of other countries for its targeting packages, but the United States would coordinate with all of its partners to ensure that their defensive capabilities are appropriately aligned in case of Iranian retaliation. And we have seen Iran attack Kuwait, Bahrain, and now there are reports that there may have been an attack on a military communications facility in Doha.
At this point, what's the path forward, Norm, given the fact that ultimately the ceasefire seems to be dead, both the economic prongs related to the sanctions also torpedoed, and now you have renewed attacks? Do we have any pathway to some sort of nonviolent resolution?
Unlikely. At present, we have a situation where economic erosion within Iran continues. Iran is under severe financial strain, far more than it will admit. The administration likely believes that that is going to have some impact on Iranian decision-making. Our capability to reduce Iran's capabilities by degrading their systems is also important. But in the near term, Iran continues to see that its route is to obtain administrative control of the Strait of Hormuz and to attack those locations in the Gulf that host American bases. That's likely to be a turbulent new normal with interregnums of peace for the foreseeable future.
Norm, given how things have played out more recently, it was just the US alongside Israel. NATO members didn't come along. Given the last 24 hours and the promising meeting the president described with NATO members, do you see any reason for NATO members to participate militarily in the weeks to come?
Some NATO members have reportedly provided useful defensive capacity to Gulf states. That's going to continue. I think you're going to see some limited technologies being provided to the Gulf states for counter-drone and other activity, but the actual involvement in military operations remains unlikely, both in terms of what capacity NATO members would have to bring to this, but also the fact that they would then be directly involved in a conflict that may not have an end that they can understand or at present.
Does the same logic apply to Gulf allies?
No, because Gulf allies are stuck in the region. London and Paris are a long way from the missile and drone strikes, but Doha, Abu Dhabi, Kuwait, and Manama have to deal with this every day. But there is a much closer military integration with the GCC through our traditional NAVCENT relationship, and that relationship remains sound and excellent, based on my understanding.
They have been very restrained, given what they've faced, Norm. Do you see that changing?
They have been restrained, but there are reports that at least the UAE has conducted a limited number of military action. I don't see this changing. This is the Gulf states are not interested in expanding the conflict. They're not going to allow themselves to be punching bags, but they see their defensive capabilities, the U.S. response, and the diplomatic track as producing a situation that buys them the best possible sort of stability that they can hope to achieve in this environment.
Norm, it's good to see you. As always, sir, thank you. Norman Rule there of CSIS on the current trajectory for the situation in the Middle East. Described increasingly in the last day or so as a new normal. What does that new normal mean? How do you internalise that as a market participant this morning?
Key question is how much oil gets through. Ultimately, if they're agnostic about exactly how or what kind of precedent this sets for transporting goods on the seas, a real question, how much do you still have oil vessels willing to transport? And a lot of this will rely on whether the U.S. retains presence there and defends some of those ships going through the Strait of Hormuz with or without the assistance of NATO allies and allies in the region.
Oil this morning holding on to 2 days of gains, inching higher for a third, up by 0.5% on Brent at $78 a barrel. Up next, we'll catch up with Rolf Bulk of Futrim Equities as SK Hynix sees massive demand for its U.S. debut.
we are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel. And energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Two-day losing streak on the S&P 500 this morning. Here's the bounce, up by 0.1%. On the Nasdaq 100, up by 0.6%. The story of tech, really interesting, because the onset of war, the start of war back in March, concentrated, reinforced bets into the chip trade, into the tech trade. And then this morning, what did we see? Once again, tech outperforming. What did we see yesterday? We saw money go back into the chip trade once again. Does this upend the broadening out? Does it upend the broadening out? We saw massive underperformance in the equal weight just yesterday. That's a question for equity investors this morning.
And it's difficult to really get your hands around because single name volatility has surged to record highs relative to the index level volatility. So this is a name specific story as much as it is an index specific story. Nonetheless, if you have inflation reasserting itself and potentially a live Federal Reserve in the face of higher energy prices, that could upend some of this rotation that people were saying, the rest of the economy finally catching up. Although at a certain point, then was the tech story really a tech sell-off, or was it just a rotation trade that got that gained a lot of steam?
A healthy rotation.
Exactly, a healthy.
Within the equity market. You know, money not going out of the equity market. It's good. It's healthy.
Yeah, it's hard for me to understand the single name volatility is healthy, considering that you're seeing it absolutely spike and that you could win or lose all your money if you're betting on specific stocks. But nonetheless, healthy, like yogurt and granola.
Yeah, nothing healthy about a situation in the Middle East right now. Low sugar granola, Prema.
I know what that's to say. I knew I was going to get some kind of characterization there.
You know how it goes.
I know.
Let's turn to crude.
Here.
Brent and WTI. Brent crude this morning. Brent yesterday breaching 80 for the first time in almost 3 weeks. This morning back down to 78. Biggest one-day bounce we've seen since early May. Biggest two-day rally that we've seen going back to, I think, late April. So we had an 8% move over the previous 2 days. Add a little bit more weight to that, 78.50 this morning. The other part of the story we need to figure out in this market is how does this inform this? How does that, the energy story, inform what's happening in the bond market? 2s, 10s and 30s. Yields just a little bit higher in the last 24 hours. This morning down 2. But let's call this 420 again, going into this Fed meeting. And you can see in the Fed minutes, I know lots of people want to say the Fed's divided. We'll call the Fed divided, this Fed split, sure, whatever. But the margins are so fine right now that you have to wonder whether just a small movement in the energy story, just a recalibration of the outlook, just on the margin, will change things sometime soon.
And the recalibration actually is the correct way of phrasing it, because we've seen oil prices significantly higher than where they were to start the year, but not so high that they might curtail some of the consumer behavior. And that is actually the most toxic brew for a central banker that is looking at higher prices from oil, but also higher prices from AI and the other inputs that they also mentioned in the meeting minutes. That's the reason why this is actually much more palatable and actionable than, say, $120 or even $100 a barrel, because suddenly that would raise the question of stagflation. This doesn't really raise the stag part. This just raises deflation.
There's some problem with deflation, that's for sure. 2s right now, 419.53. There's been some problems with deflation for the last 5 years. As we count you down to the cash open, 3 hours away, let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with a check on the memory and chip trade this morning with names like Micron and Intel building on yesterday's gains after a rough stretch for the group, and the renewed optimism is coming from SK Hynix and are reporting that the deal is over 7 times oversubscribed. The next test comes tonight when it is priced. Before investors get an even clearer read on demand for the memory trade tomorrow when SK Hynix's ADRs start trading on the NASDAQ. Turning to AstraZeneca, those shares plunging 9% in the pre-market after the pharmaceutical company suffered a rare setback. One of its experimental heart drugs failed a late-stage trial, dealing a blow to what many saw as a multi-billion-dollar opportunity. But what analysts are saying is the bigger concern is that this is a hit to investor confidence, since management sounded optimistic ahead of the results. And we end on Levi Strauss. This is one of the first companies out of the gate to report earnings. Shares are falling 6%, even after it delivered a solid quarter. It delivered a beat and a raise, and it even raised its dividend. But after a strong run in the stock this year, investors were looking for an even bigger increase to its guidance, which could be an early sign of what companies are up against this early earnings season, where simply beating is not enough. John?
We've seen that movie a few times already in the last week. Yahara, thank you. That bar is reset higher, super high, going into earnings season. On our radar this morning, the US and Iran exchanging strikes for a second straight day. US Central Command saying it hit about 90 targets in Iran. The IRGC claiming it fired missiles and drones at US bases in several countries across the region. Elsewhere, minutes from the Fed's June meeting showing policymakers were split on the direction for interest rates. Fed Chair Kevin Warsh describing the meeting as a family fight, with several officials seeing a case to hike due to elevated inflation risk. And finally, SK Hynix seeing massive demand for its US listing. The memory giant's offering is more than 7 times oversubscribed, on track to raise over $24 billion, making it one of the largest ever debuts by a foreign company in the US.
Yeah, behind only Alibaba's $25 billion debut, which again points to how deep and how hungry the US market is for AI listings. Interesting to note, this comes after a massive sell-off in some of these names in South Korea. Yes, the index had been up so much that this sell-off could be considered a brief skirmish or a love tap by investors. At the same time, we are seeing an incredible amount of money being raised in the equity market, despite some of what we've seen in terms of volatility. I'll point to the why. I was taking a look at the earnings and the revenues for SK Hynix. Revenue in 2025, the first quarter, was $12.1 billion. Revenue in the first quarter of this year was $35.9 billion, and it's expected to be more than $55 billion for the second quarter. This is a massive step up, and this is what investors are trying to get a piece of.
And this is why it's had a massive, massive run over in South Korea. Mandeep Singh of Bloomberg Intelligence is standing by. He joins us now for more. Mandeep, just frame the next couple of days for us, the next 24 hours with this listing.
I mean, look, they've timed this perfectly, because this is the strongest memory cycle that you can think of, in the past 30 years. And it feels like this has legs. I mean, yes, it's a cyclical industry, but there is no doubt that, the oligopoly pricing that these 3 companies have, it's going to carry that forward, in terms of top line growth. And even if, there are optimizations done at the LLM layer, nothing seems to be changing in terms of the fundamentals for these memory companies. So from that perspective, I do think, they have durability in terms of earnings. It could taper, the positive revisions may slow down, but there is no doubt the fundamentals are probably the best we have ever seen for memory.
Mandeep, some of these companies are truly world-class. When they're located abroad, though, they often look at the US market and the valuations here somewhat with envy. How much of this story is about that? Looking at valuations available in the US and doing something about it?
Yeah, look, I mean, even now within the U.S., these companies trade at probably the lowest multiples, even though their top line growth is insane, and it may carry forward for a while, but the multiples are just the lowest. And so from that perspective, there is a narrative shift that needs to happen. And, if they can frame it as a structural change as opposed to, the industry being cyclical, that's going to go a long way in terms of the re-rating, especially around the multiples that they have fetched in the public markets.
Single-digit PEs. Mandeep, just amazing given the growth they're generating. Mandeep, thank you. Mandeep Singh there of Bloomberg Intelligence. Rolf Bulk of Futrim Equities writing, the listing is mainly about broadening US investor access
and narrowing the valuation gap with Micron. SK Hynix is one of the clearest ways for investors to gain exposure to AI memory demand. Rolf, I'm pleased to say, joins us now for more. Rolf, I'm pleased you picked up on the gap between, say, Micron and SK Hynix. Can you just describe for our audience how big that gap is right now and how it could narrow in the months to come?
Yes, good morning, John, and thanks for having me. Well, as Mandeep just mentioned, there is a gap here. Currently, Micron trades at around 8 times forward earnings. Hynix is only at around 6 times, so it is a material gap, and I would not expect that gap to close in its entirety. SK Hynix remains a Korean-based company with Korean-based manufacturing, which carries an inherent risk of trade, of regulatory changes, all of these things that Micron is less exposed to as a US-based company. So I do think that there will be somewhat of a Micron premium and that will persist. But that said, I do expect that the gap is going to close over the coming months as a result of this listing.
Rolf, does Hynix need the money, or is this going to the build out of new factories, or is this just simply stockpiling cash and trying to boost the valuation for years to come?
Yeah, Lisa, it's formally the proceeds of this IPO are going to go in their entirety to CapEx, so to the build out of new fabs. That said, SK Hynix is on a trajectory to make more than 90 billion, of free cash flow, so after CapEx expenditures this year alone. So no, they do not need the money at all. This is probably one of the companies in semiconductors that doesn't need any funding at the moment. But it is a way for them to gain exposure to the US market, and that is how it should be perceived. And if they turn around and end up buying back an equivalent amount of shares for this listing, for that amount, I think investors will be very pleased with that type of decision.
So this is a close the gap kind of moment. I do wonder, Rolf, if you do expect them to build out their capacity to build memory chips, and we've seen the Korean government get behind them to raise almost $900 billion to build more capacity. At what point does that reduce their pricing power? At what point does that increase the supply to offset the demand that's just been on fire?
Yes, this is the risk for the memory trade, that capacity build-outs of Samsung, of Micron, and of Hynix in aggregate are at some point going to catch up with this demand this buoyant demand that we have seen and that we expect to continue over the coming years. Now, the thing is with these fabs that it takes years to build out these fabs. These are complex buildings with ultra-high clean standards for the clean rooms that the equipment goes into. It takes years. There's no way to shortcut these type of build-outs. And with that in mind, I don't see any scenario in which supply is going to catch up with demand for the foreseeable future, likely until the 2030 timeframe. So yes, it is a consideration, but very much a long-term consideration at this point.
So Rolf, do you think these stocks, these names, given the PEs we just talked about, do you think they're undervalued?
Well, typically memory, as Mandeep mentioned, it is a very cyclical industry. And this is why these companies have traded on price to book rather than price to earnings in the past. It is only more recently that investors have started to think about these memory names as more traditional companies, less cyclical companies. Undoubtedly, they will remain some of the more cyclical ones in semiconductors. But we know from Micron, from the earnings of last month, that over 50% of their revenues is going to come from long-term supply agreements, which are agreements in which they lock in volume and pricing to a large degree on 3 to 5 year terms. So if 50% of your revenue is going to come from long-term agreements on which you book gross margins in the 50-60% range, then likely, yes, that should warrant a higher multiple than the 5 to X times earnings these companies currently trade on, yes.
Just incredible earnings from some of these names. Rolf, it's good to see you. Thank you, sir. Thanks for the framing. Rolf Bulk there of Futrim Equities, going into an important 24 hours for SK Hynix. With an update on news worldwide this morning, let's get to your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. PepsiCo shares inching higher. The food and beverage giant reporting second quarter earnings that beat expectations. Strong global performance and demand for its beverage lineup offsetting a revenue dip in North America. The company reaffirming its full year guidance. Meta is investing around $10 billion to build its first data center in Canada. The Alberta-based facility will have 1 gigawatt of power capacity and will run largely on natural gas-fired power. Meta plans to use the computing power for its AI models and social media apps. Volkswagen's executive board pushing a sweeping restructuring plan that could eliminate up to 100,000 jobs and close 4 German factories. Management says deep cost cuts are needed to compete with Chinese EV makers. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, the itch to hike rates.
This market has backed out all of the rate cuts.
Our call is for the Fed to keep policy on hold for the remainder of the year.
If I think about the risk to a hike, that risk is most pronounced for July.
Up next, Claudia Sam of New Century Advisors, live from New York City. You're watching Bloomberg TV.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Stocks this morning positive by a tenth, up by 0.5 on the Nasdaq. The tech trade back in fashion in the last 24 hours, thanks to this moving crude close to the 80s on Brent. I'm only half joking. Brent crude 78.65, up by 0.8%. 2 days of strikes. What is this new phase? And is this volatile back and forth the so-called new normal? And what does that mean for the supply of energy?
At this point, people are watching the flows. I don't know how they're watching them because a lot of the ships have turned off their transponders, but they're trying to gauge exactly how much oil is still shifting and how much demand from places like China has diminished so that the potential mismatch can be offset. Look, these are the questions that people have. It's a much more nuanced look than earlier this year when you saw tensions on, oil up. Oh my gosh, Armageddon. It's not that kind of feeling right now.
But you've said it. Other people have as well. Persistent. The longer this persists, the bigger the problem potentially for central banks, because it just keeps nudging inflation higher or keeps it elevated at a time where it's above target and there's a massive tailwind coming from AI spending. They've got to grapple with a lot of things.
I was looking at Costco earnings that came out yesterday, and you saw that higher oil price feed into their profitability and just sort of the overall sales. It's not enough, though. It's like 2%, 3%. It's not something that people would push back against enough that would actually solve the problem. And this is the issue for central banks and the reason why the ECB is being so aggressive, potentially, at least in rhetoric, and really why there are questions in the market about whether the Fed will do the same.
How does this move in crude shape the outlook for interest rates? Switch up the board and get to the bond market. Twos this morning, yields pulling back by 2. Down 2 basis points to about 419. Let's call it 420, resetting just a little bit higher, going into a big week next week. We'll get some inflation data, and we'll hear from the Fed Chair, Kevin Warsh. Under surveillance this morning, the itch to hike rates.
This market has backed out all of the rate cuts and now maybe even pricing in a rate hike.
I'm not as convinced that a hike is coming.
Our call is for the Fed to keep policy on hold for the remainder of the year.
It's really about the inflation data. If I think about the risk to a hike, that risk is most pronounced for July.
So here's the latest this morning. FOMC meeting minutes revealing several policymakers saw a case for raising interest rates, with 9 officials anticipating at least one hike this year. Fed Chair Kevin Warsh declining to submit his rate forecast. Claudia Sam of New Century Advisors writing, "We have a low information chair, but not a low information Fed." Claudia joins us now for more. Claudia, welcome. Well framed. Appreciate that. What have we learned from a high information Federal Reserve, even if we have a low information Fed chair?
Right. So we got the minutes yesterday, and we got finally some answers, or at least some details to this question of what'll it take for the Fed to raise interest rates. The Fed's reaction function is alive and well. We had to wait 3 weeks to hear anything about it, but the minutes really did deliver on the substance of what those rate hikes would take. And they put it out in scenarios, and it very much goes back to the inflation outlook.
Claudia, that includes the AI spending. And that came up a few times in the minutes. If you just bring up the PDF and search for AI, you'll see it mentioned several times. Given the move we've just had in energy in the last 24 hours, how fine are the margins, Claudia, separating a hold from a hike? And could a renewal of tensions in the Middle East tip it one way versus the other?
Right. So the scenario for a hike is one where inflation stays elevated. And one thing that was very striking in that scenario was it did not discriminate on the source of that inflation, right? They mentioned AI, they mentioned the Middle East, they mentioned tariffs. So really, it's anything that keeps inflation high and doesn't start moving it soon to 2% would be enough to, and there was a lot of agreement. If that were to happen, most of the, or almost all of the participants said they would raise rates. So I think that's where we're just looking for, inflation to start moving back towards 2%. And you do get a sense of some impatience, like they want to see it soon. This is not like we're waiting until 2028 to see inflation moving down. So I think that's important. And it does bring the focus back to the inflation data. It's not a Fed that is divided in how we react to inflation. They're divided in what's coming next with inflation.
Claudia, are you surprised by how big a shift it was from simply dropping the easing bias to no one anticipating rate cuts anytime soon? The idea that it's not as if this committee is split between people who think that there should be rate cuts and rate hikes. The committee is split, as John was saying, between people who are going to stay on hold and hike rates. This is no one being a particular dove. Is that surprising in terms of the pace of that shift?
The events in the Middle East really were a big shift in terms of the Fed's thinking. And it's not so much that, we have an energy shock. I think it's also that we have another cost shock. Last year, we had tariffs, and the Fed was very patient. We're going to look through this. We're going to wait and see it happen. And just as tariffs are rolling off, we are hit with another major cost shock to push up inflation. So it's the events really shifted early this spring. And I think this is a good example of the Fed can shift pretty quickly as events shift. This is very much a data-driven, this is very much a reality-driven, and you're seeing it not just at the Fed. Other central banks are reacting in a similar way because it is a global shock we are reacting to.
Right now, people are pricing in about 0.25% chance, 25% chance that there will be a rate hike at the meeting later this month for the Federal Reserve. I just wonder which side of the which camp you're in right now. The people who believe that the Fed kind of bought itself some time by having these task forces to go through some of the metrics versus a Fed that truly could be live even as soon as in a couple of weeks' time.
So the meetings are live. I think the runway to a July interest rate increase is pretty short, but by the fall, they're going to get more CPI prints. They're going to get more information on inflation, more information on events happening. So I think something would be more likely to happen in the fall in terms of a rate increase. And what was clear in the minutes, this is a Fed that is combing through the data. They're, discussing how to react to it. They're not waiting for the task forces to come back and enlighten them. They will get that information, but that's not what is kind of determining when the Fed acts next.
Claudia, you've worked at the Fed. We often talk about your experience there. Looking back, it's unusual just to hike once. Usually we're thinking about a series of hikes. Do you think under this new Fed, with new leadership, you could get a one-off hike, just a single 25 basis point move and then wait and see?
You could imagine a scenario, but it would have to do with events are shifting rapidly that would make the hike, another hike not necessary. I think, a model of something like we saw last fall where there were a series of, 25 basis point cuts to deal with downside risk to employment. You might see a flip side of that is a series of 25 basis point increases to deal with upside risk to inflation. Going one and done is unusual, but, we live in unusual times. So I don't want to take it off the table.
Claudia, it's good to see you. As always, appreciate your reaction. Claudia Sam there of New Century Advisors, a low information chair, a slightly higher information Federal Reserve at the moment. The tell for me at the moment is just the characterization of how restrictive we are at the moment. And if you look at the minutes, very few think we are sufficiently restrictive. In fact, of the group that think we are restrictive, they say slightly. I think that is a tell. Because the question for me right now for any Fed official is, do you believe we are sufficiently restrictive to get inflation back to target? Do you? And I'm not convinced that many people on the FOMC believe we are.
The market isn't convinced either, which is why people are pricing in a rate hike as soon as September even. When you take a look at the lower information, I was interested in the word count, so I ran a program, and evidently at the June meeting minutes, it was 4,440 words.
Okay.
Versus the April minutes, which were 5,680 words. That's stripping out footnotes and some other characterizations. But it really isn't that much less. And what I find interesting is that exactly what we heard from Claudia Sam there. It's not a low information Fed. We are hearing quite a bit from the members. And frankly, this did point to a much more skew toward a rate hike in the not so distant future.
We're spending trillions of dollars on data centers, and this is how we're using it to count Fed statements.
I could have
Fed minutes.
Some pieces of fruit tell you this in a very lovely way.
In a cartoon.
And cartoon.
On screen.
And that probably would use even more tokens. So
you could make a movie.
Yeah, I could do that by
just saying,
the next commercial break.
With regards to the World Cup, we typically call it AI slop. The AI videos, like the mini movies they're making with the World Cup, the content's been pretty good.
Oh yeah, like the Norwegian guy.
Yes.
Oh my God, I literally lost about an hour and a half last night.
Right, the content's been good. Up next, David Levitz of JP Morgan Asset Management, General Karen Gibson of Academy Securities, Vitos Peduto of RBC, Greg Peters of PGIM.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US? Or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We've had a very resilient economy.
Inflation concerns are back in play.
We've probably seen the peak in inflation for the year.
It's a sustained high core inflation with pressure for inflation to go higher.
We don't think the Fed's going to move this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action, look like this. Equity futures right now in the S&P up by 1/10 following 2 days of losses on the Nasdaq, up by 0.5. Back into the tech trade. That is where the outperformance is. Yesterday and again this morning. In the bond market, 2s, 10s and 30s shaping up as follows. A reset higher in the last 24 hours at the front end of the curve. 2s back to 420, 10s close to 460. 30s close to 5.1%, setting the tone for the price action over the past few days. This move right here in crude. Crude bouncing from the high 60s to the mid 70s on WTI to 74. Brent crude, a brief break of 80. Just recently, 78.76 this morning, and up by 1%.
Yeah, some people might look at this, including myself this morning when I came in and oil prices were lower, and I thought, that's crazy. It seems like things are just escalating. Why aren't prices going higher? And the answer is prices already have had their biggest 2-day shift going back, depending on whether it's Brent or WTI, to either April or March. And you do have, of course, this sense that oil takers are still getting through. That said, the shift up in prices still has the Fed and the ECB squarely in play, and these are prices that are going higher. Yet another inflationary shock, as Claudia Assam said, which is threatening the broadening out trade, but also speaking to what is a neutral rate in an economy that seems to be beset by inflation shock after inflation shock.
Forgive the pun, but this won't be smooth sailing. None of this will be. This will come with lots of...
I'm not forgiving the pun.
Okay. Lots of volatility. And for a Federal Reserve on the edge, and I don't think there's much between holding and hiking right now on this committee. This can tip things one way or the other, and that's been a theme for us so far this morning.
Yeah, and right now the market's trying to suss out how much this is a one CPI print type of event, or that the Fed could then hike rates later this month after we get CPI next week, or whether they're going to need a series of hot prints to really take action. Another key question is, Does this hurt equity market valuations? Does this hurt risk assets at a time where everyone seems to be raising money and the AI trade wins if things are volatile, maybe has some chips taken off the table, but still a very robust trade? I mean, ultimately, is that enough to kill this rally?
Based on this, no. SK Hynix 7 times oversubscribed. Based on that, not yet.
You know what's fascinating? Even though we saw volatility in the Korean market, even though we saw a massive sell-off by SK Hynix and Samsung, they're coming to market with the second biggest ever debut for a foreign issuer in the U.S. for the equity market. It seems to be really well received. So even that wasn't enough to scare some investors away.
That follows a record IPO from SpaceX. That record IPO followed a monster equity capital raise from Alphabet. What was that? $85 billion. And there's more to come.
Yeah, so this market is wide open. Bigger question right now is, what is the price they're going to exact for that? Even with the U.S. Treasury yesterday selling $39 billion of 10-year notes. Well-received auction, well oversubscribed. You could talk about all those metrics. Highest yield that these 10-year notes were sold at going back to last February. So people are looking for more, but they're still willing to put their money to work.
You saw the pushback to Amazon as well, which is why the question we've asked, I think, is the right one. Are we testing the limits of demand? No. Are we testing the limits of demand at these rates, at these yields? Yeah, you've got to offer some concessions to get that supply away now. That was the pushback from fixed income so far this week.
So now people are asking, at what point will the cost be too much for some of these AI companies and, frankly, for governments to borrow? And the answer is we're not close yet. And so you can just imagine where we're going to be going forward. In other words, people are still borrowing. People are still going out there and tapping the capital markets.
More on that equity offering from SK Hynix later this hour. Equity futures right now in the S&P positive by about 0.1%. Coming up, we'll catch up with David Levitz of JP Morgan with investors lining up for SK Hynix's U.S. offering. General Karen Gibson of Academy Securities with the U.S. and Iran exchanging strikes. And Vitos Baduto of RBC on what could be a record-setting year for M&A. We begin this hour with stocks rising as big tech jitters ease ahead of SK Hynix's U.S. listing. David Levitz of JP Morgan writing, we believe in the structural story around the adoption and implementation of AI, but recognize that the journey is unlikely to be linear. David joins us now for more. David, good morning. Good to see you.
Good morning.
How fractured is this trade right now?
So I think what you're seeing is you're seeing markets and you're seeing investors begin to differentiate between all the different pieces that go into this. You know, chips are only one piece of the puzzle. You also have to build the shell for the data center, then you have to run the data center, you have to get people to pay for the compute. And so it's not this view that, oh, you know, we love AI and we're going to buy everything that has AI associated with it. I think people are beginning to delineate a bit more between the different pieces and where there may be excess supply, where there may be robust demand, and where, to your point, you may see challenges from a financing perspective to get things done at attractive prices.
Give me the split right now. Excess supply, robust demand. What's the split, the divide for you?
So I think that we're still in an environment characterized by very robust demand. I think that the risk to me around supply is primarily in the chip space and the hardware space. You know, this is where obviously a lot of investor enthusiasm is. And, you know, if history is any guide, when there's a lot of enthusiasm, people tend to get a little bit ahead of themselves. You can end up with too many chips, and that actually helps the people that are running the data centers because it brings down the overall cost. Where I think demand is going to remain quite robust and arguably more structural is when it comes to actually building that data center and then operating that data center, right? Again, chips are just one piece of the puzzle.
So if it's not going to be smooth sailing, maybe you should take some chips off the table. Oof, I'm so sorry. I couldn't help myself.
See?
That was,
Nice.
it's really fun. I'm enjoying this. I just wonder, at what point do you prefer equity still to bonds, given the fact that increasingly bond investors are demanding an increasing premium for the privilege of lending, for the privilege of being able to borrow money for some of these investments?
So I think when it comes to the equity versus debt question, it's really a three-part question. Do I want to own the equity? Do I want to own the investment grade bonds? Or do I want to own the high yield? Because high yield is much more oriented towards the picks and shovels. And again, you can see some of the pushback on the hyperscalers. Free cash flow has gone to zero. Now they're trying to figure out how to finance this going forward. I wouldn't be surprised if we see them continue to issue equity the way that we have on occasion up until this point. For us, we find high yield credit really appealing here, not because we're going to see massive spread compression, but because effectively we can get paid around 7% with a third of the volatility of equities. When it comes to the equity side of things, a lot of enthusiasm around tech. When we watch the other parts of the market soften up and sell off, we actually view that as an opportunity because if we're right about this whole AI AI productivity story, a rising tide will lift all ships, and that'll be good for the rest of the market, not just the tech, which has benefited up until this point.
Just to crystallize the point, are you seeing the pendulum start to shift away from the equity market to, say, the high yield market, to more of a fixed coupon that guarantees a certain return at a time of incredible and increasing volatility?
I do, and I think that there's also kind of the certainty, if you will. And again, they're junk bonds, and so you will see defaults at some point begin to pick up. But I think that certainty gives people comfort, and also kind of where it sits in the broader AI supply chain, right? This is what's building the data centers. This is what allows the whole thing to work, and that's very different than the debt that the hyperscalers are bringing to market. And by the way, they've already backed a lot of this high yield debt, and so you have this implicit guarantee that if things go south, you're still going to get paid. I mean, if you're an investor, that's a pretty attractive proposition, given how much U.S. equities have moved over the past couple of years.
Let's just take it back to stocks, the great rotation. Where are you and the team on the rotation now, given the restart of a conflict, a renewal of tensions between the US and Iran?
So I think that volatility is a feature and not a bug of this administration. And so, you know, whether it's what's happening in the Middle East or whether what's happening with tariffs, right, they view volatility as a tool in their toolkit. I think that there's definitely been an interruption to the rotation here, but I think when you take a 12-month forward view, and you think about what's happening in the economy, okay, we've got growth, which is pretty good. That's why we have some inflation pressure. Maybe the Fed needs to hike. Maybe they can hold. We think that they'll hold. But again, I think that we're going to need to see a few hot inflation prints before they do anything. I mean, this is one of these environments where if the Fed does feel the need to hike before the end of the year, they're arguably hiking for the right reason, right? Because growth is well supported, inflation's a little bit hot, and they're just trying to bring balance back. And I think as investors kind of digest all of that, and as you see things hopefully settle down from a geopolitical perspective, that breathes life into the broader equity market and allows that rotation.
So does the rotation, is it independent of the rate hike debate or not?
I think it is. I think unless we were to see an inflationary environment like we did in 2022, when the Fed's sitting there and the ECB's sitting there and they're like, oh man, we really missed this one, we got to catch up really fast, that's very different than a maintenance hike. Right? A maintenance hike is saying, you know what, we feel like things are a little bit too hot. We're going to try to cool them down, not we're going to go from 0 to 5.25 over the course of a couple months.
So you don't think what we've seen over the past couple of days, which is the outperformance from tech, really persisting? You think that the path of travel for the next 6 months really is equal weight, continuing to outperform regardless of what happens with oil prices and regardless of what happens with the Federal Reserve?
Look, I think tech is going to remain well supported. Again, we view this as a structural story that's going to play out over the next 10 to 15 years, but I do think you will begin to see that rotation. I would also highlight that one of the other ways we're playing this tech story is through markets that haven't necessarily appreciated as much as the U.S. And so for us, looking to places like EM, parts of China, that's an interesting way of getting this tech exposure at a more favorable price. And I think at some point, valuations will become an issue for investors. That'll support the rotation. That'll support non-U.S. markets.
If a Fed rate hike wouldn't curtail the outperformance potentially of the equal weight, what will a rate hike actually do? Will it slow inflation if it's exogenous factors that are coming in and bolstering prices? So
here's the thing about a rate hike. What the Fed is worried about is a labor market that tightens further and wage growth that reaccelerates. And I don't think we're on the cusp of that. I think the labor market is tight. I don't think the labor market is particularly strong. And so to see wage growth begin to accelerate, which is what would precipitate a series of Fed hikes, I mean, to me, that's possible, but it's not necessarily all that probable. This is going to be more to address lingering inflationary pressure from tariffs, a little bit of inflationary pressure from oil, because again, it hasn't gone back down to where it was pre-conflict, and we know the longer energy prices stay elevated, the more that price pressure broadens out into the economy. Those are things that you can manage. It's when you see that labor market begin to heat up, that's when you really have a problem.
EM equities up 19% so far year to date. Outperformed the NASDAQ and the S&P.
Yeah. EM, meaning what?
AI.
Yeah.
SK Hynix.
Well, I mean, that's,
right.
that's the question. Some people are saying if you strip out South Korea, if you strip out those names, there still is outperformance in the EM story just simply because they were ahead of the curve when it came to the rate hiking cycle, and now some of them are actually cutting rates. Also a question of which emerging markets are tied to hard assets. I was down in Brazil, and the shocking amount of resources. I mean, they have rare earth minerals that they could potentially develop. I mean, how much do you start to see some of this tapped into? Of course, there is that tricky issue of government, but whatever. I mean, these are the things that people are looking at.
These were your channel checks in Brazil, right?
I did lots of channel checks.
I have no doubt
I did
about
channel
it.
checks, and the monkeys, very cute.
Yeah, do you have a good time? Still living on it, aren't you?
I actually think that, you know, I should probably channel check again sometime soon.
Yeah, I agree with you. Maybe I'll come along for the ride.
Okay.
Just sort of check
Let
it
me
out.
tell you, it's really beautiful.
I have no doubt about it.
Copacabana is really lovely.
Good stuff. All right. David, do you get to do that over at JP Morgan? Just pick a destination and go there? Do some channel checks?
Unfortunately, not as much as I like, but I want to latch on to something that you said. You were talking about, you know, resources and rare earth minerals. The thing that I'm recognizing is that everything is becoming an AI trade, right? Whether you're going to reap the productivity benefits of using the tools, whether you're part of the supply chain that allows the thing to come to life. I mean, AI is everywhere, and so it's how you play it, not whether or not you play it. I think that's the big question for investors going forward.
See, that was very valuable.
I appreciate it. Thank you for keeping it so serious.
That was really good.
Thank you, David. David Levitz there of JP Morgan Asset Management with an update on news worldwide. Let's get you a Bloomberg brief. Vonnie has more. Hey, Vonnie.
Hey, John. Traffic through the Strait of Hormuz coming to a near standstill after the US struck Iran for a second straight day. Among larger vessels, only a US-sanctioned supertanker was seen heading out of the Persian Gulf alongside an Iranian-flagged container ship. PepsiCo shares falling in the pre-market. The company's second quarter organic sales growth missing estimates. Lower prices cutting into its North American snack business. Pepsi reaffirming its full-year guidance. UK Prime Minister Keir Starmer is signalling he'll consider granting a public holiday if England wins the World Cup. The team faces Norway in Saturday's quarter-final. The final is set for July 19th, which is potentially Starmer's last full day in office before Andy Burnham succeeds him. And that is your Bloomberg Brief. John.
Vonnie, thank you. Potentially his last day in office, the day of the World Cup final. Is he going to attend? Of course he's going to attend, surely.
I mean,
if England's in the final.
Well, look, who wouldn't attend, first of all? But second of all, I mean, is he going to be rooting for Holland at a certain point? I mean, come on, like, doing the row.
Why would he root for Norway?
Because it's, I mean, Erling Haaland, the AI videos are great.
What is wrong with you, Bramo?
Well, he won't. I know he will. He'll vote for England. I know. Okay. He'll be like, you know, very excited.
I'm booking the flight now. I'm out. Channel checks to the south of Italy. The latest on olive oil. How are those trees doing?
How are those lemons?
I'll bring you an exclusive report.
I can't wait.
In 2 months' time, after I wrap it up. Up next, trading fire with Iran.
We just hit them very hard. They did a little something today, but it was really retribution for last night. And when they hit, we hit back much harder.
Up next, we'll catch up with General Karen Gibson of Academy Securities, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
equities, a small bounce this morning, up by 0.1% on the S&P 500, up by 0.4% on the Nasdaq. The Russell, some underperformance. Saw that as well yesterday. The Russell 2000 small caps just about unchanged. In the bond market, 2s, 10s and 30s. Yields settling around 4.20 on 2s. We're down about a basis point or two heading into jobless claims later this morning, about an hour and 15 minutes away. Setting the tone for the bond market worldwide in the last 24 hours. These moves in crude. Crude up by 1% this morning, just short of $79 a barrel on Brent crude. Under surveillance this morning, trading fire with Iran.
We just hit them very hard, and I say we hit them 20 to 1. Every time they hit us, we're going to hit them 20. They did a little something today, but it was really retribution for last night. They hit actually 3 votes, not 2. And when they hit, we hit back much harder.
So here's the latest this morning. The US military striking about 90 Iranian targets in a second straight day of attacks. Tehran retaliating against American allies in the Persian Gulf, nearly halting traffic through the Strait of Hormuz. With the latest from Ankara, Turkey, following the NATO summit, Anne-Marie has more. Hey, Anne-Marie.
Hey, Jonathan, good morning. Just hours after the president left the NATO summit here in Ankara, there were another round of attacks, a second day of attacks on Iran. This is something the president did highlight and preview that probably could happen during the NATO summit. And CENTCOM came out with a statement saying that under the direction of the commander-in-chief, they wanted to degrade Iran's military capability, especially when it comes to the Strait of Hormuz, their ability to attack commercial vessels. And you can see that in the 90 targets the U.S. military went after. It's things along the coastal line when it comes to logistics and when it comes to surveillance of that Strait of Hormuz. In response, though, we have had Iranian attacks on U.S. installations in Kuwait, Bahrain. As Norman Rule mentioned in the last hour, more reporting about U.S. military capabilities as well in Doha. The big question is, where does this leave the truce that they stuck with, that MOU? The president said earlier yesterday that the ceasefire was over. Then he was pressed by reporters if we were returning to an all-out war as he made his way back to Washington, D.C., and he said he doesn't think so, he doesn't know, but if it was a war, that we would win. So now we're left with a situation where the ceasefire has certainly been tested, actually broken. It's not an all-out war, but it's certainly not peace. And that's potentially the stalemate that the world and the market needs to get used to.
Anne-Marie, from the market's perspective, it is very easy to look at this as an almost comical story. The back and forth with no resolution. We have strikes and then maybe we back off a little bit. We claim that we've had a call. You forget just how serious this moment is. And the threat level against the safety of the president is in mind as well. And he alluded to that in the news conference just yesterday. Anne-Marie, not lost on many reporters right now is that the president arrived on one plane in Ankara and left on a different one. Are we finding out why and what happened?
Yeah, the president said yesterday in the press conference he's enemy number one. He was continuously pressed by reporters in the press conference and as well when he finally got to that new Air Force One in the United Kingdom. Why was this change of plane, especially since he went over to Turkey in the new Air Force One that was a gift from the Qatari government? There's more reporting coming out that this was at the request of the Secret Service because it doesn't have all the defense capabilities, and they thought that it would be safer to take the old plane to the United Kingdom and then make the switch there. So a lot of questions about this. When the president was very not forthright, though, about this. He was saying how he wanted to just show off the new plane to the U.S. troops. But clearly this was more than that. This seemed to be a security issue. And to your point, Jonathan, it wasn't just once. The president has alluded to a number of times over the past 24 hours that he is on the target list for the Iranians. This dates back also to Trump 1.0 after the killing of Qasem Soleimani. And the president and the Secret Service felt there was this needed precaution to keep him safe.
Anne-Marie, with the latest in Ankara. Anne-Marie, thank you. This from the New York Times this morning, that people briefed on the new plane's capabilities, who spoke on the condition of anonymity to discuss sensitive security issues, said the new plane does not have all the features of the older plane.
Yeah, it was stripped out entirely, and I think it cost something like $1 billion to retrofit with all of the features. Still working through exactly and making sure that all of them are secure to guarantee safe passage.
That's the latest from Ankara. Let's build on this conversation with General Karen Gibson of Academy Securities, writing, when President Trump says the ceasefire is over, it is a political and potentially operational signal that he may no longer be committed to using restraint when employing military force. General Gibson joins us now for more. General, welcome back to the programme. What do you think that means for the next few months?
Well, I think this is very reminiscent, obviously, of the tit-for-tat strikes and counter-strikes that we went through in late June. At essence, at core, I think it is a difference of opinion, a difference of interpretation between how the U.S. and Iran are viewing the rules that we agreed to in the MOU, supposedly, for the transit of vessels through the Strait of Hormuz. There are many other areas of potential conflict in the MOU. This is just one that we'll have to work through. The Iranians are insistent that they will control the transit of vessels through the Strait. And of course, that's something that we staunchly oppose. And I see very little room for overlap between these differing viewpoints between Iran and the United States. I don't see a speedy resolution of this essential difference.
General, in the meantime, a real question about what the U.S. will do to ensure that oil tankers can continue to pass through the Strait of Hormuz. Do you have a sense of what the U.S.'s appetite will be to protect non-Iranian crude tankers that are trying to traverse the Strait?
I think the United States is probably prepared to do that. Certainly, it's a capability that we have, and the decision to do so would be a political decision. The U.S. Navy has that ability, and in fact, has been assisting some of these vessels with their transit through the Omanian side of the strait. The question is really, though, to what extent can we protect against vast numbers of drones and missiles, shore-launched missiles that are difficult to detect, that are very agile, and that provide a very minimal warning before they are fired.
General, the troop presence that we currently have, that the United States currently has in the region, how much do you expect that to be sustained at the level that it currently is at for the foreseeable future, as a result to what Norm Rule was yet saying is the new normal going forward?
Yes. So I think the heaviest burden, obviously, is on the naval forces and the Air Force. And some of the vessels have been there for some time, rotating through those vessels. It's also a very heavy lift on intelligence, surveillance, and reconnaissance aircraft, and the various sensors that we have for detecting threats, because that's really a very heavy lift in protecting commercial vessels that would be, as well as our own forces and our own bases that would be transiting through there. Not such a heavy lift for our ground forces. We do have ground forces deployed there, but they are obviously less engaged in this.
General.
We've been engaged in much longer conflicts in the Middle East before, but it really is a heavy burden on the Navy and the Air Force.
Don't apologise. We appreciate your time. Thank you from us, as always. General Karen Gibson there of Academy Securities on the latest situation. That map tells the story really right now. This is what the fight is over, for the Iranians at least. They have a very specific path in mind that they want ships to take, and it's right by the coast of Iran and not of Oman, and they want to charge a toll. That's what the battle is over at the moment.
And right now, the United States and a lot of allies are saying that that is an unsustainable solution, that a toll will not be something that can become the status quo. So you get this stalemate, and clearly it has fizzled in terms of the memorandum of understanding. That memorandum of understanding has broken down, and it is unclear if there is a path to bring it back. So if this is a new normal, is it going to be who is going to help protect that other corridor near the coast of Oman to avoid any kind of attacks coming from the Iranian forces?
And based on the experience of the past few days, that's very difficult to do, given the attacks on ships that we have seen, of the ships that have tried to go around the coast of Oman. Brent crude this morning, 79 at the moment, WTI around 74. Up next, we'll catch up with Vitos Peduto of RBC on what could be a record-setting year for M&A. Plus, Yahira has your morning movers. Memory stocks rising ahead of SK Hynix's US debut. Micron up 4% from New York City this morning. You're watching Bloomberg TV.
is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The up and about 2 hours away. Equity futures on the S&P 500 shaping up as follows. On the S&P, following 2 days of losses, a bounce of about 0.1%. Money going back into the tech trade in the last 24 hours. The Nasdaq higher again by 0.6%. Thanks to the war, because of the war, to some extent, maybe, yeah.
Look, it's a very difficult thing to exactly nail down. Nonetheless, this is the playbook. When people start to get worried about higher oil prices, suddenly inflationary pressures, central banks back in action, they say, well, tech won't be affected, so why don't we go into tech? This is added by the fact that we've already seen a sell-off, so people might be going back into it at a time where it seems like the demand isn't going away and it just seems to be expanding out to more players.
Turn to the bond market. Twos this morning, down a single basis point. Some data 60 minutes away. The 2-year around 420. Yields resetting just a bit higher at the front end of the curve. Informed by this move in crude. 2 days of gains on oil. You can make it 3, up by 0.8. Brent crude just short of 79, 78.69. And maybe on the margin, changing the outlook for interest rates just a little bit.
Yeah, and partly because they are not surging that much more. We're not talking about $120 Brent crude. And the fact that it isn't rising more means that there isn't going to be the demand destruction. People will absorb this. That is going to be an inflationary pressure that can persist without necessarily curtailing demand. Again, we talked about it earlier. It's the stagflation without the stag, which is just inflation, and that's the reason why the Fed officials are worried.
Crude this morning at 1%. As we count you down to the up and about, a few hours away, let's get to your morning movers. Some single names. Yahara has more. Hey, Yahara.
Hi, John. As you all said, the memory and chip trade is back on this morning with names like Micron and Intel building on yesterday's gains after a rough stretch for the group. And the fresh optimism is being injected by SK Hynix in our latest reporting here at Bloomberg that the U.S. listing is more than 7 times oversubscribed. The next test comes tonight when the deal is priced before its ADR start trading on the Nasdaq tomorrow. Meanwhile, we are seeing Salesforce shares under pressure, down 4.3% after one Wall Street analyst poured cold water over its AI ambitions. KeyBank downgraded the stock to sector weight, saying customer checks show little signs that Agentforce, its flagship AI platform, is showing meaningful traction. The analysts say that any boost from AI could be further away than thought, if it even comes at all. And we end on PepsiCo. Shares are barely down, just 1% in the pre-market. But this is an interesting story because this is a company that slashed prices earlier this year to try and win back consumers. And while its earnings show some signs that it is gaining traction, it definitely came at a cost, weighing on revenue in its North American business. John?
Yahara, thank you. Thanks for the update. One more stock, Meta. In the pre-market, down by about 1.7% this morning. This from Reuters just moments ago, that Meta plans to start manufacturing an artificial intelligence chip from September as part of its plan to boost overall computing power to 14 gigawatts next year. Showed an internal memo reviewed by Reuters, the lead paragraph from them this morning.
Yeah, codenamed Iris to specifically cater to their needs. It just points to how Meta is trying to expand into some hyperscaler-like features. I mean, we were talking about earlier them selling some compute capacity. Now talking about mimicking what you see from the likes of Amazon or even Google trying to manufacture their own chips. At what point is Meta saying our business model doesn't make sense with the amount of spend that we're doing unless we also have hyperscaler-like activities? Again, watch the space to justify the spend that people have pushed back.
It's been a confusing month, that's for sure.
I am very confused.
Neo-cloud firm on the side, maybe in the future.
I think I need to do some channel checks.
Meta down by 2%. What does that involve? Trips to Virginia? check out some data centers?
I think that it's going to Bali. I think that Bali is going to have a really good...
data centers in Bali.
Big business.
New, huge. I'm sure management will be convinced. On our radar this morning, the US launching fresh retaliatory strikes against Iran for a second straight day.
We just hit them very hard, and every time they hit us, we're going to hit them 20. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
Traffic through the Strait of Hormuz grinding to a near standstill as President Donald Trump says the ceasefire is over. Elsewhere, SpaceX XAI unveiling its latest chatbot, Grok 4.5, to the general public in a competitive bid against Anthropic and OpenAI. The model was built in partnership with AI coding startup Cursor, CEO Elon Musk calling it a faster, lower-cost Opus-class model. And finally, SK Hynix seeing a strong investor demand ahead of its US debut. Sources telling us here at Bloomberg the listing is more than 7 times oversubscribed, set to raise nearly $25 billion, ranking it among the largest foreign debuts in the US.
Yeah, and the conversation we were having earlier about why they're coming to market I found really interesting. And you nailed it about Micron and the idea that Micron has a multiple that is so much higher than SK Hynix. And SK Hynix is saying, well, we could do that too. We just need to list in the US and have access to this market. And to some degree, that is the sole purpose. It shows how much demand there is and how much the image of memory chip manufacturers has changed, going from a cyclical business to one that is structural with a lot of locked-in contracts that are multi-year, as well as just overwhelming demand that has given them a premium that really hasn't been seen historically. And clearly, they're able to tap into that even at a time of volatility in the Korean market.
And given the amount of supply we're seeing elsewhere as well, which we've talked about endlessly. Let's turn to M&A. 2026 shaping up to be a record year. According to data compiled by Bloomberg, global transactions exceeded $2.5 trillion in the first half. The surge putting deal makers on course to pass the record haul set back in 2021. Vitos Peduto of RBC writing M&A is at a historic halfway point, and it is broadening out beyond the mega caps. The engine is strategic, not speculative. Vito joins us now for more. Vito, good morning. Good to see you.
Great to be back.
That last line is really important. Strategic, not speculative. Can you just sort of build that out for us?
Yeah, I think it builds on the theme we've always talked about, which is, good strategic M&A gets done. And if you're thinking about the long term, that's where the benefit is. And so what we're seeing is, you've talked about the fact that the market has been broadening. Year to date, I think we're seeing, depending on the sources you look at, globally, M&A is up 42%. On the back of being up 40% last year. But in the U.S., it's even more magnified. It's up about 69% through the first half and up over 50% last year. But what's been interesting, and since I was last here, we were talking about the first quarter where there was a clear divide between the large cap and the smaller cap. And so if you looked at it, it was really driven by these large cap transactions in the first quarter. And it was especially clear in the U.S., where you saw deals over $5 billion were up 200% in Q1. Obviously it's a 3-month sample set. But deals below $1 billion were down 14%. You go 3 months later and through the first half now, we're seeing large cap still driving it, up 128%. But the reality is it's a broader participation now, and we're seeing deals below $1 billion up 22%. And that's just with 3 incremental months. So what that tells us is that the larger players, the larger corporates, have considered their significant strategic opportunities. They've either executed on them or they've moved on. And now they're thinking about what else can I do to add on. You're also, the other thing that's on the sideline is, private equity hasn't really been as big of a participant year to date or last year as they have historically. But on the corporate side, we are seeing them pursue smaller transactions. We are seeing a plethora of sell sides preparing to access the market in the second half of this year. And I think, we're obviously talked about in the last half hour a lot of what's going on from an external noise perspective, and maybe I'm belittling it. But I think the corporates especially have gotten very resilient in this environment. They've seen an MOU in place. They've seen it pulled back. They certainly are concerned on the geopolitical front, but they're also seeing methodologies to play through it.
You track confidence levels. How high is C-suite confidence right now?
So when I was here last, we had the first quarter measure where it was up to 59 on a scale of 100. So it was above the 50 neutral point. So CEOs felt pretty confident about the forward outlook, and they thought there was going to be a good level of activity going forward. in their businesses, in their sectors, and so forth. We saw that drop in the second quarter and down to 47, and the key difference being the start of the Iran conflict. And so the CEOs were all of a sudden pulling back a little bit, but they was still pretty close to neutral. They identified geopolitical concerns as their leading concern. Their second largest concern was sort of AI and the impact on their businesses going forward. But from a geopolitical perspective, the concern is not so much where are oil prices or what's going through the straits. It's what is it going to cause in terms of inflation going forward? Is it going to cause inflation higher for longer, just like rates higher for longer? And is it going to make it more difficult for me to operate my business? And so I think we're seeing a lot of resilience on the part of the C-suite, and they're playing through this, and I expect that to be the case. But it is certainly, they're watching the headlines just as much as anybody.
Has that curtailed the full year outlook for total M&A?
I would say it's not changed my view on it. I always thought going into this year we were going to have a record year in the U.S., and we're not, I still feel that pretty strongly. I think it's difficult to get to the record year we had globally in 21, where you had such a broad geographic participation. And so just to put that in perspective, you keep in mind that last year, the second half was the real acceleration, right? When we've been together, we've talked about that last year in the first half, I think everybody was trying to get their arms around the market, around this new administration, and we had talked about it taking at least 6 months. And then you saw the second half incredibly accelerate, and that's what drove the volumes last year. So I think the comparison to last year is going to be difficult in the second half. The first half of this year is roughly equivalent to what we did in the second half of last year. And in the U.S. market, we will see volumes exceed 21. I'm pretty confident of that. I think globally we're not going to see that, but it's going to come pretty close. And it's certainly going to be above last year. But the other piece we're seeing is that technology has always led the way, and it continues to. But right now, and I noticed that in the graphic you put up, you talked about excluding the SpaceX transaction as an example, right? The reality is, even without that, you're seeing an incredible market out there. And so technology, that sector is still greater than the next two sectors combined, which are healthcare and energy and utility.
Are you seeing the financing window not close, but start to get a little bit more exacting, a little bit more expensive, a little bit more discerning?
There is some incremental risk being priced into it as they're trying to fund it. And you talked about Meta and Amazon, and they're sort of moving towards hyperscalers. I'd argue they're hyperscalers today, right? And if you look at the financing that they've gone into the market with, and right now, obviously from the headlines, Amazon's in the market with a large debt capital markets transaction. If you consider since last November with this transaction, they'll have raised over $100 billion of capital in the debt capital markets. Maybe that's gotten slightly more expensive right now, but there's still appetite for it. And I think people are just adjusting to the current rate environment, and they're figuring that out. The other piece, which we haven't mentioned, is the equity capital markets are on a tear. And our heads of equity capital markets put out a piece last week where they had to adjust the headline. They were originally saying this is the best market since 21, and now it's become the best market ever. Right? And I thought that was a clever way to put it, because even excluding the SpaceX transaction, you've still got such a large participation. And the reality is the industrial sector, if you take out SpaceX, is the largest participant in the IPO market this year.
As you look across asset rent, you look at, say, debt and equity at the moment, if I had to raise capital, I know it's super simplistic to ask this question this way, but is it easier to raise equity capital than through the debt market at the moment?
It depends on who you are, and it depends on what your forward outlook and story is, just like anything else. I think the investment grade community is seeing a fairly ample debt financing capacity out there, and they're taking advantage of it. And we're seeing that across the board. You're seeing it for M&A purposes, and you're seeing it for general purposes as well. I think from an equity perspective, what I'm watching closely is what is the broader participation in the IPO market? Because I mentioned the private equity community and the largest amount of assets that they've ever had in history in their portfolios. They're watching closely how much this IPO market opens up and how much it becomes a realistic exit alternative for them. And not necessarily that they're going to tap it, But even if they're going for a sale, having a realistic public market alternative creates that competitive tension. So that's one of the areas we're watching closely. And we actually expect industrials and consumer and retail, for example, to be big participants in the second half of the year.
Vito, it's good to see you.
Thank you for having me.
Thank you, sir. Appreciate it. Vito Spaduto there of RBC. Let's give you an update on news worldwide with your Bloomberg Brief. Vonnie has more. Hey, Vonnie.
Hey, John. Thank you. Meta preparing to start manufacturing its own AI chips. Reuters reporting the Iris chip will begin production in September. The move is part of Meta's plan to double its compute capacity to 14 gigawatts in 2027. The developer behind an evacuated New York City high-rise says he'll reconstruct 15 upper floors after identifying under-reinforced columns that caused part of the converted apartment building to sag. The Department of Buildings says the structure is stable. An investigation into the cause of the issues is ongoing. Wimbledon's semi-finals are set. Germany's Alexander Zverev defeating American Taylor Fritz in straight sets to advance. He'll face hedge fund scion Arthur Ferry. On the women's side, Linda Noskova and Marta Kostyuk made it through to the next round. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thanks for the update. Up next, a family divided.
What will be interesting is how much of a read we get or don't get into that closed-door family fight. We don't think the Fed's going to move this year.
Sounded like local news then, didn't it?
It did. I was about a family
Up
fight.
next,
I was
family.
like, a family divided.
A family divided.
Yeah.
Roll the package.
I was about to say.
Is it really divided when 9 of them want to raise rates, though?
It started with a meat packing.
There's like that much between them right now. Some want to hold, some want to hike. Greg Peters of PGM joins us next, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Bloomberg.
I'm Tyler Kendall in Washington, and this is Bloomberg.
1 Bloomberg.
Equity futures positive by 0.2% on the S&P 500, on the Nasdaq higher by 0.8. Under surveillance this morning. Got to do this again. A family divided.
What will be interesting is how much of a read we get or don't get into that closed-door family fight that Chair Warsh keeps talking about. We don't think the Fed's going to move this year. I think it is this sort of getting used to the discomfort of less transparency.
Governor Powell left behind at Chicago Airport.
Yeah.
It's the start of Home Alone, right? Right? Here's the latest this morning. Let's move on. Minutes from the Fed's June meeting showing increasing inflation concerns, with half of the policymakers seeing a case for a rate hike and the other half supporting keeping them unchanged. Greg Peters of PGIM writing the following: our base case scenario is one where continued growth momentum supports nominal growth and the Fed hikes rates in 26. Greg joins us now for more. Greg, welcome, buddy. Good to see you. How close do you think we are to those higher interest rates from this Federal Reserve?
I think we're pretty close. I think what's most important is the shift, right? If you just take our own forecast as an example, a couple of weeks before Warsh stepped up to the podium, we moved from 2 cuts this year to 3 hikes. And I think that directional shift is really what matters here. And so we can debate whether they start in July or not at all. But I think that vibe shift is really what the market is feeling and should be feeling. I personally think they're pretty close. I think, the minutes kind of help cement that, at least in my view. And I feel like they're vigilant around inflation. I think that's what central banks are supposed to do.
It's been a problem, though, for a number of years, Greg. What's the catalyst for the vibe shift? You alluded to it a little bit. Just build on it if you can. What's the catalyst for that massive shift at this Fed?
Well, I think there was possibly a misread of Warsh himself, that he would be dovish and just do the bidding for the president. And he came out quite strongly that, inflation fighting is what matters. And that's all he focused on. And make no mistake, we're well above the 2% bound here. So it makes sense to me. And, they have to get credibility back to a degree. And I think focusing on inflation is a way to do that, because they're far away from that 2% level.
Greg, initially when we saw the new FOMC's tone, the yield curve flattened. There was a sense that the Fed would have a greater chance of hiking rates, and that actually brought down the long end. Recently, that's changed it, and actually you've seen a yield curve steepening reassert itself. In other words, even as you've seen that 2-year fixed around 4.20, you've seen the long end yields rise. Do you think that that's something that's going to persist? Do you think that that's signal, or do you think that's noise?
I think it is a signal. What I think the yield curve reflected was that the surprise, is called surprise, that Warsh came in much more vigilant around inflation, and that kind of pushed down the back end of the curve. That was a pretty big move. I think we've settled into a more kind of rational place, but I think the pressure over time will be for the curve to steepen. Do I think it's a here and now necessarily? No. But do I think, over the next quarters, years, I think the pressure will be for steeper curves, not flatter curves, just because, I've heard you guys talk about it in the past, just the unrelenting supply that you're seeing, not only out of the kind of AI ecosystem hyperscaler space, but let's not forget, you have a lot of sovereign debt that needs to be financed here over the next, several years or so, and that'll put pressure as well. All those factors, I think, will contribute to higher yields, not lower yields.
Has that changed your view on long duration bonds or even medium duration bonds, given the fact that increasingly you have seen yields rise, the supply seems to be unrelenting, and inflationary pressures seem to be persistent, even with the prospect of tightening by central banks?
No, it hasn't changed my view. It's been a frustrated view more than anything else. So, my view all along, our view at PGIM has been, this supply is interest rate insensitive, right? You think about the hyperscalers as an example. They're playing a different game. They don't really care if it's 50 basis points, 100 basis points, you name it, higher in yields or spreads. They are going to finance what they are going to finance. Federal governments same issue. They have to come to market regardless. And I think that puts pressure just on yields and particularly the back end as debt sustainability, mania, bubbles, all those factors start to come into play, at least into the conversation. So, yeah, so I think this is the beginning, not the end. And I think you'll see this pressure on long end yields. So I think that is a persistent story. But if you look at yields in the belly and further in, I think that is where we're most excited because the yields are high. It does roll down. You're not taking excessive duration or spread duration risk. And so I think it's a very different place in the middle to the front of the curve versus the back end of the curve.
Well, let's sit on the back end. Long bonds at 5. What kind of number, Greg, do you think we could look at in the next 12 months?
Yeah, I mean, I could see that kind of steadily rising. I think 5.5 is quite good. What you're seeing now, what's capping yields in the back end is the yield itself. So what's really interesting is that, as soon as yields kind of move above 5 and like investment grade 30-year corporates are, close to 6, investors get really excited. But as the longer this persists, I think the more investors will adjust to that not maybe being enough. And so it takes time, right? And so I think this is a early innings of this revisitation, revaluation of what attractive means, just given the supply. And so, yeah, I can see, U.S. Treasuries and, 30-year corporates, moving higher here pretty substantially.
Interesting. Greg, thank you. Greg Peters there of PGIM Fixed Income. It's not alone. I've heard it a few times. If you look at the offering from Amazon earlier this week, that's pushing AI-related debt offerings. Lisa mentioned the number earlier this week to around $335 billion so far this year. What's that, double last year? The debt coming from Treasury is not going to end. That supply is going to keep coming. That competition for capital will lead to higher interest rates.
Yeah, and what Greg was pointing to there, the one thing that's been capping yields is the yield itself. And people get excited about it because they haven't seen it for a number of years, but they'll get less excited as that yield continues to climb and they might be able to get more. And we saw a perfect example of that yesterday with the $39 billion of 10-year notes auctioned. Because, yes, there was plenty of demand, and people actually pushed back on my observation about how high the yield was and said, talk about how well the auction went. It went really, really well. But the yield was the highest going back to February 2025.
Back? What's wrong with these people, Bramo?
Oh, people are absolutely allowed to. Please push back, and I'll push back again.
Question the Bramo. Up next, Michelle Weaver of Morgan Stanley, Savvy Sith of Raymond James, Nita Richardson of ADP, Matt Stuckey of Northwestern Mutual. The third hour of Bloomberg Surveillance just around the corner.
Very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again. And they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything. And he ended up paying for the production costs.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One. Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ola, Saudi Arabia, and this is Bloomberg.
The AI trade has gone from uber bullish to a bullish bearish combination.
View this sell-off more as an opportunity than a reason to panic.
The AI trade will continue to find support.
A lot of it then depends on the durability of AI.
If that falters, we've got a real problem on our hands.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action of scores look like this. Equity futures on the S&P recovering a touch. We're up by a few tenths of 1%. A bounce back again on the NASDAQ, up by 0.75%. The money going back into tech in the last day or so. In the bond market, 2s, 10s and 30s, 2s around 420. Yields a little lower on the session, down 2 basis points, 30 minutes away from jobless claims. Setting the tone for this market in the last few days, this move in crude. 2 days of gains. Can you make it day 3? Up by 0.8% on Brent, just short of 79.
We already have had a pretty substantial move, which is the reason why you're not seeing a bigger move today, considering the fact that tensions only seem to be escalating. Another round of strikes by the United States on Iran overnight. One notable thing, though, is that we're not talking about how that could potentially upend the risk asset market. Increasingly, the risk asset market has moved on, not because they are ignoring it, but because they have sort of accepted that it does inject a little bit more inflation, but it doesn't upend the idea of what we're seeing in AI or potentially even consumer spending.
There's chaos in the Middle East. Is it bullish for tech stocks? Is that what we're saying? Is that the trade of the last 24 hours?
You know, that was the trade earlier this year, that even if you didn't see a broadening out in the rest of the economy because of high oil prices, you do get that AI secular trend that will give that a boost. That said, it's not clear right now. I mean, yes, you are seeing that in the price action today and yesterday, but what we just heard from David Lebovitz, he came on and he said, look, I actually still think the broadening out trade is going to withstand and outperform simply because these are the companies that are going to benefit disproportionately going forward, regardless of whether inflation is just a touch higher.
Underperformance on small caps, underperformance on the equal weight, dominating the session through Wednesday. Into Thursday, equities up by 0.2% on the S&P. Coming up this hour, we'll catch up with Michelle Weaver of Morgan Stanley, with stocks finding a firmer footing. Savvy Sith of Raymond James downgrading Delta Airlines ahead of earnings. And Matt Stuckey of Northwestern Mutual, with SK Hynix's equity offering receiving some big demand. We begin this hour with stocks pushing higher as tech bounces back. Michelle Weaver of Morgan Stanley writing, investor positioning in semiconductors has become extreme. The sell-off can be viewed through the context of our house call for a broadening in performance. Michelle joins us now for more. Michelle, good morning.
Good morning. Thanks for having me.
Good to see you. Does this move in oil upend that broadening story?
No, I think whenever you have these periods of geopolitical instability, you always have to go back to the fundamentals. The fundamentals have to remain your North Star. And the fact of the matter remains, we're still in a really strong earnings environment for U.S. stocks. We saw the average stock in the Russell 3000, so just the typical small company, up 10% year over year in the first quarter. That's the strongest earnings growth they've seen since 2021. And you'd really need to see oil above $100, $120 for a sustained period for me to start getting more nervous on some of that broadening out call where that becomes a problem for input costs for companies.
We saw a massive quarter as well for the chip players. They had fantastic earnings. They saw fantastic gains. Why is the money going to drift away from that story a little bit more?
So I really think a lot of it comes down to positioning. And I want to be clear, I am not calling into question at all the longer-term AI theme. I think the longer-term AI theme is very much intact. But after you saw that incredible run post-last earnings season, you had very, very high positioning, very high exposure within the semiconductors names. So I think now you're just seeing some of that natural repositioning, rebalancing as you head into earnings season, as you want to start trimming some of your risks there. But overall, the AI theme is still intact.
Is it healthy to see so much volatility in single name stocks, even as you see the overall index kind of remain fairly stable in the face of a whole bunch of different shocks?
I mean, I'm not surprised by the volatility, just given all the headline risks. So we're hearing all this. People are rotating under the surface. Now we've seen money moving back into tech because that theme is so durable, and I think people are a little bit more comfortable there. But overall, I'm not surprised by the volatility we're seeing, just given all the concern around oil, given concern around inflation, given the concern that this raises for consumers. But I think it's not surprising.
There's also an issue going forward with earnings as they trickle out about what kind of profit margin we could see from some of the consumer-facing companies. We did see profit margins expand, even as consumers didn't feel really good about inflation. In fact, they feel pretty terrible about it. They really hate it. Right now, you're seeing the likes of Pepsi come out. They cut prices last year. That's reduced some of their revenue in certain parts. Do you expect the same, that increasingly consumer pushback is going to crimp margins, or do you think that that kind of margin expansion can continue?
I think it's a risk for companies that have more exposure to the middle to lower end consumer, because we're still seeing the K economy very firmly in place in the U.S. If I think back to where we were heading into the year, we'd hoped that inflation was going to start to cool down. Unfortunately, given the moves in oil, that effectively acts as a regressive tax on the lower income consumer. And so lower income consumers are still very much stressed. We do run our own proprietary consumer survey, though, and we're seeing an improvement in sentiment. It's not outright positive, but people are becoming less negative than they had been a few months ago. So the consumer's in an okay place. I'm not seeing anything terribly concerning around credit cards or auto delinquencies, but they're in a middling place right now.
How relevant is sentiment to the equity market story? I think the way people feel is important, but to the equity market story, is it relevant?
I think it's important to keep an eye on, especially as we go throughout the year. If you have negative sentiment for an extended period, I'll start to get more concerned. But overall, we've seen people continuing to spend through this. They're not happy, but the spending has continued to hold up. Maybe they're going to push back more on prices, but they are still going to go out and spend and get what they need.
Cue the Federal Reserve. Does it step in and hike interest rates, and what does it mean for your call?
So our economists do not think that the Fed are going to hike this year. They think they're going to remain on hold for the balance of the year. I think, yes, there are renewed concerns now around oil prices and inflation. But if I think back to last week, we got a softer payrolls number. And as we saw in the FOMC minutes that came out yesterday, the majority of the members are comfortable with remaining on hold for the rest of the year.
How much would a rate hike actually materially change your view, though?
One, I don't think would have a huge change on it. Overall, though, we do need rates to remain contained. But I think, one hike, that's not going to completely change the story.
There's also been a theme that's increasingly prevalent in our conversations with different analysts, which is, are we in an earnings bubble? Forget the valuation, forget the AI, but are we overestimating how much earnings can continue to expand? We're getting a taste of that when it comes to a couple of companies. Samsung reported earnings, fantastic earnings, punished. We saw that again today, overnight, just on the margins with Levi Strauss. What's your sense of this being kind of the sort of foretelling, the foreshadowing leaves for what's to come?
Yeah, I mean, overall, I think earnings are still very much powering the story. We're coming off of a multi-year earnings recession for the average stock. That's really what's driving that call for a broadening out. We'd seen a lot of the market being powered by the AI infrastructure names. And while we're still very positive on the overall AI thematic, I do think you're going to start to see some broadening in performance as you see those companies continue to do very well on earnings. Earnings revisions breadth is still surging. I do think that is supportive for the market. I don't think, we're going to see all these earnings beats and the market is just going to look the other way and sell the news.
This market has reset expectations higher, is what you're getting at, Bramo.
Thank you. Yes,
Not just on those two names. I mean,
no, it's
like,
true.
So much higher going into this quarter.
We've gotten used to double-digit earnings growth and then some. And the idea that we were speaking about with Bob Elliott, he was saying that we're pricing in more than 100% growth in some of these hyperscalers, some of these tech names over the next 5 years, every single year. Is that plausible? Is that possible? And that is potentially where some of the disappointments could come.
Michelle, where are the beats going to come from? Now we have reset the bar so much higher. Coming into this year, that's been the surprise, a positive earnings shock. How do you shock a market twice?
So, I mean, I wouldn't say it's been priced in throughout the market, though. It's been priced into some of those semiconductors names, and that's why positioning got so outsized. But I wouldn't say that it's been priced in throughout the market. It's really that large cap tech that had been driving things higher. But now I think there is still a lot of room and a lot of capacity for those positive earnings revisions and for hopefully what we'll see a very strong earnings quarter to come through and be priced into the broader part of the market.
Favorite sector right now?
I really like biotech. I think that's an interesting sector.
How come?
It is very beneficial from M&A. You had the story on earlier. We're seeing very, very strong M&A. I also think it's a very interesting play on AI adoption. So I think that it's one of the sectors where you can really see improvement in both the product as well as the efficiency. We're seeing a lot happening within AI-enabled drug discovery. So I think biotech right now is a really interesting play on both the M&A theme as well as the AI adoption theme.
Interesting. Michelle, thank you. Appreciate it.
Thank
Michelle
you.
Weaver there of Morgan Stanley, heading into earnings season, which officially kicks off next week, which I don't really understand because it started, and down to report in 24 hours.
Yeah, which is the ultimate kickoff. But really, JP Morgan is like, no, it doesn't start until we start.
Do they say that or do we say that?
I mean, I think that we've bought into it.
Why do we buy into it?
I don't know, but we do. We always say it starts next week, even though it's already started. I mean, we were getting some today.
Starts for the big banks next week.
I mean, yeah, but whatever.
Okay.
Can I just say,
sure, please.
I can get behind the biotech trade. If they can cure cancer with AI, I'm all there. I'm very excited about that.
Yeah, everybody else.
I mean, honestly, like that is...
On board with you.
I spend time like researching just where the developments are, and some of the most difficult ones. I think it's wonderful.
That is worth the data centres, without a doubt.
Much more so.
I don't think that is an original take, though, Bramo. I think a lot of people are on board with that idea.
Thank you.
All right.
I'm glad that I've got a vote of confidence.
Let's get you an update on stories worldwide this morning. Everything else you say is original, truly. Contrarian. Your Bloomberg Brief with Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Maine Democrat Graham Plattner says he's suspending his campaign for a U.S. Senate seat. The announcement coming after he lost support from several Democrats following a sexual assault allegation, which he denies. SK Hynix's U.S. listing is more than 7 times oversubscribed. According to Bloomberg's calculations, it's likely to be among the largest ever U.S. debuts for a foreign company. And tune in tomorrow at 10:30 a.m. for an interview with the SK Group chairman right here on Bloomberg. Russell Investments being acquired by a group of investors led by the venture firm B Capital and CalPERS. Sources telling us here at Bloomberg the deal is valued at $2.8 billion. It's aimed at getting the 90-year-old asset manager, Russell Investments, ready for the AI era. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour. Up next, the morning calls plus Savvy Sith of Raymond James downgrading Delta Airlines ahead of the earnings report in the next 24 hours. That conversation up next.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
If you look at the hyperscalers today, what did they make in the last 12 months? $1.5 trillion. So you're talking about over the next 5 years, they're going to add, $3-4 trillion of additional revenue. That is an incredible amount of revenue that they have to get. In aggregate, it is largely impossible that we're going to see this sort of revenue.
That was Bob Elliott of Unlimited Funds, the high bar for earnings expectations. This is something that Liz Ann Sudders of Charles Schwab questioned. Just the idea that maybe this time the bubble might be in the earnings and not in the price. Bramo, it's something you mentioned just moments ago. That's very unlike what we saw, say, 25 years plus ago when we had the tech bubble.
Yeah, this is what maybe we're seeing on the margins, not necessarily with the tech names, although Samsung is a great example of that. Came out with very good earnings report. Their stocks tanked because of overall sentiment, but also the likes of Levi Strauss. Have we baked in good news, even though we haven't necessarily seen the proof yet?
So we've had some pushback. It's notable. Levi's being one, Samsung a much bigger story. Micron's margin's a problem for everyone else. All these kind of things coming together. Then you've just got the normal stuff, the bread and butter. How's the consumer doing? Can they tolerate higher prices? What's the read on PepsiCo this morning? Is that a tell of what we might see this quarter?
So last year, Pepsi said that it was going to cut prices on some of its products by about 15% after they'd been accused of raising prices much beyond what the average consumer could afford, the basket of goods getting too high. What they did see was a 2% decline in its revenue in its North America business. And they talked about how consumers are pushing back as a result of inflation. The CEO saying results were tempered in the quarter as U.S. food and beverage category performance moderated with consumer budgets tightening due to rising inflationary pressures. Is this a concern for particular brands that cater to lower and middle income consumers, or is this something that can be a more widespread phenomenon where you start to see on the margins consumer pushback?
The latest from PepsiCo this morning. Here's the latest price action. A bounce up by 0.2 on the S&P, on the Nasdaq 100 up by 0.85%. A better story for tech in the last 24 hours, just as people talk about a rotation away from chips. The money goes back to chips because of this move in crude. Brent and WTI this morning pushing higher by 0.4% on Brent, $78 on WTI at about 73. Just briefly yesterday breaching $80 a barrel on Brent for the first time in 2 or 3 weeks. A 2-day rally on Brent could become day 3. Just a small gain so far this morning. That set the tone for this bond market. 2s, 10s and 30s. In about 14 minutes time we'll get the data. We'll get some jobless claims. Jobless claims have done nothing for a long time. The data that has started to move, ISM this week, a bit softer than expected. Jobs last week, a bit softer than expected. Will you see that in more data at a time when this Fed is actively considering higher interest rates? And 2s, that yield is still well north of where the policy rate is right now.
Yeah, another way of asking this is when will the labor market matter again? Because right now it's not mattering at all to the Federal Reserve because it seems to be stable. Do you get a peak perking up in some of the numbers, the wrong kind of perking up of the initial jobless claims that could potentially put it back in focus given the fact that we have seen a weakening? Or are we just seeing volatility in data that has been highly volatile?
It would be shocking to see higher claims, wouldn't it? Like materially higher claims, because claims have done nothing for so long.
This is a non-event at this point. I think it is fair to say that it is not on the radar for so many different people. We have not spent any time talking about this. This used to be the key real-time indicator of the labor market, and currently it seems to have flatlined.
The previous week was 215 initial jobless claims. The estimate in our survey, 217. Let's see what we get in about 13 minutes' time. Let's get you some morning calls. First up, Bank of America adding Meta to its US 1 list, joining the firm's best investment ideas. Her stock is down this morning by close to 4%. Your second call from William Blair initiating coverage on AMD with a market perform rating, saying it's well positioned to benefit from the AI boom. That stock is up by 3.6%. And your third and final call from JP Morgan, cutting its price target on Exxon to 158, seeing limited upside ahead with its revised valuation. That stock is down by 0.6%. Let's talk about the earnings. We mentioned Delta a few times this morning, kicking off airline earnings before the bell tomorrow. Savi South of Raymond James downgrading the stock, writing, quote, "We continue to view Delta as a top pick for long-term investors. However, following the recent run-up in shares, somewhat narrower near-term upside valuation prompts our rating change from strong buy to outperform." Savi joins us now for more. Savi, welcome to the programme. It's good to see you again. Let's talk about what you are expecting to hear, to see from this company going into the weekend.
Thanks for having me, John. I think it's from a demands perspective and from a pricing perspective, I think the message is going to be quite positive. It's the one kind of silver lining in the backdrop of all of this kind of fuel pressure the airlines have been facing, is that especially in the backdrop of last year when demand got hit from all the policy uncertainty, airlines have seen some really good fare increases, levels that you really haven't seen in past years, in being able to pass through higher fares and have them stick, and see very little kind of demand pushback from passengers. So I think the revenue side of the story is going to be positive, and I think all eyes will be how sustainable that is.
How do you get a sense of that, Savi, when there's so many different moving pieces that are real time? I mean, isn't this just sort of something exogenous that's going to be a market-wide story that they can't really predict?
The one thing, Lisa, that airlines do have in their control is capacity. And that's where you've seen some very proactive moves. Now, we have unfortunately had Spirit that had gone away. That's taken about 1 to 2 points of capacity out of the system. But beyond that, the industry as a whole is keeping capacity flat. And if you look at demand, it usually grows 1 to 2 times GDP. And given the strong economy, we are kind of undersupplying the market, and that's helping keep those average fares moving higher. So that is the kind of the key here from an executive standpoint. I think that given the level of uncertainty, there's going to be a lot of caution in adding back any capacity and trying to control the situation as much as they can. And I would say on the other side, at least fuel has come down from the heady levels we saw earlier this year.
We talk about JP Morgan when they come out with earnings, and that supposedly is the kickoff of earnings season, even though it really is Delta coming out tomorrow. And we say, is this a bank story or is this an overall economy story? And Delta, I think we can ask the same question. Does this give an indication of traveler appetite and of the broader airline story and the economic story, or is this a Delta story which is catering to a higher end consumer that has the capacity to spend and to travel much more so than in other places?
That's a fair point. It is going to be a consumer story overall, but it is, if you look at airlines, they are kind of medium to high income household exposure, and Delta kind of maybe, and some of the legacy carriers a little bit higher end of that. So it is a consumer story. It is the consumer that has really held up airline revenue, and corporate as well, actually, because corporates have come back in a very big way this year after really being conservative last year in reaction to all the kind of the policy changes that you've had, or the policy uncertainty that you've had. Look, there are Delta-specific stories here. They have very kind of unique revenue and margin opportunities than some of their peers. But overall, I think tomorrow it will be a story of the consumer and the economy.
When we talk about technology and we talk about the banking sector, a lot of the focus this earnings season is going to be on the CapEx. We've heard a lot of discussion around CapEx. When it comes to the airlines and Delta specifically, how focused are you on CapEx when it comes to new planes, when it comes to the supply of them, as well as the increasing prices for the components given some of the supply chain constraints?
Yeah, that's really important. Like, what I would say about Delta is they have kind of over the past 10 to 20 years approached CapEx in a more stable manner. In the past, in this industry, you'd have these boom and bust, and you still have some Delta peers that have these very kind of high CapEx years and very low CapEx years. Delta's made a point to be a lot more consistent in CapEx and having a balance sheet and a profit profile where they can continue to invest year in and year out without having to kind of take CapEx down. So we expect very steady CapEx story from Delta. You know, the component cost, that's definitely an issue for the industry. That flows more through OpEx for the industry. And again, much like fuel or any other cost, they really have to, use strong demand and or capacity adjustments to try and pass that through.
If you asked people to guess right now which stock in the airline business was outperforming out of Delta, American and United, I think you'd guess accurately across all three. You'd say Delta was the highest, not far behind would be United, America would be lagging. That's been the story so far the year, up 26% on Delta, United up by 13, American up by close to 8. It's kind of changing over the last month, though, Sabi. American Airlines is starting to do something. What are they getting right at the moment?
Yeah, I think what you've seen there is Americans really trying to turn earnings around, and it really depends on which time period you're looking at here. If you look quarter to, the second quarter, American had significant increase in their shares, and the reason for this is their earnings are a lot more volatile. So in high fuel prices, I think people feel a lot worse about American. They have a high leverage. But if fuel is no longer a concern, they are doing some of the right things to really turn around that story, and that becomes the focus. So it really depends on kind of the macro environment and where the shares go.
Savi, it's good to see you. As always, thank you. Savi Saither of Raymond James, heading into earnings from Delta. Have you seen Delta's new basic business?
I have heard about it. Okay. I've read about it, but I haven't seen it.
Do you know the trade-offs? These are the trade-offs. If you want a lower fare to fly premium, first class and business, these are the trade-offs. Seats assigned after check-in, trade-off number 1. Fewer earned miles, trade-off number 2. Reduced checked bag allowances, number 3. No complimentary or paid upgrades, no same-day confirmed or standby changes, and fees for changes or cancellations.
And no access to the Delta One lounge. That's another aspect of this as well.
Is that one too?
I believe so. I believe that is also no access, but you get a lie flat bed for a much lower price. And so how many people are saying, look, if I'm going to be traveling overseas, I want to get there and be okay, I'm willing to pay for the lie flat bed without all of these add-ons potentially. Interesting how they're trying to segment out every single person and their specific need and their specific price point. That, I think, it might be the path of travel.
I'm going to do my channel checks in a moment, see what the fare difference will be.
You're going to do channel checks, and then you're going to execute
and then fly,
to see exactly how you're going to feel.
To tell people the experience of what it was like.
Yeah, and meanwhile, Ryanair is saying, we're going to pay you to go, you're going to have to pay us to go to the bathroom.
One of those digital packages, Bramo, of me peering through the window of the Delta One lounge. I can't get in. I can't get in. And then fly business to Brazil.
To Rio de Janeiro. You can go on the beach of Copacabana.
Sure. Up next on the programme, breaking jobless claims. We'll get reaction with Nita Richardson of ADP from New York City. You're watching Bloomberg TV.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The up and about 60 minutes away. Equity futures this morning on the S&P firmer by 0.3%, picking up here as we get closer to the cash open. On the Nasdaq this morning, higher by 0.9. Jobless claims seconds away in the bond market heading into it. The scores look like this: 2s, 10s, and 30s. Yields on 2s down 3 basis points to 4.19, setting the tone for that. This move in crude higher yesterday and the day previous to that. This morning up again for a third consecutive day, up by 0.7%. Guess what jobless claims came in at? Mike McKee has the number. Hey, Mike.
17K. Well, John, the foolish consistency of little minds is back again. 215,000 jobless claims were filed last week. That's almost exactly the same as the week before, revised up to 217,000. Continuing claims, 1,814,000. That is just a tiny bit higher than 1,806,000 the week before on a revised basis. So basically, the Fed has told us in the minutes that they are sort of certain that the labor market is relatively steady at this point. It is inflation that worries them, and the jobless claims keep that a worry front and center in the sense that there doesn't seem to be a problem in the labor market at the moment.
Mike, from now on, I think you can just record the hit ahead of time, maybe the day before, and we'll just play it out at 8:30 Eastern time on a Thursday morning. Before you go, I prefer to do it live. Let's talk about this Federal Reserve. In the minutes, Mike, what was your takeaway? What do you think it implies about what might happen at the next meeting in a few weeks' time?
Well, I think basically what they told us at the time, and remember that was the day that the memorandum of understanding was signed with Iran, was that they expected or they thought that we were going to see inflation perhaps start to diminish as the year went on, and that meant they would probably leave rates where they were, not cut rates, but because they wanted to bring us closer to the 2% target. Now you've got Groundhog Day again with Iran. So I think the takeaway is that they're going to be still focused on inflation, and maybe the odds of rate increase because of inflation go up. We'll obviously be watching on Tuesday for CPI, not only for services, which they're worried about, but now we got to add AI to all the concerns in terms of CPI.
You could see that, Mike, all the way through the minutes as well. The contribution from the spend to higher prices in America. This headline just dropped just moments ago that Micron is reporting up to $3 billion in investment for U.S. semiconductors. Mike, we're seeing it all over the place. Hundreds of billions of dollars of capital being raised and invested into this story. Mike, that money that's being raised, a lot of people come on the program and say it's rate insensitive, that these companies are going to do this whatever the interest rate is. They're going to spend and invest regardless. How does the Fed handle that?
I don't think the Fed worries about it in that sense, because at this point, what we're talking about is a 25 basis point move, maybe 50 basis points. That doesn't even take us back to where we were a year ago. So the Fed is able to think about what's going to happen a year from now. The biggest thing about what you were just saying is that all that money is being raised, but it's not being spent all at once. It's going to be spent over a period of time. And the problem is there's a shortage of equipment, both electronic and construction, to fulfill all these data center promises. And so that would suggest that this inflation is going to be sticky going forward. So they're going to probably be looking at inflation as a concern well into 2027.
Mike McKee with the latest. Michael, thank you. Looking ahead to inflation data next Tuesday. Next week, July 14th, is ridiculous. Almost every single big bank on Wall Street reports earnings that morning. We'll get CPI, and later in the day, I believe we'll hear from Kevin Walsh, the Fed chair. So next week is like one day, it's Tuesday, then go to the beach and take the rest of the week off, because a lot's going to happen next week on Tuesday.
I think there are some other companies reporting earnings that are very upset and feeling very hurt right now, John, because they are reporting.
Morgan Stanley on the Wednesday.
Yep,
stick around for Morgan Stanley, and anyone who else who might be offended and reporting earnings, stick around for them too.
Look, it will be really important, and we will get a sense on all the major themes on Tuesday. Not only their earnings from the big banks, but also their CapEx plans on tech, because that's actually been an increasing story. And then Kevin Walsh, does he come out and just talk about something that he saw out the window that day, or does he actually give guidance about how he sees inflation? This Micron story is interesting because the $3 billion is going into plants that can produce semiconductors in the United States. At the same time, the SK Hynix is raising money to build plants, to build memory chips over in Korea. The capacity output has to increase to meet demand, and everyone's raising money to do that.
To meet tons of demand. Micron up by 6% in the pre-market right now. What do you do with claims 215?
Absolutely
What do you
do? Should
we just stop talking about it? Stop reporting the number?
Well, right now it seems like the Fed has stopped reporting the number. They have stopped talking about it because they are not looking at the labor market, because it is flatlined in terms of not necessarily non-existing, but just in terms of the number changing. I think that's interesting.
As I'm saying that, Nita Richardson of ADP alongside me just going, no, we've got to talk about claims.
I am itching to jump in right now.
I'm sorry. I hope I've not offended you as well. What do I do with claims 215?
I'm going to give you a fresh take.
Please.
Okay. So we've had enormous stability in jobless claims, but the health of the labor market is how it's treating new entrants. So let's go there. If you look at very early career, I wrote a blog this week about teenage unemployment. It's the highest unemployment rate we've seen outside the pandemic period in the last decade. It's around 14.5, 14.6%. It's harder for these inexperienced workers to get a job. And then I'd like to push back to those who are trying to get into this labor market, those who have been unemployed for 27 weeks or more, above 20%, 27% now. We haven't seen this level in 4 years, going all the way back to the pandemic recovery. It's hard to enter this labor market as an inexperienced worker, and it's hard to get back into this labor market. And that's what we're seeing. It's not just the layoffs, it's the roll-offs. I think that's what you're going to see, because one thing about being unemployed and getting unemployment insurance is that you have to be active in looking. If you give up, you're no longer counted as part of that active and looking that leads into the unemployment rate. And the longer and higher we see these long-term unemployed, the more likely we're going to see that discouraged worker share go up. And so this is the cost of a very stagnant labor market. This low hire, low fire labor market has a cost, and it's a cost we don't see because these people aren't in the labor market.
To your point, you don't see it because when you see a 4.2% unemployment rate, it would imply this labor market's quite tight.
Right.
How would you characterize it?
I think it's quite still. And we've talked about this before, there's just not a lot going on. There's not a lot of dynamism. Some of this is because of demographics. People are leaving early. Maybe they got their retirement boom already, their house price boom already, and they're ready to leave. There's plenty of other stuff to do besides work in this economy. Maybe it's just that they just never found their footing in this labor market because the turnover is so low, those opportunities are so uneven, they're not opening up in the same pace, and they've given up. And so we have to look at this, we can't look at this initial jobs clump number in isolation. If you pack on the other data, what we see is a labor market that's not very inviting to those on the outside.
Is it wonderful, though, on the inside? I mean, I'm asking because are the people who actually are employed getting more effective, getting more efficient, and getting paid a lot more and seeing wage increases at a faster clip?
You know, at ADP Research, we've been writing a lot about how there's very little turnover, that workers are kind of staying put. Some would say stuck. Some would say happy. There's a lot to be happy about in this labor market. If you already have a job, you have stable wages, that's great. You may have some hybrid work from home, that's great. But there might not be a lot of upward mobility because we're not seeing the churn. So it's a mixed market. But if you're happy where you are, you're likely to stay happy because the wage growth has been fairly robust.
You know, I want to go back to where you began about youth unemployment, or the idea that teens are having a harder time getting a job. Is this an issue of the jobs not being available, or is this an issue of the jobs they want not being available, that they get out of college and they want to go to an office and push some paper around rather than say, I'm sorry, go become a plumber or an electrician or build a data center?
I don't know if they want to go to an office at all, Bramo. For some of them.
True. Stay home and push papers and feed their pets. I'm just seriously curious about whether it's a skills mismatch here.
Well, when I talk about early career, I'm talking about the earliest. I remember my summer job as a 16-year-old at a pizza place with irregular hours, irregular pay, but lots of cool points because I could feed my friends free food. Then I went to a library with really predictable hours and pay, and the economist in me loved that more. But we're not even seeing that. We're not even seeing the retail sector or the leisure or hospitality sector take very young workers and teach them about the labor market. There are things that you can only learn through experience. And even a 16, 18, 19-year-old gains from being invited into a summer hire. We're not seeing it in the same levels. And then you get to slightly older workers, those who are in college, who may be home for the summer. Again, unemployment is higher for them now than we've seen in the last few years. And then you get to the college grads, and we already know, we've told that story, that it is harder to enter into this labor market. So our early career trajectory is stagnating along with this low hire, low fire labor market. It's something we should talk about more and not dismiss when we think about the health of the labor market.
I washed dishes and refined my Italian speaking skills.
There you
I've really
go.
got a deep understanding of cursing in Italian. Right?
And the necessary suds.
And an unappreciated skill in the labor market, for sure.
Without a doubt. You should see how fast I am at home now, just clearing the kitchen.
You know what? If you need to practice, I think we got a sink full if you want to come practice.
I'll give that a miss. I'll practice cursing, though. Commercial breaks, we can do that if you want.
I've heard that, actually.
No?
Yes,
Nita, thank you. Appreciate it. Nita Richardson of ADP. Let's get you an update on stories worldwide. Let's get to your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, we're recapping the data we just got. Jobless claims coming in at 215,000 last week, slightly lower than the estimated number of 217,000. Continuing claims for the week in line with expectations, coming in at 1.81 million. SpaceX AI launching its latest chatbot, Grok 4.5, to the general public. Elon Musk's company calling it the company's most intelligent offering to date. It's designed for coding and agentic tasks. Micron shares are higher. The memory giant announcing it'll invest up to $3 billion for U.S. semiconductors in an effort to bolster the supply chain stateside, including $500 million in financing support for Taiwanese chipmaker Global Wafers facility in Texas. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thanks for the update. Appreciate it. Up next on the programme, we'll set you up for the day and the week ahead. Plus, we'll touch base with Matt Sturkey of Northwestern Mutual, seeing long-term opportunities in AI as SK Hynix gears up to join the NASDAQ.
we are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel. And energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
When we watch the other parts of the market soften up and sell off, we actually view that as an opportunity, because if we're right about this whole AI productivity story, a rising tide will lift all ships, and that'll be good for the rest of the market, not just the tech, which has benefited up until this point.
That was David Levitz of JP Morgan Asset Management weighing in on the tech trade and the equity market. Your equity market doing better, up 0.25% on the S&P, up by close to 1 percentage point on the Nasdaq as we head towards the opening bout, 45 minutes away. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We are seeing Meta shares falling in the pre-market, down 3.3% on this reporting from Reuters that the company plans to begin production of its first in-house AI chip in September. This could eventually lower Meta's computing costs, but it puts the focus squarely back into how much this company is spending on AI infrastructure. So this is a very different message from our reporting last week that Meta is planning to monetize that infrastructure through a cloud business, and it is a very different stock market reaction. While Meta is under pressure, some of the companies helping it build that chip are seeing gains. Broadcom is up 3.8% in the pre-market. It is helping design the chip, while TSMC, which will help manufacture it, is also higher. We are also seeing SanDisk rise 5.4% as Reuters reports that it secured a long-term supply agreement with Meta in flash storage. And on the other side, we are seeing shares of IBM and Microsoft falling in the pre-market on our reporting that Starbucks is looking to build more of its own software using AI. And so it's developing tools that could eventually replace some of the software that it buys from both of these companies. John?
Yahira, thank you. Thanks for this morning. Looking ahead to the day ahead and the week ahead, check it out. In the next day or so, we should hear about SK Hynix ADR pricing. They'll start trading tomorrow. Look out for that. Plus, we'll get numbers from Delta. And then it's Tuesday. Look at this for a headline act. Check it out. JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, Citi, all reporting earnings on the same morning. After we wrap up all of that, we'll get CPI data at 8:30 Eastern time, and then later on that morning, Fed Chair Kevin Walsh testifying on Capitol Hill, squeezing all of that into just a few hours.
If you want a fire hose, here it is. And key question is, how thematic will some of these threads be? Inflation, number one. Geopolitical risk, number two. Strength of consumer is number three. And then, of course, the Fed's reaction function really plays into all of those things. Will Kevin Walsh give any sense of that? I do think that the big banks are going to be important, though, to give a sense of the corporate confidence going forward as well, as we were speaking about with Vitas Perduto.
Of the three, how would you rank them of importance for you? As you think about Tuesday, what's more important?
I would say earnings. I think earnings absolutely, because right now CPI is potentially volatile as a result of a number of different characteristics, although another data point to potentially go into the FOMC's meeting. And I don't expect Kevin Warsh to say anything. Ultimately, I think that he's going to be pressured by a whole host of people, and he's going to stick to his script. That's forward guidance. I'm not going to provide that to you. Ultimately, we're looking at all things, but we're going to bring inflation down. Inflation's a priority. People will freak out. He'll say inflation's a priority. We have some disinflationary aspects.
You write the script for him.
I mean, it's how do you get around actually saying anything that could potentially?
That's how I'd stack it too, by the way.
Yeah.
I think everything goes downstream from the banks. The banks are going to be financing all this investment. All this investment will generate inflation. There's your CPI next in the order. And then the Fed's got to respond to all of that, because a lot of this right now is out of their hands. Even with rates where they are, a lot of this is out of their hands.
And Kevin Warsh, in some ways, is saying, over to you, markets. Let's figure out what you think is going to be the path of travel, and we're going to look at you as one of our indicators.
Let's look to Micron. Let's look to Micron and some of the investment we're seeing right now. Micron up by more than 6%, climbing higher this morning. The company pledging up to $3 billion to strengthen the U.S. semiconductor supply chain. Ed Ludlow tracking a story for us. Ed, what's your reaction to that? Number's not massive. What's your response?
The number's not massive, but every memory chip starts with a silicon wafer, and silicon wafers take a very long time and lots of money to get right on the yield side. So $3 billion, $500 million specifically, is going to Global Wafers, a supplier of silicon wafers. I would also point out, for size and scope, like Micron this week made a $250 million contribution to the Trump Accounts initiative. So this is a company that's committed to spend around $200 billion over time to onshore its supply chain and build its own capacity in the United States. The reaction in the stock is interesting. That is a big number and a big move. But we've talked endlessly about the pressure memory names have been under, and maybe it's more in the context of SK. That this is kind of getting now some trade and some enthusiasm.
So, Ed, just build on that. SK, Hynix is coming out with a big debt offering, equity offering rather, tapping the equity market.
Yeah.
ADR's listing here in America. What's behind that move?
Yeah, so like on the face of it, you go, okay, they're going to raise about $24 to $28 billion, depending on where we net out. They need to build out capacity. But there's been a sort of valuation gap. They've traded at a discount to their peers, which are Micron and Samsung. Around the world, portfolio managers would love to have more access to Korean technology and Korean names, and they can't for various reasons. So that's a psychological part of it. And SK, it's about 57–60% of the high bandwidth memory market. So every time we're talking about the crunch and supply crunch in HBM chips, SK is at the heart of that AI story. That's one reason that the market's paying attention. I've learned a really interesting lesson of late, including with SpaceX, John, which is like the headline is 7 times oversubscribed in terms of demand. I would think about it more on a dollar basis, right? If you're doing 7x a $28 billion deal, that's a big dollar number. And that probably gives you a sense of the attitude and enthusiasm towards it.
Ed, thank you, buddy. As always, Ed Ludlow on Bloomberg Tech in a few hours' time. Look out for that. And don't miss Ed's interview with the SK Hynix chairman tomorrow at 10:30 Eastern time, as we're having that conversation about those numbers coming out of Micron. Just to put a line on it, $250 billion through 2035. They've raised their planned US investments to more than $250 billion, and that is up from a previous number of, I believe, $200 billion, Bramo. So that is a big number.
Yeah, and talking about how this investment will support their goal of producing 40% of their DRAM in the United States. So taking those Taiwanese companies' prowess, understanding, intelligence, bringing it to factories in the United States to have domestic production facilities.
This is the take from Matt Stuckey of Northwestern Mutual, writing, AI demand remains strong and continues to support long-term growth opportunities. Matt joins us now for more. Matt, welcome. How strong is the demand for some of these offerings to invest all of this money in this theme?
Well, I mean, I think you talked about, just briefly about how oversubscribed SK's ADR listing is going to be. But, I think also you look at these companies' capital allocation plans. We talked about Micron spending $250 billion, upping that from $200. Just, a few weeks ago, we talked about how SK Hynix and Samsung, issued out their capital budgets, and that level at about $512 billion was 50% above analyst estimates. And so not only are investors excited about the future, but these companies themselves are putting their money where their mouth is in terms of expanding their capacity to meet the demand of the moment.
Do you think, Matt, rate increases would make a difference to these investment numbers?
Not at a 25 or 50 basis point level, Jonathan. I think in terms of the roadmap that these companies are having, it is kind of more of a secular view. And while a policy rate increase is a headwind to a little bit of the financing costs, it's not hugely material for these companies when credit spreads are as tight as what they are. However, with hyperscalers tapping the debt markets and the equity markets for capital, it does make it more capital market sensitive just by nature. And so, that fragility lens, in terms of how you're financing these things is higher versus just financing it through operating cash flows. But an incremental move by a policymaker, 25 or 50 basis points as is priced in the forward curve is unlikely to really materially deter these plans.
How actively, Matt, are you switching from one company, one loved tech name to another? Because it seems like there's been a lot of rotation within the space, not only semiconductors and hyperscalers, but also within names themselves. I'm thinking of the semi rally that has left NVIDIA cold. I mean, they suddenly have been left behind. At what point do you try to play some of the divergences that you see in markets?
By nature, we're longer term investors, and so our turnover is probably less than the other managers that are out there. We've had exposure to, not directly to the Microns of the world, but the companies around that ecosystem that sell directly to the Microns of the world. So the semi-cap equipment players have been long-term holds of ours, and we continue to like those names. And we like the NVIDIAs of the world. Our most recent move has been, though, to increase diversification, though. And this is separate from what we've been discussing in terms of the semiconductor space, but to kind of increase diversification through kind of some inflation-sensitive asset classes. So we recently increased our REIT allocation as an example. So we're longer-term nature in our thinking that kind of reduces turnover, but we're also looking to achieve higher levels of diversification in our portfolios today.
Matt, good to see you. It always is. Thank you, sir. Matt Stuckey there of Northwestern Mutual. These numbers aren't getting smaller, are they? In many places, they're getting bigger.
The idea that Micron went from a $200 billion plan investment to $250 billion plan investment, the fact that SK Hynix is being given a green light to raise even more money in U.S. equity and potentially even debt markets as a result of the demand for their IPOs, for their equity sale, gives you a sense of how much appetite there still is.
The story's not changing, but the price of the story is. It's getting more costlier to make some of these investments in certain places. Which is why some of these guys are doing what they're doing, right? Because there's so much demand and prices are increasing by so much, they can build out this capacity.
There are a couple of different things happening here. On one hand, SK Hynix wants to build out capacity because of how much demand there is for the memory chips. How much is the Micron effort to move production to places like Idaho really being driven also by a number of policy shifts in the United States, as well as just around the world to make supply chains more domestic, more resilient?
Nasdaq futures this morning up by 0.9. Coming up tomorrow, we'll catch up with George Goncalves of MUFG, Lisa Shallard of Morgan Stanley. Very punchy call from Lisa on chips. Ed Hosseini of Columbia Threadneedle joined us, and Nancy Lazar of Piper Sandler from New York City this morning. Good morning. This was Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid? I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Trying to turn around 2 days of losses for this S&P. 30 minutes to go until the start of cash trading. I'm Danny Berger.
And I'm Bonnie Quinn, and you're watching Open Interest.
Coming up, chipmakers lead stocks higher as SK Hynix gears up for its U.S. debut.
Retail warning signals. Pepsi says shoppers pulled back in the second quarter, weighing on sales.
And tensions simmer in the Middle East as the U.S. and Iran exchange fresh strikes.
Well, let's get to some stocks to watch. Interestingly, it's the chip stocks, wouldn't you know, but this time it's for better reasons than yesterday. It looks like there was some stabilization, and so now we're seeing chip stocks rising. Also a little bit of a safe haven trade after escalation appeared to just take a little pause for a moment. Also, we're preparing for a huge listing of SK Hynix that starts tomorrow, and Micron is planning to spend $250 billion on U.S. investments through 2035. That said, Meta is an exception today. It's lower by almost 4%. It's planning to start building chips in September in Canada, and that is according to a report, Danny.
And Meta really struggling to catch a bid over the past month or so. We've also had a lot of retail earnings. You pointed this out, Vonnie. Pepsi, they had sales growth that disappointed. They did slash some prices. They did, though, I will point out, raise the price of their smaller bags of chips. They say inflation's a problem. That means sales are a problem. Pepsi down 3%. Levi and Costco also falling. Costco June sales were shy of estimates in a sign of consumer weakness. And Levi, their upgrade to expectations wasn't enough to satisfy investor expectations, Vonnie.
All right. I can't believe we're into earnings season already. But let's get back to the AI rebound with Bloomberg Tech host Ed Ludlow. Ed, was this a safety trade this morning a little bit because, you know, there was an escalation to the rhetoric, at least in the Middle East yesterday? Or was it just that, you know, Korea looks a little settled now and maybe we can buy the dip again?
There is evidence that, you know, in the 24-hour trading period, what happens in Korea follows through to the US session, right? We learned that the hard way when Samsung had their prelim numbers. It's a confluence of factors, right? News cycle is crazy this morning. A lot of upside. Micron coming out with, you know, the increased investment commitment, which is seen as a good thing. And I think there is a lot of sort of treading water to SK, right? Pricing into trade tomorrow of ADRs. And, you know, one reason that SK is doing this, not just to sort of go through the mechanism of raising capital, it's the vibe. You know, US investors kind of get the AI story.
Can I just say that it's incredible that the vibes are still immaculate, if you will, despite this volatility that we've had, that they're still 7 times oversubscribed.
It's also like not universally true, that attitude. You know, all week long on Bloomberg Television, people that we care about have been saying, well, we actually see a rotation out of chip stocks into, for example, hyperscalers, Mike Wilson, Morgan Stanley. Why? Well, in part because of the near-term performance, offer an insane quarter of gains. You know, like you can look at any case study. SK Hynix has had a rough go of it in Korea in the last few days. It's still up 250% year to date and almost 1,800% over 12 months. Like, it was time to cool it for a lot of people.
How is Meta suddenly turning into a chip maker? I mean, and it's spending a lot of money and it's doing it in Canada.
What should I say? I take a little bit of grievance with that because Meta's down on a Reuters report that their MTIA Meta Training and Inference Accelerator 400, codename Iris, will go into production in September. Riley and I reported that in March. None of it's new. What's new is that it's based on an internal memo where Mark Zuckerberg is telling Meta employees that the cost of relying on NVIDIA is painful. But the rationale for Meta, as many others are doing, of having their own in-house silicon program alongside being big buyers of NVIDIA and AMD GPUs, is that the diversity helps and it de-risks against tight supply in the future, pricing swings, etc. So those kind of details in the Reuters report are somewhat incremental. And I would just say go back and read the Bloomberg, or watch the video, by the way, because they let me go into the lab and play with it. But you know, that roadmap, Meta had committed to a 6-month cadence of going generation to generation on its own chips anyway. And it had already gone through testing and was headed towards production when I went to look at it in March. So, yeah.
I would always recommend an Ed Ludlow exclusive over everything else.
I appreciate that.
Thank you so much for joining us. Ed. It's such a pleasure to have you in New York. It's Bloomberg Tech's Ed Ludlow. And, of course, tune in to Bloomberg Tech at 11 a.m. And more importantly, well, not more importantly, all shows are equally important, but Ed is going to be speaking with the SK Hynix chairman, Che Tae-wan, at 10:30 a.m. right here on Bloomberg TV. Now, Pepsi earnings, they did miss estimates. Price cuts failed to spur sales growth, with executives blaming inflationary pressures. Bloomberg Intelligence senior analyst Ken Shea covers the company and joins us now. Ken, where did Pepsi go wrong? Did they just need to slash prices even more?
Yeah, hi, Danny. You know, PepsiCo's, their game plan earlier in the year was to drive growth and improve margins at their big Pepsi Foods division, a third of their sales, 40% of their operating profits, big division. The problem was higher gas prices dissuaded consumers to go to the gas pump, go to the grocery shopping. You know, traffic at the places where it sells a lot of these goods just kind of fell off. So the game plan hasn't changed. It's just that the way they're going to get there at the end of the year, they reiterated guidance, is going to require a little more in terms of price cuts and sustain strong performance stronger than expected performance by its international divisions.
Ken, is Pepsi following the Elliott playbook, and what else does Elliott wanted to do? Stat.
Well, the Elliott playbook was really, you know, get better growth out of its highly mature Pepsi Foods division, and to a lesser extent, beverages as well. And, you know, they're making progress. But again, you know, when these plans were set, that was before, you know, the war broke out and gas prices shot through the ceiling and consumers pulled back. So the game plan, like I mentioned, hasn't changed. And I think Elliott has to consider, you know, some of the macro events that are out of Pepsi's control here. The good news from this quarter is that, aside from, you know, basically meeting or slightly beating expectations on the top and bottom line, or that the international divisions were just so strong. They really performed really, really well. And I think they were in a position, after years of investment of growing scale in these units, can continue to do so and kind of mitigate a lot of the pressures on food and beverages North America.
All right, Ken, thank you so much. That is Ken Shea from Bloomberg Intelligence. And Pepsi down about 3.5% now in the pre-market. Brent, though, climbing back towards $79 a barrel as the U.S. and Iran exchange strikes for a second straight day. President Trump said aboard Air Force One that retaliation would be much stronger.
We just hit them very hard, and I say we hit them 20 to 1. Every time they hit us, we're going to hit them 20. They did a little something today, but it was really retribution for last night. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
Bloomberg chief political correspondent and surveillance co-host Anne-Marie Hordern joins us now from Ankara following the NATO summit. Anne-Marie, can we expect even more strikes, or should we expect things to dampen down for a moment at least until the president gets back to the United States?
Well, potentially. Those strikes happened just hours after he left Ankara, Turkey. It was a second day in a row. And according to CENTCOM, this came at the direction, obviously, of the president, the commander-in-chief, with the goal to degrade Iran's capability to go after commercial vessels in the Strait of Hormuz. So going after and hitting 90 targets really along the coastline when it comes to military naval logistics, when it comes to storage for drones and missiles. These are the kind of facilities the U.S. was targeting. And then we had the Iranian response, and they went after U.S. forces and bases in Kuwait, Bahrain, as well as another military logistical center for the United States in Qatar. It's very confusing right now about where exactly we are in this moment of time between this truce. The president said the ceasefire is off. When pressed by reporters aboard Air Force One on his way back to Washington, he said he didn't think so in terms of, is this going to be a full-out war? So now we're in this standstill where the market and the world is just waiting to see how long this might last. Is this the new status quo? And how much more for the tit-for-tat escalation of strikes, not just rhetoric, we may see out of Washington and Tehran?
And the background for all this, Anne-Marie, is where you are, reporting from Ankara just after the NATO meetings and the NATO summit, having this escalation. What has been the posture, the opinions, and the role of other NATO members as escalation occurs again?
Well, you had the NATO Secretary General come out and said he thought it was appropriate that the United States hit Iran as they broke the ceasefire when it came to that first day of strikes. Remember, the president did warn us that there was going to be a second day, possibly, he said. There possibly could be a second day of strikes. And you did see some countries come forward, like Turkey, saying they would be willing to send minesweepers to help the United States clear the Strait of Hormuz for any mines that have been dropped. But obviously, there's been a lot of friction between Washington and Brussels with the European allies, each of them taking a very different approach in how they would help the United States when it comes to the conflict of Iran. And this is where the president has had some issues with countries like Spain, Italy, and the United Kingdom. Potentially, it's going to get a lot harder for Europe at this moment. We just had some breaking news. Bloomberg reporting that Ras Laffan, this is the world's largest LNG gas plant in the world from Qatar. They are deciding to pull back and not ramp up that production given the latest tensions, and this may mean that it's just going to get a lot tighter when it comes to liquefied natural gas market.
Anne-Marie, thank you so much for joining us. Bloomberg's Anne-Marie Horduran reporting live from the NATO summit in Ankara, and what she's mentioning is perhaps part of the reason we've seen more aggressive pricing in European markets for hikes than here in the U.S. But even so, we have seen yields move higher in recent days. We're now pricing at about 50% odds that we get a hike, not this month, but in the next meeting. That starts to back off this morning. We're down by about a basis point. The S&P is able to rally 0.25%. The NASDAQ 100 up 1%. Semis continue another day of gains after the gain yesterday, despite wider losses for the S&P 500. Brent crude, not a huge reaction, Vonnie, still up 1/3%, but under $79 a barrel.
Taking a little bit of a pause there after that gain yesterday. Well, maybe we should take a look at some other movers on the radar. Mattel down as Goldman Sachs cut it to sell with a street low price target of $12.
And then there's Porsche reporting its worst sales in 6 years. Weak demand in North America and China. Shares down 0.7.
And Starbucks developing in-house tools, AI tools with the help of AI that could replace some software applications that it buys now from Microsoft and IBM.
And we're going to talk about this story with our BI analyst, Anurag Rana, later in the show, because that is fascinating. It's what software makers said wouldn't happen, seems to be happening. But first, coming up, AstraZeneca down after a failed drug trial, risks hurting the brand's credibility of airtight final stage drug trials. What went wrong? We discuss next, right here on Open Interest.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh, boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Some more details coming through about SK Hynix's cross-listing expected tomorrow. We already know it was 7 times oversubscribed. SK Hynix now set to guide the U.S. offering price to $149 per ADR. That would imply a 3.1% gain versus its South Korea close. Interesting the reason they might be gaining there. Part of the reason they want to list in the U.S. is to catch up with the valuations of their American counterparts. They now trade at about a 5 times forward earnings. Micron trades at 6.5 times forward earnings. So assuming this pricing holds, we would see SK Hynix trade at 6.4 times forward earnings. So just catching up to Micron. So the pricing of that certainly makes sense in the context. And tomorrow, be sure not to miss Ed Ludlow. He'll be speaking with the SK Hynix chairman, Chae Tae-won, at 10:30 a.m. right here on Bloomberg. Vonnie, what else are you looking at?
Well, high interest, Danny, is what I'm looking at. I look at what else is making headlines around the world. Eric Trump's Bitcoin bet has erased more than $600 million from the family's fortune. His company, American Bitcoin, is experiencing a deep downturn, with shares falling over 94% from its peak as it sticks with a crypto-first strategy, even as rivals pivot to AI data centers. Russell Investments being acquired by B Capital-led group, including CalPERS, in a deal valued at $2.8 billion. The new owners say they'll invest heavily in AI to build a more customized portfolio set. The $416 billion asset manager expected to remain under current leadership after the deal closes next year. AstraZeneca shares are slumping after it suffered a rare setback in a trial of a new heart drug. The results blindsided analysts who say trials are meant to be airtight, and the findings could be a blow to Astra's credibility, Danny.
Let's talk more just about that, Vonnie. Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli joins us now. And Sam, Vonnie said it. I mean, the AstraZeneca team has really built up this reputation for airtight final stage trials. So what went wrong that this wasn't a success?
I mean, they have, but look, clinical trials, biology has a nasty habit of trumping you sometimes, of getting you, catching you off target. I mean, you know, if Lionel Messi or one of the big football players misses a penalty, you don't write them off, right? Or you don't, you know, it doesn't change the trajectory of the game significantly. So here, I think it's a bit unfair to particularly pick on this issue. The point for AstraZeneca is that this was supposed to be the less risky of the trials that were supposed to read out. And now we have 2 other sets of data coming by the end of the year, where people have already assumed there's a high risk of I don't want to say failure, but disappointment. So now it's hard to know who's going to be stepping in to buy ahead of those readouts.
Yeah, I mean, they're essentially all moonshots, Sam, right? I mean, you hope that one of these will work and you try and do your best to make sure the outcome is positive, but you just never know. And the ones you think may not have the better chance may end up being the ones that are the moneymakers for you. Is there anything salvageable from this for AstraZeneca, or does it have to throw away the technology completely?
Oh, not at all. The product's still on the market. This was going to be an extra layer, a significant layer on top of what they already have in terms of approval. So this is the for a cardio disease that's caused by abnormal accumulation of a protein in the heart muscle. So they have an approval. This is going to be heading to the $1.5 to $1.8 billion revenue anyway. And what I think has upset people here, or at least has created a situation here, is that it's hard to see how people are going to step in to buy unless they're long-term investors and look at the value proposition in general. So, but I mean, let's face it, these companies they're not complete moonshots. They do phase ones, they do phase twos, they do translational biology. A lot of that happens before they go into a very expensive phase three. Some companies have the luxury of taking bigger risk because they have the cash flow to do that, and they want to do that. They have the different risk appetite to others. So I think AstraZeneca probably belongs to that category of they're prepared to take bigger risks in some things that they're doing.
And I guess part of this is all part of the goal of hitting $80 billion in sales by 2030. Sam, how important is it that AstraZeneca also does more to expand away from what they're known for, which is oncology? Maybe not away for it, but add on these additional types of treatments and diseases.
Yeah, I mean, it's important. Oncology is one of their key areas, probably the largest space that they're in. The point is they do have a whole bunch of other work that they're doing, PCSK9 for lipids, a drug for obesity, which we'll have to see how that pans out. They're moving into different areas in general. The thing is, the company has talked about today, tomorrow, and the day after tomorrow. I think what people are going to start beginning to think about now, remember, it's 2026. The day after tomorrow is 2030. So as you go to 27, people are going to start thinking about, sorry about this, the day after tomorrow, right? What's going to be driving there? And it becomes less obvious. So that's where I think folks get a bit more nervous when it comes to failures for that longer term support.
Sam, always a clinic, literally. Thank you so much, Sam Fazeli from Bloomberg Intelligence. Coming up, Rayanne Mitrione tells us why she's looking through market risks, including geopolitics, inflation, tariffs, interest rates. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
market risks continue to get chugged off because of earnings. Callan Family Office's Rayanne Mitrione says whether it's geopolitics, inflation, tariffs, or interest rates, these factors may influence sentiment and market direction in the short term. But over time, earnings drive markets. Our focus remains on the underlying fundamentals, which continue to support a positive outlook. Let's bring in Callan Family Office market strategist and founding partner, Rayanne Mitrione. Rayanne, great to see you this morning. And look, your call for why you are bullish has been echoed by so many. And I just wonder what you think of the bar for earnings that has been set. We've seen a lot of earnings upgrades. Are you very confident that this is a corporate America that's going to be able to beat it?
Good morning, Danny. The bar is high, and there's no doubt about that. I mean, expectations for earnings growth this quarter are again over 20%, which would be the second straight quarter of over 20% growth, the seventh consecutive quarter of double-digit growth. So there's a lot of optimism that's been priced in. But what we've seen is that the earnings strength that we've seen recently really has been broad-based. It's been across sectors. It's been in mid-cap and small cap in addition to large cap. So it's not just concentrated in tech, but the optimism is high, and we are continuing to see analysts increase estimates for the remainder of this year and into next year. So we need to see the companies deliver on these forecasts in order to keep seeing the stock prices move up as well. But earnings have been growing so quickly that the market's actually a little bit cheaper than it was at the beginning of the year, with PE for the S&P down to 20 from about 23 to start the year. So we have seen that growth, but we need to see it continue for stock prices to hold up.
Would it give you pause, Rayanne, though, that it seems like it doesn't take that much for a massive repricing to happen? So, for example, we just had a massive repricing of memory chips, right, even though they were up a phenomenal amount. After Kevin Warsh took the helm of the Fed, we had a massive repricing in the bond market.
Absolutely, and especially when you're looking at the chip sector or technology in general and anything tied to the AI trade, we've seen those stocks move up so much, so quickly, that any kind of concern that comes up, whether it's concerns around the return on investment we'll get, or whether the demand is still there, or if we're seeing the productivity gains that we all want to see from this, like any question to that can move those quickly, because the higher the valuations, the more susceptible they are to pullbacks on any kind of potentially negative news. But we do think there's still more room to run. We're still in relatively early stages of AI adoption. So the demand should continue for some time, but we do expect that there could be more volatility in those areas going forward.
Rand, just quickly, I mean, some people have called it a rotation, but this is a NASDAQ that's moved less than 1% at 16 out of the past 20 sessions. It's been pretty violent. Is this a rotation? Have we found new market leadership? Has something changed?
We have seen a broadening out, and I do think there's some of that is really as a rotation that, just because of the returns we've seen, it's normal to see some profit taking. I don't know that it's necessarily that there isn't confidence in the AI trade anymore, but there are other areas of the market that have been doing well, and we've seen small cap returns have doubled that of the S&P this year, and emerging markets are up over 20%. So we've seen really strong returns in other areas as well.
Right.
And so we do think that there is rebalancing taking place, but not that we have serious concerns.
We're going to continue this thought with Rayanne. She's sticking around through the opening bell, Danny.
tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Let's get this trading day started. You are watching Bloomberg Open Interest. I'm Danny Berger. Seconds till the open, and it is a rebound. The S&P is up 0.25% after falling 2 consecutive sessions. Yesterday it fell, even though, and we had 78% of members tumble, so it was a pretty widespread fall that we saw. The Nasdaq up nearly 1%. That did okay yesterday because the chip makers were doing fine, and they're doing fine yet again today. The Dow Jones up 0.1%. Bringing the opening bell down at the New York Stock Exchange, we have Azul. They're Brazilian airlines that have come here to list in the U.S. away from the New York Stock Exchange Americas. So something's in the air of wanting to come and list here in America. Of course, we're going to get SK Hynix tomorrow. At the Nasdaq, you have Iron Dome because SPACs are back, baby. It is a SPAC. They're called the Iron Dome because they're specifically looking for Israeli tech companies, Israel's Iron Dome, et cetera, et cetera. But yeah, it's been pretty amazing to look at the SPAC volume that's come so far this year, a sign of just how much liquidity and robust capital markets are. Just looking at some of the big tech players this morning, NVIDIA doing a whole lot of nothing. I had a good day yesterday on reports that China would allow AI companies to buy H200 chips. Micron also having a very good day. It is up 6.1%. It's going to be spending $250 billion on U.S. investments through 2035. We're also going to get an SK Hynix listing, as I mentioned, tomorrow too, so that should shake things up. Meta, though, having a very not so good run. Reuters repeating, let's say, a Bloomberg scoop that we had some time ago that it's going to start building chips in September. Meta shares, those are off on about 4%.
Yep, dull time for Meta indeed. Lots of retail headlines as well, Danny. Pepsi's sales growth disappointed after it slashed prices. Levi's forecasts, meanwhile, underwhelmed investors. And then also Costco. June sales there were just shy of estimates. It's all signals of consumer weakness and just a little bit troubling.
And we're back with Callan Family Office market strategist, founding partner, Rayanne Mitrione. Rayanne, I actually want to start you with that, with the consumer earnings that we've gotten. Pepsi was remarkably weak. Levi's didn't live up to expectations. I was looking at a report from Deloitte this morning saying that back-to-school shopping would be down 6% this year because of economic uncertainty. Is this a time to rotate away from consumer names? Is the consumer not as strong as it once was?
I do think there has been some pressure increasing on the consumer. I mean, as we've seen, elevated prices and higher inflation over the last few months. It's certainly something to watch. I mean, the commentary that we got throughout last quarter's earnings season painted a pretty stable picture of the consumer overall. So that's definitely something that we want to be looking at throughout this earnings season when we're listening to the consumer companies, when we're listening to the bank stocks, and really everything, because that is such a big driver of the economy in the U.S. And it seems like we're off to some mixed results to start. So it is something to keep a close eye on.
If you want to diversify, Rayan, what do? Because if you decide to get out of the US and diversify geographically, for example, it's still very difficult to get away from the AI trade. As you point out, 30% of the MSCI EM index is, your 3 top AI companies.
That's very true. The AI trade really is permeating a lot of different parts of the market. And I don't think that's a bad thing, because they can still behave differently at different times. But we do still think emerging markets are a good place to be invested in, a diversifying tool. And there are parts within the emerging markets index that are very different and outside the AI trade that have also been doing well and having strong earnings. The developed international markets have a much lower exposure to technology overall, and especially, the leaders in the AI trade. So that's another way to diversify. And then again, within the US, just looking at different sectors and investing in value stocks or small caps and mid caps. Again, there are exposures to that trade really throughout, but there are ways that you can really diversify your portfolio to have some benefits there.
But maybe you don't even need to go abroad to get EM stocks. We're going to get SK Hynix's listing tomorrow. Rayan, how are you thinking about that? Is that something you'd want to buy once it's listed here in America?
I mean, that company has had incredible growth. I mean, like we just talked about, it's the number 3 largest stock in the emerging markets index. It's, up over, it's more than tripled its stock price this year. And it's listing to raise more capital to, fuel more manufacturing capacity for all the demand that it can't keep up with. So it certainly is part of the same type of trade. But the company has been doing extraordinarily well and has, incredible demand in the pipeline. So I do think there's a place for those types of companies in portfolios.
What are you doing along the yield curve, Rayan, or where are you buying in terms of bonds, corporate bonds, munis, and so on? What's attractive right now?
Well, most of our clients are taxable investors. So a lot of our fixed income exposure is in the muni bond market. And the muni curve really is so incredibly steep right now. So there isn't a lot of value really on the short end relative to taxables. You have to go out a little bit farther. We're in more of an intermediate type duration mandate, but you really have to go out 15, 20 years to get really nice pickup in yield. But we're complementing that exposure with some muni high yields. We're also in some ways with private credit. So we're looking to diversify that exposure as well.
Curves are getting steeper throughout the U.S., Rayan. I was just looking, we have a chart of this at the 30-year real yield that is now the highest since 2008. This thing has just been creeping higher. Maybe it's because of higher growth expectations. Maybe we think the neutral rate's going to be higher, or just anxiety over ballooning government debt. Whatever the reason it is, this is typically something you'd see and say, this isn't great for risk assets. Why do you think it hasn't weighed on risk assets more, the ever creeping higher of long-term yields?
Yeah, that's a great point. And there's just been this optimism in the market. And even though it doesn't feel like there's a lot of exuberance, I mean, we're basically right at all-time highs. And I do think a lot of that has been propped up by the optimism around AI. The economy has remained strong. Consumers have continued to spend, but it's really so much dollars going into investment. And then really, again, the strong earnings picture that we just have companies continuing to do incredibly well. And I think that's very reassuring to the market. I mean, corporate America is doing incredibly well, and it's translating into the stock prices as well. And we actually have the equal weighted S&P is slightly ahead of the market weighted this year, which is also a healthy signal that we're no longer just being led by a handful of mega cap tech names.
Rayan, do you have anything in place, or maybe I should say, what do you have in place in case everything kicks off in the Middle East again, or we get, a massive sell-off in the chip trade for whatever reason, or the two together, like it looked like we were going to get just 2 days ago?
The narrative does keep changing on a daily basis, even maybe by the minute. So we really do believe in having diversified exposures. We want to make sure that we have the right risk tolerance for each client and the right amount in risk assets versus bonds versus alternatives, so that when we do get pullbacks in any particular area, where whatever the impact on the portfolio is not outside of expectations. I mean, most of our clients are ultra high net worth investors with multi-generational time horizons. So moves in the short term don't have too much of an impact, and we're really investing for the long term and want to maintain those exposures rather than trying to time the market, which can be complicated. So just having long-term diversified allocations and making shifts on the margin and rebalancing like we have been really has been helpful.
Rand, we're going to have to leave it there. Thank you so much for joining us this morning. Rand Mitrione from Callan Family Office. About 8 minutes into your trading day, let's get a check on these equity markets where you have a somewhat even split of gainers and losers, but still we are moving higher. Because it's the ping pong of the chip stocks. One day they're up, one day they're down. Today just so happens to be an up day with Micron talking about $250 billion worth of spending that they're going to be doing in the U.S. And we're all bracing for the SK Hynix listing. So leading us higher, Micron itself is adding 9.5 points to the S&P. The S&P is up 25 points. Broadcom, AMD, Applied Materials, Lam. I mean, it's a who's who of all of the top chip stocks after they also gained yesterday, too. That's all of the gainers, like up through number 11 of biggest contributors to adding on to the S&P 500. All of them are chip stocks. If you look at the downside, it's this trade-off. It's the check writers versus the check takers. The check writers are falling, and that is the big hyperscalers, the Mag 7, Microsoft, Meta, NVIDIA. Meta is now down 26% from its all-time high. So we are in a bear market, and that continues to build. Costco and some of these consumer names having a not good day. Pepsi, they had earnings. So those shares fall after they mix expectations. So if you look at the sectors, it is indeed those consumer staples that are having the worst day. Staples down 1.8%, followed by communications because of those hyperscalers. Energy, that is down after trending higher for the past 2 days on escalation in the Middle East. And as I mentioned, the chip stocks doing well. So Infotech, that is up 1.5%, Bonnie.
Well, we're going to continue this conversation, Danny, in just a moment. Coming up, as you say, chip makers rising ahead of SK Hynix's U.S. listing. We're going to be discussing all of it with Mandeep Singh in a moment. This is Bloomberg Open Interest.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujera report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Stellantis getting downgraded at JP Morgan, which says the car maker's recovery is taking longer than expected. The firm says Stellantis still needs about 14 months to see lower parts costs and won't recover quickly without major job cuts or factory reductions. Next, Five Below getting upgraded at Mizuho, which says the stock looks like it's better value now after its recent drop. The firm also says the company is keeping new customers and could do better than Wall Street expects later this year. Finally, a downgrade from KeyBank for Salesforce. The firm says it's not seeing signs that the company's AI product will drive faster growth. The firm says customer feedback has been weak and it's hard to find reasons to expect meaningful upside anytime soon. Just about 2.5% lower, Danny.
Yeah, and Salesforce also getting slammed with the rest of software on fears of Starbucks apparently axing a lot of their offerings, trying to turn in-house with AI. But on the other side of this trade, chip makers are once again driving the market. Semiconductor sentiment is improving, and demand for SK Hynix's U.S. listing is off the charts, 7 times oversubscribed. They're said to be guiding the offering at $149 in ADR. Let's bring in Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. And Mandeep, I heard you talk about this on Surveillance, about this idea of wanting higher valuations. And lo and behold, it looks like if they were to trade where they're pricing it, their valuations would essentially catch up with Micron.
And look, Micron has traditionally traded at almost a 30 to 35% premium to both SK and Samsung. And Samsung is more a conglomerate. So from a pure play perspective, I think that's one of the primary reasons they want to be listed on the U.S. exchange. And to my mind, it would be an easy trade to buy the U.S. ADR and sell the, the Kospi listed shares.
Well, that's just it. There is an opportunity there. But, I mean, are we sure that they're going to pop day one? It certainly seems like it's 7 times oversubscribed and so on, but you just never know, do you?
No, I think with anything in memory right now, given the fundamentals are so strong, I mean, these companies have really insane growth that is going to carry forward at least through 2027, and that's a consensus view.
But it's troubling though, Mandeep, how long before we have a 2 times leveraged SK Hynix, ETF here, and a 3 times, and then we have the same sort of trouble as Korea has been experiencing?
I think the Korean market, again, I don't know the dynamics over there, but it seems like a lot of profit taking and, consolidation, as opposed to, again, nobody can argue a change in fundamentals for these companies simply because they've guided to backlog. Like when Micron reported, they said they have $100 billion in backlog from these companies, hyperscalers and some other customers. So these companies have visibility now, and it's not a question of supply-demand affecting pricing anymore.
But to that point, Micron and some of its U.S. peers have shifted to this model of longer-term contracts.
Yeah.
Do we know if SK Hynix has done that? And if they haven't done that, can they be at the same valuation as Micron if they don't have that same business model?
I mean, to my mind, when you are signing this long-term contract, you are capping your pricing growth to an extent if you're a Micron. So from that perspective, I mean, pricing growth is what's driving these, insane growth numbers that these companies are printing. So at some level, Micron is saying, we want more visibility, and we can limit our pricing growth at this point. For someone like SK Hynix, which is 55% share in HBM, maybe they have more leverage and they don't have to do these pricing agreements. Although I think if you have to change the narrative, you do want to show a backlog similar to Micron, just to say we have visibility to 2030 and our growth is not going to fall off a cliff.
So what will U.S. investors expect, Mandeep? So first comes the ADR, next comes what? Is it investment? Is it sharing dividends? Is it buybacks? What is it?
I mean, I think the TSMC is a good proxy for what we can expect from, someone like SK Hynix. And again, TSMC ADRs trade at a slight premium to the Taiwan listing. And over time, I do expect, they will try to be good stewards in terms of, making sure the investors are happy around capital allocation, dividends, and buybacks. So to my mind, this is really aimed at narrowing that premium gap they have with Micron, and it's a good first step.
Simon White made this really interesting point on the MLive blog, basically asking, is demand capped at any point? And as we reach all of the possible users, and he basically made this argument that as the models get better, even if you have the same amount of users, you're still going to need more memory, and you're still going to need more inputs. I just wonder for these companies what it takes if ever, to stop viewing them as a boom and bust type industry and stop viewing them as cyclical?
Well, that's a big change, and I don't want to say the phrase "this time is different" simply because
that goes wrong a lot.
It goes wrong a lot. And look, I mean, at the end of the day, if this wasn't an oligopoly, and I was seeing new entrants enter the market the same way as we are seeing on the inference chip side, there are so many new inference chip players now. So to me, that is a threat. But there are no new memory players. We don't hear about them.
Why not?
It's just nobody wants to enter the business. There are upfront costs involved. We went through a painful phase of consolidation, and these companies have been very disciplined about their capex.
So they don't have that much of a moat, but effectively they do because it's so expensive to get into this business.
Yes.
All right, Mandeep, thank you so much. Mandeep Singh from Bloomberg Intelligence with all of the intelligence. And don't forget, tomorrow, Ed Ludlow is going to be right back here. He's going to be speaking with SK Hynix Chairman Che Tae-won at 10:30 a.m. Cannot wait for that interview, and it's going to take place in the middle of open interest, Danny.
Indeed. Coming up, IBM shares are under pressure after Starbucks revealed plans to build AI-powered software. In-house that conversation next. This is Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Stocks moving higher, really thanks to tech, thanks to the chip makers. Another day of a rally for them, but it was 2 consecutive days of declines for the S&P, up 0.33% and 1.25%. Russell 2000 small caps doing okay. Dow Jones just barely hanging in there. Micron, I mentioned the chip makers doing well. It indeed is, ahead of SK Hynix's listing tomorrow. Not great news for some of these consumer companies. Pepsi, a disappointment for their earnings because inflation means that consumers are spending less. Levi's, people wanted more of an upgrade. They didn't get a big enough one, so those shares down. Pepsi down 4%. This one is interesting, though. Starbucks trying to work alone when it comes to AI. So Starbucks shares are up 1.2% because they've started to ditch things like IBM and Microsoft, hoping that they can build something in-house. Bonnie.
Yeah, exactly. We're going to speak about this now with Bloomberg Intelligence senior analyst Anurag Rana, Danny, because as you say, Starbucks is ditching IBM essentially and Microsoft. Anurag, what can the AI tools that it's building do better and cheaper than the tools that Microsoft was allowing it use, and the same for the other companies that it was using?
Yeah. So the Bloomberg News story talks about a couple of tools that are very specific to either maintenance or tracking up some inventory. I personally don't think they're getting rid of either Windows or Office. Those are, very different products. And that's kind of our big thesis on the software space. That when you have critical mission specific software that a firm is running on, those are very tough to unseat. But if you have ancillary products or if you're selling software to smaller companies, those are the ones that are at risk. And frankly speaking, this is not the first time we're going to hear this. This is going to be a recurring theme over the next several years, that so and such company has taken AI and coded some portion of the software in-house.
Anurag, Matt and I, when we've talked to software executives on this show, they often bring up, like, we're okay because we have this data moat, et cetera, et cetera. But one of the things they also say is that these enterprises don't want to spend the time and personnel it takes to continue to update these systems and track them. And I wonder about that latter portion. If the moves from Starbucks suggest that that actually isn't a headwind, that there is a lower bar to replacing some of the software within enterprises.
See, one of the things I would say, even in the story, it mentioned by the end of their fiscal year, they're going to save $10 million. That's out of the $400 million that they spend right now. That's about 2.5%. Now, again, as I'm saying, I don't think these are the core systems of record that you have. There could be some add-ons out there. Now, there are engineers, smart engineers within the firm that can say, you know what, this is just a headache for us to deal with. We will take this out. But the bigger question is, what's going to happen if you start using AI and token costs? That's something that people are not even used to at this point. So, and I'm not saying that AI software is not going to be successful. I think it's going to be a very slow transition. And I also see the incumbents actually adding their own software products, which are much more nimbler, much more better in the years to come.
And essentially, maybe they just need to be cheaper. I mean, can AI really do things like track your inventory better than the program you already have installed, that you already know, and so on, Anurag?
See, again, a lot of that happens is this a custom software? Is this a company that's so unique that it needs to do things differently? I mean, frankly speaking, there is only one Starbucks. It's not as if, there are 50 banks that can use a common system. So I do not know what exactly that they are tracking, what they are tracking with it. But if it's a custom software built specifically for them, they have all the reason to say that, listen, let me do this in-house.
So, Anurag, just to take a giant step back to end this, the software stocks are selling off of the back of this, specifically IBM and Microsoft. Salesforce also had a downgrade, so that's not helping this. But is this a reason to turn negative on software stocks to see a company like Starbucks making this move?
I think the sentiment is going to be very negative in the near term because there is no catalyst at this point. And the catalyst is only going to come when we see a recovery in enterprise spending on the non-AI side of it. Right now, budgets are being allocated from all of tech into the AI infrastructure side of thing. And what that's doing, it's getting the consulting companies and it's killing the software companies. But sooner or later, they will have to come back and spend. Now, whether that's next year or so, we really don't know. But it's only at that time some of this narrative will change as it relates to software and consulting names.
Anurag, always a joy to have you on. Thank you so much. One of the best in the biz, Anurag Rana of Bloomberg Intelligence. Coming up in the next hour of Open Interest, Amy Wu Silverman on what she's watching in option markets. Plus, the Flexport CEO Ryan Peterson shares insight into the Strait of Hormuz traffic. And ICAP's Dan Suzuki on changes at the Fed and inflation risks. All of that to come in hour 2 of Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
From ABC News, I'm Sherry Preston. Former U.S. Olympian David Hearn has just appeared in D.C. Superior Court and pleaded not guilty through his attorney to the felony charge he faces for allegedly damaging the Lincoln Memorial reflecting pool. Outside the courtroom in Washington, there were protests in support of David Hearn, whose lawyer says the felony charge against his client is ridiculous. In Houston on Wednesday night, a large crowd marching through the city in protest of another ICE-involved fatal shooting. ABC's John Quinones reports from Houston.
A Mexican national, Salgado Araujo, had been living in the U.S. for more than 3 decades. His family saying he was a construction worker on his way to a work site in his van with other laborers. ICE officials said they were attempting to stop his car as part of a targeted enforcement operation. His family says he was close to obtaining legal status.
Immigration officials say the man tried to run them over with his vehicle, an allegation the family denies. The family is calling for a full independent investigation. Maine Democratic Senate candidate Graham Plattner out, the Democratic Party in, very busy finding a replacement after accusations of sex assault.
As he announced his intent to depart from the race, the embattled candidate insisted the allegations against him aren't true.
This is all false.
In an 11-minute online video, Graham Plattner defiantly said the decision to suspend his campaign was effectively made for him by the party establishment.
It is a system that is built structurally to make sure that movements like ours cannot flourish.
Maine's Democratic Party will now hold a convention to choose a new candidate to take on incumbent Republican Senator Susan Collins. Stephen Portnoy, ABC News, Washington.
Renewed airstrikes against Iran overnight, and Iran retaliating by firing on U.S. military facilities in Kuwait, Bahrain, and Qatar. You're listening to ABC News. President Trump last night departed Turkey in the old Air Force One, not the new one who flew there.
The new plane, donated by Qatar, reportedly does not have the same defensive capabilities. Trump denied security concerns were behind the switch.
So you're saying there wasn't a security concern?
No. Why would it? But passengers on the plane were told to keep their window shades down during the flight. The Qatari jet was flown separately to a base in the UK, where the president boarded it for the rest of the flight home.
ABC's Karen Hua. Looking for some one-of-a-kind movie memorabilia? ABC's Danny New has a preview of a sale that's taking bids now.
Many of the items from cinema's biggest hits ever are now going up for auction. For example, the hoverboards from Back to the Future Part 2. Brian Chanis from Heritage Auctions gave me a virtual tour of some of the biggest pieces of movie history that you can now bid on over the next week or so. After the Wicked craze of the last few years, maybe you fancy one of the hats the Wicked Witch of the West wore on screen in The Wizard of Oz. And speaking of headgear, how about Willy Wonka's golden top hat in Willy Wonka and the Chocolate Factory?
Singer Bonnie Tyler is
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube, streaming live on Bloomberg.com as well. Scarlett Fu is out on assignment today, not to worry. Jess Menton sitting in for the next 2 hours. Jess, thank you.
It's going to be fun. I heard you were at the beach yesterday.
Every day. Every day. The only thing that's keeping me from the beach is this next 2 hours here. We got a lot coming up here on the Bloomberg Intelligence program. We're checking with Dan Williams. He's a reporter for Bloomberg News. He's in Jerusalem. Get the latest reporting coming out of that part of the world. Ann Berry, founder and managing partner at Threadneedle, to get her thoughts on these markets. Elizabeth Behrman, a Bloomberg Autos industry team leader. Volkswagen, the labor folks at Volkswagen, they're pushing back on the CEO's push for cuts at that automaker. So we've got the latest there. Ken Shea, Bloomberg Intelligence consumer products analyst, will give us the latest breakdown of Pepsi earnings that reported today. But right now, let's go to Charlie Pell and kick this whole thing off with a Bloomberg Business Flash.
Hi, thank you very much, Paul Sweeney. You mentioned PepsiCo. Stock lower now by 5.3%. Interestingly, rival Coca-Cola also lower by 1.7%. This Bloomberg Business Flash is brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract. If you're right, learn more at ibkr.com/predictions. A Bloomberg exclusive Meta Platforms has unveiled a version of its AI model, Muse Smart 1.1, that includes a new paid tier for developers, marking the first time that Meta has charged businesses for access to its models. Our Kurt Wagner broke the story. He was talked with Mark Zuckerberg, and Kurt will be along to talk about it right here on Bloomberg Intelligence at 11:53 this morning. Meta Platforms trading lower by 1.6%. We are seeing a tech rally, however, today. Call it a rebound. We got NASDAQ up 0.5%. The NASDAQ 100 index up 1.4%. And our Mag 7 index, though, trading lower, down 1.1%. To put all of this in context, S&P 500 index up 25 now, up by about 0.3%. Dow Industrials up 64, up 0.1%. 10-year 4.55%. Spot gold up $51 the ounce, back at 41.27. That is a gain of 1.2%. We've got crude oil stabilizing. WTI now at 72.91 a barrel, down just about 0.9%. Barrel of Brent crude 77.55, lower today by 0.6%. Tech stocks getting a lift after SK Hynix drew strong demand ahead of its U.S. listing. Now this deal will raise about $24.5 billion for the memory giant. So what to read in to SK Hynix? Ethan Devitt is managing director of Menenda Group, and she was a guest this morning on Bloomberg Surveillance.
when we have a flow of assets into a highly desirable stock, and there will be some shareholders who cannot get access to the Korean stock market directly, it's inevitably going to take away from a similarly profiled area of a portfolio. So other high-tech stocks, other large cap tech stocks are likely to see flows out. Right. We saw flows out of Bitcoin into SpaceX, a similar kind of flow. I don't think it will affect the more defensive areas.
Ethan Devitt of Moneta, interviewed on surveillance. Sources tell Bloomberg SK Hynix is telling investors it does intend to price its U.S. listing at $149 per ADR. Recapping, stocks higher, S&P up 26 right now, up by about 0.4%. That, Jess and Paul, is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. We appreciate that. Jess Menton sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. As Charlie was just reporting, we got some green on the screen. And Jess, this morning when Tom and I started Bloomberg Surveillance, oil was up like 6 or 7%. Now it's down 1%. I have no idea how that commodity trades.
Right. I mean, especially just given the constant news that's coming out of the Middle East between Washington and Tehran. But of course, we were just talking about PepsiCo and Coca-Cola. But if you look at consumer staples, second worst industry group in the S&P 500 today, down more than 1.5%. But that's because the food and beverage group is down actually 1.5% because that's where PepsiCo is housed. So looking at that and the opposite end of that, obviously tech. And we're going to have Judy talk a little bit more about some of that.
I mean, I'm a Coke person, but you put a Pepsi in front of me, I'm just
I feel like I still like a good Pepsi.
I'm just as happy with that. All right, let's get a look at what's happening out there. Stocks on the move today. We can do that with Bloomberg's Judy LaGrue. Judy, what are you looking at?
Good morning, Paul. First and foremost, I'm looking at Micron, ticker MU. The stock today is surging as much as 8%, and it represents its largest intraday jump in 2 weeks. And this is coming as the company announced today that it is raising its planned spending on new plants in the U.S. to $250 billion. And this is to help meet demand for its memory chips, which has been fueled by the expansion of AI infrastructure and demand as well.
Yeah, and so obviously we're seeing the stocks today up about 5%. So that's why you're seeing the NASDAQ 100 up even higher there. What other stocks are you looking at right now?
Sure, Jess, I'm looking at AstraZeneca, ticker AZN. The stock is falling as much as 8.7%, and it is on track for the largest intraday drop since January. And this is after suffering a setback in a new heart drug trial. The company said that a gene slicer drug that it's developing with Ionis Pharmaceuticals failed to help prevent heart problems in patients with a rare and potentially fatal disease. So the important part here is that this announcement really blindsided analysts who pointed to management communication and discourse that maybe looked to be more confident than today's announcement might indicate. So looking at that for sure today.
And of course, we can't forget Meta. I know you're watching that. META is the ticker symbol on that. What's the latest when it comes to the Mag 7, which people have been trying to dub it the Lag 7 just because it had been underperforming some of its peers in recent weeks, and especially its software components. But what's the latest?
Sure. So a lot of things going on with Meta today. The stock is down, but of course, first and foremost, Reuters reported that Facebook plans to start manufacturing its AI chip in September. So that's one sort of item there. The second here, too, is that Meta is starting to charge developers for access to its models. And Mark Zuckerberg called this pricing very, quote, aggressive and attractive. So this is the first time Meta has charged developers. So interesting to watch here. What I also think is really interesting to look at as well is that Qualcomm is up on this news about 2% right now. So I think one thing to note here is that Meta is working with Broadcom to design, TSMC to manufacture, and it has some long-term agreements with Samsung for memory chips, SanDisk. So it's a really sort of, collaborative effort here. But again, looking at that stock movement, Meta, Qualcomm today as this news is coming out.
All right, Judy, thank you so much. Appreciate it. Judy LaGrue, she's a reporter for Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for the 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Just getting back to the geopolitics front here, the U.S. and Iran trade airstrikes as fears grow of a return to war. Let's get the latest reporting out of that part of the world. Dan Williams, reporter for Bloomberg News. He is based in Jerusalem. Hey, Dan, is the rhetoric and the action over the last 24 to 36 hours, has that set back materially Any potential for a near-term peace agreement here?
Yes. Clearly, when you resume a shooting war, even if it's beneath the threshold of the full-on war that was launched by Israel and the US against Iran on February 28th, it's worth remembering this time Israel is not involved in direct fire against Iran nor receiving it. Nonetheless, this is the most intense exchange of fire since the ceasefire was declared there. And yes, it would be bound to retard talks, although it's worth remembering that President Trump in Ankara, when he said the ceasefire is dead, in his opinion, also said that his negotiators are welcome to continue trying. So I think that as long as the United States keeps the negotiations in play as far as it's concerned, this wouldn't be over entirely. We wouldn't see a full return to war. And I think what both sides is trying to do now, either side is trying to prod the other into an understanding of the defiance that they retain. The Americans have been especially troubled, at least to judge by what Trump said in Ankara, that having given the Iranians, as he put it, a reprieve for the week-long funeral rites of their slain supreme leader, the signaling out of that funeral, including marches today with huge banners, has been messages, open threats to kill Trump. So I think the messaging there has been very off-putting to him. There may be a degree of personal pique here. It would seem that both sides are jockeying now to assert themselves should there be a continuation of those talks.
Dan, when it comes to the whipsawing rhetoric between Washington and Tehran, is this a negotiating tactic or is it a signal of an escalation in fighting?
It's definitely an escalation in fighting. There have been fatalities, at least on the Iranian side, and it's worth remembering that whereas previously with smaller exchanges, the United States focused on classic military targets are in and around the Strait of Hormuz, they've moved now deeper into infrastructure targets. There are reports of an attack near the Bushehr nuclear plant on the periphery, not the plant itself. Also, the destruction of a strategic train line in the northeastern part of Iran, not just used for commerce by the Iranians, but also used to bring mourners to Mashhad, which is going to be the final resting place of Khamenei, that slain supreme leader. So the messaging here is becoming more personal, more pointed, closer onto civilian targets or civilian infrastructure targets, though I imagine CENTCOM would argue that all of those targets struck had a military value. I think there's definitely an escalation there and a warning that the Iranians have a chance to get back to talks, to get back in line, to stop threatening shipping. It's worth remembering that their attacks on shipping in the Gulf is what set off this series of scores of retaliatory attacks by the US. But the Iranians so far have been mounting their own attacks, including what they call American targets in Gulf Arab countries. And just today, in the recent hours, missile attacks on Jordan. So they're also firing further afield, straying away from Gulf targets, westward toward a country that actually borders Israel. So that's worth watching, even though the Israelis now feel content and secure in not being part of this round of attacks. If those missile strikes by the Iranians go further west, end up endangering Israeli targets, we will see Israel entering the fray.
Dan, about 30 seconds left here. Is the feeling from your reporting that either the U.S. or the Iranians have real incentive to negotiate an end to this war, or are we just going to let this thing drag out?
I think the incentives will be the same as they were 3 weeks ago when they signed the MOU. The Iranians were feeling the pressure economically of not having free traffic in the Strait of Hormuz. So is the United States, at least through its allies in the region. And I hope and I anticipate that once the economic realities set in once more, Iran is not in a good position. It may be signaling defiance now around the funeral. It's possible that then when they take a more cold-eyed assessment of the economics of their situation, they might be brought about to re-enter the talks. That is yet to be seen. For now, they seem to be firing back to the best of their abilities, albeit not at Israel.
Dan, thank you so much. We always appreciate your reporting. Dan Williams, he's a reporter for Bloomberg News. He is based in Jerusalem, boots on the ground, as they say, getting the latest reporting from there. And again, Jess, it just seems like, I was talking to an oil analyst earlier in Bloomberg Surveillance. I mean, they're kind of modeling out this is going to drag out for a while. And so you better, if the energy markets are kind of feeling that. And again, we saw oil up 6-7% earlier this morning. It's now down 1%.
Yeah, and the energy sector in the S&P 500 down more than 1%. Yep. And obviously the question what that means for inflation and the Fed moving forward.
Absolutely. So the oil market's saying, all right, we can get comfortable with this level of hostility, I guess. Again, equity markets slightly higher. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ just dipping into the red right now, trading lower by 35 points, down 0.1%. S&P 500 index a little changed, up a point. The Dow pushing higher, up 41, now up by about 0.1%. We are seeing a resurgence in tech companies. That is giving a rebound of sorts on Wall Street. Stocks also rising as oil steadies. Right now we do have West Texas Intermediate Crude down by 1.3%, 72.55 a barrel on WTI. Brent, the global benchmark, 77.16 barrel of Brent, lower today right now by 1.1%. Again, the S&P little changed, up 3 points right now. The SOX, the Philadelphia Semiconductor Stock Exchange Index, ripping higher by 2.9%. Semis giving a lift to stocks. The VIX right around 17, and the 10-year at 4.55%. A 2-year currently at 4.17%. Gold up 1% to $41.18 the ounce. And again, West Texas Intermediate Crude, $72.59 a barrel. Earnings news. PepsiCo trading lower after saying consumers pulled back in the second quarter, slowing its efforts to revitalize its North American snack business. PepsiCo down 4.1%. Rival Coca-Cola down by 1.1%. Also out with earnings, Levi Strauss, another consumer-facing company, up today by 1.5%, $24.74 right now for Levi Strauss. Meta's Mark Zuckerberg is setting an aggressive price with Meta's pay-to-use AI. Meta Platforms has unveiled a version of its AI model, Mars Spark 1.1, that includes a new paid tier for developers. Our Kurt Wagner spoke about it with Mark Zuckerberg. He broke the news, and he'll be along to talk about it right here, 11:53 a.m. on Bloomberg Intelligence. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Jess and Paul, that is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much for that. We appreciate it. Jess Metton sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. When you think about the war in Ukraine, it's gone on for so long, so much longer than people thought. And the second thing that one of the other things we think about is how drones have become a central part of warfare these days. And it looks like the folks in Ukraine, the Ukraine army, they're kind of leading the way on that. So, but there's opportunities out there for investors in technology, including drones. And Barry has some thoughts. She's a founder and managing partner at Threadneedle, joining us from New York on Zoom. And thanks so much for joining us here. Talk to us about your experience with drones.
Well, I almost became a sort of defense drone investor by accident, Paul. I invested a long time, over a decade ago, in a business called Drone Racing League, which had developed its own proprietary drone technology and was using it for consumer purposes, actually. It was sort of hosting races in places like the Brooklyn Navy Yard and leaning into the experiential, getting streamed on places ESPN. But part of that technology was spun out into a military applications drone business. It's called PDW. I'm an investor in that by extension. But that really prompted me to look at drones more broadly. You've seen the development in Ukraine, as you mentioned. And so I started to look at the next extension of autonomous, which would be into subsea. And if I go back in my past, I've done a lot in oil and gas. There's a business, one in particular, I've added to my portfolio, Oceaneering, which has hidden within it an autonomous subsea vehicle platform. They're called ROVs, these products, which just used to be used for checking offshore oil platforms. They now obviously have military applications and are used for trying to protect and test other critical infrastructure. The long way of saying, Paul, that the drone thesis or the autonomous thesis has its foundations in other places. And so I'm looking a lot more closely at folks like Lockheed Martin, which just this week announced the acquisition of Ultramarine to move into the subsea drone area. So it's a trend that's going to continue. I'm looking at Raytheon, I'm looking at General Dynamics and others who are looking at this space as well.
Another one, and I'm looking at, is AeroVironment. AVAV is the ticker on this. It's down about 5% today, down almost 40% this year. But I'm sure, as you know, about a week ago, it did improve its outlook. And part of that had to do with the Defense Department requesting a record $75 billion in drones for 2027. So how do you view a company like that? Is that something you're also investing in, or just in general with what the government's doing there as far as the outlook for that particular industry group?
Well, there's particular companies, but the industry more broadly that I'm looking at. The White House has actually come out and said that it is looking, along with the Pentagon, to try to develop domestic manufacturing of drones here in the United States. And if we take a look at what's going on geopolitically, we've seen cheap Shahed drones used by Iran for strikes in the Middle East. They've been used by the Russians as well. And what Ukraine has demonstrated is the ability to build up relatively quickly enough domestic manufacturing capacity to use its own drone production. And the US has looked at that. I think it's been inspired by that. The White House has been very clear that domestic drone supply chain, domestic manufacturing is a strategic priority, is looking to extend equity and loans to try and support the development of that business. That was reported in the Wall Street Journal last month. So I think there's a lot more to come for this industry. There has been sell-off, to your point, because the market has said we need to see the cash flow generation of these kinds of businesses. But this is one of the few industries where I'm more forward-looking than I am looking at the current free cash flow generation profile.
Speaking of forward-looking, what is your view, and as you talk to folks about the best way to play AI these days, is it still just buy the chips, or do you try to get creative and find AI adjacent type opportunities?
You know, I, on this one, am not particularly inclined to get too creative. I just do think that there are going to be clear winners in the AI trade. If you take a look at someone like NVIDIA, I'm in NVIDIA, we all are de facto, whether it's through tracker funds or we've been buying it on the upswing. If you take a look at where NVIDIA is trading as a multiple of EBITDA or free cash flow, it actually seems fairly attractive. You know, at one point trading in and around Walmart, now being compared to the likes of Hershey. So I'm really sticking with the nuts and bolts. But one place I do think has been oversold, Paul, has been cybersecurity. I've been like a broken record on that here on your show. I think the demand for cyber is going to increase. I think the capabilities of cybersecurity is going to increase with these AI developments. And so that's one area that I do look at that's not picks and shovels, but is actually an application that I think needs more attention.
What about when it comes to Tesla? I know that's a stock that you're still keeping a close eye on. I mean, it's down 12% so far year to date.
Well, Tesla, I didn't really buy into. I did buy into GM and Ford, which has worked out pretty well. But I've always looked at Tesla, quite frankly, as one that's going to end up getting merged into SpaceX once SpaceX went public. I still think that is going to happen. I think there's going to be shareholder appetite to see Elon Musk have a true official convergence of his varying interests. So I look at Tesla and SpaceX in conjunction, one with the other. And I think as SpaceX's share price continues to adjust post that IPO, I think the idea of a merger is even more compelling.
Ann, thanks so much. Always appreciate getting a few minutes of your time. Ann Berry, founder and managing partner at Threadneedle. Get her thoughts on some of these markets and some of these technologies out there. I tell you, the auto industry is really in the midst of a years-long transition, evolution from internal combustion engines to EVs. And what I think a lot of us were told, 5, 6, 7 year transition. It's going to be a lot longer than that.
Right. And to Ann's point, what Ford and GM having going for them over Tesla that you might not have thought about before.
So it includes our good friends at Volkswagen. Europe's largest automakers under intense pressure at Volkswagen to slash costs and improve efficiencies, which has revived tensions between management and labor leaders. Let's get some more on this. Elizabeth Berman joins us here, autos industry team leader for Bloomberg News, joining us via Zoom from Hamburg. Elizabeth, talk to us about what's going on at Volkswagen, the huge German automaker.
I think you put it so well just now, just saying that the EV transition, we all thought this was going to be a fluid, fairly sort of hockey stick transition. And now what we're looking at is just taking a lot longer. And it's going to take a lot more painful adjustments for the industry to come through this. And VW, as a mass market as well as premium car maker, is right in the middle of this. So they're struggling to really come up with the types of EV models that consumers want to buy, although that has been getting better of late. And then secondly, they're really struggling in China, which for decades has been their major source of profits. That's really plummeted there because people are turning to domestic brands. People are just buying less because they're dealing with a real estate crisis. And on top of it all, they're now struggling also with tariffs put in place by the US. That's really hurting their Porsche and Audi brands because they do not produce any cars in the US. So they're having to pay these tariffs. And now they're saddled with these high cost, labor intensive, high energy cost plants in Germany in particular, and they're trying to reform these. But this is where VW is very unique. They have this unique setup where you have this co-determination with the labor leaders, and at no other major industrial company do labor leaders hold as much sway as at VW. So any kind of progress on reforms, on restructuring is really hard won and usually gets watered down to a significant degree.
Elizabeth, how many factories and workers could potentially be impacted as Volkswagen, of course, as you know, Europe's biggest car maker, comes under those pressures to reduce costs?
So back in 2024, the current CEO, Oliver Blume, he managed to win an agreement for the company in Germany to reduce positions by 50,000. That's already quite a huge number, and put in context with VW's global number of employees of 650,000. And they didn't close plants at the time, though they had set out to say, well, we actually kind of want to close 4, but they walked that back, which I mentioned before. Decisions do tend to get watered down. Now that plan is back on the agenda, shutting 4 sites in Germany and doubling that number of cuts among employees to 100,000.
So, Elizabeth, you mentioned China. What is the situation in China for Volkswagen there? It just seems like China's really, the manufacturers are like BYD, they're really getting their act together and putting out quality products at very competitive prices.
Absolutely. So that's happening in China. If you're wanting to sell an EV in China, chances are that consumers will pick a local company over Western car makers by now. It's not just because they prefer the BYDs of this world. It's also that the Western car makers, including BMW, Mercedes, VW, they've just not had competitive products. We've covered this quite a bit within the team. We call it China speed. It's a word that is pretty commonly used in sort of the industry by now. But they're just able to churn out really attractive cars in much shorter timeframes. We're talking 2 years compared to historically 7 years among Western car makers. So they are catching up as well.
Hey, Elizabeth, we only have about a minute left, but talk to us about internally what's going on at Volkswagen and the struggle the CEO might have to try to push through some of those attempts to have deeper cuts.
I'll just mention one thing. Within the supervisory board, labor leaders hold half the seats. And then you've got the federal German state of Lower Saxony holding another 2 seats and certain veto rights on strategic decisions, among which are plant closures. Lower Saxony usually votes with the labor leaders because they want to protect jobs. Then you have the setup that I'm talking about, how difficult it's going to be to push through really significant moves.
Right. Elizabeth, thank you so much. We learned a lot there. Elizabeth Behrman, she is the autos industry team leader for Bloomberg News. She is in Hamburg, Germany today, so joining us there on Volkswagen. S&P 500 up at 19 points, about 0.25%. The NASDAQ's up about 0.25% as well. WTI crude oil is down $1 here, $72.45. So kind of turned from earlier this morning when it was up 5-6% on some of those heightened tensions there in the Middle East that have been reported over the last 24 hours. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. Tech is back, specifically chips. We're looking at the stocks now up by 4.1%. That, of course, the Philadelphia Stock Exchange Semiconductor Index, the Dow, the S&P, NASDAQ, all advancing. The NASDAQ had been swinging between gains and losses, but right now up 0.4%, as is the S&P. Higher by 27, the S&P up 0.4. Dow Industrials up 121, up by about 0.2%. The NASDAQ 100 Index up 1.1%. And that SOX bears repeating, up now by 4.2%. All of this with the VIX back below 17, a 10-year at 4.55%, the 2-year 4.17%. Gold is up 1.1%, 41.22 the ounce. And oil stabilizing today. West Texas Intermediate crude down 1%, 72.79 a barrel. Federal Reserve Bank of New York President John Williams says that among the drivers of inflation in the U.S., he is most focused on demand driven by artificial intelligence. The next Fed decision, by the way, July 29th. Seema Shah is Chief Global Strategist at Principal Asset Management. She was the guest this morning on Bloomberg Surveillance.
We are expecting core inflation to peak fairly soon. So much, of course, does rely on the geopolitical conflict and the idea that energy prices do stay low. So I have to say that although we have this view that the Fed is not going to be changing policy rates this year, a lot of noise and uncertainty around that.
Seema Shah of Principal Asset Management on surveillance this morning. As for energy, again, WTI 72.84 a barrel, down almost 1%. Oil majors lower as well. ExxonMobil down 1.9%. Chevron down 0.8%. ConocoPhillips lower now by 1.5%. Meta's Mark Zuckerberg is setting an aggressive price with Meta's pay-to-use AI. Meta Platforms has unveiled a version of its AI model, Muse Spark 1.1, that does include a new paid tier for developers, marking the first time that Meta has charged businesses for access to its models. Now, our Kurt Wagner spoke about that with Zuckerberg, and he will be along to talk about it at 11:53 a.m. right here on Bloomberg Intelligence. Recapping, S&P higher by 0.4%. Going to repeat, that's VIX right now just below 17. The SOX, the big story though, surging 4.4%. Jess and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Jess Metton sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio and streaming live on YouTube as well. PepsiCo reported some earnings today. The company said consumers pulled back in the second quarter, slowing its efforts to revitalize its North American snack business. Stock's down 4% today. It's off almost 5% year to date. Let's break it down, some of those results. We can do that with Ken Shea, consumer analyst there at Bloomberg Intelligence. Ken, what'd you learn from Pepsi?
Yeah, hi, Paul. Well, PepsiCo today pretty much gave a report that was widely expected, quite frankly. They hit their numbers, maybe a little bit above top and bottom line numbers. But what they said was that their game plan that they set out earlier this year to revitalize their businesses from a top line and a margin point of view is still in place, even though they hit a speed bump in the second quarter. And that speed bump is higher gas prices. No shocker there. People kind of knew, it was going to be a tough quarter for them to make, really good progress. Their big businesses, Pepsi Food, that's about a third of their sales, about 40% of the profits. It's the big enterprise they have there. It basically was a little short of expectations. Consumers pulled back a little bit, as you mentioned, despite the company's innovation efforts. And the company basically has to make up some of this lost ground, they said, in the second half, particularly the fourth quarter, to hit their numbers, which they reiterated.
Hey, Ken, talk to us about shrinkflation, because that's something that PepsiCo got knocked on a few years ago when they were having to boost some of the volumes in some of their chips, because, of course, it produces the world's most popular chips through its subsidiary Frito-Lay. But what are you seeing with that, and how does that translate to margins?
Yeah, hi, Jess. Well, yeah, I agree. Earlier in the year, and then actually, let me take a step back. Since the pandemic, PepsiCo and many other big consumer companies had, because of supply chain disruptions and cost inflation in general and so on, had been pretty aggressive on the price increases. Unit pricing was up really, really sharply over the last few years. So earlier this year, with the help of an activist, they said, look, we need a better balance between volume and unit pricing. And so what we're going to do is going to roll back pricing a little bit and try to get volumes back in course. You know, and by doing that, not only is it a better balance and easier to manage, quite frankly, but you're helping operating efficiencies. You know, you need to have volumes moving along in a positive way to get the, you know, that fixed cost absorption kind of equation to work. So what they're doing now basically is they're getting back to a more balanced approach. At the same time, though, when they set that plan, that was before gas prices shot up. So the challenge they're going to have in the second half is they want to stick to their game plan of being more balanced with volume and pricing, but they're going to be challenged by having an environment where costs are back up again. You see the news today, and gas prices are back up. That, you know, the company's going to have some cost issues. How they reconcile that, it's a good question. We're going to have to wait and see.
Ken, what does Pepsi say about its portfolio of brands? Are they comfortable where they are? Are they looking to add brands? Are they looking to pare back on some of their brands? How are they fixed?
Well, I think PepsiCo is pretty comfortable. I mean, they made some acquisitions in recent years. You know, Skete chips. They had the Poppy probiotic sodas last year. They spent quite a bit of money on them too. I think their game plan really is three-pronged, Paul, to answer your question. First, they are setting out to have their products be more affordable. And that was the prior question. That is, you know, pull back a little bit on the unit pricing, smaller packaging sizes, maybe that's shrinkflation, but also on the list price side as well. Second, let's be more in tune with where the consumer's going in terms of their diets. And so they're making bigger bets on protein, fiber, what they call enhanced hydration. And they're doing that with a lot of new products featuring all three. And then finally, they're very well known to be in the grocery aisle and the convenience store, and they want to be better known as an ingredient in home preparation. So they want to bring Doritos into the kitchen. When somebody's making tacos at home, well, what about Doritos? That's certainly going to help. They've come out with something called the walking taco, where you take a bag of Doritos and you can make your, ground beef and put in your tomatoes and other cheese and ingredients, and you have a taco which you can walk around with. It's a portable one. You know, it's kind of gimmicky, but it's doing well. They're promoting it, and you know, it's getting consumers to recognize these brands to be more than just something they pick up at the convenience store and grocery store.
So, Ken, are Americans buying back goods in large volumes? To your point, how does that translate when it comes to a lot of these consumer packaged good companies and their ability to raise prices?
Well, they're going to be challenged to hold prices, like I said, in the second half. I mean, PepsiCo did say, you know, we're seeing cost inflation picking up in the second half, and didn't say what they're going to do about it. But I would suspect you're going to see some more price increases in the second half. Now, having said that, one of the silver linings to the story for a lot of these consumer companies, including PepsiCo, is that they're getting refunds from the tariffs. You got to remember, back in April, they were deemed to be illegal, and these companies are getting nice refunds. What PepsiCo is doing about it is they're going to apply a lot of these proceeds to help them reduce costs, and you know, it may help them reduce the incentive to take price increases.
Ken, thanks so much. Appreciate it as always. Ken Shea, consumer products analyst at Bloomberg Intelligence, joining us from Princeton. Are you a Pepsi or a Coke person?
Dr. Pepper, since I'm from Texas.
Right.
So it's going to change it up there.
You can get that around here.
Yeah.
You can get Dr. Pepper.
You can. It's not as easy.
Right.
But you can still find it. Okay.
Because that's brewed in Texas, right?
Yes. Yeah.
Okay.
No, it's a big deal down there.
It's a big deal. Okay. Yeah. Again, I identify as a Coca-Cola person, but you put a Pepsi in front of me, I'll be
I feel like, you know, either way, you know, if you have pizza, burgers, I'll have a Coke or a Pepsi.
But Fritas are my #1 go-to kind of snack, so I'm all
chips.
down with that. Yeah. So looking at the markets here, I'll tell you the big change for me has been oil. Tom and I started here early this morning, and oil was up, 5, 6, 7% on the backs of those attacks by the U.S. on Iran, renewed attacks. But now we've seen it kind of reverse course, and we've got down about 0.6% for WTI crude oil, sitting right at $73 a barrel. Keep an eye on that. S&P's up 25 points, the Dow's up 60 points, and the NASDAQ is up 106 points. That's 0.4%. 10-year Treasury yields 4.55%. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Jess Menton sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. Bloomberg's new monthly podcast series, Emerging, has launched today. It explores the many forces reshaping the world's fastest rising economies, from geopolitics and climate to AI. And hosts Menaka Doshi and Haslinda Amin lead insightful conversations on the risks and opportunities. In the first episode of Emerging, Bloomberg's Menaka Doshi spoke with Srikanth Velamakarni, co-founder of Fractal Analytics, and Ganesh Ramakrishnan, professor of ITT Bombay, on how India is trying to translate its strengths into a competitive edge in AI. In this portion of the conversation, they discuss whether countries like India need to pursue a frontline AI model. Let's take a listen.
The US is known for still maintaining a lead in frontier models. China, I believe, is the highest AI publication rate, highest patent output in China. South Korea has, I believe, the highest innovation density in terms of patents per capita. In the next 3 to 5 years, will India join that rarefied group? And if yes, for what accomplishment?
What I would like India to do is also have frontier status in terms of having frontier models, as well as having papers and patents, which, we already have the third largest number of papers, research papers published. Yes, quality of papers may be a different question altogether, but the number of high quality papers is also increasing at a very rapid pace. India has amazing talent. Once it's unleashed, I think you'll see progress. So whether it's papers, whether it's models, applications, all these metrics, India could be a leading player in the world.
Srikanth, why are you wishing a frontier model for India?
I think India needs a frontier model because just think about
why.
From a sovereignty standpoint, we discussed that having a frontier model is crucial to that, not because we don't want to use other people's models, but we also need some models that are working on some of the most critical security sensitive areas like defense and other areas. So it's super important that India has that, because even if you look at the latest models like Mythos and Fable 5, why do we think they are a threat? Because they have the ability to persist and find multiple ways and get to the outcome and work for 10, 15 hours at a stretch without making a mistake. That is their power, right? If that can be done, it means that India's security systems can be under attack. So we need sovereignty from an AI standpoint. So these models have to be built.
And the frontier model capability will also extend to small models, by the way. It's a capability.
Sure. I just felt like it brought us full circle in the discussion around sovereignty.
And I would like to just add one more point, right? When I say adoption can be our big USP, it needs to translate into products. We cannot be doing body shopping in the name of adoption. Right? Adoption should let startups build deep tech products, platforms. It should be platforms that lead to adoption.
All right, that's Bloomberg's Menaka Doshi speaking with Srikanth Velamakarni, co-founder of Fractal Analytics, and Ganesh Ramakrishnan, professor at ITT Bombay. Joining us now is Menaka Doshi, Bloomberg senior editor. Menaka, that was a fascinating discussion here. I'd love for you to just give us a sense of where is India. Does it believe in terms of developing AI itself and really being on the cutting edge?
Hi, Paul. Thank you for having me on the show. We are very, very far behind in this AI race, and I think if you look at the discussion that was at the center of this very first edition of this podcast, AI sovereignty, even there, the result would be, I would say, somewhat mixed. If you go by Jensen Huang's 5-layer AI stack approach, then India's score is very, very poor, right? We have energy, but we have no chips, all imported. A very small fraction of the world's data center infrastructure or compute capacity, no frontier model, but a strong startup ecosystem to build apps. So it's a lowish score there. The score improves if you widen the gaze to a broader AI ecosystem, right? Because then we can add to that one of the largest pools of engineers from across the world, and about a fifth of the world's data that's produced in India. So I think the question that India is confronted with and India is trying to find sort of solutions to is, can data and talent give it the leverage it needs in this AI arms race of sort? And that is really also core to that edition of Emerging, which is a brand new podcast that we've just dropped today. And I hope you get a chance to listen to more of it.
We're excited for that. So to your point, can India become an AI power without producing a frontier model?
That's a pitch debate. I can't claim to have a response or an answer to that, but what I will lay out for you is both sides of this debate, right? And before I start, I should make the point that India is the second largest market for OpenAI and Anthropic. So, in terms of market opportunity, that's incredible, right? This is the world's most populous country. Now, some of the biggest tech personalities in India believe that we should build, or India should focus on building the app layer and not get too entangled in the resources required to build the frontier model, because India simply doesn't have those resources. Whereas others are very concerned, given the day and age we live in, that what happens if we are wholly reliant on Western models and one of those models is switched off. We just saw that happen very, very recently. Yes. So I don't think there's an easy answer to that. But what India is, the last bit I'll tell you is what India is experimenting with is a whole host of domestically developed small models and medium-sized models to try and compete and complement the frontier ones.
Menka, thank you so much for joining us. Menka Doshi, senior editor of Bloomberg News, with this podcast. Emerging is the podcast available now across platforms, including YouTube, Apple, and Spotify. For our listeners in the U.S., remember, you can hear us on satellite radio. Sirius Channel XM 121 is presented by Golden Crest Metals. Stay tuned. More coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
All right, coming up in this hour, Mary Ross Gilbert, Bloomberg Intelligence senior equity analyst covering retail. She's going to join us. Levi's reported some earnings. We'll break that down. I am a Levi's person, by the way. Daniela Sirturi, Bloomberg Restaurants reporter, talked to us about Starbucks. They're going to tap AI to cut reliance on Microsoft and IBM software. So there you go. We'll break that down. Double short mocha, by the way.
Ooh,
at
really?
Starbucks. Yeah,
there we go.
That's how I work. Jaewon Kang, Bloomberg News retail reporter. Mini mania grips U.S. companies, luring shoppers with tiny items. No idea what's going on there, but that'll be fun to talk about here. Dee Zhao, portfolio manager at Thornburg Investment Management, going to talk to us about this SK Hynix U.S. listing. It's going to be like $25 billion. It's huge. So we got a lot coming up. Also, we're going to talk to Kurt Wagner, Bloomberg senior reporter covering social media. He had a big interview with Mr. Zuckerberg of Meta, so we'll break that down as well this hour. Right now, let's go to Charlie Pella for a Bloomberg Business.
Thank you very much, Paul and Jess. We are looking at an update right now. The Dow, the S&P, NASDAQ all advancing. Got to begin with chip stocks, specifically the SOX. Right now, it is up by 4%. Then, of course, the Philadelphia Stock Exchange Semiconductor Index, the SOX again ripping higher by 4%. NASDAQ up 0.5%. The NASDAQ 100 index rallying now by 1.1%. Putting it all in context, the S&P up 31. That is a gain of 0.4%. Dow Industrials up 133 on the Dow, a gain now of 0.3%. This with the VIX below 17 now, a 10-year at 4.55%, the 2-year 4.17%, the 30-year 5.06%. Gold up $50 the ounce to $41.28, up 1.2%. A retreat for crude WTI now at $72.31 a barrel, down 1.6%. Brent crude back below 80, well below 80 now, $76.88 a barrel on Brent, down by 1.5%. Chip stocks surging right now. We do have the Dow, the S&P, NASDAQ higher. I mentioned the SOX is rallying 4%, but among some of those chip names right now, we've got Micron up by almost 7%, Intel up 2.4%, and Broadcom now trading higher by 1.3%. As for the AI trade, Ann Berry is managing partner at Threadneedle Ventures, and right here on Bloomberg Intelligence, she told us she's not trying to get too creative with those AI stocks.
But I just do think that there are going to be clear winners in the AI trade. If you take a look at someone like NVIDIA, I'm in NVIDIA, we all are de facto, whether it's through tracker funds or we've been buying it on the upswing. If you take a look at where NVIDIA is trading as a multiple of EBITDA or free cash flow, it actually seems fairly attractive. You know, at one point trading in and around Walmart, now being compared to the likes of Hershey. So I'm really sticking with the nuts and bolts.
Amberry of Threadneedle Ventures, and again, NVIDIA shares, they are trading lower now by 1.4%. Meta Platforms has unveiled a paid AI developer model for the first time. Our Kurt Wagner broke the story. He spoke about that with Mark Zuckerberg, and he'll be along to talk about it at 11:53 a.m. right here on Bloomberg Intelligence. Recapping, S&P up by 0.4%. I'm Charlie Pellet, Jess and Paul. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Just met sitting in for Scarlet Food today. Scarlet Food will be back tomorrow. Her people are telling me, so that's a good thing here. We are here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. We had some earnings out from Levi's. They reported some number here. The outlook, less than some investors had hoped. Let's check in with Mary Ross Gilbert. She's a senior equity analyst covering retail for Bloomberg Intelligence. She's based out there in our Los Angeles office. Levi Strauss Company. Let's go to stock movers first. That's right. Thank you, Mark. We're going to do stock movers first. And we can do that with, we're sitting here in our studio. We can do that with Christine Aquino. Christine, what are some of the stocks you're looking at here in the marketplace?
All right, Paul, we got to take a look at Micron because they have a lot of money to spend. So Micron shares, ticker MU, those shares are up more than 7% at the moment. And that's because we got news from the company saying that it plans to increase spending on new plants in the U.S. to $250 billion. They're going to put $3 billion towards securing domestic supply chains for semiconductors, including $500 million in strategic financing for a company called Global Wafers, which is a Taiwanese silicon wafer supplier. And so all of this is part of their efforts to, carry out spending through 2035 and support their goal of producing 40% of their DRAM components in the U.S. a decade from now. So it looks like they're well on their way to doing that.
Let's turn to the worst performer in the S&P 500 today, Paramount. What's happening?
Paramount, yes. Paramount, PSKY is the ticker, and those shares are really underperforming today. They are down 6%, actually moderating a little bit from earlier declines of about 9%. That would have been the biggest drop since early December, but still very much in the red. We did hear from Arete Research downgrading Paramount Skydance to sell from neutral and also reducing its price target to the lowest on the street, a mere $2 versus its current trading price of around $9. And so analysts very much worried about the amount of debt that they're going to be saddled with should the merger with Warner Brothers Discovery go through. And of course, that bid is set to close out in September of this year and would create, according to Arete Research, 6 turns levered U.S. media stock with $86 billion in gross debt. So a lot of debt. Quite worrying for a lot of analysts.
Yeah, 6 times net debt to EBITDA is too high. I mean, the market prefers for these companies 3 to 4 times. So, that's going to be a tough one there. So, all right, one more.
Let's take a look at PepsiCo as well, Paul. So ticker PEP, also not doing well today. So those shares are down nearly 4%. We did get their second quarter earnings. Not a good look for the consumers that they are catering to. PepsiCo saying that consumers pulled back in the second quarter, primarily because of higher gasoline prices. They're specifically seeing a decline in revenue in the North American food business and a flat volume even after they cut prices by as much as 15% in some brands. And I think the problem that they're having is a lot of their brands like Doritos, Lay's, even Gatorade, all have competitors, both in terms of the home brands in stores that they're selling and also just kind of cheaper alternatives. And so that's really the problem that CEO Ramon Laguarta was highlighting. Consumers just doing much worse than they anticipated, hence the poor results.
And they called out on the call the higher gas prices just taking money out of consumers' pockets for some of those discretionary spending. So that's another company, another part of the economy where the higher gas prices were impacting businesses. Now we've got oil coming back down again. We'll see how that translates into gasoline prices, which have come down, obviously, off their peak. Christina Aquino, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports in the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcast, Spotify, or anywhere you listen. As I said, let's get back to Levi Strauss. They reported some earnings here. Mary Ross Gilbert, she's a senior analyst covering all the retail stuff for Bloomberg Intelligence, joins us. Mary, talk to us about Levi's. What did they disclose on their earnings release?
So yesterday they had great numbers, right? Their organic growth was up 6%. That was about 200 basis points better than what analysts were looking for. They were looking for 4%. And their guidance, they raised their guidance. And it's really due to the first half performance. So their guidance now for organic growth is 5.5% to 6%. It was previously 4.5% to 5.5%. They are seeing strength across women's. Women's was up 11% in the quarter. Beyond Yoga, which is their small brand but growing fast, was up 16%. Asia up 12%, and Europe, DTC, up 7%. But wholesale is the biggest part of the business, and so you have to really look at the first half because you will have fluctuations in the quarter based on shipping. That was up 9% in the first half. So with all the strength that they're seeing, raising guidance, there's still upside to their guidance because it's really based on the first half performance. So what they're guiding into the second half is really conservative, and that's their objective. They really want to beat. But what this says is that the brand is relevant around the globe across income groups. So for example, they have the Levi's signature brand label, which is in Walmart, and that was up in the first half, up high single digits, right around 8 to 9%. And they're seeing that, being high single digits to low double digits in the second half. So again, no weakness anywhere with the consumer, even having, at the low end. And then at the high end, their blue tab premium denim doing very, very well. But also non-denim, their non-denim bottoms, which really allows them to increase their addressable market, was also up strong in the quarter. So they're really gaining traction, and there's just more to go.
Well, looking at its stock, LEVI, the ticker, up about 2% today. And even on a year-to-date basis, that stock is up about 20%. If you pull it back, though, the last 5 years, down about 10%. So obviously trailing broader benchmarks in that span of time. What do you think moving forward is the biggest thing that obviously shareholders want to hear from them as far as improving when it comes to the outlook for that kind of growth in their margins?
Yeah, so it's a good question. I mean, first of all, when you look at the margin expansion that they're looking for the full year, they did raise estimates a tad bit, but it was actually below what consensus is looking for on the margin side. So that could sort of explain, there was a little bit of volatility after their earnings. Other than that, once again, if you look at the margin expansion they're experiencing in Europe, they have a global enterprise resource program that they're expanding throughout the globe. That they're going to complete that in 2027. So in Europe, where they sort of started it, it's complete, and we saw their operating margin expand 400 basis points. That was partly due to lower distribution center costs too. So I think that you're really going to see margin expansion grow, and again, potentially faster than the top line. So I think there's really a lot of traction here because women's is still a smaller part of the business, versus men's. So that's why you're seeing double-digit growth there, but also across categories in tops and wovens and outerwear. So, and then with the campaigns that they have going with the World Cup and the logo that they had to cover up at Levi's Stadium in San Francisco, that gave them a great opportunity from a media campaign that actually drew over 1 billion of impressions. Wow. So all of that is really resonating with consumers, and I really see upside, and I think that could really shift the performance in the shares over time.
Mary, thanks so much for joining us. Always appreciate it. Mary Ross Gilbert, she's Bloomberg Intelligence Senior Equity Analyst covering the retailers there. Levi Strauss out with some good numbers there, stock trading higher. Interesting story on the Bloomberg terminal today from our good friends at Starbucks. Starbucks is developing in-house tools with the help of artificial intelligence that could replace some software applications it now buys from companies such as Microsoft and International Business Machines. Let's get some details here. Daniela Sartori joins us here, a restaurant reporter for Bloomberg News based in Chicago. Daniela, talk to us about Starbucks and kind of what they're trying to do from a software and AI perspective.
Sure. So really what they're doing is instead of reflexively buying out, going out and buying software, now what they're trying to do is look at, okay, does it make sense for us to actually build some of these applications in-house? They customize a lot of this software anyway. Just imagine what it takes to really, personalize your order at Starbucks. Well, for example, the POS, the point of sale system, has to be able to reflect that. So baristas can actually ring up your order. And so they're like, okay, if we're going to customize the software anyway, does it make sense to build it? And we're in an age which, with artificial intelligence, it's just that conversation just gets a little easier because AI can help.
I wanted to point out too, because software stocks are actually lower on the back of this announcement. So if you're looking at IBM, that's down about 2%. The ticker symbol is IBM, of course. And then ServiceNow is flat, but marginally lower. And then Salesforce down about 2%. CRM is the ticker on that. So why the dynamic there? Obviously, is it more just because of the competitive landscape?
So this move by Starbucks feeds into this broader conversation in technology space about whether with AI, customers or maybe startups can just, build tools that can replace some of the software that is now sold by some companies like IBM and Microsoft. So basically, I think with Starbucks, what we're looking is at a case study of this actually happening inside a company. So it's really fueling sort of this ongoing conversation in this space, if that makes sense.
Yeah, this is what the market's been concerned about, and we've seen sell-off in some of these software names and software as a service names because people are saying, boy, some of these things can be kind of done with AI and maybe cheaper, and and that's kind of what we're seeing in this story. So, I mean, in your story, Daniela, we see that Starbucks is spend about $400 million a year on software alone. Are they thinking they can materially reduce that?
They can. I mean, their chief technology officer has outright said, as we reported, that there are opportunities to cut spending in software. This one part of Starbucks technology organization called Enterprise Technology is looking to cut their spending by about $10 million by the end of this fiscal year, which for Starbucks ends in September. So they're definitely basically, okay, taking a step back and saying, all right, first of all, let's review every contract and service, make sure that we have the best price there. And are there places in which it actually makes sense for us to build our own product with the help of artificial intelligence? So it's definitely something that they're taking a second look at. Obviously, this is also part of something broader that Starbucks is doing, which is they are going through a turnaround and they are looking to cut costs. So this review is also part of that. And then we have AI helping make that a little bit easier.
Of course, as you know, the turnaround with Starbucks, this has been ongoing for the last few years now. What kind of timetable have they laid out to shareholders?
In terms of the turnaround itself?
So they did issue for the first time some, financial goals for 2027, 2028. If we recall when Brian Niccol came in as CEO in 2024, he actually pulled guidance basically to just totally reset. And we actually have seen that the plan that he has implemented, generally speaking, has started to yield results. Their sales growth has picked back up, and he has really focused on things like customer service, on just having products that people really want to buy, and they've also started to remodel stores. So basically, the tech is sort of the backdrop to all of this, right? A lot of the tools they use are just things that are behind the scenes to help them manage the business.
All right, Daniela, thank you so much for joining us. Daniela Sartori, restaurants reporter for Bloomberg News. I've noticed that my Starbucks, Route 35 in Wall Township, New Jersey, they've updated the decor. So they did do a refurbishment, some new furniture. Going back to some of the little things like put a happy face on your cup or something.
Oh yeah, that really makes
your
day.
Your name on your cup or something. In addition to the sticker, which makes it, I'm sure the sticker makes it much more efficient, and people aren't getting the wrong drinks and stuff.
I was actually at one recently at an airport, and they have, of course, a bunch of new, different kind of crafty type of coffees. Didn't really feel like coffee, but they have also protein kind of options too. Which I didn't get that one, but it's fine.
Yeah. I just keep the first Starbucks I went to was waiting to go in to see Janice Funds in Denver, Colorado.
Really?
This is 25 years ago. I walked in there and had no idea what I was doing. No idea how to order, what are the sizes, what are the things. I mean,
now look at you.
But I had time to get. Now I'm a pro. They know me there. S&P up 35 points, the Dow's up 90 points, and the NASDAQ up 160 points. This is Bloomberg. Good morning.